Good morning. Feeling sleepy? Okay, we'll make you to sleep. Not a problem. Theory subject. Okay. So few familiar faces and few new faces in the class. I hope you guys have got the material. How many of them are new students? First time attending new students. Okay, I will ask team to send you the PDF material because I will be doing wholly from the material. You need not to sit and study like different, let me say, book. It will be like a South Indian thali at last moment. So 5-6 different book will be there. So make sure that whichever book or whichever material you guys are comfortable with, study from that. Clear? End of the day, concept remains the same. Let's get started. Okay. So since you guys know, economics is mainly classified into two parts. First one, microeconomics. Second is macroeconomics. So microeconomics has got 5 chapters. Chapter number 1, Introduction to Business. Chiller chapter. Easy. Chapter number 2, Demand, Supply and Consumer Behavior. Most of the questions comes from demand, supply and consumer behavior. And chapter number 3, Theory of Production and Theory of Cost. Again, 50-50 chances are there to get more number of questions. And chapter 4, Market and its. So in micro, more questions come from chapter 2 and chapter 4. Next comes the interconnecting chapter between micro and macro, that is business. So usually I don't go with chapter 1, chapter 2, chapter 3. No, I have my own flow. Students will be knowing it. So first, I'm not going to start with chapter 1. First, I will start with demand. After demand, next we will go with supply. After supply, chapter 4, unit 2. Chapter 4, unit 2. What is it? Price determination. So there is an interconnection after demand and supply. So price determination. Again, we will come back. Again, we will start with consumer behavior. After that, in chapter 3, we don't start with production first. First, we are going to start with cost. And later, we start with. And then finally, we come for chapter 1 and chapter 5. So today, the whole day, we are going to finish with the microeconomics. Which economics? And tomorrow, we'll be starting with the. So before coming to the class tomorrow, most important thing, national income formulas and Keynesian theory formulas. MPC, MPS, APC, APS. And multiplier formulas, all the formula, whatever is there in the macroeconomics, go back home, sit, write it twice or thrice. Make sure that it's not just in your books, it is in your brain. Because it is a revision class. Which class? Revision. So now, automatically from the classroom zone, we are in a war zone now. It's almost like a T20 super over match. Not even a T20 final over. It's a super over. Either every ball has to be 6 or 4 or get out. That's how the speed is going to be. Hope you guys have already revised once. Have you guys revised? Sir, anyone in the category? Sir, no, nothing, I don't know. They said economics class is free. I thought, let me give a try. I have attended, but I don't have a conceptual clarity. Anyone in the class, feel free, be frank, let me know so that I can explain little in detail. If anyone feels, sir, I don't know the concept, I don't have a conceptual clarity, kindly do it little in detail. Let me know before starting the class. Anyone? Macro. So macro you need in detail. Then get ready tomorrow. No biryani, no chicken dinner. Full day, full macroeconomics will go on. Clear? So if you need little more extended, let me say if I need to explain in detail, get ready. Class will get extended. Clear? So today, hope so that everyone has a conceptual clarity. Only one student. Okay, chalo. What's your name, madam? Monica. Science background or commerce? Commerce. No, chalo. Not a problem at all. Okay. Let's get started. As I said, first we'll be starting with which concepts? Demand. Let's say Monica. Now, Monica, which is your favorite chocolate? Dairy Milk. 5 rupees one or 50 rupees silk? Silk. See? Everyone likes that silk. Chalo, fine. Let's say everyone knows that example. Now Monica will be going to buy a chocolate. Let's say tomorrow is her birthday. Monica's birthday. She wanted to give Dairy Milk silk to everyone. You are not getting. You have to give it to everyone now. So she is giving Dairy Milk silk to every person in the class. Let's say around some 50 students are there. She went to a departmental store where a big lane of chocolates are kept. She bought a silk chocolate and she turned back. She can find a giant teddy bear. What is it? She can find a copyrights are reserved only to Shashi Kiran for all such drawings. Now, as an Indian, what do we do next? Once I see that product, the very next thing is I look out for a price tag. Now the price tag says it is just 9,999 only. What is it? Just 9,999. Monica, would you like to buy that? Yes, sir. Fine. Now, 99,999. Would you like to buy it? 99,999. No, sir. Cheap product, sir. She will keep it aside and she will only buy the chocolate. She will come out. Okay, let's say for example, Darshan. Now his favorite car, Bugatti. Bugatti, na? Bugatti. Now he wanted to buy his favorite car, Bugatti. But unfortunately, he don't have money. He has a very rich friend. What's your name? I forgot. Praveen. Now Praveen is the son of Mukesh Ambani. Who is Praveen? Son of Mukesh Ambani. Now Praveen will be gifting a car to Darshan. Praveen will be gifting a car to? But Praveen is the son of Mukesh Ambani. He doesn't like cars and all. Every single day in his home, he is watching the fleet of cars. He is like least interested, least bothered. But because of his friend, Darshan is like, I want a car on my birthday. A new car. Okay, chalo, they went to a showroom, they saw a car. Now finally a salesperson will be explaining about the features and all. Praveen is like, hey, stop your bakwas. What is the price of a car? Just 2 crores, sir. How much? Come here, take this check, give that card to my friend. Now, why did I give this example? Because the whole concept of demand has got 3 important words or 3 important, let me say, conditions. The condition number 1, what is it? Desire to buy. Condition number 2, ability to pay. Third one, willingness to spend. Only when all the 3 conditions are satisfied, we call it as a demand. Now, Monica, did she had a desire to buy a teddy bear after looking into it? Yes. Did she had ability to pay 99,999 only? No. Or suppose if she had enough money, Monica, were you willing to spend 1 lakh rupees on a teddy bear? No, sir. Who stupid fellow will give 1 lakh rupees for a teddy bear? So observe, both the let me say only 1 condition is satisfied, 2 conditions are not satisfied. Only when all the 3 conditions are satisfied, then only we call it as a demand. See, most important, desire, ability and willingness. All the 3 has to match. Only when all the 3 are matching, then only we call it as a demand. Or if not, there is one more meaning for it. Let's say, for example, this is cricket bat. What is it? Used by Rohit Sharma to score double century in Bangalore grounds, Chinnaswamy Stadium. Now I want to sell this bat. Now son of Mukesh Ambani, Praveen, he's like, sir, am I team owner? I'm the owner, my team player. You tell me what is the price? 10 crore. I will say how much? He's like, okay, chalo, fine, give it to me. Any commodity, not just cricket bat, it can be anything. Any commodity at a given point of time, at a given point of now, for a given price, 10 crore. If customer is ready to purchase, even that we consider it as a demand. What do we consider it as? So remember, cricket bat example, any commodity. What is the word? Any commodity at a given point of time for a given. If a customer is ready to purchase, see time, price, readiness. All the 3 has to match. Same like desire, ability and willingness. Clear? So 3 conditions, desire to buy, ability to pay, willingness to. Or if not, any commodity at a given point of time for a given price, if a customer is ready to purchase, it is called as. Clear? And next comes determinants of demand. So what is determinants? Those factors which will change demand. Which will? When we say change, either it can go up or it can come down, or it can increase or it can. And there was a shortcut to remember. What is it? PICAT PCs. What is it? P stands for? I stands for? T stands for? C stands for? A stands for? Another T stands for? Taste and preferences. Another P? Most important, Praveen's favorite point. Population. Next, C and S. Complementary and substitute goods. Clear in this. The most common way of doing a mistake will be in complementary and the second common mistake comes in price. Because just now I explained about the concept of price, desire to buy, ability to pay, willingness to spend. Everything was revolving around a price. The price for a particular product. What is it? Price for a? Clear. Now, whenever we are paying a price for a particular product, as a customer, whenever the price goes up, whenever a price, would we like to spend more money on that product? No, automatically demand will decrease. So whenever price increases, demand. Whenever price decreases, demand. So this is the main thumb rule of a demand chapter. Observe the arrow marks. Are they in the same direction or opposite direction? So they are negatively related. Which related? Negatively. Or also called as indirectly related. Negatively related or? Clear? And price and demand as a most important characteristic feature which also determines the slope of a curve. What does it determine? Slope. Along with that, the relationship between price and demand is also expressed in a mathematical equation. And such equation is also known as demand function. What is it called as? D is equals to f of price. What is it? D is equals to? And the same demand function in your ICAI material, it is also further elaborated like A plus B of P. What is it? A plus B of P. And in the previous exam, there were few questions which was already asked from that relation. Let me go to the question. I have marked it. I have marked and come this time. With the question papers, we'll solve it. See here, the demand function for the product X is expressed as Q is equals to 1000 minus 50 P. What did I said? Now D is equals to A plus B of P. Now in the place of D, they have given it as Q. Q stands for quantity demanded. What is it? Now A, that is 1000 they have given. B, that is 50 they have given. In the place of P, they have only mentioned price is how much? 10 rupees. Now simple. Now we need to just put that P in the place of, let me say in the place of P, we have to put a 10. So automatically we will get to know 50 into 10 is 500. 1000 minus 500 is? So quantity demanded will be? But they are not asking for just quantity demanded. They are asking for price elasticity. What are they asking for? Main formula. Percentage change in quantity demanded divided by percentage change in. And along with that formula method, arc method, point method, outlay method, 4 methods are there. I will explain it. See, even they can combine questions, like two concepts are there. One, they're asking you to identify the quantity. After identifying a quantity, they're asking you to identify which elasticity it is. Under that price elasticity, what is the total value? Is it -1, +1, -2, +2? I will explain you. See, even you can get a numerical question. I know it's an economic subject, but still you have a mathematical problem. Shota-mota problems will come. Clear? So multiple times the questions have been repeated. If you observe, past 4 attempts, in every attempt, one question comes from the equation, either from demand or either from supply. So get ready, such questions will come. That is an easy peasy question. After coming out of exam, students will text me, sir, how to solve this question. Mathematics done, not even economics. Basic maths. Clear? Huh? So this time we thought, okay, let's do everything in the class. Clear? So get ready. You will also get a numerical questions like this in the form of equation. In the form of dash? In the demand or supply concepts. Clear? Huh? So let's get started. Pit cat PC. The very first one was price. Price is an important determinant. Which determinant? Which will affect demand to a dash extent. Which will affect demand to a maximum. No doubt, even other factors will also affect, but demand and price has got a maximum extent relationship. Most of the time, whenever we are comparing the concept of demand, we always take a reference of price. What do we take a reference of? Price. Just now I said now, when price increases, demand decreases. When price decreases, demand decreases. Clear? But there is also a positive relationship. Which relationship? Positive relationship. That means this functional relationship is mainly classified into two kinds. One is direct, second one is indirect. So when I say indirect, that was the main thumb rule. Just now we discussed now. What is it? When price increases? Demand decreases. When price decreases, demand increases. But there are also certain circumstances, even though when price goes up, demand still increases. If price decreases, demand still decreases. Clear. Few goods, not in most of them. What is it? In case of few commodities. In few goods, there is a direct relationship. But in most of the circumstances, 90% of the chances, there is a indirect relationship. Clear? And next point number 2, that is income. So without income, we can't buy any goods and services. If I need to satisfy my wants, I need to buy goods. If I need to buy goods, I need to have a money. That is income. When your income is rising day by day, you will automatically buy more goods. Sir, I went for a shopping. I was buying one pair of cloth. Now my income increased. Will you still buy one pair of cloth? No. One t-shirt extra, one jacket extra, like one chocolate extra. Will be having additional demand. What will be there? Same way, if income of a consumer decreases, demand automatically decreases. Most important aspect here is income represents dash capacity. If you remember tomato example, you have 100 rupees, your parents have asked you to get tomato after your class. Let's say tomorrow, let me say today's price of tomato is 20 rupees. You forgot today. Now your mom will say, no worries, bring tomorrow. Next day the price went up like 25 rupees per kg. Now how many kgs can you buy? 4. Yesterday? 5. See, yesterday you had a capacity of buying 5 kg with 100 rupee. 100 rupee was your income. But now same 100 rupee cannot buy 5 kg. It can only buy 4 kg. So income always represents dash. Income represents purchasing And next comes our Nirmala auntie. Point number 3. What is it? Tax. So in India, mainly tax is classified into how many kinds? 2 kinds. Which are those 2 kinds of tax? So tax is mainly classified into 2 elements. Number 1, direct tax. Number 2, indirect tax. Now direct tax is levied on income and wealth. Indirect tax is levied on. And even under this indirect tax, there are 2 more classification. One is production tax and product. So now in the demand concept, we will be giving or we will be understanding more from the point of view of a indirect tax. But in the chapter number 6, national income, there is a concept by name disposable personal income. Which concept? Income minus direct tax. Which tax? Income minus. There we study about disposable personal income. Now whenever I buy a goods or a services, I always pay a tax on it. MRP. Next to that MRP in brackets there is a word. What is it? Inclusive of all the taxes. That means whenever you buy the product, you are automatically paying the indirect taxes. Clear? So we will be more discussing about indirect tax in the demand concept. Now let's say for example, because of tax, if product price goes up, will you buy more product of such? No. Automatically when the tax rates are increasing, what is it? Demand for the product will. Suppose if the tax rates are less, demand will be. See again negative relationship with respect to a tax. Clear? And disposable personal income, already we know the concept. Income minus direct tax. Which tax? Next comes point number 4, climatic condition. Which condition? See, best example, Bangalore. Early morning you will be feeling chilled a little, and later on afternoon it starts becoming a summer, and again in the evening it is a rainy season. So in a day we will be witnessing 3 different seasons. So early morning you want hot coffee, evening you want cold coffee. See, like this, depending upon your climatic condition, depending upon your preferences, the demand for a product will also change. Clear? So climatic condition will also act as a major way. Sometimes rainy, winter, and the demand for the product will fluctuate. Sometimes demand is more, sometimes demand is less. Clear? Next comes point number 5. What is it? When Katrina Kaif comes and holds mango, when droplet starts falling, then you feel like drinking slice mango juice. Until then, you never felt like drinking mango juice. So advertisement will instigate customer. What it will do? Instigate. Now pizza advertisement comes. Now you feel like eating pizza. Until then, you never had a thought of having a pizza. Now once the cheese comes like this, like rubber, you feel like, yeah, even I want to have it. See, that is what they will instigate you people. Clear, Ram? So even because of advertisement, demand will change. Taste and see, CTR masala dosa. He will take the broomstick, he will bang on the tawa and he will do one sarak like this. That is the crispy texture what you get. Your mom doesn't do that now. That is why crispy texture is not there at home. So because of certain taste, you like that product, you go demand it again and again. Preferences. Sir, I don't want coffee, I want tea. Or maybe I don't want veg, sir. Sunday morning, who will have veg and all? My mom will scold. She will not let me alone inside home at all. I am Gouda, I am having a non-veg. The preference. I don't want to have veg, I need to have a non-veg. Sir, I don't like non-veg, I will have a veg. Even because of taste, even because of preferences, demand will change. Next comes most important. Praveen, population. So, whenever the population of the country goes up, demanding capacity will increase. Whenever the population reduces, demanding capacity. And next comes the most important, complementary end. What is complementary? Those goods which are consumed together. Those goods which are bike and petrol. Without petrol, you can't use a bike. Now, electric bike. Without electricity, you can't use that vehicle, bike. So, it is a complementary. Those commodity which are consumed together. Which are? And substitutes. Next best alternative. What is it? Sir, if dairy milk is not there, okay, we'll buy some other chocolate. If coffee is not there, I will go for a tea. Their next best alternative which gives same level of. Now, the most important thing here is the relationship between complementary and substitute. This is where most of the time you guys will go wrong even in the exam. So, understand this. Example for complementary bike and petrol. Suppose, if day by day, if petrol prices are increasing, will you buy more bike or will customers buy more bike? So, automatically demand will decrease for. Now see, we are understanding price of a one product to a demand for another product. We are not understanding for a same product. But in case of initial phase, price, income, tax. We were only analyzing about one single product. Suppose if chocolate price goes up, demand for chocolate will decrease. Same product price, same product demand. We were analyzing both, but here one particular product's price, another particular product's demand. We will be analyzing. Clear? Huh? So automatically we will be understanding from two different goods which are interconnected with each other. Which are? In complementary, they are consumed together. Like bike and petrol. Suppose if petrol prices are decreasing day by day, then automatically demand for bike will decrease. Monica, arrow marks are in the same direction or opposite direction? So they are negatively related. Which related? Negatively. So complementary goods are dash related? Negatively related. Now come substitute goods. Can I say coffee and tea? No. Coffee and tea. Yes, sir. They are different. They substitutes, I said. Sorry. Substitute. That means instead of having coffee, you can have a tea. No one will drink. That's an assumption. Let's assume that everything else remains same. Everything else remains same. Constant. No changes. Now you went for a, let me say you are feeling completely headache after listening to Shashi Kiran's class. Torture fellows, assumption. You had a headache. You went out, you asked for a coffee. The person says, no, coffee illa. What will you do now? I know, I don't want. Will you come out? What will you take? Substitute. Now, if coffee is not there, sir, I will go for Coke, Pepsi, summer, anyhow, we will go for. That is what. Instead of one product, I go for it. Maybe we thought, okay, instead of coffee, people is going for it. Okay, wait, on yak bejar. Coke, okay. Now, suppose day by day, if coffee prices are going up, because milk prices are increasing, sir, what to do? So, if coffee prices are going up, automatically people, rather than preferring coffee in a peak summer, they will prefer for Coke. So, what is happening for a demand for Coke? Suppose tomorrow, all of a sudden, milk price becomes sasta. Sidhu uncle will come and say, milk free. 200 liters milk free in a year. Now, automatically, prices of the coffee, Mr. Siddaramaiah, Chief Minister of Karnataka State. Stalin and all will speak later, don't worry. When price decreases, what is it when price? For coffee, will you go and now drink Coke? See, you only said answer. Automatically demand for Coke will. Now observe the arrow mark. Are they in the same direction or opposite direction? So substitute goods are dash related. Complementary goods are even. While solving question in cross elasticity of demand, be careful. The answers for complementary should be negative. It should be in negative. And answers for substitute goods should be in positive. And you guys are amazing. Complementary goods is given. You are solving the problem and finally positive answer. How complementary goods are? Negative. Substitute goods are? Positive. So Shashi Kiran, first alphabet? Yes. Substitute good first alphabet? Remember, both are positively related. Shortcut to remember. In exam, by mistake, if you are getting confused, who taught you economics marathon revision? First alphabet? Yes. Substitute good first alphabet? Yes. Both are positive. Self-advertisement shortcut. Clear? Complementary goods are? Negative. Clear? So, this is the PIT-CAT PC, the main determinants of demand. So, demand function is not just a functional relationship with price. It is a functional relationship with all the determinants. That means D is equals to function of PIT-CAT PCs. What is it? D is equals to function of PIT-CAT. But out of that PIT-CAT PC, which affects demand to the maximum extent. That's why I took price. D is equals to function of price. And even from the equation, we will get a numerical problems. Clear? Next, let us go to law of demand. Let us go to what? Law of demand. Now, there is a Latin phrase. Which phrase? Which states that according to the ceteris paribus, that is a Latin phrase which says all other things remains constant. All other things remains constant. Now only price will change. Suppose if price increases, demand will decrease. Suppose if price decreases, demand will decrease. Now once they have asked a question from the ceteris paribus, according to dash phrase, it is a Latin phrase. Which phrase? Latin phrase. Clearer. And one more time, they have asked a beautiful question. According to a Latin phrase, ceteris paribus, all other things remains dash. That Bachu question they have asked. So that is what I am saying. Conceptual clarity is there. Questions goes like this. Clear? Next, according to them, only and only price will change. If price goes up, demand will. If price goes down, demand will. Clear? But every single time, 100% this will not happen. I said in most of the circumstances, negative relationship is there. In few circumstances, which relationship? Which relationship? Positive relationship. Which relationship? That is what we call as exceptions to law of demand. What is it? Point number 1, conspicuous consumption. That means luxurious consumption or prestigious. Best example, gold. See, day by day, gold prices are going up. It is shooting up, but still your mom, auntie, chitappa, chittamma and all, they stopped loving gold. No, they are loving much more. They are buying much more. That means even though when price goes up, demand will still increase. So in case of luxurious goods, which goods? We call them as conspicuous goods, where people feel that if price goes up, utility will increase. Price goes up? Madam Monica, what is utility? Hey, wait, are you Monica? Okay, let's say for example, had your breakfast? You didn't had your breakfast. What do you like to have for breakfast today?
According to the shop.
Assume I'm the hotel receptionist guy with all the menu and let me say that computer system. What do you want? Menu is there. Some 10 items. Dosa. Let's say that she went to Shashi Kiran's hotel. She ordered one masala dosa. I gave old stock. Full. She didn't like the taste. It was bakwas. Next day will you come to my shop? No, no way, sir. Now I will go to, let's say, A to B. Adiyar Ananda Bhavan. Next day she ordered same dosa. Taste was amazing. Taste was what? Amazing. From third day, where will you go? Shashi Kiran Hotel or Adiyar Ananda Bhavan? A to B. See, that is what? Satisfaction. In a layman's language, what do we call it as? Want satisfying capacity of a commodity. What is it? Want satisfying capacity of a commodity. That is called as utility. That means I got a satisfaction by having a to B dosa, not Shashi Kiran Hotel dosa. Clear, ra? So, want satisfying. Where did I satisfy the wants? In A to B hotel, not in Shashi Kiran Hotel. So, hereafter we'll be using a word called as utility in most of the places. That means where you get more satisfied, where you are willing to spend your money or buy that commodity more and more. Clear? So, whenever there is an increase in price, what is it? Whenever there is a increase in price, especially rich people or a luxurious people, they believe that it creates more utility. It creates what? Now let's say for example, now Praveen wanted to buy a Bugatti car, 2 crore rupees. Now next day event, it became 2.3 crore, 30 lakh rupee excess. He thinks more feature, more additional, let me say some features have been given. It will create much more utility. It will create what? Clear. Once they have asked a question from this area. Like this, inside a topic, they can ask you any kind of question. In dash, when price increases, utility increases. In conspicuous consumption or luxurious consumptions, when price increases, utility will increase. Clear? This was a MTP question. Next comes Giffen's goods. Which goods? Sir Robert Giffen. He was an economist who has conducted an experiment wherein which he intentionally increased the prices of essential goods. Which goods? Essential goods. Okay, what they did? They actually did this in London. See, in India, like how we consume more of like roti, rice, ragi and all, in Western countries, they consume more of bread. So they intentionally increased the prices of bread and they made it almost equal to meat price. Almost equal to? Still people used to buy bread. Even though when the prices of bread and meat were equal, still they prefer bread. That means even though when prices are increasing, what is it? Even though when prices are increasing, still demand for that essential good is also increasing. But they are not, let me say, a low quality good. They are essential in nature. So here there are two important terms that students have to understand. Most of the time they will go wrong here. Giffen's goods just two conditions. How many conditions? Two conditions. Condition number one, we call Giffen's goods as inferior goods. What do you mean by inferior goods? In nature. What is it? In nature. This word is most important. They are low quality in. Sir, I want to have biryani, sir. Now, when you go to a biryani shop, when you take a biryani, usually they use basmati rice. But in your home, every single day, do they use basmati rice? In comparison to biryani rice, my normal rice is inferior in nature. What is it inferior? That's not always low quality. In comparison to something that is inferior in and on which customer spends a major part of income. On which customer spends a that means our parents, whenever they go for buying a grocery, they don't buy more of basmati rice. Which rice do they buy? Normal rice. A normal rice with comparison to basmati is inferior in on which our parents are spending most of our Income. Only when these two conditions are satisfied, then it is called as Giffen's goods. Which goods? And another iconic example is there. Puma example. Let's say Monica wanted to buy a Puma t-shirt. Which t-shirt? Now she will go to a Puma showroom. She will see a t-shirt, sports t-shirt, nice t-shirt. After trialing it, she likes it. Now after seeing a price tag, 2,000 rupees, she's like, which stupid fellow will pay 2,000 for one t-shirt? She will come out. She will go to the local shop where she buys on a regular basis. Now luckily she found the same t-shirt, first copy. And now only one small difference is there. Instead of PUMA Puma, they have mentioned POMA Puma. Now it is 200. Monica, which one will you buy? 200 Puma or 2000 Puma? Sir, 200 Puma, sir. Okay, next month she wanted to buy one more. She will go to the same shop. Now the shopkeeper says 200 rupees has become 300. Now POMA Puma 300 or 2000 Puma. See, even though price increases for low quality, demand still exception to law of demand. Clear? And now in this case, you need to be little careful with this table. See, we have discussed about PitCat PC. Which concept? So in PitCat PC, we discussed about normal goods. Which goods? And now in inferior goods, that is Giffen's. Inferior goods also we are discussing with respect to price and with respect to income. So what did we discuss in PitCat PC? Normal circumstance, when price increases, demand will. When price decreases, demand will. And in PitCat PC, in income increases, demand will also. Income decreases, demand will. Now observe it. In case of low quality goods, that is Giffen's goods, concepts, inferior goods. If the price of an inferior good, that is POMA, from 200 rupees went on to become, still demand is increasing for Poma, low quality goods only. Now third month, or let me say once again, she wanted to buy a same Poma t-shirt. She will go to a shop. Now the shopkeeper say it is 100 rupees. She know it is a low quality. If the low quality price still more decreases, it becomes a worst quality. And she's like, no, I don't want this. Show me something similar to 200 rupees and 300 rupees. I don't want this 100 rupees. That means if the price of a low quality decreases, demand will also still. Now observe, arrow marks are in a same direction. So price and demand. What is it? Price and demand. For a inferior goods are dash related. Most repeated question in indirect way. In many cases, the questions have come. You will be failing to understand the question. They are speaking about inferior goods. Which goods? Inferior. Clear? And the same inferior goods with respect to income relation. Let's say, for example, Monica was getting 20,000 salary. She used to buy Poma, duplicate t-shirt. Now she got a hike. She got a better job. She switched over from one company to another company. Now 50,000 salary. How much? 50,000. Monica, when you are earning 50,000, which t-shirt now? Puma or Poma? Sir, originals are now Puma. Now observe, automatically when you earn more income, what will happen to the demand for low quality goods? Decrease. Now lockdown, 50% salary she is getting, only 25,000. Now which t-shirt? Whenever income decreases, automatically demand for low quality goods. Decrease. So be careful. These are the two circumstances where usually you guys will go wrong. Clear? So this table is important. Relation with normal goods, relation with inferior goods. Any doubt? Anyone? Let's go further. Okay. Chalo. Next, snob effect and Veblen effect. In inferior itself, there is another two more chota concept. Snob effect and a best example. Let's say, for example, you know what's your name? Mohit. Now, let's say Mohit wanted to go and buy a favorite bike. Let's say KTM. Now, we'll go for a KTM showroom. He will buy a same KTM bike and he will go to a college. Next day, even 20 of his classmates also buys the same bike. It has become like auto rickshaw now. Everyone has the same KTM bike. Or let's say, for example, one more standard example which suits to the present condition. Zudio. Everyone goes to Zudio, everyone buys the same t-shirt. When you're wearing next day, 20 of them also wearing the same t-shirt. Now you feel like bloody rascal. Why the hell did I buy this now? Now we'll stop wearing it. Or even though if you're wearing it, you will wear very rare, like once in a month, once in 3 months. That is snob effect. When a product becomes common, either we will stop consuming it or either we reduce that consumption. Either we will stop or reduce it. That is called as which effect? Clear, right? Veblen, same, conspicuous goods, luxury goods. Even though price increases, I want same product. I want? It's like Mercedes Benz only. I will not travel with any other car. I want Mercedes. It's my prestige. What happens to my prestige? No, I am not coming in any other car and all. Mercedes Benz only. See, that is Veblen. Which effect? See, especially status seeking rich people. What is it? Status seeking? In order to satisfy their dash consumption. What does the word conspicuous refers to? Luxurious or prestigious consumption. Even though in spite price increases, still demand will also. Clear? From this, you can expect a question. Snob effect and so we were discussing about exceptions to law of demand, where law of demand will not work. Point number 1, conspicuous consumption. Point number 2, next comes conspicuous. Your ICAI has one crush on these words. Especially they will confuse you by giving this conspicuous consumption, conspicuous necessaries. Also called as demonstration effect or bandwagon effect. Which effect? Or bandwagon. Sir, my friend bought a new watch, sir. The watch is good. Next, even I want to buy the same type of a watch. That is bandwagon. Demand is increasing because of usage of some other person. Because of? Sir, some other person is using it. I liked it. Even I want the same product now. That is conspicuous necessaries. What is it? Also called as which effect? Demonstration effect or even though price goes up for that watch from 2000, if it becomes 2500, I still want same watch because I liked it. My friend has it, stupid fellow. Even I want to become the same stupid fellow now. Even I want it. Clear? Next comes expectation of future change in dash change in price. Future. The prices are going to change in the future. Now, again, this is the important question. I will be explaining this from a demand perspective. In exam, the question comes from supply perspective. So don't get confused. Logic remains. Now you are from a customer's point of view. Now being a customer, now let's assume that next week there is a festival. We know that prices of all fruits, vegetables, everything is going to increase. Will you buy it on a festival day or 1 or 2 days before? See, that is what in future prices are. So demand now only. Present demand we are speaking about, not future demand. What are we speaking about? In future prices will increase. There is a prediction that in future prices will. Present demand will. Clear. In future if price decreases, present demand decreases. Next comes in case of emergencies like COVID, earthquake. All this time, even though prices are shooting up, we still buy the product. At the time of emergency and especially highway food articles, one standard example which I gave in a class. So you are traveling, the bus is going to stop in one single place, or maybe your vehicle, you are going to stop in some hotel and there is one small shop which sells water bottle, biscuits, chips and all. Water bottle is 20 rupees or chips packet is 20. Rascal fellow selling for 25. Still you will buy, na? Because next 100 kilometers no shops are if I need to buy water bottle, chips packet, biscuit, whatever it is. That is only one shop available. Irrespective of increase in price, still we end up buying the product. Clear? Next comes in case of Rohit Sharma, cricket bat, I want to sell it 1 crore, 1.5 crore, 2 crore, 3 crore. Like people are bidding now in case of auction sale. When the prices are bidding, that means bid is increasing. Prices is increasing. Still demand is also. See, both are in same direction. Price also and demand also in same direction. In case of speculation activity like betting, auction sale, gambling, law of demand will not work. Next comes basic necessaries of food, clothing, shelter. Even though price goes up, best time COVID. Sir, no doubt, people are at home. They are not going around. They are not lavishly spending. Still, prices were increasing. Did you stop having food? No, still you are having food. Na? Still, even though price goes up, still we are buying the products. Petrol price, best example. Before COVID, 81 rupee liter. After COVID, 1 or 2 rupee. When Virat Kohli was struggling to hit century, petrol hit century first. Then Virat Kohli. See, next comes present trends and changes. See, Apa? Let's say COVID was an emergency. Accepted. But whether COVID is there or not there, you still need to have a food, na? Basic necessary. Food, clothing, shelter. Even though emergency does not occur. In this, we'll explain. This is perfectly inelastic. E is equals to 0. Whether price goes up, whether price comes down, it doesn't matter. Quantity demanded will remain same. Clear. Next, present trends and changes. Best example, torn jeans. Now baggy jeans pant, Korean jackets and all. Now tear the jeans pant and give, everyone wants to buy it. Normal same jeans pant, who will buy it, sir? No, not even fashionable. See, trends and changes. Demand will, price will. Still, law of demand will not at all work. So, 8 places law of demand will not work. Number 1, conspicuous, luxurious consumption. Second one, third one, fourth one, expectation of future change in price. Fifth one, sixth one, seventh one, eighth one. Clear? Next comes demand schedule and demand curve, representing demand in the form of table. That is called as demand schedule. There are 2 types in demand schedule: individual demand schedule and market demand. Let's say Shashi Kiran is a chocolate seller. Now I am selling a chocolate only for a superheroes. Whoever eats my chocolate, they will get superpower. See, Batman, Iron Man, and Superman. If I only consider demand created by a Superman due to change in price, that is individual demand schedule. What is it? Rather than considering just one single customer, if I consider whole, totality, everyone who is there in the economy, every single person put together, what is the total demand made? What is that? Due to change in, that is market demand schedule. Which demand schedule? Next comes demand curve. Which curve? Demand curve. Representing demand in the form of graph. Representing demand in the form of graph. That is called as dash demand curve. What is the general nature of demand curve? Downward sloping linear curve from left to right. Accepted. Now y-axis. This is x-axis. Y-axis always represent dash. X-axis will always represent. And demand curve is a dash sloping curve. Downward sloping linear curve. What is it? See, whenever there is a negative relationship, which relationship? That means price increases, demand will decrease. There is going to be a downward sloping curve from left to. Suppose if there is a positive relationship, which relationship? Upward sloping curve from left to right. See, rather than having a downward sloping like this, say it will become upward sloping like this. Clear up? Positive relation upward sloping, negative relation, and main thumb rule of demand chapter, negative related or positively related. So if it is negative related, upward sloping or downward sloping? Clear? Next, what are the reasons for a downward sloping demand curve? This can be a question. Point number 1, because of LDMU, law of diminishing marginal utility. That means when we keep on consuming same product again and again, every single day morning, if you are only eating idli vada for 1 week, 8th day will you eat? You feel like puking it off. You will idli vada, you will run away 1 kilometer. Clear? Same way, if you are consuming same commodity again and again, automatically demanding capacity will. Initially it went up, later it starts. Next, because of when substitute goods are available for a lesser cost than your commodity, then why will any person come and buy your commodity? He will go for a substitute. So automatically demand will decrease. So downward sloping curve. Next, income effect. Automatically when your income decreases, purchasing capacity will decrease. Demanding capacity will decrease. Next, because of Big Billion Day, Amazon Festival sale, Munyama sale, Rangappa sale and all, they will come and they will buy the product. There is no guarantee that the customer will once again come back and buy the product with me. Demand went up because of offers and promotion. Later on demand decreased. Later on when I came back to the normal price. Last but not the least, in case of one product alternatively used for a different purposes. Best example, newspaper. So today's newspaper, from tomorrow substitute of tissue paper at home for cleaning purpose, packing purpose, everything. Newspaper only. Milk. Your mom prepares curd from curd, next she will extract butter, from butter she will prepare homemade ghee, sir. Who will buy from outside and all? No, we will not buy ghee from outside and all. My mom will only prepare at home. One product has a multiple uses. Only milk demand is, butter and ghee demand is decreasing. So downward sloping curve, 5 important reasons are there. Which are those 5 reasons? Number 1, diminishing marginal utility, substitution effect, income effect, new customers, alternative or multiple. Now comes the most important aspect of the chapter, elasticity of demand. Now we discussed about law of demand. Due to the disadvantages of law of demand. What is it due to the? Elasticity of demand has been introduced. What is this elasticity? Simple. In law of demand, it will only tell us direction of change. If price increases, demand. But how much price increased, how much demand decreased, it never said anything about it. So that is the biggest concern for us. So we will be mainly focusing on quantity changes now. Which changes?
Quantity change.
Suppose if price increases by 10%, how much percentage did demand decrease? Let's say 30%. Like this, we are focusing on a quantity changes. Which changes? See, that's the reason. See the statement here, it is a responsiveness or a change in. See, we are using this word quantity. We are not just using a word demand. Now, quantity demanded. We are quantifying how much changes are happening. Clear? So, it is a responsiveness or changes in quantity demanded due to change in. Already we discussed determinants of demand, PITCAT PC. In that PITCAT PC, some determinants, that means some factors. Which are the some factors? Number 1. Number 2. Number 3. There is complementary and substitute goods. Number 4. So because of these 4 elements, there is a changes in the quantity demanded. Point number 1. Point number 2. Point number 3. Point number 4. They are also called as types of price elasticity of demand. What is it? Types of? Hello, price elasticity. Types of elasticity of demand. Again, under price elasticity, there is 5 types. How many types are there? 5. This is where you will go wrong. So first understand the question. How many types of elasticity of demand is there? 4. Which are those 4? Price, income, cross, advertisement. And you know that price affects demand to a dash extent. So when we are writing a formula, we don't use a word called as some determinant. See, instead of writing some determinants, straight away we are using a word called as price, because price affects demand to a dash extent. Clear? Already I spoke about the difference. Law of demand will only tell us the direction of change. It will not say us how much quantity it is going to change. So elasticity will tell us the quantitative changes in the form of percentage. In the form of what? Or in the numerical along with direction. So law of demand, qualitative statement, since it only shows the direction. Elasticity of demand, quantitative changes. Which changes? So it is a quantitative statement. Law of demand, qualitative. Elasticity of demand, clear. Next comes the very first one out of the 4 types of elasticity of demand. Price, income, cross, advertisement. How many elasticities are there? 4. Which are those 4 types of elasticity? Now comes, you might forget your birthday, you might forget your name, you might also forget where is your home. But if you forget these 5 important types of price elasticity with their numerical value, in exam minimum 4 to 5 marks goes to Mr. Venki. Who is Mr. Venki? Your friend. You will become monkey and your friend is Venki. So there are 5 types of price elasticity. How many types? Which are those 5 types? Relatively E greater than 1, relatively inelastic, unitary elastic, perfectly inelastic, perfectly elastic. Once again, let's see, relatively elastic, E greater than 1, perfectly elastic, the infinite, perfectly elastic. I'm not asking in order. Don't expect that I will be asking in order. They know, all my students, how to confuse their life. Unitary elastic, perfectly inelastic, E lesser than 1. Then which is lesser than 1? Relatively? Now 4 things are important in this price elasticity. Number 1, meaning. Number 2, numerical value. Number 3, most important, slope of a curve. What is it?
Slope of a curve.
Even that is important. Slope of a curve. And the 4th and the most important aspect, in case of supply, in case of additional informations will come. When supply curve gets extended, it will cut which axis? It will cut which axis? All, even in case of demand, even in case of supply. Total 4 information becomes important. Number 1, meaning. What is it? Number 1? Meaning. Number 2, numerical value. Number 2 is? Number 3, slope of a curve. Number 3? And number 4, different names of calling them. Different names of? Best example, relatively elastic. Now, small change in price. What is that? Leads to a, let's say price increases by 10%, but quantity decreases by some 30%, and the nature of demand curve is what? Flatter demand curve. And this concept is also called as dash proportionate. Observe, 10% price changed, but reaction is more than change in price. So more proportion. Dash proportion? More proportion. Clear? So what is another name for relatively elastic? More proportion. And sometimes instead of giving the word relatively elastic in your ICAI material, they will just use a word elastic. They will just use the word? So what does the word elastic refers to? Relatively elastic. Clear? Next comes relatively inelastic. What is it? Relatively? Now complete opposite. Large change in price but small change in quantity demanded. Let's say price increases by some 20%, but demand is decreasing only by some 5%. Now observe 20% increase in price but just 5% decrease in quantity. So this is dash demand curve. Steeper demand curve and also called as dash proportion. Lesser proportionate change. What is another name for relatively inelastic? Relatively elastic. More proportion. Relatively inelastic. Next comes unitary elastic. Same proportion. Which proportion? Even if price increases by 10%, demand also decreases by same to same 10%. It is also called as rectangular hyperbola or equilateral hyperbola. What is another name? Rectangular hyperbola or equilateral hyperbola. This is another name for unitary elastic. Clear? And what is the numerical value of unitary elastic? What is the numerical value of relatively inelastic? What is the numerical value of relatively elastic? And there is also a numerical problems which I made you to solve in the class. Let's take up an example. Shashikiran chocolate seller is selling chocolate for 10 rupee and he sells 100 chocolates. Now he will decrease the price. Let's say I will decrease it to rupees. We know that when price decreases, demand. Let's say now demand increases to 170. Now they will ask you identify the which type of price elasticity is the same. Now we have 4 methods to calculate this. Number 1, formula method. Which method? The formula method's formula is P by change in quantity divided by. Now P stands for initial price. How much was my initial price? Initial quantity Q. Change in quantity, present and previous difference. Present 170, previous 100. Differences. Now again, change in price, present 5, previous. To be frank, it should be minus 5, but we are ignoring negative. We are ignoring dash. So we are ignoring negative. Without ignoring negativity, we can't solve a problem under formula method. Either quantity will be in negative or price will be in. So let's ignore negative. Let's make it as 5. Clear? So this will be 10 ones are 10 tens are 5 ones are 5 14s are. So this will be 14 divided by 10. Answer will be wrong. Minus 1.4. We have ignored negative. We have ignored. In reality, answer should be minus. Remember to this very carefully. Price elasticity is always negatively related. Price elasticity will be negatively related. Since we ignored negative, we got answer as 1 point. In your exam, if the option is in negative, you should consider such negative value. You should consider such. Welcome. Question number 7. Have a look. Now they're also asking us to identify price elasticity. What are they asking us to identify? And just now we saw the formula methods. Formula P by Q into change in quantity divided by change in price. Now they have given the price. How much is price here? 10. By the help of the equation, we identified the total quantity. How much was the total quantity? 500. But they're asking us to identify price elasticity. They're not asking us to identify quantity. What is the formula? P by Q into change in quantity by change in. Earlier price 10. Quantity just now identified 500. See here 10 they have only given. 500 we identified. Into change in quantity. What is it? That is not given. So you should take a induced part. This B. Whatever B is given, you have to multiply that with B. B here is 50. How much is B? 50. So you should consider this 50. So observe 10 divided by 500 into 50. Answer was 1. But price elasticity is always dash related. Answer was still more Mahan Bhavs are there. They said answer is 1 by 10, sir. How much? 1 by? How? Many of them, they asked me a doubt. As soon as they came out from the exam, they sent the question paper and said, what is the answer for this, sir? We got 1 by 10, but option is not there. Option is? How 1 by 10? Sir, you only said, na, sir. We need to solve with equation. After solving with equation, we got Q as 500 and price as 10. So automatically you said P by Q. What is it? Even P is 10, Q is 500. Now I said, what is 10 divided by 500? I asked. Oh sir, I made mistake. That is why in exam, first stay calm. Don't get overexcited. When you find some numerical problem, easy. With overexcitement also, sometimes you will end up doing a wrong thing. So first stay calm. First understand the formula. Put the formula. Solve it. Even though it might be silly things, you might go wrong. Take calculator. Do it and then cross confirm. And which question is this? Price elasticity. Price elasticity is dash related. Answer should be in. There are still more Mahanbhavs. Everyone did perfect. Instead of marking -1, they mark 1. And then after coming out of exam, sir, paper was easy, sir. Yes, paper is easy. When you feel it is easy, then you are making some blunder in the paper. Yes, sir. You marked 1 only. I know, most of them. Because automatically, once they come out of exam, full, they will be in the curiosity. They will send question paper. Sir, question number 7, question number 32, question number 47, question number 63, question number 83. I have doubts, sir. Answer. Okay, first I will ask them, what did you answer? Sir, 1. I will say, congratulations. CA means come again. What is that? CA means? We love your answer, come again. Price elasticity. Question is what? So we are ignoring negative. I said to you in the class, we are ignoring. When you are ignoring, while answering, you should consider negative. -1. What is the answer? -1. Clear? Understood? Okay, I will make you to solve from the exam papers only. Next, we'll go to the topic. Next, perfectly inelastic. What is that? Perfectly inelastic. Basic necessaries of life. Perishable goods will usually come under perfectly inelastic. Why? It doesn't matter whether price goes up or whether price. We still demand the same amount of quantity every single time. So it is dash in nature. Demand curve is dash in nature. Vertical demand curve, or parallel to which axis? Parallel to y-axis. Clear? Next comes, last but not the least, concept itself is myth, unrealistic. Perfectly elastic. Prices might change or prices might remain constant, but quantity demanded cannot be determined. What is it? Quantity demanded? Cannot be determined. See, it will infinite. The concept is what? Infinite. That means we can't even estimate what is the quantity demanded. Like breathing of oxygen. Can you identify how much quantity of oxygen are you breathing? No. Infinite consumption, na? Same way they say any product for it matter, when a customer goes on consuming endlessly, without even estimating what is the quantity, that is called perfectly elastic. Which elastic? In real life, there is no example. That is why we call this concept as myth. We need to understand only from a theoretical point of view. Which point of view? Theoretical. But same questions. Again, we will repeat this in chapter 4. Again, we will repeat this in chapter 8. Where are the connections in chapter 4 and chapter 8? Perfect competition market. Which market? P is equals to AR is equals to MR. Same graph. Perfectly elastic. And in case of liquidity trap, chapter number 8, liquidity trap. Whenever interest rates in the market is extremely low, that means like 0.5%, 0.1%, will you keep money in bank? Whatever money gets pumped into the economy, which comes to the people hand, they will hold it in the cash. They will not deposit at all. That becomes perfectly elastic. Perfectly. See, the reference of graph we will take even in chapter 4 as well as in chapter 8. This is interconnection. There we don't explain in detail. We just use this word perfectly. And you will be wondering, perfectly elastic. What is that? We will say which is parallel to x-axis. Parallel to? In exam, they will not elaborate like this. They will just give it. Parallel to x-axis. The curve is going to be parallel to? That means you should know perfectly. Chapter 4, chapter 8. Connections are there. Clear? So this concept is myth. Finally, we have understood with 5 types of price elasticity. Which are those 5 types? Relatively, E greater than, more proportion. Second one, relatively, E lesser than, less proportion. Third one, same proportion. Next, perfectly, vertical demand curve. Next, perfectly, horizontal demand curve, but myth or Unrealistic. So there are 4 methods to identify the price elasticity. How many methods are there?
4.
So which are those 4 methods? First one is formula method. Just now we finished identifying from formula. So remember, whenever you are solving under formula method, answers will be in negative. Answers will be in negative. That is one of the disadvantages of formula method. Without ignoring a negativity, you can't solve. And every single time if the answers are in negative, we consider them as the inferior goods. Which goods?
Inferior.
Giffen's goods. Let's go back. Giffen's goods are? But all inferior goods are not Giffen's goods. All inferior goods are not? Same way, every good cannot be an inferior good. Without ignoring that negative symbol, we can't solve a problem in formula method. That is one of the disadvantage. And not that is a disadvantage. And every single time, whenever you are solving in formula method, different aspect, different scenario, you will get a different answers. In class, we have solved one question. If you remember, solve this, Madam, solve this. P, Q, even others, solve it. Better. 1570. Solve this problem under formula method. Both the problems under formula method. And let me know the answer. P by Q into change in quantity divided by change in price. Use this formula, solve both the problem. This is problem number 1. This is problem number 2. Online students, still alive? Which one, pa? Ignore negative. For a time being, ignore negative. Which elasticity is that? Less than 1. Relatively. So we got E lesser than 1. Second problem. One point. E greater than. Observe the formula. Observe the problem. I didn't change anything. I've just reversed the problem. What did I do? When I reverse the problem in formula method, we don't get the same answer. But in mathematics, even though when I cross calculate, I should still get the. See, this is another disadvantage of formula method. So to overcome this disadvantage, we have introduced a arc method. What is the arc method formula? Change in quantity divided by into P1 plus P2 divided by Q1 plus Q2. But the biggest tragedy is in your exam, you will hardly get a question from arc method. 90% of the chances questions will be from. That is why I said you are ignoring negative there. When you are marking answer, don't go wrong. Answer should be in. I know that you will make a mistake. Even positive answers are there. You will consider positive answer. Clear? That is a common mistake. Understood? So when should we use arc method? Suppose if your answers are not matching from formula method, then you should solve it under. There is one more legendary question. Sir, what if both the method answers are given? Arc method. Which method? Sir, how do we get to know both the method answers are given? Safer side, if you are doubtful, you need to solve under both the methods. If arc method answer is present, answer is going to be arc method. Clear? Understood? Next comes third one. Point method. Which method? See again, theory is unrealistic, but the graph is important from chapter 4 point of view. Which one? What is it? Chapter 4 point of view in monopoly concept. Which concept? I will come back to the same elements here. Clear, Ram? Now, listen to this very carefully. There is one more name for a demand curve called as average revenue curve. Which curve? This we will discuss in chapter 4. That is why I said in chapter 4 there is a connection from point method. See, in point method they will say in order to identify extremely small change. What is it? Let's say for example we bought a car, Ferrari car, which is worth of 5 crore. We have given it to a service. Service, one spare part has to be replaced. Cost of replacing is 10 rupee. 5 crore, 10 rupee. In order to identify extremely small changes, they say we use which method? Point method. And the formula is lower segment divided by. What is the segment here? Now let's take up the graph. Now demand curve is a downward sloping curve from left to 2. Usually demand curve will not touch y-axis and it will not touch the x-axis unless and until if it is perfectly inelastic and perfectly. Just now we discussed perfectly inelastic. What is it? Perfectly? Nature of demand curve was vertical. See, it is cutting which axis? Or it starts from the x-axis. Same way, perfectly elastic. Just now we discussed now myth. So graph was starting from which axis? Y-axis. See, only in case of perfectly inelastic and only in case of perfectly, the demand curve will touch the x-axis or y-axis. If not, in general case, it will not touch x-axis or, and remember, the space between these points is called as segments. And the middle portion, which portion? Will be unitary elastic. Upper portion relatively elastic. Lower portion relatively, and the point which touches y-axis perfectly elastic. Point which touches x-axis perfectly inelastic. Now the segments. What are they speaking about? Between these points. I have mentioned it as point A, point B, point C, point D. So between these points is called as a segments. What is it called as? And the formula says that lower segment divided by. Okay, let me consider point C. At point C, how many lower segments are there? 2. How many upper segments are there? What is 2 divided by 2? That is why I said middle is unitary elastic. E is equals to 1. Next, point B. How many lower segments are there? 3. How many upper segments are there? 3 by 1. E greater than 1. Which elasticity? Relatively elastic. Next, at the point D. How many lower segments? 1. How many upper segments? 1 by 3. 0.3. Lesser than 1. Relatively inelastic. Clear? So remember middle point on the demand curve. Which point? Middle point on the demand curve will be unitary elastic. Upper portion is going to be relatively elastic. Lower portion is relatively. And you know that if it touches the y-axis perfectly elastic. Even if you consider formula, how many lower segments are there? 4 divided by 0. Any numerical divided by 0 is a math error. E. You will get E in your calculator. That is infinite. If you take point E, that is which is touching the x-axis. Any lower segments we have? No. 0. Any upper segments? Yes. How much? 0 divided by any numerical is 0. But numerical divided by 0 is a math error. Infinite. Clear? So this is point method. Which method? Next comes the most important and the most confusing, and every single time the question comes from your examination, but you people are going to mark wrong answers even after instructing. So be careful here. We are not understanding from the price and demand perspective. What is it? Price and demand. Rather, we are understanding from the outlay perspective. What is it? Outlay. What is that outlay? Outlay refers to spending capacity of a customer. What is it? Spending capacity. Okay, same. 3 customers I have. Superman, Batman and Iron Man. I am a chocolate seller. Now let's say this is the price of a chocolate. I am decreasing the price. What am I doing? We know that whenever price decreases, automatically demand will. But now I am not giving importance to what? Demand. Rather, I am giving importance to outlay. That means how much they are spending. How much they are? How much money are they spending? That is important. Let's identify. Now, Batman, 6 into 10. 60. 5 into 15. 70. Next, 4 into 80. Yeah, sorry, 4 into 20. 80. Now observe, 60, 75, 80. That means Batman is spending more and more money. What is that? More and? See, when prices are decreasing, he is spending more money. More proportion. Dash proportion. What is another name for more proportion? E greater than 1. Now listen to this very carefully. This is what exam question is. When price and outlay move in opposite direction. What is it? When price and outlay move in? Dash elastic. That's it. This was the question. When price and outlay move in a opposite direction, that is dash elastic. How do we identify outlay? Outlay is price into quantity. This is also called as TR, total revenue. TR. What is that? Simple. When price and outlay is moving in a opposite direction, price and outlay is moving in a opposite. Whenever you see this word called as outlay in your question, total outlay method. If E is greater than 1, negative relation. Which relation? Negative relation. See, price is decreasing, outlay is price and outlay is moving in dash direction. Clear? Okay, let me come to Iron Man. Straight away, let me come to Iron Man. 6 into 10. 5 into 11. 4 into 13. 52. Now observe, prices are also decreasing. Even his spending nature is also decreasing. When price and outlay moves in a same direction, E lesser than, because he is spending less proportionate of money. Which money? Less proportionate. That means prices are decreasing. Rather than spending more money, he is spending less money, less proportionate change. Dash proportionate change? Less proportionate change. So when price and outlay move in a same direction, dash elastic. Appa, this is the most repeated question. By one or another way, they will ask you outlay and price relation. What is it? If it is relatively elastic. What is it? If it is relatively negative relationship, price decreases, outlay. If price increases, outlay. If it is relatively inelastic, same direction, price decrease, outlay also decrease. Price increase, be careful. Clear. Next comes Superman. Observe 6 into 10, 5 into 12, 4 into 15. Whether price increases or whether price decreases, it doesn't matter. Outlay remains same proportion. E is equals to. That is why relatively elastic also called as more proportion. Relatively inelastic, unitary elastic. That is why I said important meaning, numerical value, another name. Everything is important there. Clear? These are the first type. That is price elasticity of demand. And to identify, there are 4 methods. How many methods? 4. Formula method, arc method, point method, outlay method. That's it. Clear? Huh? See, same to same. Just now I said, na. In case of relatively elastic, there is a negative relationship. In case of relatively inelastic, there is a see, price increases. Elastic means negative. So, TR is also called as outlay. What is TR is also called as? Now, if price decreases, outlay. Suppose if it is relatively inelastic, positive relationship will come into picture. So, price increases, outlay will also. Price decreases, outlay will. If it is unitary elastic, whether price increase, whether price decrease, it doesn't matter, outlay remains same. This is the repeated question. Most of the time, I've witnessed, even after teaching this shortcut, while reading question, price, outlay. Sir, don't know, sir. Easy question, da. Outlay. Whenever the word outlay you see, remember total outlay method, spending capacity. Which capacity? Spending capacity. And price and outlay has opposite relation in E greater than 1. Same direction in E lesser than 1. That's it. Simple. Price and outlay move in an opposite direction in dash elastic. Relatively, price and outlay move in a same direction in. That's it. Keep this in mind. Problem solved. Clear? Next, let us go to income elasticity of demand. Which elasticity? See, in case of income elasticity, now prices are not changing. Dash is changing. Say day by day, if your income is increasing, your automatically demand will also. That is for normal goods. Which goods? See, in case of a normal goods, whenever income increases, demand will also. Whenever income decreases, demand will also. I said you, if it is positively related, graph is going to be dash sloping curve. But in case of inferior goods, which goods? Just now, few minutes back we studied. See, inferior goods, income increases, demand will. Income decreases, demand will. So, negative relationship. So, graph will be downward sloping. Now, y-axis will represent income. It's not price. Clear? Now, observe the formula. Main formula of income elasticity. Percentage change in demand divided by percentage change in. That means due to change in income, there is a change in demand. Clear? And even while solving this problem from formula method and arc method. Which method? See, now in case of formula method, in the place of P, what is it in the place of? We should make it as. That's it. Even in arc method, in the place of P, we should make it as. So, end of the day, now what will be the formula? Under income elasticity, formula method of income elasticity, Y by into change in quantity divided by change in income. Arc method, change in quantity divided by change in income into y1 plus y2 divided by. That's it. Suppose by solving this problem, if the answer is E greater than 1, what is it? E? Greater than luxury goods. Which goods? Luxury goods. Suppose if E lesser than 1, normal goods. And suppose if E is equals to either luxury. What is it? Either luxury or. Now listen to this carefully. They might not ask you from the words called as luxury, normal and all. They might ask you from a proportionate change. Which change? Now listen to the question carefully and then answer. Listen to the question carefully. Whole question. You have to listen to this carefully. I know 99% of the class will give wrong answer for this. when income increases. What is it when?
Income increases.
Proportionate of consumption will be dash. When income increases. When income proportionate of consumption will be dash. Wait, let me repeat the question. Don't say Gumpal Govinda answers and all. Wait, I will ask you people. You answer it with your logic. When income increases. When income
Increases.
the proportionate of consumption will be dash. You know what the answer is? Increases in little proportion. Okay. Same.
When income increase, the consumption will decrease.
Consumption will
Decrease.
when income
Increase.
ಯಾವ ಪ್ಲಾನೆಟ್ ಇಂದ ಬಂದು ಅಲ್ಲ ಕಣ when income increases demand will if you get more salary 15,000 you are getting salary
Less demand. Will start saving money.
okay let me take example wait for your better understanding ಇರ ಅಣ್ಣ ಅರ್ಥ ಮಾಡ್ಸೋಣ ಇರ ಇನ್ಕಮ್ consumption savings. Okay, now everyone listen. I said na 99% of the class will give wrong answer because of that word proportion. Because of the word
Proportion.
see in generic sense. What is it in? Whenever income increases, demand will
Increase.
whenever income decreases, demand will
Decrease.
here the word proportion is not mentioned. Suppose if the word proportion comes into picture, there is a connection with average propensity to consume. Chapter 6, Unit 2, Keynesian theory. Which theory?
Keynesian theory.
Let me explain now itself. Even tomorrow I have to explain it. When I come tomorrow, when I ask the same question, if anyone gives a wrong answer, nicely you will get scoldings. Now, let's say your income is 15,000. How much is income?
15,000.
Let's say I will be spending some 12,000 rupees and I am saving some 3,000. Now my salary increases to 20,000. No doubt, my consumption will also increase. Now let's say, sir, I am consuming 14,000 rupees of money. I go for a shopping, I will buy one t-shirt extra, one jacket extra. No doubt, I will do it. Now savings. Okay, let's say, now salary went to 30,000. What is that? Salary went to? No doubt, I will spend money. Definitely I'm spending money. Let's say now I'm spending some 18,000 rupees. How much?
18,000.
Savings? Now my salary became 50,000. Now my spendings will become, let's say, some 22,000. Savings?
8,000.
Now observe. Change in consumption. How much is this? 2,000. Year.
3,000.
Year. Year.
6,000.
Next year. Year.
3,000.
No doubt. ಆನ್ ಮಾಡ್ಬೇಕಾ ಆಫ್ ಮಾಡ್ಬೇಕಾ ಮಾಡಿ ರಿಮೋಟ್ ಎಲ್ಲಿದೆ okay observe here see no doubt whenever my income is increasing I will consume I will also spend more money but the proportion what is it now the concept is average proportion or average propensity to consume that means total consumption divided by total income what is it total consumption divided by consumption by income. When you take a ratio, the ratio keeps on increasing for savings and the ratio keeps on decreasing for consumption. What is it? Ratio keeps on increasing for savings. Ratio keeps on decreasing for proportion. What is the word?
Proportion.
This is where most of them went wrong. Sir, you only said that, sir. Whenever income increases, demand will also increase. That means consumption means demand only, na? I am consuming goods. Yes, pa, I only also said whenever income increases, proportion of consumption will decrease. Proportion of consumption will
Decrease.
clear. No doubt, I am also spending, but observe, I am spending at 4,000, but I am saving at 3,000, 6,000, 16,000. Savings became much more than spendings. Spending is also increasing. Saving is also increasing, but which is increasing more? That means my spendings is reducing. Clear? So proportion, when you see the word called as what?
Proportion.
Average propensity to consume. Chapter 6, Unit 2, Keynesian theory comes into a picture. Clear?
Yes.
Understood? What is the formula of average propensity to consume? Total consumption divided by? So you will feel that question is from demand concept. Chapter 2. Yes, connected with chapter 2. Also connected with chapter 6. Clear? So whenever income increases, what is it? Whenever income
Increases.
proportion of consumption will be dash
Decreases.
decreasing. Clear? Whenever E is greater than 1, which goods?
Luxury.
E lesser than 1
Necessary.
or normal goods. Suppose if E is equals to 1, either luxury or necessary. That means, listen to this carefully. They are explaining in the word called as proportion here. Suppose I am getting 15,000 salary. No doubt I am consuming 12,000. I am saving 3,000. I am saving how much?
3,000.
Next. Suppose my income increases from 15 to 20. What is it? 15 to?
20.
So from 15,000, my income went up to 20. What is the change in income?
5,000.
I was spending, let's say for example, when my income was 12,000, when income is 15,000, I used to spend 12,000. Suppose when my income becomes 20,000, now let's say for example, I am spending 18,000. I am spending how much?
18,000.
How much did the changes in consumption happen? 6,000. But how much did your changes in income happen? More than change in income, there is a change in consumption. E greater than 1. E clear. See, when I was getting 15,000 salary, 12,000 was my spending. When my salary became 20,000, 18,000 is my spending. We say that if you are spending more money than increase in income, if you are spending
More money
than increase in,
income.
we believe that you are spending on which goods?
Luxury.
This was the question. When customer spends more proportion of money than is change in income, than is which good is he more likely to spend on? On which good he is more likely to spend on? Luxury goods. Yeah, that is what I'm saying. Out of 100 questions in midterm exam, the one which is conducted by ArivuPro, like this, I have picked every single question and I have put almost 80 questions are difficult. Out of 100, how much? 80 questions are like this. Full indirect questions, full twister concept, interconnection chapters, full on I've done it. That is what I said. After looking into paper, first 20 question itself, volcano should come from your eyes. Not even blood and all. Direct volcano. You feel like, is this economics? Where did we study this all? That is what. I'm just giving a trailer this time. How tough it can be. So try to attempt it. I know that ICAI will never give such a high toughness and all. But I have given the paper like that this time. Give a try. Let's see. Next. Suppose if E is equal to 1. What is it? E is?
Equal.
That means, sir, 15,000 salary became 20. 5,000 change in income. Even spending also increased by exactly 5,000. Same proportion. Which proportion?
Same proportion.
Clear? That is E equals to 1. Either you are spending it on either luxury goods or might be on.
Necessary.
Next comes E is equals to 0. What is it?
E is equal to 0.
Full smart fellow. 15,000 to 20,000 income increased. Even when my income was 15,000, spending is 12,000. Even when my income become 20,000, spending is still 12,000. There is no change in spending. No change in.
Spending.
Irrespective of increase in income, there is no change in. Full money saved. Entire 5,000 increase in income got saved. That means E 0. What is it?
E 0.
Suppose if E becomes negative, which good is that?
Variables.
Clear? From this you can expect question, especially E greater than 1, luxury. E 0, no change in spendings. In income elasticity, which elasticity?
Income.
But our students are punters. Sir, E 0, sir, perfectly inelastic. What is it? Perfectly. That is in price elasticity. Question is asked from income elasticity. In income elasticity, if E is equals to 0, what is it called as?
No change.
No change in demand. Demand remains constant. Clear? And this was a question. Next comes cross elasticity of demand. Which elasticity? See, already I spoke about this cross elasticity. We are comparing prices of one good to the quantity of complementary goods are dash related. Substitute goods are clear. Now see the question here, or let's say for example, wait, responsiveness or a change in quantity demanded of good A. That means one good due to change in prices of good B. That is another good. price changes by one good, demand reacts to the another good. Clear? We are comparing two different goods. Now graph. In case of substitute goods, already we discussed it is dash related. Graph is going to be upward sloping. Complementary goods are dash related. So graph is going to be clear. Now, one beautiful question, exam question. We have also solved this in the class. And same to same, similar question has come in the exam. Wait, let me show the exam question only. Why? Now see, income elasticity question. If income elasticity for a specific type of a good is greater than 1. Luxury good. Demonstration snob effect question is there. Indifference curve question it is. Suppose price elasticity. I have marked. Question chapter wise I have marked and I have got this time. Question number 14. Solve it. The price of 1 kg of tea is rupees 50. At that price they are selling 10 kgs of tea is in demand. Now, if the price of coffee rises from 30 rupees to per kg, now the quantity demanded for tea rises from 10 kg to what is the cross price elasticity of tea? That means cross elasticity of demand. Clear? Now, solve it. Now, remember 1 second. In cross elasticity, we do not have a formula method and arc method. We don't have what? And don't make that mistake. P by Q into change in quantity divided by change in price. That is the biggest mistake what you will do. In cross elasticity, we don't have formula method. Then in which method we need to solve it? Straight away the main formula. What is the main formula? Percentage change in quantity demanded of one good. That is good A due to the change in price of another good. In this present example, in this given question, prices of dash is changing. Tea. Tea or coffee? Read it. Prices of 1 kg tea 50, quantity is 10. And if the prices of coffee rises, what is it? Price of coffee is increasing because of the tea demand is from 10 to 15. Okay, wait, let me make your life simple. Whenever you find such questions, write down like this on your question paper itself. Okay, now tea and coffee. P, Q. Clear? Now come back. See the question. The price of 1 kg of tea is rupees. At that price, we are selling how many? 10 kg. Clear? Rupees 50 and it was 10 kg. 50 rupee, 10 kg. Clear? Okay, wait. Next. If the price of coffee rises from 30 to 40. Now come to coffee. From 30 it is rising to how much? 40. Okay. The quantity demanded of tea rises from 10 to 15. From 10 it went to. Now see, they have given quantity of tea, price change of. Now what is the formula? Cross elasticity of demand is equals to percentage change in quantity demanded of good A. In this case, which quantity is changing? T. So quantity change of T divided by percentage change in price of good B. In this case, which is good B? Coffee. First convert them into a percentage. Now see, 10 was the quantity of tea. It has become how much? What is the change? How much was earlier? Into 100. You will get to know the percentage. Here it is 50%. Now from 5 it has become 10. 50% increase. Clear? Next. From 30 the prices have gone to. How much was the change? 10. Earlier how much it is? Into 100. This is 33%. Clear? Now price changed by 33%. Quantity changed by 50%. So 50 divided by 33. First question, 1 second. Is it complementary or substitutes? Dash related. Answers will be in. If the same question comes to complementary good, then answers will be in. End of the day, whatever I get, 50 divided by 33. What is the answer? 1 point. If it is complementary, answer is minus 1.5. That's it. 1.5 answer. Even this question, they have made it wrong. I'm like, there is no formula method and arc method. In cross elasticity, straight away, the main percentage formula, percentage change in quantity demanded for good A divided by percentage change in prices of good B. One good to another good. Is that clear? Understood? See, that is why. Now, instead of solving my own question, I got both question papers, past two question papers, wherein all you guys have done mistakes. With the question paper, let us solve. So now automatically we'll get the first hand experience of question paper. Next in the question paper, same question comes. You will strike proportion. Word proportion is there. Cross elasticity. Is it complementary or substitute? First I should identify. Substitute means answers are in. Complementary means answers are in. See? Clear? Understood? Next. Okay, solve this problem. You guys only solve this problem. Problem number 2. Now I will not help. You guys should only solve it. Answer. Minus. Why? Sai Sharan now got to know how answers becomes negative because he was asking me. He texted me, sir, can you show one question for complementary how answers will be negative? See, they have already straight away given in the form of percentage. See, prices of ink went up. Prices of ink is going up. Because of that, quantity demanded for pen comes down. So, pen demand is decreasing because of increase in price of ink. So, both has to be used together now. Pen and ink. Complementary. So, whatever we get the answer. Now, 20 divided by
25.
answer. Minus 0.8. We know that when we do 20 divided by 25 in your calculator it shows positive 0.8. But you should understand, na? Complementary good. Answer should be in minus. Clear? Now observe. This can also be a question. Suppose if the end answer is E greater than 1 and if it is positive. Positive means substitute goods, na? If answer is like 1.2, 1.7, 1.1, they are close substitute. Which substitute? Close. If the answers are in positive and if it is greater than 1, if it is what? Dash substitutes? If answers are in positive but lesser than 1, not close substitutes. What are this? If answer is equals to 0, this is most important. They are unrelated to each other. Sir, price of petrol increases, demand for tea decreases. Unrelated. Clear? Sir, if the prices of imported goods increases, Shashi Kiran's economics class demand decreases. Unrelated goods. So answers will be in 0. Don't even solve it. When reading question only you will get to know. What? There is no relation between this good. Answer will be 0. Next, suppose if E becomes infinite, perfect substitutes to each other. What is it? Clear? So this can be a question. They can ask it. So kindly get ready if E becomes greater than 1 in case of substitute goods. In case of they are close substitutes. E lesser than 1, not close substitutes. E infinite, perfect substitutes. If answers are in negative, complementary goods. Complementary answers will be negative, substitute answer will be in. Apart, this is the one common area you will go wrong. Clear? Next comes advertisement elasticity. And this time the question has come from advertisement elasticity also. Usually they will not ask. Simple. When you spend more money on advertisement, what is it? When you spend more chances of getting demand. Let's say Shashi Kiran spent some 20 crores on advertisement. How much?
20 crores.
I got students, I made a revenue worth of 30 crores. How much I made a revenue? Greater than change in spending on advertisement, na? E greater than 1. What is it? E? See, more proportion of demand. What is it? In comparison with money spent on. I spent 20 crore. I got a revenue return 30 crore. More proportion of demand created. Na? Next, I spent 20 crore. I also got a revenue of. Same proportion. Which proportion? I spent 20 crore. But I got a demand worth just 10 crore. Less proportion. Simple concept. Percentage change in quantity demanded divided by percentage change in price on spending of advertisement. If you spend more money on advertisement, definitely demand will also increase. But did you get more proportion? Same proportion? Less proportion. That's it. That is the question. Now see here. Question number 15. If the change in quantity demanded is 60% and change in advertisement expenditure is 20. Demand divided by price, na? Percentage change in quantity demanded divided by percentage change in spendings on advertisement. So totally 60 divided by 20. Answer is 3. Most of them without using calculator, 0.333. That is, I know, this is the common mistake. So even the question is easy, take out calculator once, just do it. 60 by 20. What is it? 60 by 6 by 2. We know answer is 3. Clear? What did see? Even they have asked question from advertisement elasticity. Which elasticity? See, this September attempt. Now let me come to the June attempt. Sorry, Jan, not June, Jan. Chapter 2. Chapter. When some people starts investing in share market and many people starts following the same. Someone else is doing, even I am doing. Bandwagon effect. Which effect? Next comes the slope of a demand curve. Slope of a? 1 second. Demand schedule, demand curve. We did that. Demand curve is a downward sloping curve from left to top. Y-axis is taken first. Y-axis represents price. X-axis taken next. X-axis represents. So it is change in price by change in quantity. Leave about that. Formula method. Which method? What is formula method? P by into. And this is what we call slope. What is it called as? Slope. Clear, huh? Is that so? Price by quantity. So change in price by change in quantity. But most of them went wrong. Change in quantity by change in price. That's wrong. Clear, huh? So it is price by quantity. So change in price by change in quantity gives the slope of a curve. What does it give? Next, solve it. A shopkeeper sells two commodities A and B which are close substitutes. Which substitutes?
Close substitutes.
Hello, you know when it is close substitute, answer is greater than 1. And substitute they have clearly given. Bloody, you need not to solve this at all. Plus 1.5. Common sense. Rather than wasting time, common sense. Plus 1 point. That is what I said. Conceptual clarity is important. When you have a conceptual clarity, you will just solve it like this. And this was the most easiest paper. I said, no, Jan, when we solved that entire question paper and when I uploaded in the YouTube, I clearly said, this is a once in a lifetime paper it is. Scoring 80 to easy. There was no difficulty at all. 80 questions to very straightforward questions they have asked. Not even difficult questions. Next, see that. Excess of price which a consumer, okay, wait, that is consumer surplus theory. Still, I didn't do that. Citrus paribus is it? That generally mean all other things being constant. Constant means equal. Next, if the price of a wheat increases from 1,800 per quintal to 2,200 per quintal and consequently the quantity supplied, again opposite. Instead of demand, they are asking for a supply. We are yet to do it. Next, in case of perfectly elastic supply, leave about supply. Perfectly elastic. E. That's it. That see, meaning, numerical value, nature of demand curve, another name. All four are important. See, such but two questions. Next, supply function is given as Q is equals to 120 plus 6P. Same to same. Na? In previous attempt from demand, the same equation has come. This attempt from supply, same equation. Next, in the place of P, what you should put? 10. Do it. So 6 into 10, 60. 60 plus 120, 180. 180 is the total quantity. Clear, they're asking us for elasticity of. Same thing. P by Q into change in quantity by change in price. We know the price. What is price? 10. 10 by quantity. Just now we identify quantity. 10 by 80 into change is not given. So induced part 6. So 10 divided by 180 into 6. Sir, okay, then leave it there. Put it like this. 10 into 60. Sorry, 10 into 6. Divided by 180. 1, 3. 1 by 3 plus 3. And it is supply. Concept is what? Not demand. If it is demand inverse relation, supply is positively related. Answer is in positive. Oh, what was difficult in these questions? Nothing. Most of them have done blunders last attempt. That is what once in lifetime paper. Cut easy paper. So that is what conceptual clarity. What is that? Clear? Understood? Okay, let's come back to our topic like this. I will only make you to solve the question paper in the class. Next, expansion and of demand curve. Now, while starting the concepts, I clearly said main thumb rule of demand chapter: when price increases, demand
Decreases.
price decreases.
Demand increases.
Now, I am using a word increase and
Decreases.
that's not actually a proper term. We should use a word called as expansion and whenever there is a change in price. What is it? Whenever there is a, that means in PitCat PC, if only and only price changes, only and only, it leads to expansion or contraction. What is that? Same demand curve is there. Now, whenever price increases or when price goes up, when price, now quantity is coming near to the origin. If it is coming near to the origin, that is contraction. What is it called as? Suppose if price reduces, now quantity is going away from the origin, that is called as. Now that means this point E, reference point, either it will move for even or either it will move for. That means we are adjusting on the same demand curve. Where movement is happening on the same demand. Henceforth, expansion and contraction is also called as movement on same demand curve. What is the reason for expansion or contraction? Due to change in
Price.
now in PitCat PC, only and only dash is changing.
Price.
Price is changing. Now comes a beautiful question. There was one question in the classroom discussion paper. In the class, we have done this classroom discussion paper. If the word quantity is mentioned, what is it? When there is a change in quantity demanded, when there is a change in expansion or contraction, movement on same demand curve. When there is a change in demand, when there is a, if the word quantity is not mentioned, if there is a change in demand, increase or decrease in demand curve. That means now in PitCat PC, price will remain constant except price. All other things can change. That means now IT, CAT PCs will change. Income can change, population can change, complementary and substitutes can change. If other things are changing and if they are increasing, if they are
Increasing.
which side shift?
RHS.
And if they are decreasing, which side shift? And I clearly said in the class, RHS and LHS is only a shortcut to remember in Shashi Kiran's class. In ICAI material, you can never find the word RHS and then what do they call it as? Shifting towards upward. That is upward shift. Which shift?
Upwards.
See, black color line is there. Observe the orange color. Is it upwards or is it downwards?
Upwards.
Upward shift. And green color line from the black color.
Downwards.
So downward shift or upward shift. That means we are drawing the new demand curve along with the original demand curve. So increase and decrease is called as shifting demand curve. Is it
Shifting demand curve.
clear? Understood? So RHS and LHS is only a shortcut to understand in the class. But in your ICAI material, you don't find a word RHS and upward shift and so don't get confused in your life. Whether it is demand, whether it is supply. Increase means RHS. Decrease means it can be given any words in your ICAI material. For your understanding purpose, increase right hand side. Decrease
Left hand.
clear. Understood. This is the concepts of demand. That's it. Demand comes to an. And what is the reason for expansion or contraction? Change in price. Reason for increase or decrease?
Other.
Except price. Increase and decrease is also called as shift in demand curve. But expansion and contraction is also called as movement on same demand curve. By this entire demand concept comes to an. Khatam. That's it. Such a easy chapter. For that, students is breaking the head. So demand confusing, sir. What is confusing? Nothing. Easy. Anyone still getting confused? Anyone having doubt? Online students still complementary, substitute goods, positive, negative, inferior goods. Still confusion? Anyone? See with the problems we are doing in the class now. Exam problems only. Clear? Huh? Okay, let's go to the supply. Supply will get over in 15 minutes like this. Yes, ma. Break. I will give da. First, you didn't have your breakfast. Huh?
No, sir.
No one had. 9 o'clock is a break. The class started itself at 8:50. ICU batch. Huh? And now out of ICU, you are. Don't worry. Okay, chalo. What I thought of completing supply and then giving break because supply will hardly take 15 minutes. Complete opposite of demand. Whatever we have done. We'll take break at 10:15. Anyone feeling hungry? If you are feeling hungry, stay hungry. Just check there. Even for me, I'm feeling hot inside here. Just cross check. AC, turn it on. Okay. So I said demand has got one more name. What is another name for demand? AR curve. And demand is a dash concept. Even supply is also a. First understand what is this flow, what is stock. Simple down. When we can identify things at one particular point of time. What is it? When particular? That is called as a stock concept, like a balance sheet. Balance sheet as on 31st of March. Clear? That is stock concept. Flow means we can identify whenever we want. In between. Clear? And moreover, another best example. Let's say there is a water tank. Well, let's say water is flowing. Water is? It is moving around. So that is flow. If water, what is there in the tank? That is a stock. Stock of water. That means at this particular point of time, how much is the stock? At this point of time, how much is the flow? So usually we understand demand and supply from a flow perspective. Which perspective? That means it keeps on changing. We will be identifying them. It will not remain. What is the demand today will not be the same demand for tomorrow. Clear? Now, supply is a part of stock which is offered for sale. What is supply? Supply is a which is offered for. Now, same example, let us take it. Let's say Shashikiran is a farmer. I have 1 acre plot of land. How much acre plot of land? 1 acre plot of land. Let's say Shashikiran is growing paddy. What am I growing? Paddy. And I have grown 100 bags of paddy. How many bags? 100 bags. Out of that 100 bags, let's say I'm selling 80 bags. How many bags am I selling? 80. That means how many bags did I grow? 100. That is stock. How many bags am I supplying or I'm selling? 80. This is, so supply is a part of stock. This 80 bag is a part of 100 bag which is offered for sale. That is the concept of supply. And see, the term supply refers to amount of goods and services that the producers are and able to offer to the market for various price during the given period of time. See again, time, price, offer, willingness. Same concepts repeated. Now we are understanding this whole concept of supply from a dash point of view. Now you are a manufacturer. You tell me, as a manufacturer, for you profit is important or just selling a product is important? When the prices are more, what is it when the prices are more? Definitely you would like to sell more and more units because you will make more profits. Do you agree? So when prices are less, automatically supply will be less. When prices are more, supply will also be more. Arrow marks are in the same direction. So dash relationship. Again, same statement, no changes at all. There is a relationship between price and supply expressed in the form of mathematical equation called as supply. Again, S is equals to function of price. Sir, why are you considering only price? Because price affects supply to the dash extent. Next comes price of related goods. When I say related goods, that is complementary and substitute goods. What is it? Complementary and clear. So we are understanding for complementary substitute. Same. Let us take the same example. Now there is one more acre plot of land next to Shashikiran land, which belongs to Mr. Dhoni uncle. Which uncle? Tala for a reason. Test match. Now, Dhoni uncle is growing, let's say, sugarcane. He is earning some 1.5 lakh rupees. How much? 1.5. Now Shashikiran, by selling paddy, let's say I'm earning only 1 lakh rupee. And there is one more acre plot of land adjacently, which belongs to Mr. Kohli uncle. Which uncle? And he is growing ragi. What is he growing? And let's say he is earning 1,20,000. 1 lakh? Now, given a chance, next time, Shashikiran, which crop will he grow? Sugarcane. Because 1 lakh. See, rather than growing paddy, now I can grow substitute. What is it? Related goods. When the prices of related goods changes, automatically your product supply will also change. Next, because of technology improves, supply will improve. Technology becomes outdated, supply will decrease. Next, prices of factors of production. How many factors of productions are there? Land, labor, capital, organization. Now let's say, are you interested in paying more and more rent for a land or lesser rent? Are you giving more wages to labor or lesser wages? More interest to the banker on loan and less interest to the banker on loan. Now comes important, more profit or less profit? See, when I'm earning more profit, other cost on factors are less, supply will automatically. Next, government policies. If my Sidhu government starts putting all unnecessary rules, you can't do that, you can't do this, you can't do, like Stalin will say, no, we don't do that, we don't do this. If restrictions are more, automatically business opportunities will not get generated. Supply will decrease. If government policies are friendly, then automatically demand will increase, supply will also increase. So even depending upon government policy, supply will vary like this. Expectation of future change in price. What is it? Let's say next week there is a festival. We know that prices will increase. When will you supply? Now or in future? Present supply. Clear? Say whatever we discussed there. Same concept, opposite logic. Their customer point of view here. Clear? Understood? Now, if you remember, in demand function, positive, negative, exception to law of demand, conspicuous consumption, Gibbons goods, conspicuous necessaries, we have studied now. Here also there is a negative relationship, but we don't focus much. We focus only on positive relationship. Which relationship? So what is law of supply? All other things will remain constant. Only price will change. If price increase, supply. Price decrease, supply. Clear? So supply function is not just with respect to price, even with respect to all other factors. Price of related goods, technology, factors of production, government policies. So it is a functional relationship with determinants. What is it? Functional relationship with? Again, supply schedule, representing supply in the form of a table. Next, representing supply in the form of graph is supply curve. And supply will be having positive relationship. So graph is upward sloping linear curve from left to. Now same to same, whatever we discussed there, 5 types of price elasticity, that will become types of supply elasticity. What is it? Types of? Meaning same, logic same, everything same, but graph will change because positive relationship. Now upward sloping, flatter. What is it? Upward sloping? Whenever supply curve gets extended, see, usually it will not extend. Suppose if we extend, what is it? Suppose if we, in relatively elastic, it will cut which axis? Y-axis. In relatively inelastic, it will cut which axis? Clear? And unitary elastic, it will intersect at origin. Intersect at? Clear? That is the only extra topic we need to remember. Except that everything else remains clear. Now, perfectly inelastic graph also remains same. Whether price increase, whether price quantity supplied will remain. There is one beautiful question your ICAI will always keep on asking. A fisherman will catch his daily catch fish. A fisherman has caught his daily catch and he has to sell for whatever price it goes. He has to sell for whatever, means prices might be more or prices might be. After catching the fish, will the quantity change? Quantity remains the same, prices can be more or prices can be less. Which elasticity is that? Perfectly inelastic. That's it. Such an easy question it was. Even there, my students have made blunders. Sir, fish. Fish means meat. Meat means luxury. E greater than 1. Hey, that is income elasticity. Da. No, perishable goods also same. Egg, all these perishable goods. It comes under perfectly inelastic. Clear? Last but not the least, perfectly. Concept is unrealistic or it is myth. Whatever might be the change in price or price remains constant. Quantity supplied will be infinite. Quantity supplied is what? Infinite. Same. Formula method, arc method, everything remains same. Expansion and contraction of supply curve. What is it? Expansion and contraction of? Now, it is also only and only due to change in other factors will remain. But no positive relation. Suppose if price goes up, supply gets expanded. Price decreases, supply gets. Again, we are adjusting on the same supply curve. That means movement will happen on the same supply curve. So, expansion and contraction is called as movement on. Now, increase and decrease, same to same, due to change in other factors except whenever supply increases, which side shift? Or downward. But in demand, if it is increasing upward, in supply it is, now we will go mad. Where upward, where downward. So simple logic. Increase means RHS, decrease means clear. Next, whenever there is a decrease in supply, what is a decrease in? That means which side shift? Other factors are decreasing. LHS shift, or it is also called as upward. Clear. By this supply comes to an. That's it. Now comes the last one, equilibrium. Don't worry, I will leave it. Now we read. Now last concept. Now combination of demand and supply. The concept of equilibrium. Which equilibrium? Market equilibrium. Which equilibrium? Market equilibrium. Or industry equilibrium. Which equilibrium? So what is the concept of market equilibrium or industry equilibrium? We know that demand curve is a downward sloping curve, supply curve is a the point where demand and supply intersects. Point where demand and supply, that is called as equilibrium. Now at the point of equilibrium, price remains constant. That means total demand should be equal to total. That is the condition of market equilibrium or a firm equilibrium. At the point of equilibrium, dash remains constant, price remains. But suppose in the economy, if there is an excess supply, what is there? What will happen to the effect of price? Prices will decrease. If there is excess demand, what is there?
Excess demand.
In the economy, by chance, if there is excess, what will happen to the effect of price? Increase. But only and only at the point of equilibrium, price remains. When total demand is equals to total supply, the point of intersection is called as equilibrium. And this is also called as market clearing price. What is it called as?
Market clearing.
So equilibrium price is called as dash price. And the main central theme of the microeconomics is determination of a price. Henceforth, microeconomics is also called as dash theory. Chapter 1, it will come once again. Microeconomics is called as dash theory. Macro income theory. Clear? And the central theme of microeconomics is determination of price. What is it? Determination of? So microeconomic theory is a dash theory. Clear? Understood? And after this, if you remember, we have done length and breadth, full graph, increase in demand, supply remains constant, decrease in demand, supply remains constant. 1 second, let me show that graph. Here. See there, change in demand when supply remains constant. That means now supply will not change. Supply with curve will remain same. Only demand will change. If demand increases with side shift. If demand decreases, so due to which there is a change in price, also there is change in. Now equilibrium price, equilibrium quantity will change. This will be the exam question. Yes, they have asked it. Let me show that. Wait. 5 minutes, man, I will leave. Don't worry. He's like waiting, sir. When will you leave, sir? See here, question number 31. What happens to the equilibrium price when there is a decrease in supply with no change in, what is it? Only and only dash is changing supply. What is happening to supply? Decreasing. Now change in supply when demand is constant. When supply decreases with side shift. LHS, decrease in supply, LHS, increase in supply, RHS. Now observe, prices have increased, quantity has. See, same question. Now prices goes up, equilibrium price. Like this, if at all you get a question, you need to plot the graph and then you should come to the conclusion. You can't do inky, pinky, ponky here. On the result day, you will become monkey and your friend will be winky. So don't do the tinky, pinky, ponky. Kindly draw the graph and then you solve it. Next, see there, in case of demand decreasing and supply. See, demand is decreasing but supply is. Now demand RHS shift, supply. But there is one problem in this question. They have not said which proportion, which is increasing, which is decreasing they have given, but which is increasing more, which is decreasing more. That they didn't give anything, na. So there is ambiguity in this. So that creates a problem. What does it happen? Creates a. So where quantity will remain uncertain. Quantity will remain. Quantity becomes uncertain, but prices are certain, na. Prices are certain. So be careful with such kind of a questions. And this attempt, Jan attempt, they have asked such uncertain question. They have asked about the price. Let me show it. Chapter 4, chapter 4. Chapter 4. Wait, there was a question. See here, question number 5. When both demand and supply increases. The equilibrium quantity dash, but the change in equilibrium price is dash. Clear? Now they have just said both demand and supply is, but in which proportion it is increasing? Nothing mentioned. Na? So quantity will always become uncertain. Remember, what will become uncertain? Quantity will become uncertain. In few cases, price will also become uncertain. Clear? So whenever such ambiguities are there, kindly draw the graph. Kindly draw the, and then finally come to the conclusion. So don't do with your mind mapping and all. It will not work. So such questions, 1 or 2 questions are coming in every attempt. Clear? And almost like, see, we had 20 different graphs. We have done it in the class. See, when demand increases more proportion, that means only demand is increasing more, supply is increasing less. Demand increases 20%, supply increases just 10%. Like that, demand decreases more proportion, supply increases more proportion, supply decreases less proportion. When demand and supply changes in dash proportion, same proportion, and demand is perfectly inelastic and supply changes. We have done all this graph. And most important, last attempt, interconnection. So if you remember, I don't know how many of you have solved this paper or not. June 2024 paper. Which paper? Even in the class, I sent a compiler to all my students. In the compiler, the very first question paper was June 24 paper. In the June 24 paper, same to same question. There was no difference. 3 questions have come. In your material, they have given 4 questions. Out of that 4, 3 questions have come straight to straight. Now, in case of Maharashtra, here they have given it as what? They changed it to Tamil Nadu. Same questions have come. So, interconnection, whatever we discussed in demand, supply, determinants we discussed, na? Determinants of demand, determinants of supply, exception to the law of demand. From all those areas, these questions have come. How many of them have a trouble in solving such questions? Raise your hands. If anyone has a trouble in this question, let me explain little in detail. I will take another 5 more minutes extra time. Now he is okay. Okay, chalo. See there. They will give a question like this. 9 different equilibrium points are there. How many different equilibrium points?
9 different.
Now they have given different scenarios. By understanding that scenario, I need to crack this question. Now let's go one by one. Assuming X is a dash good, everything else remains constant. Assuming income rises. Normal good, income rises. When income increases for a normal good, demand will also increase. When demand increases, right hand side shift. This is a normal demand, normal supply. Right hand side shift means D2. Now demand will become what? D2. And the prices of factors of production is increasing. Land, labor, capital prices are. Automatically profit will be. When profit is less, other cost is more. Supply will decrease. Now demand increased, supply decreased. Supply will be LHS, demand will be RHS. Now S2, D2 intersecting at point 2. Answer is point 2. First question done. Anyone having doubt in the first question? Okay, let me erase this. So for the first question, answer is point 2. Now let's go to the second question. Now we are analyzing. Now we are market for a goods Z. Market for a, the price of a complementary good Y declines. That means complementary goods. Negative relationship na. Now we are analyzing for a Z, but prices are decreasing for Y. If Y price decreases, then automatically Z demand will increase. Complementary, negatively related, and at the same time there is a technological advancement in the production of. We are also analyzing for Z. If technology improves, supply will. So demand also increase, supply also increase. Demand increase D2, supply increase S2. D2, S2 intersecting at. That's it. Still anyone having doubt in the second question? Okay, now let's go to the third question. Heavy rain in Maharashtra during 2005 and 6 has caused a havoc. Havoc means flood with the rice crop. What point of the figure is most likely to be the new equilibrium price and quantity? What they have said, due to heavy rainfall, there is a flood. Definitely supply damar, goods damaged, supply will not be there, supply gone, but there is no information about demand. When there is no information about the demand, then automatically demand remains constant. And moreover, rice is a basic essentials of life. Whether price goes up, whether price comes down, quantity remains unchanged. Leave about that. There is no information about demand. There is only information about supply. Now only supply decreases. What happens? Demand, no information. So demand remains. Answer is 0.3. Clear? Such easy questions. Next, last but not the least, question number 4. Assume customer expects the price of a new car to significantly increase when prices are increasing next year. Expectation of future increase in price. Who is assuming that? Demand perspective or supply perspective? From a demand perspective, from a customer point of view, next year price increases, so present demand. And there is no information about supply. That's it. Supply remains constant, demand is increasing. Clear? By this, demand concepts done, supply concepts done, chapter 4 unit 2 concepts also. Chapter 4 unit 2, only thing you need to be careful is graphs. Whenever the statement is given, statement has to be put it down in the form of graph. Then finally you should understand what is happening to price and what is happening to quantity. Suppose if they have not mentioned which proportion, uncertainty will come either in price or either in quantity. Kindly draw the graph and then come to the conclusion. Clear? So by this, almost the major portion of chapter 2 comes to an maybe in another 45 minutes, consumer behavior will also come to an end. So after your break, now what is the time? 10:20. Okay, till 10:50. Till 10:50. No 11 and all. 10:50 break. Half an hour break. Have your breakfast and come. Next we'll start with consumer behavior, theory of cost, theory of production, and we'll also enter with perfect competition. Then lunch break 45 minutes. Clear? So lunch break will be around 1:30. Is that okay? In between, I will give one small break, chota break. Don't worry. Hostel. What time?
132.
Breakfast? Already done. First round done. This is second round.
No, sir,
Already finished. Okay, chalo. 12:30. 12:30 to 2. I 1:15 will give break. Don't worry. So before the break, we had finished with demand, supply, and chapter 4, unit 2, price determination. Now let us get started. The last unit of chapter 2, consumer behavior. What is it?
consumer behavior.
As the name itself is saying, consumer. How consumer behaves in a different situations and different condition. When a product is given for free of cost, how do we behave? When we have to pay the price for the product, how do we behave? And when we are, let me say, consuming complementary goods, how do we behave? So these are the analysis what we will consider. And remember, in economics, we believe every consumer as a rational consumer. Every consumer as what?
Rational.
Okay, not rascal. Who is the rational consumer? Who is that rational guy? One whose choice are consistent with goals. Sir, I want to eat only idli vada. I will go to hotel, I will only eat idli vada and I will come back. I will not see left, right and all, nothing. No madhu vada, no other kind of rice items and all, nothing. Only and only idli vada. That is what I will consume. That means what I think and what I do, both are one and the same. That we consider him as a rational consumer. But in real life, we guys are irrational consumers. Who are we? We think of eating idli vada. After going there, masala dosa will be tempting. So we order masala dosa. So we are irrational. What we think and what we do is not one and the
Same.
But in economics, we believe every consumer has a.
Rational.
So in this particular chapter, we will be interested to identify at what point customer is satisfied the most. At what point customer is? That means he should be getting maximum satisfaction. As satisfaction? Until he gets that maximum satisfaction, he will not think of changing that commodity. That means consumption of a commodity, he will not think of changing. So these are the two conditions for consumer equilibrium. Which equilibrium? Maximum satisfaction and
No change.
so to identify this consumer equilibrium, in this chapter there are two methods. How many methods? Cardinal approach and this cardinal approach was developed by Alfred Marshall. Now Alfred Marshall said, see boss, whatever we will consume, we can quantify that in terms of numbers. We can quantify that in terms of, sir, I went to a movie, 30 utils of satisfaction. Sir, I went out with my friends to hang out, evening, cricket and all. Sir, 100 units of satisfaction. Sir, I met my class teacher, sir, after bunking the class. Full minus 20 utils of satisfaction. Like this, whatever you consume, any good or any services, they say that we can quantify them. What do we do? That is what Alfred Marshall said. We can quantify. See, cardinal measurability of a utility is possible. Was it cardinal measurability of a? What is utility? Want satisfying capacity of a, whatever satisfaction we get, that is utility. That they are saying we can quantify. Sir, how? By using a tool called as utils. By using a tool called as dash? Utils. So what is this utils? It is a want satisfying capacity of a commodity. What is it? Hello. That is utility. Want satisfying capacity. See, intentionally I will say it other way around. And you guys are repeating it. What is utility? Want satisfying capacity. How do we calculate utility? By using a tool called as, like how we calculate distance in terms of kilometers, liquid atoms in terms of liters. To calculate utility, there is a tool by name, utils. Clear? That is cardinal approach. But in real life, can you quantify satisfaction in terms of numbers? It's not possible. So that is the reason ordinal approach was developed by R.J.D. Allen and J.R. Hicks. Who developed it? And J.R. Hicks. They said, see boss, it is highly impossible. We can't quantify, we can't give numbers for satisfaction like this. Let me say, for example, by watching movie. What is it by watching? I got 100 utils of satisfaction. Sir, I went out with my friends to have a cup of tea. I got 30 utils. I went to buy clothes. Sir, I got 50 utils. Like this, no, you can't quantify it. Then what you can do, you can provide a rank or preference. Rank or? Let's say, for example, my first preference is going to movie, second preference is going for a shopping, third preference is having a cup of tea. Like this, we can give a rank or we can provide a preferences rather than giving numerical value. Rather than giving what? That is what ordinal approach said. Clear? Now, under cardinal approach, there are two theories which we will be learning. One is LDMU, Law of Diminishing Marginal Utility. Second one is, and even under ordinal approach, there are two theories, indifference curve and budget line. Clear? Now, this concept of utility is a psychological concept. Which concept? See, what I like it will not be the same what you will like it. Let me say, I will like, let's say, for example, idli vada. You might like madhu vada. Or other person might like masala dosa. Other guy can like no vada, no idli dosa, sir, direct biryani. Like this preference of a person changes from one person to, and the satisfaction is a psychological concept. Clear? And utility depends upon the intensity of wants. That means how badly you wanted that commodity. Depending upon that, satisfaction also keeps on changing. And utility is also relative. What is it? It changes from one person to another person, place to place, time to time. Utility has got no social or ethical implication. It is purely psychological. What is it purely? It differs from one person to another person, place to place, time to time. Clear? And now let's get started. Now under cardinal approach, which approach? We can quantify utility in terms of numbers. So to understand that in terms of numbers, there are three basic concepts: total utility, marginal utility, average. So total utility, if you remember the biscuit example, what we have taken in the class. So I will be having one of my friend, let's say for example, Praveen. Now Praveen and Shashikiran both went to play badminton. On Sunday morning, who will come to class? Torture, always assumption. We bunked the class, we went to class. Sorry, we went to play badminton. And let me say 3 hours, 4 hours, morning from 7 o'clock to 11 o'clock, we played very nice badminton. And we felt hungry. We went to a nearby hotel, but no food. We went to a shop, we bought a biscuit packet. What did we get? Now, when I opened a biscuit packet, even Praveen opened a biscuit packet, but he got a phone call from most important person. Because 4 hours he was busy now without even seeing a text message, not attending the call. So he's completely busy. Now Shashikiran was hungry, started having biscuit. I had first biscuit. I got 10 utils of satisfaction. How much? 10 Second biscuit I had 40 utils of satisfaction. Third biscuit I had 60. Fourth biscuit 100. Fifth biscuit. Like this, I finished a whole biscuit packet, 10 biscuits. How much utils of satisfaction? See, I'm getting more and more satisfaction. First biscuit, second biscuit, third biscuit, fourth biscuit. But total utility is cumulative. What is it? That means when I said third biscuit, which biscuit? How much satisfaction I got? That is not third biscuit alone. First, second, third. All three put together. What is it all? Clear? When I say fifth biscuit is 150, all five. First, second, third, fourth. All five put together it is 150. That is what cumulative. What is it called as? Cumulative of marginal utility. What is it? Cumulative of? Sir, what is marginal? Now, first biscuit alone I consume. Let's assume I alone consumed how many biscuit? One biscuit. How much satisfaction I got? Now, second biscuit alone. Second biscuit, I don't want together. Together is 30. Alone will be. Now, third biscuit alone. 60 minus 30. 30. Next, fourth biscuit alone. 40, like this alone. This is marginal. What is it? And there are two formulas for marginal. Be careful. Output continuous, output not. Whenever output is continuous, TUN minus TU. Whenever output is not continuous, change in TU divided by. Clear? Okay. Chalo, Shashikaran consumed 10 biscuits in total. How much satisfaction I got in total? Now someone will come and ask me, okay Shashikaran, you had one full biscuit packet, 300 utils. How much satisfaction you got from every single biscuit? Every? I will say easy, see 300 from total 10. So every single biscuit has given me a utils of how much? That is average. What is it? It is a utility derived by consuming one single or every single. One single or? Formula TU by Q. What is it? And for TU there are two formulas. Number one, U1 plus U2 plus U3 until UN number of unit. That UN can be any number, 5, 10, 15, 20, like this. It can be any number of units, clear? Huh? But in case of a second formula, I said, if you remember, cumulative. What is it? Cumulative. So when I said cumulative of dash, cumulative of MU. So TU is cumulative of MU. Is it clear? So it is a summation of MU. Is it clear? Two formulas for TU, two formulas for MU, one formula for AU. These are the basic concept. Which concept? Basic. What is total utility? It is a utility derived by consuming all the units of output. What is it? All the units of output. Next, average utility. That is utility derived by consuming every single or one single unit of output. Marginal. Utility derived by consuming how many additional? How many additional? Be careful. In the output column, if it is not continuous, that means 2 additional, 3 additional will be there. You can't use this first formula. You need to use the, which is the second formula? Change in TU divided by change in quantity. Anyone having doubt in TU, AU, MU concept? Then straight away let us enter into the concept of LD, law of diminishing marginal utility. Let's say for example, you went out for a sweet shop. You like a particular sweet, let's say jamun. So you saw a dry jamun, you felt like hitting, you bought one full box. By giving some 200 rupees or 300 rupees, you bought one full box of jamun. Let's say there are some 7 sweets. How many sweets are there? 7 sweets. Now let's say for example, Shashikiran gifted the jamun box. What is it? Shashikiran gifted the jamun box. I said whoever will score out of 50 marks, 40 and above, 40 and you have a surprise from Shashikiran. Okay, let's say some 3-4 students have got 40 and above. Only for them I have gifted a jamun box. Even they like it. Now early morning without having breakfast they have come to the class. First jamun they had, they got 50 utils of satisfaction. How much? Second jamun they had. Third jamun they had. Fourth jamun they had. Fifth. Next, after having 5 tummy filled. Sixth one still Shashikiran given, a papa fellow. He has anyhow given. Another 2 more is remaining. Let's have it. Sixth one they consume. No satisfaction. Same to same. Next, 7th one they consume. Actually, it felt like puking now. Now it became 100. After a few minutes, they went out, they puked everything and they came back. That means dissatisfaction. What is there? Now, if I ask a person, how was the first sweet? First sweet is good. First sweet is? Second sweet is? Super. Third sweet is? Ultimate. What is it? Fourth sweet is mind-blowing. Fifth sweet, out of the word. What is it? Out of the word. Sixth sweet, waka sir. Nothing. Already tummy filled. Seventh sweet, whack, vomiting. This was the reaction. Now, if you observe, it looks like when you consume that your favorite sweet again and again, you're getting more satisfaction. You're getting what? But in reality, we are not getting more satisfaction. Let's identify MU. What is the formula for MU if output is continuous? TUN minus PU? Okay, first jamun we had. Only 50 utils. Here also it will be. Next, second jamun. 75 minus 50. Next up. Next up. Next up. Next up. Next up. Minus. Observe. It felt like, what is it? It felt like we are getting more satisfaction. First one is good, second one is super, third one is, fourth one, mind-blowing, fifth one, out of the world. See, it looks like we are getting more and more satisfaction when we eat the same sweet again and again. But in reality, we are not getting more satisfaction. It is decreasing from the very first unit, from the very, and what is the concept name? LD, law of diminishing of what? Marginal utility. Marginal utility keeps on. When you keep on Consuming more number of units. Simple. Whenever output increases, MU keeps on. That is LDMU. That's it. When you consume additional unit, when you consume whatever satisfaction we had got earlier, let's say I had consumed 3 jamuns. I got 95 utils of satisfaction. That means individually how much I got? 20. Now additional utility, that means one more, fourth one. Now I got only
15.
what I got from earlier will start diminishing. That is what? Law of diminishing marginal. Clear? This is the concept of LDMU. But there are 5 assumptions. How many assumptions are there? These 5 assumptions plays a major role in understanding LDMU. We believe that customer is a dash customer, rascal customer. Next, after considering him as a rational customer, we are giving the commodity for a free of cost. Shashikiran gifted sweets na? Free of cost. And we believe that he is continuously consuming without any time gap, without any. And all the sweets are from same shop, same size, same taste, homogeneous goods. And we can measure quantity or satisfaction in terms of numbers. That is what cardinal measurability of a utility is possible. We can quantify satisfaction in terms of numbers. That is what we did here now, 50, 75, 95, 110, 120. We did the same. Clear? Now here there is one more important topic which is most important from examination point of view. Relationship between TU and MU. Observe. 50, 75, 95, 110. TU is increasing but MU is. See, TU is increasing but MU is. That means TU is increasing at dash rate. Diminishing. Because just few minutes back we said TU is cumulative of dash MU. When we add MU, we will get TU. Accepted? So TU is cumulative of MU. So that's the reason. Since MU is decreasing, MU is see 50 plus 25, 75. 50, 25 plus 20, 95. 50, 25 plus 20 plus 15. See, that means TU is increasing, but it is increasing at a dash rate. Diminishing rate, slower rate, not at a higher rate because MU is decreasing. Clear? Next up. This is the concept of equilibrium in LDMU. Whenever TU is maximum, MU becomes 0. What is it? TU is, MU becomes, and this is the condition of dash equilibrium in LDMU concept. Last but not the least. When TU starts decreasing, see from 120 to decrease to 100. When TU decreased, MU is negative. So this relationship is important. See, initially TU will increase. When TU is increasing, MU is decreasing. TU increases at dash rate. TU increases at dash rate. Be careful. In exam, they will ask opposite. TU decreases at dash rate. Negative rate. Which rate? TU increases at diminishing rate. TU increases at diminishing rate due to dash. MU decreasing. MU clear? Understood? So same to same thing. If at all we represent in the form of graph, this is how the graph looks like. See, TU maximum, MU has become 0. That is the condition of dash equilibrium in LDMU concept. Clear? Now, remember, there are 6 circumstances where LDMU will not work. LDMU will? Number 1, in case of rare collections like old stamps, old coins. A person, if he is having a habit of collecting old stamps, old coins, you go and give him 2 old stamps today, happy. Next day, third, much more happy. Fourth day, even more happy. Fifth day, oh, LDMU rich, don't give. Will he say? No. He will be much more happy. In case of, just assume, instead of giving sweet box, if I have given, let me say, some 100 rupees note to the student, they were like, let's see your capacity, sir. Give your property papers also. We never say no. In money and wealth, LDMU will not work. In case of harmful drugs and drunkards, even though they might not consume it immediately, a drunkard person will never reject alcohol. Amruta, give it. That is how they will collect it. They will collect it like a souvenirs and they will keep it. Next, prestigious. You already have one bungalow, you want one more. You already have one sports car, you want one more. Yes. Next, in case of very small units of, sometimes any of your juniors, any of your friend will come and offer some sweet. Let's assume that next to home daughter, she cleared MBBS seat. Or let me say she became some particular achievement. She will come with sweets. Now for you inside volcano is burning. But you like that sweet. but you don't want to take it. But still, they will recommend, hey, please take one. Little enough. You will take from the edge. By mistake, if you eat, gone case. Craving next will increase. Craving will much more increase. In case of very small unit of consumption, LDMU will not work. Last but not the least, singing, dancing. A person, the hobbies of a person that will increase into, let me say, do that activity again and again. That will not have that LDMU effect. Clear? So these are the 6 circumstances where LDMU will. Which are those 6 circumstances? Rare collection, money and wealth, harmful drugs, prestigious goals, and hobbies. That's it. By this, LDMU comes to an. What is the condition of equilibrium in LDMU? TU is maximum and MU is zero. Clear? Understood? Next, let us go to the consumer surplus. Movie ticket example. If you remember, who was I think yaar koಟ್ಟಿದ್ದು the class example? Movie ticket. Srishti was there, na? Okay, leave it. Now let's assume, madam, what's your name? Monica. Who is your favorite actor or actress? No one. Wrong example. Yeah, detailed examples only in Bangalore, man. Data will kill 99% of them. That 0.1% left out are in ArivuPro classrooms. Okay, let's assume. Darshan. Who is your favorite actor, da? Upendra. Let's say UI2. What is it? Namakar. U in between 1. So UI part 2 is coming. Now Darshan is a very big fan of Upendra. He wants to go and watch first day, first show movie at any cost. He knows it very well. Tickets is not available. Black ticket is the only option. Now black ticket guy will say 500. How much? He is ready to pay. He is ready to. And he get to know, hello, excuse me, wait. There is a faculty in ArivuPro, Sai sir, law faculty, he owns one theatre. He said me, he will call up Sai sir. That whole story you guys already seen it. Full in the class, in the recorded classes also. We didn't watch that. Kachika? Recorded? No, different academy. Yeah. Okay, chalo. Then let me give that example for him. So our hero will go to the theatre. He knows it very well. Tickets are not available, but still he will go black ticket. And he will vaguely remember Sai sir, law faculty said he owns one theatre in Bangalore. He will call up Sai sir. Hello sir, we are missing you so much. When are you coming to our class? Sai sir will ask, what happened? Which class is going on? Shashikiran sir, economics always assumption sir, torture. Sir, one help sir. You only said, no sir, student life is golden life. Sir, I've come to your theatre. Sir, just 1 ticket needed sir. Wait, let me call Shashikiran. He will give you ticket from academy only. Somehow he will convince. All that maska chaska will go on. And finally, you should not repeat this again. Now Sai sir will say, okay, give that phone to the black ticket guy. He's our guy only. Side business, pa. Now, a super normal profit. Now we will say, hey, he's my student. Don't charge extra. Don't charge. Whatever the counter price is there, let's assume 200 rupees. Give it for 200 rupees only. Now Darshan was ready to pay how much? But he got it for. Now after going and watching a movie, wow, you will say, you know, Upendra, he will hit in the last finger like Balaya. The person will go out of the earth. You should see Balaya movies and all. Stress buster movie, it's not action. Next level. In regular class, we will discuss in detail theory, physics and all here. Okay, chalo, jokes apart. Listen. Now, he was ready to pay. He paid only. By just paying 200 rupees, he got a satisfaction worth of. Now, over and above 200, how much is that? That is consumer surplus. Surplus means extra worth of satisfaction. What is that? Which a customer enjoys is called as consumer. What customer is ready to pay, that is potential price. What in reality they pay, that is actual price. So potential price minus, that is called consumer surplus. And the potential price, what the customer will be ready to pay, even that keeps on decreasing. Let's say, for example, he will go and watch the movie second time. Now this time he will go along with his friends. Hey, yesterday movie went super amazing and all. After coming back to class, he will not sit silent. He will instigate his friends. Now next day, all 6 of the friends are planning to bunk. Who will go to Shashikiran class? Torture, always assumption. Now they will bunk. He will say, hey, yesterday I paid 500 rupees. How much he paid? In reality, but he's giving build-ups now full. I paid. Now we are 6 of them are there. We'll bargain it little. At least we have to pay 400. Bring 400 rupees. They were ready to pay how much? 400. Now he will go. Next, the other guy will, hey, stupid fellow, for this theatre you paid 500 rupees yesterday. You don't know. This theatre belongs to. Sorry, sir. Hey, wait, man. Now other guy will call. Hello, sir. How are you, sir? We are missing you so much, sir. When are you coming? All same. Maska chaska will happen. Finally, Sai, sir, blackmailing will happen. And finally, okay, not repeating this again. Okay. in that form. Same 200 rupees. They were willing to pay how much? Now let's say boys has one biggest problem. See, they have two set of friends. One in the college, new friends. Other old friends near the home. By mistake, you go to movie with your new friends. Now old friends, vidappa, ipani periya aite. You will not come with us and all. You will go with your new friends. All blackmailing will happen. Now once again, you will go for a movie. Third time. But this time, if he calls Sai sir, direct ticket, not from just my academy, from my home also. So you will go to the theatre well in advance. You will stand in a queue. Somehow you will manage to get the theatre ticket for 200 rupees. First time you was ready to pay. Second time, third time. See, his willingness to pay, it keeps on. That means potential price is also getting affected by LDMU. It gets affected by clear. The price which we are ready to pay. Price which we are it gets affected because of dash LDMU. And remember, potential price is also called as marginal utility. What is it called as? And in this whole unit, we are interested to identify equilibrium. So, consumer equilibrium, maximum satisfaction and no change. Two conditions are there now. Now, in this case, now let's consider the same water bottle example inspired by the real advertisement. Distillery. Have you seen distillery advertisement? In middle of desert, there is a shop which sells water bottle not for humans, for camels. See what a beautiful example it is. Now, the first person will say, by looking into that shop, hey, Shashikaran sir said, na, pakka, he will charge double. He will say double and all, no. Maybe some 50% extra. Third person, your guide, let me see the tour guide, there is one stupid guy, I don't know how to do business. If it is 10 rupees, he is also selling for 10 rupees. He expected half liter water bottle, first guy. It is 10 rupees, but he might sell it for 20, double. Second guy said, no, 50. Third guy said, in reality, they paid only 10. All of them have paid only how much? 10. First guy expected it to be 20, but he paid extra satisfaction how much? Second guy expected it to be, he paid extra satisfaction. Now kahani mein twist. Third guy, your trip coach or the tour guide, he knows it is only, he also paid. This is equilibrium. When price paid is equals to MU. What is it? MU is also called as? Clear, huh? Hello, MU is potential price. MU is also called as what? And price paid is nothing but actual price. That means potential price is equals to, that is the equilibrium in case of single commodity. In case of dash commodity, if I am buying only one single product, the condition of equilibrium will be price paid should be equal to MU. What is it? Price paid should be equal to MU. Clear, sir? What if I am consuming complementary goods? Two goods together. What is it? Two goods? Together. Now, MU of first product, that is X. Let's consider X divided by price paid for X should be equal to MU of Y divided by price paid for. This will be the formula if it is how many goods? And if it is greater than two goods, what is it? Same formula, MU of X divided by price paid for X should be equal to MU of Y divided by price paid for until MU of N. N can be any number of units. It can be 3, 4, 5, greater than 2. What is it? So this will be the formula of equilibrium for more than 2. For more than, see, if it is single commodity, P is equals to MU. If it is two commodity, MU of X divided by price of X equal to MU of Y divided by price of Y. If it is more than 2, same formula until MU of N divided by price of N. MU of N divided by, clear? Now, equilibrium. Which concept? Equilibrium is achieved when potential price is equal to actual price at this level. Potential price is equal to, and MU is also called as potential price, or potential price is also known as marginal. And at the third unit, which unit? Customer is in equilibrium. So P is equals to MU. What is it? P is equals to? That is what is the condition of equilibrium. Clear? LDMU equilibrium. PO maximum, MU 0. Consumer surplus equilibrium. P is equals to MU. Single commodity. Two commodity, MU of X by price of X equals to MU of Y by price of Y. More than 2, same formula until MU of N divided by price of N. Is that clear? Understood? Now, same table, if at all we are representing in the form of graph. This is how the graph looks like. Observe. price paid, whatever we pay, this is called as actual price. Clear? Whether it is single commodity, two commodity, three commodity, every single time for a water bottle we paid how much? 10 rupee. But first time the guy expected it to be how much? 20. Second guy expected it to be
15.
and the third person expected it to be 10. That means this is potential price, also called as MU. Clear? This is the region, dotted region. That is consumer surplus region. Which region? And that consumer surplus region looks like a triangle. It looks like what? The another name for consumer surplus, welfare triangle. Which triangle? Clear? Understood? Now look at the board very carefully. Already we have done one beautiful topic called as demand and supply. What is the nature of demand curve? Downward sloping curve from left to clear. Supply curve? Upward sloping curve from left to right. The point where demand and supply intersects together, that is called as. Now at the point of equilibrium, price remains clear. Now listen to this very carefully, especially the newcomers, most important for you guys. Now observe this graph. That is similar to the consumer surplus graph, na? Observe here the same dotted lines at this point. Accepted? So remember, region below demand curve. What is that region? And above price line. Above is called consumer surplus. Region below demand curve and above price line is called as dash. Clear? Region below demand curve and above price line is called as dash. Any doubts for anyone? Now one more question will be there. Now suppose if they just mention region below demand curve. What is that region? Below demand curve. See, this is demand curve, downward sloping curve. The region below demand curve is called as total utility. What is it called as? Clear? So by this consumer surplus theory also comes to an end. Clear? See, I'm going more with logic point of view now. You need to understand the concept here. Once you know the concept, cracking questions are easy. Clear? So we are done with cardinal approach. Which approach? So under cardinal approach, they said satisfaction can be quantified in terms of numbers. For that, tool is called as utils. What is the tool called as? Clear? And we also understood the equilibrium in case of single commodity, in case of two commodity, in case of more than two commodity. See here, last 2 points. Straight away come to last 2 points. See, consumer surplus for a necessary good is and consumer surplus for prestigious good is. This can be a question. So kindly write it down or mark it down. One second. Hello? Class ಅಲ್ಲಿ ಇದೀನಾ? ಮಧ್ಯಾಹ್ನ 1:30 ಈಗ ಆಮೇಲೆ ಮಾಡ್ತೀರಿ ಏನು ಏನಪ್ಪ ವಾಯ್ಸ್ ಬ್ರೇಕ್ ಆಗ್ತಿದೆ ನಿಮ್ದು. ಓಕೆ ICAI ಬೆಟರ್ Let's start. Let's continue. Okay, so we are done with the cardinal approach. Now let us start with the ordinal approach. Under ordinal, there are two theories: indifference curve and see. Under indifference curve, now we can't calculate in terms of numbers and all. We can only provide rank or preference. What is it? Rank or clear? Now under this indifference curve, minimum we need to understand is a combination of two commodity. What is it? Combination of which they are connected in the form of a curve is called as indifference curve. See, this is how the indifference curve looks like. It is downward sloping curve. What is it? Downward sloping. And it is convex to origin. What is it? Sir, why it is convex? Why it is downward sloping? Let us understand in detail. Now, bare minimum, in order to understand indifference curve concept, how many goods should be there? And we need to completely spend our income on two goods. That means there is no concept of savings. What is it? There is no concept of whatever money that we earn, we are completely buying on how many goods? Two goods. Next, let me say, sir, now you had 100 rupees. Let's say Shashikiran had 100 rupees. I bought 1 cup of coffee and 1 packet of biscuit. but I felt like I wanted more cup of coffee rather than biscuit or maybe a tea. Now, what is the only left out option? Complete income is spent on two goods. Only left out option is barter system. Identify the person who is ready to accept a biscuit and give me extra cup of tea or extra cup of coffee. Next comes consumer acts dash. Consumer acts. We believe every customer is a dash customer, rational customer. And see, this is completely utility can be only by providing a rank or through the preferences or through what? Clear. Combination A, combination B. I will explain it now. Clear. Now, I said indifference curve is downward sloping from left to right. What is it? Indifference curve is what? Due to limited income. See, human wants are unlimited, but resources are limited. Vitamin M is also limited. See, let's say I'm consuming, let me say commodity A and commodity B. If I need to increase the consumption of A, I need to sacrifice the consumption of B. That is why it is downward sloping. Clear? Next comes convex. What is it?
Convex.
Listen to this very carefully. That convex is due to diminishing rate of substitution or diminishing marginal rate of substitution. Diminishing rate of or diminishing marginal rate of substitution. Clear? Sir, what is this diminishing? I said, nah, I had 100 rupees with me. Now, I bought one packet of biscuit and one cup of tea. Now, I felt I want more cup of tea. I have bought one packet of biscuit that was not required. Now, I will identify the person. Okay, who is ready to accept, let me say, biscuit and give me a cup of tea. Now, I am having second cup of tea. But can I still have one entire packet of biscuit? No, I only have 8 biscuit. How many biscuit? 8. How many biscuit did I sacrifice?
4.
Now, one more cup of tea I want. Third cup. I have only 5 biscuit. How many biscuit I sacrificed?
3.
One more cup of tea. Like a alcoholic, Shashikiran is teaholic. Now, I am having 4th cup of tea. Can I still have 5 biscuits? No, I only have 3. How many biscuit I sacrificed? One more cup of tea. Now, only 2 biscuit. How many biscuit I sacrificed?
1.
Now, observe. First, I sacrificed how many biscuit? Next up. Next up. Next up. Yes, I am ready to sacrifice. My intention to sacrifice will not always increase. It will always
Decrease.
same like your siblings. Now you both bought a chips packet. Your sibling consumed the chips packet full. You are busy somewhere. You are doing some work. Later you will open the chips packet. What will your siblings do now? They will come and ask. Pava, you will give some 2 chips. After eating again they will come and ask. Now 1 chips you will give. Third time if they come, will you give chips? No chips, sir. Direct eating only. See, first you sacrificed 3 chips. Next term, no chips, get lost. See, like the intention to sacrifice. What is it? It keeps on decreasing. What is it? It keeps on decreasing. That is what? Diminishing rate of substitution. Rate of substitution at which one product is exchanged to another. One product is my intention to sacrifice. It keeps on. It will never be. Suppose if rate of substitution is increasing, means it will become concave graph. Which graph? So first I will sacrifice 2, next to 3, next to 4, next to 5. Total it up 2 plus 3, 5, 5 plus 4, 9, 9 plus 5, 14. Did I add 14 biscuit? No. So I can't sacrificing in increasing ratio. I can only sacrifice in. That is why it is dashed to the origin. Clear? So what is the reason for convex to the origin of indifference curve? Diminishing rate of substitution. Why it is downward sloping curve from left to right? Due to limited income. Due to dash income? Limited income. Clear? Now, there are 2 places where it will not be convex. It will not be convex. In case of perfect substitutes and perfect complementary. What is it in case of perfect substitutes and? See, in perfect substitutes, it is a downward sloping linear curve from left to right. Downward sloping linear curve from? In perfect complementary, L shape. Which shape? And this is the favorite question for ICAI. The nature of indifference curve in case of perfect complementary, L shape curve. Which shape curve? Clear? Next, let's go to the point number 3. And this time the question has come from this point number 3. Indifference curve which is away from the origin. What is it? Indifference curve which is? Or which is completely towards the right hand side will give higher level of satisfaction. Will give dash level of satisfaction? Higher level of satisfaction. See? Question number 86. With reference to the following indifference map, which of the following curve represents highest satisfaction level? I see 3. Whichever is away from the origin, whichever is or completely towards right hand side will give highest level of. See, one or the other point from indifference curve, whatever features we'll discuss, either from one or the other point, every attempt one question is coming. So that is most repeated question it is. Clear? Now remember, when there is more than one indifference curve, there is more than one indifference, they are called as indifference map. What is it called as? And even though if there are more than one indifference curve, they may be parallel or they may not be parallel. Even though if they are not parallel, even though if they are not, they should never intersect with each other. They should never intersect with each other. Clear? So, sir, why, sir? Before intersection, IC2 is giving more satisfaction. After intersection, how can a different income level, different IC curve is a different income level. Let's say IC2 is 200 rupee income level, IC1 is. How can 100 rupee income level can give much more satisfaction than 200 rupee income level? Not possible, no? So that's the reason indifference curve should not intersect with each other. They may be parallel or may not be parallel. Even though if they are not parallel, they will never intersect with each other. Same way, indifference curve will never touch any of its axis. See, if it is touching y-axis means I am not consuming good A, I am only consuming. If it is, let me say, touching the x-axis, that means I am not consuming good B, I am only consuming. And indifference curve clearly says combination of two commodities. Clear? Understood. So this is indifference curve concept. Which concept? From the characteristic features, get ready, one question definitely it is going to come. Last time they have asked from indifference map. Whichever is away from the origin will give dash level of satisfaction. Next comes last theory, budget line. Which line? So in case of budget line, again combination of two commodity. Combination of how many commodity? Where a customer can buy within a given income and price level. Given income and, let's say Shashikiran, he is earning 60 rupees of income. I need to buy two commodity, product A and product B. Now product A will cost me 10 rupee, product B will cost me, let's say 15 rupee. Now with the help of 60 rupees, what is it with the help of? I need to buy this combination of two commodities. Now let's assume, I know I'm buying two commodities, but let us consider if I only buy A, how many units of A I can buy? If I only buy B, so I will get to know the extreme ends. I will get to know what? Now any line that I am drawing and connecting these extreme ends, and if I touch any point on this line, any point on this, that will make me to spend my whole income. Let's say for example, at this particular level, assuming that I am consuming 2 units of A and 3 units of B. 2 units of and 3 units of 2 units of A. Okay, wait, 2 units of B. How much is that? 30 rupees now. 3 units of A. 30 plus 30. Whole money spent now. That means any point on the budget line. What is it? Any point? That will make me to spend the whole income. But any point below the budget line, yes, I can also spend, I can also save. I can also spend, I can also. But any point beyond the budget line is not possible. It is above my income level. Above my? Clear? So this is budget line concept. Income line or price line. Like how in demand and supply we had RHS shift and LHS shift. Even in budget line concept also we have a RHS shift and LHS shift. So what is that RHS shift? Reason for RHS shift is two simple things. Either income of a consumer should increase or a price of a product should. Complete opposite is LHS shift. In case of LHS shift, income of a consumer should decrease or a price of a product should increase. Clear? Due to change in price and due to change in income. There can be either RHS shift or either. Clear? There can be a possibility. Sir, how come prices of both the product will change or both the product will decrease or both the product will increase? One can go up, one can come down, or only one product price can change, other product price cannot. Yes, all that scenarios are possible. Next here. Now we have only changed the prices of good B. Prices are decreasing for good B. Good A, no changes at all. Good B, there is a RHS shift, or there can be one more possibility. Sorry, one product price decrease, another product price increase. One product price decrease, RHS, another product price increase, LHS. Clear, Ram? See, now there is a LHS shift at one place, RHS shift in other place. Yes, possibilities are there. Any mix match is possible. Clear, Ram? So, budget line is also called as price line or income line. What is it? Price line or? Within which a consumer will be consuming two commodity within the given income and price of goods. Given income and what is the reason for RHS shift? Increase in income or decrease in price. What is the reason for LHS shift? Decrease in income or increase in? Clear? Understood? Next, last but not the least, equilibrium of ordinal approach. What is it? Equilibrium of? See, there are two conditions for equilibrium. Number one, budget line and indifference curve should be tangent. What they should be? Tangent means they have to just touch like this. It should not cut. It should just touch. With that respect, IC2. See at the point E, it is just touching the line. It is not cutting the line. And at the point of tangency, MRS or ROS should be equal. That means we are consuming both the commodities in a equal quantity or equal proportion. Equal quantity or? This is equilibrium under ordinal approach. Which approach? See, this whole chapter we are interested to identify equilibrium. Which equilibrium? Consumer equilibrium. Maximum satisfaction? No change. What is the maximum satisfaction in LDMU? What was the equilibrium? TU maximum, MU. In consumer surplus, 3 equilibrium. Single commodity, 2 commodity, more than 2 commodity. Single commodity, P equals MU. 2 commodity, MU of X by price of X equals MU of Y by more than 2 commodity, same formula. Backup is there, don't worry. More than 2 commodity, same formula. But MU of N divided by price of N. Is that clear? Understood? So by this, entire concept of consumer behavior also comes to an end. Clear up? Flip back your page. Have a look before looking into your exam questions. Let's solve some exam questions of chapter 2. Is it raining?
No, sir, this is.
Okay. Okay, see there. When some people starts investing, bandwagon effect, already we did this. Next up. Question number 85. Excess of price which a customer would be willing to pay rather than no. I am willing to pay. See, more prices na excess. What do you mean by excess? Surplus. What is it? Consumer surplus. 86 question just now we discussed. Next, citrus paribus we discussed. This also done. This also done. From this paper, chapter 2. Only these many questions, I guess. No, that's it. Chapter 2 was self-relevant questions. Okay, next September paper. Now, see that. Suppose the price elasticity of demand. What is it? Price for the firm for the product is minus 1.2. Price elasticity 1.2. Minus we are ignoring. 1.2 greater than 1. See the option they've spoken about revenue. TR. Outlay. What is it? Outlay. Revenue. TR means what? Outlay. And profits. See TR. Greater than 1. Negative relationship. Price and outlay will move in a dash direction. Opposite direction. See, TR will decrease, but profits will opposite direction. Clear? Price and outlay will move in an opposite direction. So already 7 question we did. 8 question. With respect to the proportion, properties of indifference curve, which of the following statement is false? They're asking which of the following statement is false. Intersecting point of two indifference curve represents highest level. Is it so? Whichever is away from the origin, that will give highest level. Next, problem is given. I think we solved this, na? We didn't solve. 9th one. The price of the commodity is rupees 10 per unit. At this price, quantity supplied is. See, price is 10, quantity is 500. Now, the price elasticity of a supply of a commodity is 1 point. They have only given the price elasticity. Now, they're asking you to identify what will be the change in quantity. If the price changes by at what price the quantity to be supplied would be 20%. That means they are saying 20% quantity is increasing. What is earlier quantity? What is 10% of 500? 50. 20% means 100. See, I have already given here P by Q. Price is 10, quantity was 500. They are saying quantity is increasing by 20%. That means 500 will become 600. And we need to identify the new price. And they have only given elasticity 1.25. They have only given na. So put down the formula. Percentage change in quantity demanded divided by percentage change in main formula. Percentage formula. Already 1.25 we have. Now identify percentage change in quantity. 500 to 600. What is the percentage change? 20%. They have only given na. Now write down the formula. Same to same. Change in quantity 20 divided by change in price. End answer is 1.25. So change in price will go to the LHS and it will come here and this will come to the bottom. So 20 divided by 1.25. Do it. 1.6. Earlier price is 10. Now for that 1.6 gets added. 10 plus 1.6. 11.6 is the answer. Clear? Anyone having doubt? You want me to write this and explain it once again? Should I write? Bye bit ಹೇಳ್ಬೇಕು. See here. What is that information given? The price of a product, rupees 10. They have given quantity, they have given how much? 500. And they are saying quantity is increasing by 20%. Quantity is increasing by? What is 20% in 500? 100. Another 100 quantity is increasing. Earlier it is 500, now it will become? And they have only given elasticity. Elasticity value they have only given 1.25. Now what is the formula? Price elasticity of demand is equals to P by Q. Why do you want to write this formula? Straight away they have given answer now. So we will go with percentage quantity demanded divided by percentage change in. So 1.25. They have only given answer now. Price elasticity of demand. Now how much is the change in demand? So 20% divided by changes in price. We need to only identify changes in price. Now see, this will go to the LHS and this will come to the denominator. So 20 divided by 1.25. Answer is 1.6. That means price will increase by another 1.6. What is the earlier price? Wait. I think we have missed out something. 1.25 is there, Allah. Hey, we have to convert that into percentage. 0.16. 0.16 is nothing but 16. 100 is nothing but 100% is referred as 1. Then what is 0.16? Clear? Same thing, they are representing. Now you are adding that 1.6 to earlier price 10. So it becomes 11.6. Earlier it was 10. That 1.6 gets added. So 16% is getting added. So 10 plus 16%, that is 1.6 gets added. So 10 plus 1.6. Clear? Next. Mr. X and Mr. Y are rich rivals. Who are they? Rich. And in a party, Mr. X wears an expensive dress. And on seeing it, Mr. Y also wants the same dress. Demonstration effect or bandwagon effect. Clear? But read the full question. Also same dress. Okay, decided to reject the use of a same dress further. Snob. That means he also wearing. So I don't want to wear this. Snob effect. Next. If the income elasticity, which elasticity? E greater than 1 luxury, E lesser than 1 normal goods of a specific type of a good is greater than 1. Greater than 1 means luxury goods. Next, an increase in consumer surplus is likely to occur. When will a consumer surplus will increase? When the price decreases, now I can afford it in much more cheaper way. When there is a fall in price. Next, which tool does the ordinal utility approach? Which utility? Ordinal utility approach used to analyze consumer behavior and based on the which among this is ordinal approach theories? Only one. Indifference, undifference curve and budget line. These are the two ordinal. Only one is given there. Next, I think did we do this? Coffee and tea we did not. Advertisement also we did. That's it. See, these are the chapter 2 questions. Clear? So by this entire chapter 2 comes to an. So that was one of the biggest chapter. Clear? Demand, supply, consumer behavior, and we also took chapter 4, unit 2. Now we will enter into chapter 3. We will start with theory of cost. What do we start with? Theory of. Now what do you mean by cost? All those monetary expenses. Which expenses? See, even in that expenses there are two kinds. Monetary and non-monetary. What is it? Monetary and? So what is non-monetary? Depreciation, best example. We will show it as an expenses. In reality, is money going outside a business? Money is not going outside a business, but we are showing as an expenses, though they are non-monetary. But in this chapter, we are giving more importance to monetary or non-monetary. Monetary, in order to understand what do you mean by cost. What do you mean by money which is incurred as an expenses and money which is leaving the organization? Such monetary expenses, who is incurring it? That is called as an. See, there are mainly 12 types of cost. Out of 12, 8 are important. How many are important? 8 are important. First one, fixed cost. Second one, variable cost. Third one, fourth one, fifth one, sixth one, seventh one, eighth one. From any of this, the question can come. We can never predict. From anywhere, any nook and corner, they can screw your happiness. Clear? Huh? Let's get started. Now, if you remember, we took one example. Shashikiran is a bench manufacturer. Who is Shashikiran? Bench. And in order to produce that bench, I have taken him premises for rent. Let's say my rent is how much? And to produce every single bench, my raw material cost us 100 rupee. Let me say to produce 10 benches, it will be 1000. To produce 100 benches, 10,000. Now, whether I produce or whether I don't produce, it doesn't matter. Every single month, I should pay the rent. That is fixed cost. Which cost? See, all those monetary expenses which are dash, unavoidable, whether you produce or whether you don't. It doesn't matter. You need to incur that expenses. That is called as fixed cost. See, 0. Even I'm not producing anything. Still, I need to pay the rent of 10,000. And see the graph which is parallel to which axis? X-axis. That means perfectly elastic. It doesn't matter whether you are producing 10 bench, 20 bench, 30 bench, 3,000 bench, 2,000 bench. It doesn't matter. Rent remains same. That is fixed cost. Which cost? Suppose if I'm producing more units, if I'm producing what? Raw material cost will increase. Those expenses which changes due to change in output. What is it due to change in? That is called as variable cost. If output is more, total variable cost will be more. If output is less, total variable cost will be. Now here the confusions will start. There are two logics here. One, when proportionate change is equal. Second, when proportionate change is not equal. So what does that proportionate change equal? Listen, everyone, close your books and listen better. Close it off. Don't write anything close. This is where you will actually go wrong. See, what did I say? To produce one single bench. What is it to produce? My raw material cost was to produce 2 benches, 3 benches, 4 benches, 5 benches. That means for every bench, 100, 100, 100, 100, 100 getting added. That is proportionate change is equal. Every bench, 100, 100, 100. If that is the case, variable cost will be upward sloping linear curve. What it will be? But every time proportionate change will not be same. 100, 100. It will be unequal. What it will be? See, I'm not even producing anything. So variable cost is? So let's say I'm producing one single bench. Variable cost is? See, I'm producing 2 benches. It is not 200 now. 3 benches. It is not 300. 4 benches. It is not 400. 5 benches. Is proportionate change equal? Every time is it just increasing by 100 rupee? No. Now this time it is unequal. And this is the general nature of variable cost curve. It will be unequal. That's the reason it will be inverted. Yes. What is it? Inverted S shape curve. It starts from origin. If at all we are not producing anything, variable cost is only when I start producing more number of units, next variable cost starts increasing. Whenever output increases, variable cost will also. What is the general nature of variable cost? Inverted S in shape. Which shape it is? Clear? Now, why it is inverted S in shape? Because of law of returns to scale. Because of dash? This is production function under long run. Production function under dash run? Now, production function under long run is law of returns to scale. Production function under short run is called as law of variable proportion. Still, yet to do it. I will revise it. Theory of production. First, we are doing theory of cost. Next, we will start with theory of. Clear? Now, under law of returns to scale, there are 3 stages. IRS. And see there, in IRS, output will increase dash proportion. In CRS, DRS, so more proportion, same proportion, less proportion. Somewhere we have seen this word, more proportion, same proportion, less proportion. relatively elastic more proportion, relatively inelastic less proportion, unitary elastic same proportion. Their customer point of view, here it is manufacturer point of view. Their relationship is price and demand, here relationship is in more proportion. Suppose if input is increasing, what is that? Input is
Increasing.
let's say by 10%. Now output will increase more than input. Output will increase, let's say by 20%. In same proportion, if input increases by 10%, output will also increase by. In DRS, input increases by 10%, but output will increase less than 10%, 5%, less proportion. See, that is why I said more proportion, same proportion, less proportion, important, meaning, numerical value, alternative name, everything was important there. Clear? So, in case of IRS, what is it in case of?
Yes.
Output increases dash proportion, more proportion. CRS, DRS. So, due to the combination of IRS, CRS, DRS. See, this is IRS, this is CRS, this is DRS. So, this is inputs and this. Due to the combination of IRS, CRS and DRS, variable cost curve is dash in shape, inverted S in shape. See here, in IRS, let's say this is 10%, this will be 20%. This is 20% in CRS, this is also. And here let's say it is 50%, but here it is only 20%. Clear? Due to the combination of IRS, CRS and DRS, variable cost is dash in shape, inverted S in shape. Clear? Understood? Suppose if at all we are operating only and only in CRS. What is it? Only and only in?
Yes.
Then graph is going to be upward sloping straight line curve, like same proportionate change. See here 10% increase, here also.
10%.
Here 20%, here also. So it will be upward sloping straight line curve. Already we have discussed upward sloping straight line curve when proportionate changes equal, or in case of. Clear? This is the variable cost. Two important concepts: proportionate change equal and proportionate change unequal. After that, there are two types of variable cost. How many types of variable cost is there? First one, semi-variable cost. That means both are there. Fixed cost is also there, variable cost is also present. Up to some extent. What is it up to? Fixed cost. Once upon a time, long ago, auto rickshaw in Bangalore. Now no one follows it. Everyone are Ola over, spoiled films. For first 2 kilometers, 30 rupees. Beyond 2 kilometers, if you travel, meter starts ticking. According to the meter, you need to pay. But for first 2 kilometers, how much? Whether you get down in next road, whether you get down after 1 kilometer, it doesn't matter. Minimum you should pay for 2 kilometers. That is how much? 30 rupees. See, up to some extent, cost is fixed. 30 rupees. Clear? Beyond that, after 2 kilometers, what is it after? Next meter starts ticking depending upon your usage or distance traveled. That is semi-variable. To some extent cost is fixed. Beyond which cost starts varying. Best example, electricity. Even though if you are not at your home, still you will get electricity bill now. Minimum payment has to be made. Now leave it free and all. Earlier, before giving it free, whether you use it or whether you don't. Minimum charges are there. You need to pay the minimum charges. Beyond that minimum charges, if at all you are consuming, then electricity bill will increase depending upon your usage. That is semi-variable cost. Which cost?
Semi-variable.
Next comes stair-step variable cost. Every additional expenses will be uniform. What is it? Every? See, to be frank, it should be upward sloping curve like this, straight line curve. But rather than giving upward sloping straight line, they are given like a staircase. Sir, one chips packet, 10 rupee. One more chips packet, 10 rupee. Now chips packet price increased, sir, from 10 rupee, now it is 12 rupee. Thereafter, every chips packet is 12, 10. Every additional expenses are same. What is it? Every? Clear? That is variable cost. That is second type. That is stair-step variable. What is it? Clear? By this variable cost comes to an. See, fixed cost, whether you incur, whether you don't incur, it is going to remain constant. Whether you produce, whether you don't produce, it remains same. Variable cost only depending upon output. If output, variable cost will. If output decreases, variable cost will decrease. In the two types, semi-variable and stair-step. Now, cocktail of both. What is that? Fixed cost plus variable cost. There might be multiple fixed cost, multiple variable cost. Best example, salary is paid to employee. What is it? Every month same salary, na? Will you pay different salary? No. Fixed cost only, rent is fixed cost. Now like this, multiple fixed costs are there. Everything put together is called as total fixed cost. What is it? Same way, variable cost, multiple things are there. Electricity charges, raw material expenses, everything put together. Total fixed plus total variable, both put together is called as dash. Total cost. So the formula of total cost is TFC plus TVC. Clear? Understood? Now, observe, this is most important. Whenever output is zero, still you have to pay rent, you are not even producing anything. Yes, sir. Let's say 100 rupees is my rent, total fixed cost. Variable cost will be zero, na? I'm not producing anything, so variable cost will be. But what will be the total cost? 100. Whatever I incurred as a fixed cost, that itself becomes a. That means when output is zero. What is it when? Output is zero. TFC is equal to TC. Clear? Understood? Now, while plotting the graph, see total cost curve will start from the point where total fixed cost will start, because when output is zero, TFC is equals to TC. TFC will be equal to dash. That's the reason TC curve starts from TFC, but TVC starts from origin. TVC starts from where? Only when I produce something, then I have a variable cost. If I don't produce anything, will I have any variable cost? No. And what is the general nature of variable cost? Inverted, yes. Clear? So this is the concept of total cost. Now comes the biggest and the most important topic and confusing topic of your entire theory of cost. Average. Now, length and breadth the concepts are LAC, SAC, types of average cost, economies of scale, diseconomies of scale. Now the real devil starts. What is the meaning of average per unit or every single unit? Clear up. Now let's say for example I am producing some 100 benches. How many benches? 100. So to produce 100 benches, let's say my total cost is 20,000. Total cost is how much? 20,000. And how many units I am producing? 100 benches. So what will be the average now? 200. That means to produce every single bench, my cost is how much? 200. Now this 200 will also include fixed cost as well as. That is what? Average fixed cost, average variable cost. In every single unit, how much of fixed cost is present and how much of variable cost is present. There are two types of variable cost. How many types of variable cost? Variable cost. Variable cost, average cost. See, when I say two types of variable cost, people are like, yes, two types of variable cost. There are two types of. First one, average fixed cost. See, proportion of dashed cost present in every single unit. Say I am paying a rent of 100 rupee, whether I produce 1 unit, 10 unit, 200 units, 40 units, 50, 100 or even 10,000, it doesn't matter. Rent remains. So total cost incurred divided by number of units. Now take out your calculator. Do it. 100 by 10. 100 by 20. Do it 50. Yeah. Next, 100 by 40. 2 point. 100 by 50. 100 by 100. 100 by 1000. 100 by 10,000. 100 by 1 lakh. That means average fixed cost will never become zero. At least a minute fractional like 0.0001. At least a minute fractional element of fixed cost is present. That means whenever you are plotting that AFC, it will go almost near to the x-axis, but it will never touch the x-axis. Can you see that small gap? It goes almost near. It goes almost to the x-axis, but it will never touch the x-axis. See, whenever output is increasing, AFC keeps on decreasing, but AFC will never become zero. AFC will
Never become zero.
clear, understood. Next comes average variable cost. See, it is J-shaped curve. Which shape curve?
J-shape.
J-shaped curve. Initially, cost will decrease. Next, cost will become, and then cost starts. We also took an example for this. For every 1 hour, if a labor works, we will pay 100 rupees as wages. How much do we pay? Okay, first person I appointed. He is producing 10 benches in a day. How many?
10 minutes.
In that 1 hour. Now, how much wages should I pay him? 100 as promised. Now, I will appoint a second fellow. Now, both of them together. What is that? Because total concept is cumulative. What is total concept?
Cumulative.
Now both of them together in 1 hour, they are producing 25 benches. 1 hour they are working. I need to pay 100 rupees wages. How many of them are there? 100 plus 100. Now I will appoint a third guy. In 1 hour, they are producing all three put together is 33. How much wages should I pay? See, wages paid is a variable cost. Na? Now, what is the formula for average variable cost? Simple. Total variable cost divided by quantity. Same way, what will be the formula for average fixed cost? Total fixed cost divided by quantity. Now, wages paid is 100. Units produced is 10. 100 by 10. Next, 200 by 25. 8. Next, 300 by 33. 9 point. Now, observe there. First, from 10, it reduced to 8. It has become minimum. What it has become? And then from 8, it started to increase. First decreased, became minimum, and then it started to. That is why it is J in shape. Which in shape? Clear? Huh? So average fixed cost will be downward sloping curve, but it will never touch the x-axis. Average variable cost is dash in shape. Clear? Now, combination of AFC and AVC. What is it? Combination of? Will derive AC. That will derive what? If you remember, what is the total cost formula? TC. TFC plus, same to same way I can say AC is a combination of AFC plus, and just now we have also understood the graph. AFC goes downwards like this. It will never touch x-axis. AVC will be. Now, because of combination of both, AC curve will be U in shape. AC curve will be dash in shape. Clear? Now, AC curve is dash in shape because of combination of dash and dash. Because of combination of AFC and AVC. Now comes the question, sir. Why average variable cost is J in shape? Why average variable cost is? Because of law of variable proportion. Because of dash? That is production function under dash run. Now see there are three stages: SIR, SDR and SNR. In SIR, output will increase. In SDR, output will increase. But now comes a kahani mein twist. In SNR, output will not increase. Rather, output starts after a dash point. Now we need to identify which is that certain point beyond which output is not increasing. Rather, output is decreasing. Now listen to this carefully. This graph is most important. Again, connection comes in theory of production. So listen to this carefully. There are three stages in law of variable proportion. Which are the three stages? SIR. In case of SIR, AFC is also decreasing. AVC is also. Henceforth, AC will also decrease. Henceforth, AC will also. By end of stage 1. What is it by end of? AVC will become minimum. What will become minimum? AVC. Now, in stage 2, this is the most important stage. Now, AFC continues to decrease, but AVC slowly starts. Let me repeat it. AFC decreases faster. AVC increases slower. Variable cost increases slow, but fixed cost decreases. Henceforth, AC continues to decrease until AC becomes minimum. Until AC becomes dash? Minimum. Now, this is the most important point. Whenever AC is minimum, cost of producing every single unit has become dash. That is what every manufacturer wants. Na? Whenever we are producing a goods, we always want to produce at a lesser cost. Which cost? Or a minimal cost. Which cost? And whenever AC is minimum. What is it? Whenever AC is? Observe this. AFC is equal to AVC. What is it? AFC is equal to? And that is what we call certain point. Which point? So at this certain point, average fixed cost is equals to average variable cost. Now after this certain point, now observe it in the last stage, that is SNR. Fixed cost no doubt decreases. AFC decreases, but now it will decrease very slow, like decimal 0.1, 0.001. But AVC starts increasing faster. AVC increases in the last stage, that is SNR. Variable cost increases faster. Fixed cost decreases slower. Henceforth, AC will increase. AC will. Now you tell me, when your production cost is increasing, are you interested in producing the goods? Where are you interested to produce? When AC is to become minimum. AC should become what? That is where we are interested in. Accepted? That is why I said stage 2 is most important. This is the place where every manufacturer wishes to produce, because AC becomes at the same time AFC is equals to, and that is called as dash point. Clear? Understood? So after certain point, should output increase or should output decrease? Output should decrease. If you increase, cost will. Are you interested in producing when cost is increasing? No. You always want to produce when cost is, when cost will become minimum. Stage 2. Which is that stage 2 called as? SD. Stage of diminishing. Clear? Understood? This is the important concept. Clear? See, end of the day, every manufacturer is interested in producing in which stage? Stage. See, any producer will prefer to operate in stage 2 because AC becomes AFC and AVC both are clear. Now comes a tortoise, a shell. And this time the questions have come from tortoise, shell. I will show chapter number 3, theory of cost questions. See, I even taught you a shortcut. If you remember, there are two concepts. How many concepts are there? Two concepts are there in this tortoise shell. One is a value concept, another one is a rate of increase and rate of decrease. First, let me explain rate of increase and rate of decrease. See, theory of production, bell-shaped curve, AP curve. Which curve? AP curve is a bell shape or inverted U in shape. AC curve. Which curve? AC curve is also U in shape. AC curve will be dashed in shape. Now, this is the point of minimum of AC. This is the point of maximum of AP. Now, initially, what is it? AC will decrease. Then AC becomes minimum. Then AC starts. Same way. Initially, AP will become maximum. And then AP starts decreasing. Accepted? 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 Hello there. If at all you guys are simply sitting without opening mouth, after a few minutes, you will start sleeping. So that's the reason. You have to respond. Hero. What they said? Like this. Clear? I am unable to listen to you guys. Clear? 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 This is called response. So AC first decreases, then AC becomes, and then AC starts. Same way, if I need to speak about AP first, then AP becomes, and then AP starts. Now, the concept which I will be explaining is rate of increase or rate of. That means which will increase faster or which will decrease faster. Now, remember this very carefully. There is only one place we have to be careful. Which is that one place we need to be careful. When AC decreasing. What is it when AC? Whenever AC decreasing, AC will decrease faster than MC. Clear? Next, whenever AC is minimum. What is it AC is? There is one more logic. MC curve will cut AC curve from dash and dash. Below and minimum. Wait. This is AC curve. Let's say this is. Now, whenever MC cuts AC, this is the minimum point of AC na, at this level. MC curve will be equal to. Clear? So, whenever AC is minimum, AC will be equal to. Next, whenever AC is increasing, whenever AC is, dash increases faster than dash. MC increases faster than AC. MC increases faster than AC. Clear? Next, in case of AP, all the corners, already I taught you a shortcut. In corners, dash will be dash. Marginal will be always greater than average. That means MP will be greater than. Here also MP will be greater than. Next, whenever AP is maximum, AP is equals to. So we need to be only and only careful in one spot. Whenever AC is decreasing. Whenever AC is decreasing, average will be greater than marginal. In remaining three corners, marginal is always greater than average. Clear? Understood? This is the concept of rate of increase and rate of decrease. And when theory of production comes, I will also explain value concept. Which concept? Clear? So this is the concept of average cost. Which cost? And next comes your favorite topic, LAC and SAC. Most ignored topic by the students, and one question will definitely come from this area. One or two questions. Clear? Okay, how many of them have not understood this LAC and SAC? Whole class. Even in recording also you didn't understand that.
I forwarded it.
Oh, you forwarded that one. Nice. When complicated concept comes, people will forward. Why complication? Already second PUC board exam life was complicated. Upon that CA foundation, why to complicate much? Ah, nice. Others studied or not studied? Studied, but forgot. Studied, but unable to recall. Okay, listen. Let me give an example. Based on example, I will continue. So, okay, bench example. Enjoy. Shashikiran is a bench manufacturer. Okay. Now I took this premises for rent. Now in this premises, let's say for example, I have placed a small machinery. Which machinery? Okay, let's say I have a building. So in this building there are 2 floors. How many floors are there? Say in a ground floor, let's say SAC1. I have a small machinery. Which machinery?
Small.
In a first floor, let's say SAC2. I have a medium size machinery. And SAC3. What is it? SAC?
3.
In a second floor, I have a large machinery. Which machinery? Say this SAC1. In a day, let's say for example, I can produce some 1000 benches. How many benches? In SAC2, in a day, I can produce some 3000 benches. In SAC3, in a day, I can produce some. That is the total capacity. Which capacity? In a small machinery, what is the maximum capacity can produce? Okay, let's say for example, I got an order to produce 500 benches in a month. How many benches?
500.
Capacity in a month for SAC1 is 1000. Now I got an order size of how much? In which machinery should I produce? Small, medium or large? Small machinery. Okay. If I am producing at small machinery at 500, at which number of units? Even my cost is minimum. That is what every manufacturer wants to achieve, na? Cost is minimum. But day by day popularity increased. Now Shashikiran benches are becoming famous. Now slowly demand picked up. Now slowly demand became 700 benches per month. How much? 700. Now I know my cost has increased. At point A my cost is increasing. Now I should take a decision. Shashikiran, stupid fellow. In further, if your popularity increases and if you want to produce more benches, if you are still in a small machinery, your cost will go till point N. It will go till where? And it is almost a peak level. Suppose at this level, now if you take a decision and if you jump to a medium machinery, which machinery? Next, your cost will decrease and it will go to point M. Simple. Sir, 20 students are there coming to marathon. Small classroom enough. Sir, 50 students are coming. Is small classroom enough? Medium size classroom is enough. Sir, 100 students are coming. Large. Like this, whenever capacity is increasing, I will buy a larger machinery and I will produce through a larger machinery. Same way. Now, when I was at 700, I took a decision. Should I continue in a small one or should I go to the next medium size one? Now, I thought, let me go to the medium size. In future, if demand increases, so my cost keeps on decreasing. If I need to produce more, my cost keeps on decreasing. Rather than going to point L, it will come to point M. Accepted? Accepted. Okay. I can make out by looking into your face, don't worry. Next. As expected, demand increased to 1000 benches per month. How many benches? Now, as expected, I was in a medium machinery, so my cost started to decrease. Cost started to decrease. Now I am producing at point M. Good. Next, popularity increased, still production capacity increased. Now I am producing 1500 benches. How many benches? 1500. My cost is minimum, even I want to produce at this level. But day by day, Shashikiran is becoming famous. Now my bench manufacturing is also increasing. Now let's say demand went up to like 2000 benches per month. Now again I should take a decision. Shashikiran, should you want to still continue in a medium machinery? If you increase production, next cost will suppose if you go to large machinery, cost will increase. So I jump to a large machinery. As expected, demand increased. Now I should produce 3000 benches a month. How many benches? 3000. My cost is minimum. Suppose in going further again, if demand increases, I will buy another bigger machinery, SAC4. What is it? Like this, when the capacity of a firm is increasing, we should buy more and more plant. We should buy more and more. So SAC1, what is it? This SAC2, SAC3, SAC4, SAC is called as a plant curve. Which curve? See here, SAC, short run average cost curve is called as a, and LAC is called as a planning curve. Which curve? or least cost combination curve or envelope curve. Clear? Now let's decide. Shashi Kiran, you are producing 5,000 benches a month. How many benches? Okay, definitely SAC 3 is not possible. 3,000 benches is my minimum cost. I bought another bigger machinery where my minimum cost is where I will be producing 5,000 benches. How many benches? Okay, if I'm producing 5,000 benches in 1 month, in 1 year, how many benches will I produce? 60,000. Okay, now Shashi Kiran decided. In 1 year, I will be producing 60,000 benches. How many benches? 60,000. To produce 60,000 benches at a minimum cost. Which cost? Minimum. For 1 whole year. For 1 whole year. That means every month I should produce how many benches? And even 5,000 benches I should produce at a minimum cost, na? So which machinery should I choose? SAC 1, 2, 3 or 4? SAC 4. In SAC 4, which concept SAC? My cost is minimum to produce how many benches? I decided every month I am producing how many benches? Whole year if I produce 5,000 benches by using SAC 4, in an entire year I will produce how many benches? That is LAC now. My long run planning. What is it? LAC is a planning. What is it? LAC is a that is decided based on planned curve. I decided I will be producing in SAC 4 at the minimum point M. Even my cost is minimum for 1 month. Cost is also minimum for 1 year. Cost is minimum for as well as cost is minimum for. So I am producing 60,000 benches at this point M. At the point cost is minimum for short term as well as long term. That is called least cost combination. What is it called as? Or optimum scale of plant. What is it also called as? Optimum scale of. Now listen to this carefully. If you observe black color dotted lines, can you observe that black color dots? Those are tangent point. Which point? Between LAC and SAC. That means LAC curve is touching SAC at that black color dot. My question is, listen to the question carefully and then answer. Observe that. Is black color dotted points is always minimum of SAC curve.
No, SAC.
See there? SAC is minimum. Is it at the minimum of SACs?
No, sir. No.
This is minimum of SAC 1. This is minimum of SAC 2. This is minimum of SAC 3. This is minimum of SAC 5. Minimum of SAC 6. Minimum of SAC 7. That red color dots are the minimum points of that SAC. But my question was, is LAC and SAC always a tangent? Always tangent at the minimum points? That was the question. That is what I asked. Is LAC tangent to SAC at its minimum point always? But where it is tangent to the minimum point always? Only at optimum scale of plant. Only at? Clear. Now listen to this carefully. This is what exam questions are going to come. Towards the left side of optimum scale. Now I will divide the entire concepts into 2 sides. Left side and. Now observe it. When I say left side, that means whenever output is increasing. Whenever output is listen to this carefully. See, whenever output is increasing, LAC is decreasing. Do you agree? When output increases, cost decreases. What is it when output increases? Because of economies of scale. Because of and economies of scale will exist until optimum scale of plant. It will exist until when? Until optimum scale of plant, it is dash economies of scale. Beyond optimum scale of plant, this is called diseconomies of scale. What is it? Diseconomies of scale. That means I myself don't know how much I am producing. I am producing beyond 60,000. It can be 70, it can be 80, it can be 1 lakh. That means I am over exploiting. What am I doing? Now listen to the question carefully and then answer. In economies of scale, where? Left side of the graph. That black color dotted line is the tangent point. Is it towards the left side of SAC or right side of SAC? Or I can call it as decreasing side of SAC. Which side? See, like this, decreasing side. It is at the decreasing side. Accepted? That means this is where the exam question comes. Let me ask you the exam question. LAC is tangent to SAC towards dash side in economies of scale. Left side or decreasing side. Left side or? Economies of scale exists until dash level of output. Now, who said this was toughest concept? Or you skipped it, sir? Easy concept. Now, in diseconomies of scale, where? Okay, let me use a different color, orange color. In diseconomies of scale, after the 60,000, when output increases, what is it? Output?
Increases.
Now, cost is?
Increasing.
Now, listen to question carefully and then answer. That black color dotted line towards diseconomy, towards which side? Is it towards the right side or is it towards the left side? Right side or increasing side? Clear, huh? That means LAC is tangent to SAC. LAC is tangent to?
Yes.
In diseconomies of scale towards dash side. Right side or increasing side of SAC. Right side or? Only and only at the least cost combination. Only and only at the?
Least cost.
LAC and SAC both are tangent at dash point. Minimum point. Tangent at the? Even SAC is minimum. LAC is also? Only at that optimum scale of plant. LAC is also minimum. SAC is also? They both are tangent. They both are? During economies of scale, when output increases, cost will decrease. In diseconomies of scale, when output increases, cost
Increase.
So where you wish to produce, when output is increasing, should cost decrease or should cost increase? Cost should? That means every manufacturer will prefer to operate in economies of scale, not in. Clear?
Yes.
This is LAC and SAC concept. That's it. Let me ask 3 simple questions which will come in the exam. Now you answer it. Is LAC always tangent to SAC? True, false, partially true, none of the above. Wait down. Madam, answer. Is LAC always tangent to SAC?
No, yeah, the minimum point is tangent. It is not always straight.
Tangent means just a touching. What is it? Just a? Then what is that red, black color dotted lines? Tangents only, na? Remember, LAC is always a tangent to SAC. Is LAC always tangent to SAC at its minimum? But where it is tangent at its minimum? Or until economies of scale. Until when output increases, cost will
Increase.
That is why you would have heard the statement now when we are producing at bulk. When we are producing at cost of production is lesser. Cost of production is? That is economies of scale. They are speaking about what? That means until certain point. Until dash point? Which is that certain point? That certain point is optimum scale of plant. Once you achieve that optimum scale of plant, by mistake if you show your over smartness and if you produce more, now cost will not decrease. Cost will?
Increase.
Cost will?
Increase.
Welcome. Devil is coming to attend the class. Which is that movie? Kantara, not Kantara. What is it? Lawrence movie. Which is that? Kanchana. Part 4 or part 5 now? 6th. Day. You guys tolerated till 3 parts also. Huh? That second part was horrible. They are saying devil. It is like comedy movie.
The only first part.
No.
Only.
Oh, okay. Chalo, now devil went. I will concentrate. Now see deviations in the class. Now everyone got a response. See the response now. Everyone. Sir, only first part was good. The second part was not good. When I was asking some question, others are like, response will not come. Ask about movie. Tapak response will come. Day. Madam, done with your first round of sleeping. The only student in my entire career who is opening her eyes and sleeping in the class. I know she is not understanding anything. But still I asked, Madam, understanding? Madam, understanding? She is daydreaming in the class. Oh. What do you mean by CA, Madam? Day, my business da, future prospective business da, wait da. Hello, jokes apart, we'll come back to the topic. So, 3 simple questions I will be asking. Now you need to respond. Is LAC always tangent to SAC? True. Is LAC always tangent to SAC at its minimum point? But where it is tangent at its minimum? Optimum scale of plant. Not until the in optimum scale of plant. Only and only at this one single place. Clear? Both are tangent at their minimum. Okay. Now, from the economies of scale point of view, the question comes. In economies of scale, what is it in? When output increases, cost. In diseconomies of scale, when output increases, cost. Next, in economies of scale, LAC is tangent to SAC towards dash. Left side or decreasing side. Left side or? Clear? In diseconomies of scale, LAC is tangent to SAC towards dash. Right side or? That's it. When we are producing in a long run, we have a target. Shashikiran's target was 60,000 benches. To produce 60,000 benches, I have a different machineries. SAC1, SAC2, SAC3, SAC4, SAC5. Like this, total 7 SACs are there. 7 different machineries are there. In which machinery if I produce, that means in which plant, response, in which if I produce in short run as well as my cost will be minimum. That is what I should decide. Boss, I am producing 60,000 benches for 1 year. That means every month I should produce for 5,000 if I produce at 4th machinery. Every month also my cost is minimum. Throughout the year also my cost is least cost combination. What is it? Least cost combination. That's it. That means my long run planning. What is it? Long run? Planning is decided based on short term plant size. First I should decide in which plant am I producing. In which machinery. First machinery, second, third, fourth, fifth, sixth, seventh. I have total 7 classrooms. Now CA Foundation marathon class is going on. In which classroom Shashikiran is conducting? First decide that. Depending upon that, take the registration. What is the limited seats? We say only limited seats. What is that limited seats? Sir, 50 students. That means only for 50 students we will give an encouragement for offline class. Rest remaining online. Like this, only limited seats are available. You would have seen that now. Posters, only limited seats. Decide your SAC first. What is your plant size? What is it? Then do your long run planning. That means your advertisement, promotions and all. We only take 50 seats, limited seats available. Clear? That is SAC. And after that, all advertisements, everything will come for long run. So, in order to run your organization for a longer duration of time, first you should decide your shorter duration of time. All the shorter duration of time put together, it will become that is what? Long run planning. What is it? Is decided based on short term plant size. Short term? This is LAC and SAC concept. In that, they will ask question from economies of scale and in which level, when output increases, cost decreases? Economies of scale. In which level, when output increases, cost will also increase? And this was the exam question. For this, very difficult, sir. Too much of difficulty, sir. We have skipped this topic. And now, how many of you will skip? Let's see. Difficult? Such an easy concept, you people are making it complicated. By this, average cost comes to an. Next comes marginal cost. Which cost? Okay, let's say for example, now cost of producing every single bench was 200 rupees. Every single 200. My total cost. Let's say I produced 100 benches. How many benches? 100 benches. I will go back to the same example. Wait. See Shashikiran. He was paying rent. How much was rent? 10,000. To produce one single bench, raw material cost was? To produce 10 benches, raw material cost was? 1,000. To produce 100 bench, raw material cost was? 10,000. Let's say I got an order to produce 101 benches. How many benches? Now I have a customer. Now little senti about the number. Let's say for example Darshan. Darshan gave me an order for 101 benches. How many benches? Whenever you go and buy something, you will order 101. Whenever you go to temple, you will put 101 rupees in the undi. Even for Tirupati Venki also. Now he is little senti on that number. He gave me 101 benches as an order. But by mistake, my employees thought it is 100. And they produced 100 benches. How many benches? Okay, what is the cost of producing now 100 bench? Now raw material cost is 10,000. Rent paid is also. So what is my total cost formula? Total cost is TFC plus, with that respect, total cost of producing 100 bench. Fixed cost is same, 10,000. Variable cost is also. So what is the total cost of producing 100 benches? 20. Clear? Okay, now someone will ask me, Shashikaran, 20,000 is for 100 bench. What is the cost of producing every single bench? I will say, see, average cost it is total cost divided by quantity. Simple. 20,000 is for how many benches? So per bench, what is my cost? 200 per unit. Accepted. Any doubt in this? Now, what is the order size given by Darshan? By mistake, Shashikaran has produced. To cost of producing every single bench is how much? 200. How much is the shortage? Now, what will be the cost of producing that one more extra bench?
10,000 plus 100.
One second. Please explain, Pyro. I got one beautiful answer here. Go on.
Fixed cost plus
Fixed cost plus?
variable cost.
Okay. In a whole month, assume I am producing 101 bench. Already for producing 100 bench, 10,000 rent paid, na? Now just one more extra bench you are producing. Again, will you pay 10,000 rent? Then where did the fixed cost come into picture? Only variable cost. Only which cost? Of 100 rupee. There is still more Mahan Bhavs. I still remember. I can still listen to the answer. It's at 200. Sir. Because cost of producing every single bench is how much? 200. How much is the shortage? One. What is the cost for one more extra bench? 200, sir. How pa? It will not be 200. It will be only 100. It will be only. How? Only variable cost, na? Will I pay rent once again 10,000 for just producing one more extra bench? No. Accepted, na? This is marginal cost. Which cost? Cost incurred to produce one more extra unit. One more. Or one additional. 100 already I have produced. Now I need to just produce one more extra. Only raw material cost. How much raw material cost? That means, okay, let me calculate the total cost for 101 also for your better understanding. See here. Total cost for 101. TFC plus TVC. Now fixed cost will still remain same, na? But variable cost 10,000 plus 100. How much is that? So what is the total cost for 101? 20,000. What was the total cost for 100? 101. What was the difference? What was that 100 rupee? Variable. Listen to this carefully. MC changes only due to change in variable cost. MC changes only due to change in variable. Clear. So this is the concept. Again, two formulas are there. When output continuous, when output is not continuous. Whenever output is continuous, TCN, that is present minus TC. Present minus previous. Now let's say marginal cost for 101 units. Total cost of present, that is 101. 20,100 minus 20,000. So marginal cost for producing 101 units is only and only rupees. Clear. So MC changes only due to change in clear. Now if output is not continuous, MC is equals to change in TC divided by any doubts in marginal cost. And marginal cost curve will be U in shape. It will be dash in shape. And remember, in chapter 4 we will discuss this. We will only and only give importance for second side of the graph. We don't give importance for first side of the graph. Firm equilibrium concept. Clear? I will explain when I come to chapter 4. Yes, Mahira.
Sir, one more unit we produce 20,100. When we divide it with 101, we are getting 190.
Yeah, average. Now that means earlier you divided with 200. Now you are totally producing 101. So automatically your per unit cost will decrease. Now, see, his question is, sir, earlier, see, we got 200 rupees per unit. That is for 100 units of benches. Now, sir, we have produced 101. Nah, that means 20,100. How much is that? 20,000 divided by 101. It will become 199 point something. That means per unit cost is 199 rupee, not 200 rupee now. Clear? Huh? Even average will also change. Average will also. Marginal will also change. Clear? Total will also change. All the three will change. But MC changes only due to change in Clear? Now, there is one more concept called as incremental cost. Which cost? That is an extension of marginal cost. Just now we discussed marginal cost now. Just an extension of marginal cost, that is called as incremental cost. So what is this mental incremental cost? Simple. Cost incurred to produce one additional batch of output. What does it cost incurred to produce? Now Shashi Kiran was producing 100 benches. Let's assume 100 benches for a better understanding. To produce 100 benches in the month of January, 20,000 is my cost. How much is the cost? Now same 100 benches in February also I am producing. 25,000 is cost. How much? In January? In February? How much extra? That is incremental. Sir, how did 5,000 rupees become extra? I changed my machinery. That was old machinery. I bought a new machinery. Now it is taking more electricity. Or Darshan will come and say, sir, I am opening a Montessori, sir. I don't want this normal finishing and all. I want this Chota Beam, Pokemon, Doraemon, Tom and Jerry and all. That images should be there. For the printing, chemical usage and all, costs have shooten up. So due to change in business decision, due to change in what? If there is any extra cost incurred to produce the same batch of output, that is called as incremental cost. Which cost? See, it is a cost incurred to produce one additional batch of output. One additional batch of. Now, incremental can change because of both fixed as well as variable. Fixed as well as? But marginal will change only due to change in? Clear? Understood. See, examples I have given here. One second, ma. Examples I have given. See, incremental cost will be incurred by the firm when it makes a decision. When it makes a, so change there. Production line or replace the worn out machinery, sell that old machinery and buy the new machinery, or buy a new production facility and acquiring a new set of clients. See, my new set of client requires the new requirements are there. Chota Beam, what is it, Pokemon, Tom and Jerry and all he needs. Not a normal finishing and all. So extra cost. That's fine. A doubt. Outside of the organization, sunk cost. Cost once incurred which cannot be recovered back. I will explain that. Sunk cost. Sunk cost. I will explain. That is the next type of cost. Okay, since you only spoke about it, next type of cost. Sunk cost and opportunity cost. What is that? From this numerical question was asked this time. From sunk cost. Numerical question. Just you need to add two values, that's it. Concept if you knew, na, that question was actually easy. No, simple pa. Cost once incurred. What is it? Cost once? Which cannot be recovered back. Which cannot be. Best example, my business only. R&D, research and development. So basically I'm a passionate teacher, but my business is totally different. Teacher by mistake. Businessman by choice. So as a passion, I still continue teaching for the students. So I'm into the market research. So usually any company which incurs a cost on research, let's say for example, what business to do, where to do, when to do, who is my competitor, what is the strategy. When they're incurring lot of these expenses now to understand the market scenario, will you recover that money back? No. Another best example, advertisement expenses. You will bring Cardinal cave and she will be holding mango and droplets are falling. You will instigate people to buy slice. Is there anything called as advertisement income?
No.
Expenses once incurred, that cannot be recovered back. That cannot be. Let's say, sir, I was, let me say, traveling by my office vehicle, sir. Some load, luggage was more. Policeman caught me, sir. And he has levied a fine. Now, can you show a penalty income? You paid, na? Will you recover that back? No. Expenses once incurred, which cannot be recovered back. Which cannot be? They are called as sunk cost. Which cost? Preliminary expenditures. Registering the company. Initially, you need to pay government fees. All those will come and preliminary expenditures in your accounts. Na? That is sunk cost.
Through profit you can get it.
Through, see, what is the motive of conducting business? Profit. See, that motive is a profit, but do you have anything specifically called as advertisement income? Preliminary expenses income. These are once incurred. You can never recover them back. R&D expenses is one best example, and this time in the exam the question has come. See, let me show. Wait, numerical problem was there. Chapter 3. See pa. What will be the total amount of sunk cost on the basis of following information? Fuel and power, that is raw material. Na? Next, research and development. You will not recover that back. Next, rent paid. Expenses recordable. Yes, it will be part of your cost of production. Part of your... No, pa. That means, say for example, factors of production. Input is converted into an output. What is your input? Factors of production. What is that factors of production? Land, labor, capital, organization. What does land expects in return? Rent paid. Is it cost incurred on factors? Labor. Wages paid. Cost incurred on factors. You have taken a loan from a banker. Interest paid. Cost incurred. Next, expecting a profit. Opportunity cost. Next, I will explain that. What is a profit element?
Telling both the whichever we record in a trading account, that happens.
Yes. And even you will record your sunk cost in trading account. P&L. You will record it in P&L, but you can't recover them. You can't. See, neither you can apportion it to, let me say, any of your products. Direct expenses, indirect expenses. That put together is a cost of production. Sunk cost is incurred cost, where you will not directly recover them back. See, indirectly you will increase your, let me say, profit percentage and then you will recover. No, I'm not speaking about indirect way. In a recordable way, can you recover them back? I will give one more example. Next, in opportunity cost, I will give that example. Now, simple. Cost once incurred, which cannot be. That is called as which cost? Now, see here. Research and development expenses. You can't recover them at all. Rent paid. Yes, it is a part of your cost of production. Factors cost. Wages paid. Factor cost. Advertisement. Only these two. 150 plus 5. Total. For this design answer is there. So, fuel and power. Maybe. Research. No. Rent. Wages. No. Sir, I think this should be, I think, fuel and power, research and development, sir. 1150. How much? Still more Mahan Bhavs are there. They are even more legends. Research and development and rent. 159. How much is that? 159. Whichever cross combination you do, whichever wrong answer you will get, that will be one of the option. You feel like, yes, I got the answer. Your ICAI know how to screw your happiness. That is what I'm saying. Understand the logic. When you know the logical, automatically you can calculate it. Remember, cost once incurred. Cost once, which cannot be recovered. Which cannot be, or which cannot be apportioned as your part of production cost. As a part of. That is sunk. Yes, no.
In your business case, it is your production.
Which one? Business case.
In your
My services market research. Suppose you are my client. Suppose you have some business. Let's say you are running an academy, CA coaching center. You will get a research done. For me, it is an income. That is my primary business. Is getting a research is your primary business. Sunk cost income.
For you, it is not.
That is my primary business, na?
So you will not.
Okay, wait. Hello, excuse me. Listen 1 second. Okay. In BCK earlier, this concept was there. I will explain it. Primary activity of business, secondary activity of business. Only primary income is a business income. Secondary income is not there. Let's say, for example, Shashi Kiran is a cricket bat manufacturer. Virat Kohli is my customer. Every time, whenever a new tournament happens, he will come, he will buy a cricket bat for me for practicing and go. This time, out of love and affection, he gave me IPL tickets. CSK versus RCB match tickets. Now, assuming Shashi Kiran is a stupid fellow, he don't want to go and watch in stadium and all. I will sell this tickets to someone and I will make a profit. Is selling an IPL ticket is my business? But I made profits now. That is also my profit, right? But what is my primary activity of business? Selling of cricket bat. Any income earned by selling of cricket bat is my business income. See, I am into business and market research. Any income earned by doing a market research activity is my business income. From teaching whatever I earn, that is my professional income. Suppose tomorrow, let's say for example, I will place a bet. Oh, see, May 3rd, CSK versus RCB. RCB will only win. I won some 10,000 rupees. Can I call it as my business income? Income from other sources. Understood the difference? Only primary activity, that is included. Primary expenses to produce your primary activity, recordable. Anything attached to that, still you cannot recover them back. You cannot. Sunk cost. Research and development, advertisement expenses, traffic fine paid. You can't recover them. You can't show it as recovered, or neither you can include that in your per unit cost of your production also. That is sunk cost. Clear? See, sunk cost numerical problem has come. Like this, any concept, they can frame a numerical problem and they can give it like this. So that is why concept clarity is most important. Don't just go with blindly by hearting and all. It will not work. Clear? Okay, next comes opportunity cost. Which cost? Usually in class, I will give that employment example. After your BCom, last final sem, campus recruitment was there. Shashi Kiran started his own bench manufacturing, but I also had an opportunity of going for some job. Let's say there were some 2-3 companies which has come to campus interview. KPMG. What is it? KPMG, PwC, and Deloitte. Now 3 companies have come for a campus recruitment. Let's say I went and gave an interview, luckily got selected in all the 3. Now KPMG said I will pay you 3.5 lakh rupees per year. PwC said I will pay you 3.6 lakh rupees per year. Deloitte said I will pay you 3.2 lakh rupees per year. Now which one should I select? But Shashi Kiran, stupid fellow, I don't want to work under someone. I will start my own business. What is that business? Now after 1 year, by let me say doing all this bench manufacturing and all, I made a profits of 3 lakh. How much I made a profits of? 3 lakh. Now you will be thinking, hey, stupid fellow Shashi Kiran, without even taking risk, you could have earned that. And you started your business, you produced, you sold, you did marketing, every activity you did, but you earned only profits of 3 lakh. Now, cost of next best opportunity foregone. Next best opportunity. See, I have 3 opportunities. Out of this 3 opportunity, which is the best opportunity? I should only compare with PwC. Now, PwC could have earned me 3.6 lakh, but how much am I earning?
3 lakhs.
How much is the foregone? Now you tell me, in my P&L, books of accounts of bench manufacturing, I could have earned 60,000 if I could have worked in PwC. Can I show in books of accounts? No. Opportunity foregone. Opportunity? Now kahani may twist. Listen to this very carefully. Now, while calculating from the economist point of view, whose point of view? See, next concept, accounting cost, economic cost. I will discuss that. From the economist point of view, while taking a decision, we consider both the costs, recordable plus not recordable. What is it? Recordable plus? Now, Shashi Kiran, Sipa, you are incurring a cost. Let me say to produce your bench, you have a land, labor, capital, and organization. Now, what does land expects in return? Okay, you are paying your rent. Labor expects in return. Okay, you are paying your wages. Interest. Here it is. Now, my expectation of profit is at least 3.6 lakh rupee. What I have foregone? Man, I have rejected the job now. And then I am doing business now. At least whatever I have foregone, at least that should be my profit. That should be my clear. Okay, chalo, let's assume that you are paying a rent of 1,20,000 in a year. 10,000 rupees rent now. Whole year 1,20,000. Let's say you are paid a wages of 1,80,000, and let's say you are paid an interest of 1,40,000. How much? 1 lakh. And we are expecting a profit of 3,60,000. Total it. This will be 3 lakh. This will be 4 lakh plus 3, 7 lakh. Clear? 7 or 8? 8 lakh. 8 lakh. So my total cost. What cost? From the economist point of view, whose point of view? Is 8 lakh rupee. But from the accountant point of view, if you need to just record it in the books of accounts, from the accountant point of view, it will be how much? 8 minus 3.6. 4. This is the cost from accountant point of view. This is the cost from economist point of view. Now for me, whose point of view is important? Economist or accountant? Economist. Which subject are you studying? So whose point of view should be important? I don't say accountant point of view. Clear? So for me, what is the total cost that I should recover now? Okay, let's say now 8 lakh rupee is the total cost incurred. Let's say in order to produce some 8,000 benches. How many benches? 8,000. Now what is the cost of per unit? 800. The 8 lakh divided by 330 or 800. 100 or 800? Clear now? So my per unit cost, what is that? How much? 100. Now even if I sell this product for rupees 100, even if I sell this product for rupees, I recovered 8 lakh rupees now. Per unit cost is 100. Total I produced 8,000. 8,000 into 100, 8 lakh. I recovered even this opportunity cost, na? See, opportunity cost is a part of cost. What is it? Included in your opportunity profits. Included in your. Now listen to this very carefully. This is the important topic. Again, chapter 4, it gets connected. There is a concept called a supernormal profit, normal profit and loss. If you remember, monopoly, monopolistic competition, clear, perfect competition. Now, in case of supernormal profit, what is it? See, Shashi Kiran is expecting 8 lakh rupees in total revenue. Let's say I have produced 8,000 benches. Per unit cost is 100 rupee. Now, by selling this 8,000 benches, at least I should recover back how much? But I recovered 8.5 lakh rupees. How much I recovered? How much was my intention? How much I got? Supernormal profit. AR is greater than AC. Now, how much I wanted to recover? I also recovered. AR is equal to. Clear? Next, I wanted to recover 8 lakh, but I got only 7 lakh. AR is lesser than AC. What is it? AR lesser than AC. Now observe this. When cost and revenue both are equal, why should we call it as a normal profit? Because we are understanding from economist point of view. Whose point of view? Not from the accountant point of view. From the accountant point of view, my break even is 4,40,000. If I just get back 4,40,000, whatever cost I have incurred, I got it back. But who will recover your opportunity foregone? Shashi Kiran, stupid fellow, 3.6 lakh rupee. If you work with Deloitte, you would have PwC. If you work with PwC, you would have got 3.6 lakh. Na? That you foregone. Na? By sacrificing that, you have started your business. Na? At least, what is it?
At least.
Whatever I sacrificed, including that, I should recover. That is a part of cost. What is it part of? That is why. When we speak about factors of production, organization expects a profit. What is that profit? Opportunity foregone. Put together of all the four is the total cost. Which cost? From whose point of view? Economist point of view or accountant point of view? But from accountant point of view, what is the cost? Economist point of view. Okay, let's say for example, we have made a sales of 9 lakh rupees. We have made a sales of? Okay, now you calculate and you let me know. Sales of how much?
900.
Now, what is accounting profit? What is economic profit? Sales minus cost is profit, na?
460 is equal to accounting profit.
4 lakh 60,000 is which profit, pa? Okay, accounting profit. 1 lakh is economic? Accepted. Now listen to the question carefully and then answer. Now you have 4 informations in front of you. What is accounting cost?
4 lakh rupees.
What is economic cost? Which cost is greater? Economic cost is always greater than? Clear? Next up. Profit is also given. Accounting profit is how much? Economic profit is how much? Which profit is greater than which profit? This was exam question. Dash profit will be greater than dash profit. Accounting profit is greater than? Dash cost is greater than dash cost. That's it. Those expenses is found.
Why they mentioned accounts when the accounts the total profit which are included and trade.
Which subject are that is? Which subject?
The accounts
Which subject are we studying now?
economics.
Whose point of view is important?
Now I'm thinking.
Yes, that is what from economist point of view we use it for a decision making purpose. Let me give one more example. Now assume this building belongs to Shashi Kiran. Assume this building belongs to Shashi Kiran. In my own premises, I am doing this business. Hello there, listen. In my own premises, I am conducting business. In my books of accounts, I am showing as rent paid. I am showing as building belongs to whom? Shashi Kiran. Who is paying rent? Shashi Kiran. For whom he is paying? In accounts, there is something called a separate entity. Owner is different, business is different. But in economics, we don't have it. Got the clarity? Now, according to economists, who is owning the building? Shashikiran. Who is conducting business? Shashikiran. In my books of accounts, I'm showing as rent paid. Who is paying rent? Who is receiving rent? It's like Nityananda's statement. Me talking to the outside me through the inner me from the outside me. Shashikiran's building. Shashikiran's business. Shashikiran paying rent. To whom he is paying? Shashikiran. Implicit cost. Which cost it is? Implicit. These are not money went outside. These are received inside. These are received. That is the next concept. Now I was about to explain the same. Explicit and clear. Now listen to this carefully. Next 10 minutes we are finishing with theory of cost and then we are going to take a break for the purpose of all our PG students. Okay, chalo, listen. We understood with the opportunity cost, but in opportunity cost there is one beautiful statement. This can be an exam question, and once they have already asked this particular paragraph. Why is this concept of opportunity cost arises? Because of limited resources. Because of dash resources? Now see, Shashikiran, you can't simultaneously go for employment and you cannot do the business together. Not possible. Now you need to select either one. Either do your own business or either go for the. See, resources are limited that can be put into alternative uses. That means if not for one purpose, we can put it use for. See, Shashikiran, you could have worked somewhere or you can start your own business, but you both cannot do simultaneously. Na? See here, opportunity cost concept arises because of the fundamental premises of economics. Resources are, and they can be put into. This was a question. What is which among the following is the reason for opportunity cost? They have given some statements, 4 statements. In that you need to identify the right statement. Which among the following is the reason for a opportunity cost? Scarce resources and alternative uses. What is that? Clear. Next, outlay, I will explain it later. Accounting cost and economic cost. Which cost?
Accounting cost and economic cost.
Those expenses which can be recordable in the books of accounts and it is from dash point of view. That is called accounting costs, and it is also called as direct cost or which can be expressed where payment is going outside. Payment is going. Next comes economic cost. Those expenses which can be recorded plus which cannot be recorded, both put together is from economist point of view. Now accounting cost can be recorded, opportunity cost cannot be. So accounting cost plus opportunity cost put together is economic cost, or economic cost is also called as indirect cost and implicit cost. So explicit plus implicit, explicit recordable, implicit non-recordable, put together economic cost. So what is explicit, what is implicit? Simple 3 differences. Explicit, actual monetary expenses. Money is actually going outside, either in the form of paying rent, wages, interest, insurance. Clear up? These are payment concept. Which concept? Now I gave that example. Now Shashikiran building, Shashikiran's business, Shashikiran's books of accounts, rent paid by Shashikiran, received by. That is implicit cost. These are not actual monetary expenses. Money is not going outside. Rather, it is a dash concept. See, wages for self. I started my own business and let me say, Shashikiran started his own economics classes. I am only setting up all this bench, everything, set up everything, rent I am paying. Next, I am only giving a services. Best example, doctor, you will only set up a clinic. You will only come and give a treatment to the patients, na consultation, na. With the consultation fees, this is my business income. This is my consultation income. Can you divide it? Mixed income. What is that? Like that, implicit. Clear, na? So, rent paid for self-occupied property. What is it? Rent paid for? Self-paid for self-owned premises. Wages for self. These all are implicit. Money is not actually going outside, but shown as expenses. Shown as what? It is not payment concept. It is actually a receipt concept. So, explicit plus implicit put together is a economic cost. Clear? Remember, at any point of time, dash cost is greater than dash cost. Economic cost is greater than dash profit is greater than dash profit. Shall I screw your happiness with one exam question? Let's see how many of them will crack. Already I've done this in the class. Let's see how many of you still remember it. Nicholas Pottery question. No one remembers, huh? Good. Wait. Then let me screw up your happiness.
Sir,
Ah.
capital.
Pa. Explicit. Interest on capital.
The implicit class cost is added to national income.
Above?
Included national income. The implicit cost.
There I will explain. Chapter 6 I will explain that. One second. Wait, let me show that questions. Let them do it. Wait. Nicholas Pottery, ICU. Okay, paper 4. Now, solve this question. Let's see. Yes, ma'am. Tell me now.
Included in national income.
What is it? Can you repeat it?
So the implicit cost of included to national income.
It leads to production. See, in national income, what do we consider? Whichever is leading to productivity. Now, your mom preparing breakfast at home. Non-economic activity, not included. Why? Market value is not there. Suppose bench manufacturing. I produce bench using at my own home. Value added is created. Now, value addition is made. And using for self. Self-owned premises, self-produced and consumed goods are included. Tomorrow I will explain that.
Theatre production activity and self included.
Yes, included. If it is marketable value, suppose can I identify the market value of this bench? Yes. Still self-consumed, included. Market value is not there. My mom preparing breakfast at home. Can I identify the market value for the mom, whatever she is preparing? No. Marketable, non-marketable. That is the only difference. The exam question are this was.
Either I should do 4 months or I should do 7 months.
Just assume if they really want to screw up your happiness and out of 100 marks, they give 40 tricky questions. What will you do? And another 60 full confidence should be there. If no full confidence is there, gone case.
Something I will
See, that is what. Don't take a risk. Better learn and do the questions. It is the easy questions. What an easy da this is. When you know the concept, why will tension come? Simple. When you are confident with the concepts, then why will the tension come? And this is the most easiest question. And 99% of the students got screwed up in this question. I don't know. You calculate and let me know total. See, you guys invited a trouble for yourself. I gave an invitation. Invitation to offer was there. You guys made an offer. Okay, do one thing. Take a break. Come back. Once you are back from the break, we will discuss this. Let's see. Discuss. Whole break. 45 minutes time is there. Do whatever you want, Hangamas. Let's see who can. And all my students, recent batch students, remain silent. In class, in detail, recently I have done. Before Coimbatore branch, I finished for them and then went to Coimbatore. Okay. So finished. Done with the questions? Got the answers? See there. Nicole owns a small pottery factory. She can make 1,000 pieces of pottery per year and sells them for rupees 100. So 1,000 pieces into rupees 100. How much is that? 1 lakh. So 1 lakh rupees the sales value. Now it costs Nicole 20,000 for raw material to produce and 1,000 pieces of pottery. She has invested 1 lakh rupees in her factory and equipment. In that, see, 50,000 is from her own savings, another 50,000 borrowed at 10% of interest. Assume that she could have loaned her money at 10%. That means whatever 50,000 she has bought in her own money, that she could have given to someone for a 10% of interest. Opportunity foregone. And Nicole could have also worked in a competitor pottery factory for 40,000 rupees per year. So what are the answers? What are the answers that you guys have got? You cannot say, huh? Sales. How much is the sales? 1 lakh. So in this accounting cost, which cost? And opportunity both put together, we will have an economic cost. Which cost? So accounting cost, first one, 20,000 raw material expenses. In that 1 lakh rupees of investment made, 50,000 our own savings, another 50,000 from the bank loan. In that bank loan, 10% interest she has to pay for 50,000. So what is 10% in 50,000? 5,000. Clear? And another 50,000 from her own savings she has invested. Now that could have been given to someone as a loan for 10%. That is another 5,000 interest foregone. 5,000. And in the similar pottery factory, she could have worked and she would have earned 40,000. How much? 1 second. Where did it go?
That credit is there.
So she could have got another. So in this case, accounting cost us 25. 45 is opportunity. Total 70,000 is economic cost. Sales is how much? So in short, now accounting profit. Which profit? Accounting profit will be 75,000. Economic profit will be. How many of them got correct answers? Please raise your hands. Whole gang wrong, huh? Hey, I see you, batch.
Sir, we don't.
You don't. I asked you before the break time ends, and that too 5 minutes extra break. I get. என்னடா ஏசிக்கு அவ கரெக்டா தான் சொன்னான். விடுறா இது கிளாஸ் தான் இது. Clear? Able to understand? See, most of the places the student goes wrong with this 5,000 of interest. Whatever her own savings was there, even that could have been given as a loan to someone. Na? That 10% of interest is where you will go wrong. That is the only trickiest part in the whole question. So this was the answer. See, total 1 lakh rupees of investment made. In this 1 lakh, 50,000 she has taken loan. Another 50,000 from her own savings. This 50,000 she could have kept in a bank account itself. She will get 10% per annum interest. How much is the 10%? And since she has taken a loan for 10%, she should pay the interest of.
5,000.
Here she has foregone 5 and she is also paying 5. These are the two things. Clear? Understood? Let's go to the next topic. Okay. What is that? Okay. So we are done with the concepts of accounting cost, economic cost, explicit cost and implicit cost. Now, private cost and social cost. What is that? Again, this concept will get repeated once again when I am doing chapter number 7. So, wherein which we'll be understanding much more in detail. See, in short, what is the cost incurred to produce goods and services by using factors of production? By using what? That is land, labor, capital and all your direct and indirect expenses like transportation, everything put together in order to bring that product to the saleable condition. That is called private cost. Which cost? See, that is a cost faced by the producer or even consumer who is directly involved in the transaction. And such private costs only and only include direct costs such as labor, material, energy and other indirect overheads which are paid to carry out production and there which could appear in the firm's books of accounts. That means accountable firms books of accounts. Next, see there. These statements are important. Firm does not have to pay for the damages resulted from the pollution. Now, Shashi Kiran bench manufacturer. Now, I got a special requirement now that Chota Beam, Pokemon and all. Now, I'm using some special chemical and I'm discharging this chemical into a river water. Now, because of my production, river water is getting polluted. Now that water is no more fit for drinking purpose, bathing purpose, swimming purpose, and even a fisherman is unable to catch a proper fish. Because of my production, I am creating a damage to the environment. That is, river pollution is happening. Did I include any pollution cost or damage cost in my selling price of benches? No. That is only my private cost, my land, labor, capital, organization, whatever direct expenses I have incurred, only that is reflected. When I am selling this bench to my customer, I am never including the cost of damage. What is it? That is external cost. Which cost? So now cost of damage plus private cost put together is a social cost. That is the real cost to the society. What is the real cost to them? On account of either production or either consumption. See, social costs are private cost which is borne by the individuals who is parties to the transaction. External cost or externalities are always affected to third party to the transaction. It affects whom? Let's say for example, now I am selling, let's say for example, benches to Darshan. Now let's say for example, now Praveen. Now Praveen is a fisherman. Now Praveen is unable to catch the fish. Transaction is entered between Shashi Kiran and Darshan. But who is getting affected? Praveen is getting affected. Praveen is a third party. Third party gets affected in case of externalities. In case of what? The important externality is a pollution. Pollution is important. Clear? Understood? So externality plus private cost put together is a social cost. That is a real cost to a society. What is it? Clear? After that, all chota mota other types of costs are there. Apa?
What is the use of private social cost?
See, let's take up an example of cigarette. Now, the cigarette which is produced by this ITC is only included with your manufacturing cost. Suppose if you are selling without cost of damages, it will create much more damage to the environment. So, government will involve now. Government will put taxes, other cess, other charges, and they will make sure that whatever damage that you are creating, I am collecting in the form of tax, I will clean it, I will get it repaired. That is what in logical they will say. But the whole intention is not to harm the environment. The whole intention is you are producing, and because of your production, pollution is increasing. That pollution has to be controlled. To control pollution, there is a lot of administration cost. Who should? Another best example, see now BBMP from April 1st, garbage collection tax. Now new tax has been implemented, and for your own vehicle, which is standing inside your home, you need to pay the additional taxes for parking. No additional charges. Why? Officially, they cannot ask, hello man, I don't have money, please give money. No, indirect way of collecting. Now they say you are creating a damage. Because of your production, there is a environment getting affected. To protect that, kindly levy a tax or kindly pay the tax. That is what? Pigouvian tax. We will discuss this again in chapter 7. It comes once again there. Clear? See, simple. Private cost, what is the cost incurred to produce goods and services, which can be recorded in the books of accounts, which can be, and I am creating a damages. Did I record anything that cost of damages? No. The real cost of this product is not one, it's just incurred to produce this goods and services. Also, you have created a damage. The damage cost plus your production cost put together is a real cost to society. That is the actual cost.
Means they will include the cost in per unit.
Yes, per unit. They will increase it by the way of taxes. That is what happens on cigarette, all undesirable goods and services. Next, direct cost and indirect cost, or we call it as traceable cost and non-traceable cost. See, simple, which is shown in the books of accounts, which can be recorded, which can be readily identifiable. That is called as direct cost. See, there is a direct relationship with the components of operations like manufacturing, production, organizing, process and activities. Indirect cost, they are not easily identifiable or definable. They are called as indirect cost. Like for example, we can't get to know like what is that service is rendered by the front office. Let's say for example, ArivuPro Academy. Service is created in the classroom. A teacher is providing service to a student. Now there is a front desk, reception is there. Now even at reception, they are providing information, but they are not directly contributing. They are indirectly contributing to the main services. See, main service is teaching in the classroom. That is a direct contribution. An indirect contribution is happening in the reception. See, like this direct cost, indirect cost, directly traceable, non-traceable, these all gets included. See, these all are chota mota type of cost. Go through it like a newspaper, very less chances. I'm not saying that you will not get question. You may get, but the chances are very clear. Out of 12, 8 were important. Other than that, explicit, implicit, private cost and social. Other 4 more. Outlay cost. There is one more cost called as what? It is same like accounting only, which is going outside. Money which is going and which can be recordable, which can be, see that these all are chota mota types of cost. Outlay cost. Read it. It involves a financial expenditure at some point of time. Hence, they are recorded in the books of. These are actual expenses in the form of wages, material, rent, interest. Same thing we explained in explicit cost also, na? Money is actually going outside. Payment concept, payment made in the form of insurance, rent, interest. These all are one and the same. These all are chota mota. Other than this, few more are there. Historical cost. Like the small costs are also mentioned in your ICAI material. Just go through it like a newspaper. Clear? Very less chances of getting. But one important concept is there. That is shutdown point. What is it? When should an organization close down its operation? When they should not perform or when they should perform. See, simple concept. When a firm is doing better by performing, what is it when a firm is doing? Better. They have to perform. When they are not doing better, that means, boss, simple, unable to recover variable cost. What is it? Unable to recover? Better don't produce. It's not worth continuing your business. In the short run, there is a shutdown point. Even in long run also there is a shutdown point. Now shutdown point is mainly classified into two categories. Short-term shutdown and see, in short-term shutdown, it is called as a temporary shutdown. Only for a time being you close it down. We are not closing down permanently. Like for example, COVID lockdown. Man, even if I'm taking lot of risk producing goods and services and then selling in the market, even I'm unable to recover back my variable cost. Which cost? Variable cost. See man, whether I recover or whether I don't recover variable cost, anyhow my fixed cost is loss only now. Even if I produce, even if I don't produce, I need to pay rent. I need to pay salaries to my staff. That is anyhow my fixed cost. Irrespective of any kind of output, I need to incur expenses. Anyhow, I'm having a fixed cost as a loss. At least by producing, I should be better than not being a better person. Now, better, Shashikiran, you do one thing. You don't produce anything. COVID is there now. Lockdown is going on. Economy is not running well. Even if you produce your bench, you are selling your bench, either you will get back only variable or lesser than variable. Either you will get back only variable or lesser than variable. So better don't produce a lot. Whether you produce, fixed cost loss. Even if you don't produce also, fixed cost loss. So for a time being, until economy bounce back. Until economy temporarily you shut down. See, this is the condition. When TR is lesser or equal to, what is it? TR is? See, even I might be only recovering variable or lesser than variable, better temporary shutdown. What is it? Or else if I need to take in one single unit point of view, AR is lesser or equal to AVC. That is called temporary shutdown. Which shutdown? Next comes permanent shutdown. That is a long-term shutdown. Every single time your AR is always lesser than AAC. AR is lesser than? For a prolonged period of time, maybe for 2 years, 3 years, you are becoming a sick unit. Which unit? So you are no more into profit zone. Your year by year is only a losses. Better you close down. Permanently you close down. Every single time average revenue. What is it? That is selling price is always lesser than your AC. What is it? Average cost. Clear? So shutdown point, two conditions. Short-term shutdown and short-term shutdown, temporary shutdown. Long-term shutdown is? What is the condition for a short-term shutdown? AR lesser or equal to AVC, or else we can also call it as TR lesser or equal to. Clear? Understood? And permanent shutdown is loss. What is the condition of loss? AR is lesser than AC. Clear? By this, theory of cost comes to an. Most important is accounting cost, economic cost, average cost, variable cost. From this area, you can expect a question. LAC, SAC, tortoise shell concept. These are the most repeated. I will make you to solve from the exam question paper. Clear? Now, let's go to the theory of production.
Less than TFT.
What is it?
Less than TFT. Or fixed cost. We can't recover the fixed cost.
Unable to recover fixed cost. See, anyhow, whether we produce or whether we don't produce, fixed cost is a loss. So, when you are not able to recover fixed cost, that is okay. Economy is not performing well. It's not only for you. Everyone, it is happening the same. An economy itself is not in the good performance range. But even though you are producing, still unable to get back your variable. Why do you want to again incur variable cost also as a loss? Anyhow, fixed cost is loss. You are adding more fuel to the fire now. So, better for a time being, don't produce.
We don't find if they want recover the TFT. It's not a shutdown.
No. Done? Okay. So we are done with theory of cost. Now let us start with theory of. See, there are three major concepts in theory of production. One, human wants. Second one, factors of production. Third is production function. What is it? Production See, the biggest concept is production function. First, let us complete the production function, and next let us come to chota mota concepts. Clear up? Now, already when I was explaining you this concept of variable cost, J in share, inverted S in share, I spoke about law of variable proportion, law of returns to scale. See, production function is mainly classified into two types. How many types?
Two types.
Production function. See, production function is a relationship between input and output. What is it? Relationship between input and. See, remember, whenever I use the word input in a production concept, that refers to factors of production. What does it refers to? Land, labor, capital, organization. Clear? That is the input which are limited in nature. Which are dash? Limited. By using a limited input, we try to produce a maximum output. Clear? Now, production function is mainly of two types. One is short-term production function, and second one is long-term production function. Okay, let me continue with the same example, bench example. Now, Darshan gave me an order to produce 100 benches. How many benches? 100. So, I need to produce 100 benches. He said me, sir, I need within 30 days. How many days? 1 month is a time period. Now, I will be using inputs in order to produce an output. What all are the inputs, factors of production? What is it? Land, labor, capital, organization. Clear up? Now you tell me, in order to produce just 100 benches in one single month, will I change my land? No. Will I change capital? Will I change organization? Now I will ask my employees. Let's say I have some existing, some 5-6 employees. See, this 1 month alone, we have got 100 extra bench as an order. Either you should come 1 hour early to the office, or maybe you should leave 1 hour late, but they will say, didn't you attend science or law classes? You can't compel laborers. No, we can't do like that. Unsupportive staff. What do I have? Only for this 1 month, I will appoint, let's say, 1 or 2 extra employees to work. That means I'm only changing labor. What am I changing? Labor. Did I change land? No. Did I change capital? No. Did I change organization? No. That means in short run. What is it in? More elements are fixed, few elements are variable. That means fixed factors are more. Which factors are more? Fixed factors are more. Variable factors are fixed factors are more. Variable factors are less. Clear? That means I only and only changed labor. I didn't change land, I didn't change capital, I didn't change organization. Next, I produced that 100 benches. I handed over to Darshan. He enjoyed it. It was really of a good quality. Now he will place me an order to produce 1 lakh benches. How many benches? 1 lakh benches. Now I will ask Darshan, Darshan, when do you need this? And he is telling, sir, you tell me when can you give this 1 lakh benches? Let's say my present production capacity is 1000 benches in a month. How much? Even with the existing unsupportive staff, even if I produce one whole year, I can only produce 12,000 benches. How much? But how much is the order? 1 lakh bench. So I will ask Darshan, Darshan, do one thing, give me some advance, give me 1 year of time. How many years of time? 1 year or maybe 15 months of time. You give it, I will produce this 1 lakh benches and I will hand it over to you. Now you tell me, within the existing land, labor, capital, organization, can I produce 1 lakh bench? No. Definitely I need to change mine. I need to also change it. I need to also invest more money, capital, and even there is an option. I can take any of my friend as a partner, any of my competitor. We will merge together like Vodafone Idea, but merged like that. We will merge together and then we will be performing. Yes, possibilities are there. That means yes, we can also change land, we can change labor, we can change capital. Let's assume that Shashi Kiran himself managed to take a loan. He only invested money. He didn't change ownership. He didn't change. Only and only organization was fixed. What was fixed? Rest everything else is variable. Do you agree? That means in case of long run, what is it in case of? Fixed factors are less, variable factors are more. What is it? Fixed factors are less. Fixed factors, variable factors. So in case of long run, fixed factors are, variable factors are. That means remember, in long run we can change anything and everything. We can change dash. I have a full liberty. Even organization can change. I can take any of my friend as a partner. With competitor we can merge and we can do the business together. Possibilities are there. Do you agree? Now, In case of short run, in case of what? We call it as law of dash proportion, law of variable. Already we spoke about this law of variable proportion, SIR, SDR, SNR, clear? And law of returns to scale. What is it? Law of returns to scale, that is IRS, CRS, DRS, clear? So what is production function under short run is called as law of variable proportion. Production function under long run is called as law of returns to. Law of variable proportion has how many stages? IRS, CRS, DRS. Is that so? SIR, SDR, SNR. Clear? Understood? Now let's get started one by one. See, we were discussing about production function. What are we discussing about? So production function is of mainly two types. One is short run, second one is in production function under short run, 100 bench example, 1 month. Production function under long run, 1 lakh bench, 1 year. Clear? In case of short run, fixed factors are more, variable factors are, but in long run, I have enough time, I can change anything and everything. Fixed factors are less, variable factors are more. So production function under short run is called as law of variable. Production function under long run is called as law of. Clear? Now let's get started. Let us understand one by one. The very first concept is law of variable proportion. Clear? So law of variable proportion. Let's get started. See there. This is production function under dash run. Production function under short run. What is it? Production function under? Already we discussed about this topic. If you remember, AC curve. See. This is SIR. This is SDR. Certain point AC will be minimum. See, SDR is important. 3 stages are there. SIR, SDR and SNR. See, already we have discussed on this concept. Clear? Same thing, we will understand it in another manner. See, now the impact on output. What is it impact on? Is only due to change in dash factors of production. Some factors of production. That means only and only labor is changing. Dash is changing. See, and since whether it was a short run or whether it was a long run, Shashi Kiran himself was the owner. We took an assumption. Shashi Kiran is only the owner if it is 100 bench production also, even 1 lakh bench production. So let us ignore organization. What do? Since Shashi Kiran himself is the owner, let's consider there are only 3 factors of production. How many factors of production? Land, labor, capital. In this land, labor, capital, now only and only labor was changing. Land and capital remains fixed. What is it? Land and capital remains fixed. And most important, have a look here. Technology remains constant. What is it? Sir, why should technology remain constant? Okay, why should I appoint more laborers? With use of advanced technology, I can produce more number of units now without appointing 2 or 3 extra laborers. But we believe technology is not at all changing. Technology will remain constant. Next, there is no perfect substitute for dash factors. So which are those fixed factors? Land and capital. There is no another land which is available for a lesser interest, or there is no other capital which is available for a land not available for a lesser rent, capital not available for lesser interest. Whatever existing we have, that is the only land and capital we are having. There is no substitutes for that. There is no. Clear? Now totally how many stages are there? 3 stages. SIR, SDR, SNR. Already we discussed on this. In SIR, output will increase dash proportion. Input will be less, output will be more. But in SDR, output will increase, but it will increase dash proportion. Less proportion. But after certain point, if you remember, already we discussed on the certain point, AFC should be equal to AVC, and AC was minimum. What is it? AC was? See, at this point, AC was minimum, AFC and AVC both are equal. Already we have discussed. That is a certain point. Beyond certain point, output will not increase, rather output will decrease. Clear? And there is one more meaning for this. I will explain. See here, fixed factor will be more than variable factor. Fixed factor will become equal to variable factor. Variable factor will be more than fixed factors. Like this, there are also different meanings for it. I will explain it one by one. Clear? Okay, now let's get started with the concept. Now in my bench manufacturing unit, in short run, only labor is changing. Who is changing? Labor. Except labor. Land is fixed. capital is fixed, and we ignored organization. Only 3 factors of productions are there. Now I will appoint a first labor. I will appoint a. Now in a day they are producing 20 benches. How many benches? Okay, I will appoint a second laborer. Now both of them put together. What is it? Both of them? They are producing 50 benches. How many benches? Now all 3 of them put together. All 4 of them put together. 5 of them put together. 6 of them put together. 7 of them. That means, sir, the 7th fellow is not at all contributing anything, simply taking salary. Stupid fellow. Next, 8th guy appointed. Now he is worse than 7th guy. He is reducing the productivity by speaking, disturbing in between. Okay, let us also identify average concept and marginal. What is it? What is the formula for average? Total divided by quantity. What is the total divided by? Clear, ra? Now, 20 divided by 1. Next, 50 divided by 2. 90 by 3. 120 by 4. 30. 140 by 5. Take out calculator, do it fast. 20. 28. 150 by 6. 20. 150 by 7. 21 point. Next, 140 by 8. 17 point. Clear? Next, let us also identify marginal. Here, variable factor is labor. Now, labor output is continuous, na? So, first formula, that is PPN minus PPN minus. Again, marginal has 2 concepts. Output continuous when output is not continuous. Now, only first unit, that will be 20. Next, 50 and 20 difference. 90 and 50 difference. Next up. Next up. Next up. Next. Next. Minus. Now, see, these are the total number of laborers whom we have appointed. Clear? Now, let us randomly take an example. Assume I have appointed 3 laborers. How many laborers? 3. How many benches are they producing in a day? 90. 3 laborers I appointed. They are producing how much? 90. Now I will say, see, 3 laborers are there. 90 units they are producing. That means every person is contributing 30, 30. That is what average speaks. Clear? But reality is not the same. Reality is first guy is contributing how much? Second guy? Third guy? So 20 plus 30 plus 40 is 90. It is not like all the 3 of them are contributing equally. 30, 30 and 30. What is the reality? 20, 30 and 40. Clear? Now I got to know. In order to take a right decision, for me, marginal concept is important. Which concept is important? Marginal. And listen to this very carefully. The stage 1, that is SIR. What is it? Stage 1, SIR will end at 4th labor. When AP and MP are equal. What is it? AP and stage 2 is going to end whenever TP is maximum, MP is 0. That is SD. And this is the most important stage where every manufacturer wishes to operate. Every manufacturer? Sir, why will they wish to operate? Observe. Production is maximum. Production is? And marginal concept has become 0. Remember, whenever marginal concept becomes 0, that is called optimum utilization of resources. What is it called as? Sir, how optimum utilization of resources? Okay, let us take an example. Innova car example. Which example? Innova car example. Now, let's say, for example, boys will plan to go for a Goa trip, never-ending Goa trip. Now, after examination, we will go for a Goa trip. This time they were serious and they booked a car, Innova car. Which car? Innova. Now, first front, it will go for a driver seat. Next to driver, 1 guy can sit. Next in the middle, 3 of them can sit. And at last, another 2 more seats are there. So, total how many seats are there? 1, 2, 3, 4, 5, 6, 7. Total how many seats? 7. So, the 7 seats are fixed factor. Do you agree? Yes, sir. They cannot be changed. Not number of, let me say, people coming inside this car. That is variable factor. Let's say the first driver will come inside. Okay, good. Next, second fellow will come inside. Third fellow, fourth fellow, fifth fellow, sixth fellow. Now you feel like, sir, luggages is there. We need to go for a very long distance. Let that 1 seat be empty. But you can't do it. Your 1 more friend can accommodate. Now, okay, 7th fellow is also inside. Now, totally, how many people are inside a car? There are 7 people inside a car. The number of people coming inside a car is a variable factor. See, total 7 seats are there. 7 people are there inside. That means fixed is equal to variable. What is it? So, fixed factor has become equal to which factor? Optimum utilization. We are not even wasting any seat, or we are not over exploiting any seating capacity. What is the seating capacity? We are utilizing to the equal extent. Clear? This is what we call certain point. Which point? Same to same thing only. We explained it as AFC equal to AVC. What is it?
AFC is equal to ABC.
See here. AFC will become equal to fixed factor. FC is equal to variable factor. When AFC and AVC both were equal, AC was dash. AC was minimum. AC was dash. Now same concept in case of production. When AC is minimum, that is your average cost is minimum. Dash is minimum. But production is maximum. What is production? And optimum utilization of resources. What is happening? Optimum utilization of resources. That means 7 seats are there, 7 people are inside. We are not wasting any seat, or we are not over exploiting any seat. So remember, in theory of cost, AC will become minimum. Dash will become minimum. Minimum. AFC and AVC both are equal. Per unit production cost is minimum at SDR, and in production concept, theory of production, production has become maximum. What has become maximum?
Production has become max.
That is what every manufacturer wishes to know. My cost should be minimum, production should be, and optimum utilization of. Let's say there are only 4 people inside a car. 7 seats are there, 4 people inside a car. Still underutilization of fixed factor now. Still 3 more people can come inside. Suppose, let's assume that 7 of them are there. Now Shashikiran will come inside. 8th fellow, this thin guy. Definitely it will be uncomfortable. Now if 8% comes inside, variable factor is more than fixed factor. Variable factor is more than? Whenever variable factor is more, automatically dissatisfaction will come in, productivity decreases. Productivity what?
Decreases.
Clear? Now see, let's say if the classroom is totally filled, I am making some students to come and adjust, sit down in between. It will be congested, na? Even they can't write properly, even they can't concentrate properly. Same thing. Over and above the actual capacity, if you appoint employees, disturbance will start, productivity will decrease. See, that is the reason I said second stage is most important. Any manufacturer for it matter, he wishes to operate in SDR. Where will they operate? SDR. And the last stage is SNR, stage of negative returns. Stage of which return? Add nicely lunch. Almost everyone are like theory subject. Economics, law of variable proportion. Full theory. That is what? Unless and until if you don't open up your mouth, if you guys are not responding, if the work is not given to your tongue and lips, Allah, your eyes will start working. And he is like already, first he was sitting like this. Then he came. And he was like this already. Hey, that is why we say have sufficient lunch income, not heavy lunch. Okay, jokes apart, look at the board. Hey, this is the important concept, man. Listen, next, I will start giving exam questions here. Now, Innova car example, whatever I gave, Allah, how many seats are there in Innova car? How many people are inside? Now, fixed factor became equal to? Just assume, Shashikiran will come inside. 8th fellow inside a car. What is it? 8th fellow? Now, variable factor is more, fixed factors are? Now, dissatisfaction will start. Now, we can't sit properly. It will be more congested. Clear? Now, same to same. See, first 3 stages. I said now there is one more meaning. Fixed factor is more. Variable factors are less. Sir, 7 seats are there. Only 3 or 4 people are inside a car. Fixed factor is still more. Variable factors are less. Next, in the stage 2, fixed factor will become equal to 7 seats, 7 people are inside. Next, suppose if Shashikiran enters, 8th fellow, variable factor is more, fixed factors are. That is the new meaning of SIR, SDR and SNR. Innova car example, is it clear? Clear. Now, look at the board. There is one more superb duper question that comes in the exam. I know that, sir. Then what is this, sir? MP has become maximum, na? Observe. First MP increased. What happened first MP? It increased 20, 30, 40. Now MP became maximum. And then MP started to Remember, whenever MP becomes maximum, what is it? MP becomes? That is referred as point of inflection. What is it called as? Until MP becomes maximum. What is it? Until MP becomes? Remember, TP increases faster. TP increases? After point of inflection, no doubt TP will increase. Now it will increase. Slower rate. Which rate? See, remember, until point of inflection, TP increases faster. After point of inflection, TP will increase slower. Is it clear? So, until point of inflection, until point of TP increases a dash rate, increasing rate or faster rate. Clear? After point of inflection, TP will increase at a or slower rate. Now, listen to this. Let us write down relationship between TP and MP. What is it? Relationship between TP and MP. See, in the stage 1, when TP is increasing, what is it? TP is? What is happening to MP? When MP is also? That means TP increases a dash rate. Increasing until dash. Until point of inflection. Until dash. Until the point of next, after point of inflection. What is it? After. Now TP will increase, but MP starts to. That means TP is increasing at dash rate. TP is increasing at slower rate or diminishing rate. Clear? See, this can be an exam question. So be careful. Clear? So number 1, TP is increasing. MP will also increase because MP is rising. MP is, so TP increases at dash rate, faster rate. Until when? Until after point of inflection, TP will increase, but MP starts. So TP increases at dash rate, lesser rate or slower rate. Next, point number 2. When TP is maximum, what is it? When MP will be? When MP is 0, what is it called as? Optimum utilization of resources. Next, point number 3, last one. When TP starts decreasing, MP is negative. Clear? So this can be a question. Understood? Now, let us represent in the same in the form of graph. See, what is point of inflection? Point of inflection is a place where MP becomes maximum. MP becomes, the corresponding TP is called as point of inflection. Until point of inflection, TP increases dash rate. After point of inflection, it increases at slower rate. Which rate? And observe, whenever TP is maximum, whenever TP is, MP is 0. Clear? So this is law of variable proportion. What is the law of? And if you remember, we discussed about tortoise shell. So in the tortoise shell, I explained you about the concept of rate of increase and rate of increase or rate of clear. Now look at the board. What is that rate of increase, rate of decrease? Which will increase faster, which will decrease? Okay, let's take up with the example. Now have a look here. 20, 25, 30. AP is increasing. Now MP is also increasing. 20, 30, 40. Which is increasing faster? MP is increasing faster than AP. Condition satisfied, huh? Whenever AP is increasing, MP will increase greater than AP. Next, whenever AP is maximum, AP is equals to. Second condition also satisfied, huh? Next, observe 25, 20, 28, 25, 21, 17, 20, 10, 0, minus 10. Which is decreasing faster? MP decreases faster than AP. Condition satisfied. So if you remember, I clearly said when we are understanding about rate of increase and rate of decrease, only one single place we should be very careful. Which is that? AC decreasing. Dash decreasing? When AC decreasing, average is greater than marginal. In remaining 3 corners, marginal is always greater than. Clear? Understood? Now let me confuse your life. This was in terms of rate of increase and rate of decrease. Now there is one more concept called as value concept. Which concept? Wait. Now observe this very carefully. Even before writing, make sure that you are observing it very carefully. Now I am explaining the concept of value. What does it explain the concept of? Value. Now 20, 25, 30, AP is increasing. No doubt MP is also increasing. Is 25 greater or 30 greater? 30. Is 30 greater or 40 greater? 40. So which values are greater when AP is increasing? Condition satisfied. MP value is greater than AP value. Whenever AP is maximum, AP value will be equal to MP value. Accepted? Now comes Kahani mein twist. Now listen to this very carefully. Now whenever AP is decreasing, now observe 18, 28, 25, 21, 17. Here it is 30, 20, 10, 0. Is 28 greater or 20 greater? 28. Is 25 greater or 10 greater? 25. 21 greater or 0 greater? 25. Dash is greater than dash. Average product is greater than? Clear. Same way, whenever AC is decreasing, value of AC will be greater than MC. That means, in terms of value concept, in terms of which concept? We need to be careful with the diagonal opposites. When things are decreasing, we should be careful. Even when AC decreasing, careful. MC decrease, sorry, AP decreasing also, careful. AC decreasing, AP decreasing. When things are decreasing, average is greater than marginal. Average is greater than? When things are increasing, marginal is greater than average. Marginal is greater than? Average. Clear. See, the question can come from any of them. Either rate of increase or rate of decrease, or from value concept. Which concept? Value. The question can come from any of these topics. Clear? Yes, understood? By this, law of variable proportion comes to an. See, any manufacturer for it matter, he wishes to operate in which stage? He wishes to operate in stage 2. Because TP becomes, MP becomes clear. There is an optimum utilization of resources and total production is maximum. So this is the concept of law of variable proportion. Any doubts? Flip back your pages, have a look. Let me know before moving into law of returns to scale. Now, law of returns to scale will not take much time. 5 minutes, law of returns to scale will get over like this. Done. Let's go for law of returns to scale. 1 lakh bench example. Clear? 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 Shall I get you one pillow? And respond, stupid fellows. Okay. Law of returns to production function under dash run. 1 lakh bench example. Now still we are considering only 3 factors of production. How many factors of production? 3. Which are those? Land, labor, capital. Clear? Now in case of land, labor and capital, now let's consider, let's assume I already have a bigger land space. What do I have? I already have a bigger. And remember, every time whenever I buy a new machinery, that is invest on capital. What does it invest on? Capital. See, whenever I buy a new machinery, that is one investment on capital, I need 2 laborers to handle that one machinery. 2 laborers to handle the. So remember, every time when I invest one capital, how many laborers are needed? 2 laborers. That's the only extra assumption. See, assumption number 6. A firm will be using 2 units of labor for 1 unit of capital to produce a single unit of output. So remember, every single time we will be needing 1 capital with 2 laborers. 1 capital with 2 laborers. Clear? And 4 laborers for 2 capital. See, like this, in the multiples of 2:1. In the multiples of what? 2 laborer, 1 capital. 2 laborer, 1 capital. Every single unit will be appointed. Rest everything else. See, now only land is a fixed factor. Capital and labor is a variable factor. We assume there are only 3 factors of production, and see, technology remains constant and no perfect substitutes for fixed factor. The only extra assumption is for every single capital, how many laborers are needed? 2 laborers are needed. And there are totally 3 stages in law of returns to scale. IRS, CRS DRS. Clear? Straight away, let's go to the table and next I will come to the stages explanation. Now, see, every time I said now 1 capital, 2 laborers. For second unit, 2 capital, 4 laborers. Third unit, 3 capital, 6 laborers. Fourth unit, 4 capital, fifth one, 5 capital, 10 laborers. Sixth one, 6 capital, 12 laborers. Seventh one is 7 capital, 14 laborers. Clear? This is how we will be appointing. Now, by using the first unit, that means 1 capital, 2 labor. 1 capital, in a day, 50 benches are being produced. Now, second unit, both of them put together in a day, 110. All 3 put together, all 4 put together, all 5 put together, all 6 put together, all 7 put together. Now, most important aspect is MP calculation. Now, continuous, now utilities are 1, 2, 3, 4, 5, 6, 7. Now, first one will be next term, next term, next term, next term, next term, next term. See 50, 60, 70, IRS, MP is increasing, MP is, see TP is also increasing, MP is also, that is IRS. See here, when total product is increasing at a dash rate, because MP is also, next term, 70, 70, can you observe? 70 and 70. This is CRS. When MP remains constant. What is it when MP remains? That is constant returns to scale. Next, when MP starts decreasing. MP starts decreasing. That is DRS. Diminishing returns to. See, concept is very simple. IRS, MP rising. CRS, MP remains constant. DRS, MP starts decreasing. Clear? This is law of returns to scale. See, even when we are representing a graph, IRS, MP rising, CRS, MP remains constant, DRS, MP is decreasing. MP is decreasing. Clear? Understood? Now, this is an important question. Now, from past 2 attempts, the questions are coming from Cobb-Douglas production function. Which function? Cobb-Douglas. See, 2 mathematical economists. Who are those 2? I have tried to explain this law of returns to scale. What is it? Law of? By using a mathematical equation. What is that equation? There are 2 equations given here, ICAI material. Both are one and the same, but representation is different. Quantity, that is output, is a function of KL of A and C of B. KL of A and C. Again, they are also taking same 2 aspects. One is capital, second one is labor. Capital and labor is changing. And same thing is represented as K L of A C 1 minus A. See, now this time they have asked a formula.
Yes, sir.
Question number 92. Can you observe? Cobb-Douglas production function is stated as. Only and only formula you have to remember. Nothing big. If you knew the formula, 1 marks full. Jolly it would have come. Only with formula. Clear? So, from past 2-3 attempts, continuously the questions are coming from Cobb-Douglas. And there is also one numerical problem which has been asked from Cobb-Douglas. See, for us, only important aspects are this A and B. What is it? A and B. See, this A and B. If AB value is greater than 1, what is it? AB value is? IRS. If A plus B value is equal to 1, CRS. If A plus B value is lesser than 1, that's it. We need to only take the values of A and B. A plus B greater than 1? A plus B equals to 1? A plus B lesser than 1? Clear? See, multiple attempts the questions have come. Almost in your MTP also, Cobb-Douglas production function questions are there. Even in the final exam also, Cobb-Douglas production questions have come. Clear? By this, production function comes to an. We discussed about law of variable proportion and law of. There is one more concept called as iso quant and iso cost. What is it? Same topic of indifference curve at budget line. No difference. There, customer point of view, here it is. Producer point of view. There, indifference curve. Combination of 2 commodity. What is it? Combination of 2 commodity. Which gives dashed level of satisfaction. Here, combination of 2 factor inputs, which gives same level of output. Here, input and output. Input is factors of production. Output is goods and services. Any combination of 2 factor inputs out of land, labor, capital and organization. Any 2 inputs which produces a same level of. That is called isoquant curve, which is similar to the indifference curve concept of consumer. Next, isocost curve, that is similar to the budget line concept. Budget line is also called as price line or income line. Same way, whatever money we have, within that particular available money, we need to conduct a business operation. What should we conduct? See, combination which makes a manufacturer to spend equal amount of money. Equal amount of? By using inputs. By using what? Inputs. That is factors of production, land, labor, capital, organization. Is that clear? So this is isocost and isoquant. This is the major topic of theory of production. Except this, all chota mota topics are there. It will hardly get over in another 15 minutes. Clear? And before going to that, let's see. Yes, pa.
Secular period means long period, very long period.
Long period. Secular is long. Very long is like it is considered to be more than 5 years. Very long is more than 5. Long is greater than 1. Short is lesser than 1. Very short is like few weeks. Let me say few days or few weeks.
They give a very long period.
Secular.
Secular, they give a long period, very long period.
Very long. Go with very long. But according to your period, secular refers to very long. Okay. What is production? Converting inputs into an output. Converting raw material into a finished good. Appa? 1 second. That's it. They got screwed up in the class after giving the same answer. Answer is wrong. Okay, listen. If you remember, idli vada example. Shashikiran Hotel, morning da, first example. See, you will go to Shashikiran Hotel. You will order 1 plate idli vada. You didn't like a taste. Food, dabba, taste. Next day you went to A to B. You liked the taste. According to your answer, process of converting input into a, in both the places, hotel, batter was converted into idli and vada. According to your answer, production is taken care, na?
Maximum satisfaction.
That is consumer equilibrium. Now you are mixing full chow chow bath after lunch. What did you add? Chow chow bath? What did they prepare in PG? You didn't go to PG. Then hey, you guys said, sir, we need more time. Okay. Where did you go? Roaming around, Okay. Chalo, fine. Jokes apart, we'll come back to the topic. See, in both the hotels, input is converted into. But where did you like the taste? That is where utility is present. See, it is not just converting raw material to a finished good. Creating of utility is important. What is important? So, production is not always converting raw material to finished good. That is the secondary answer. Which answer? Then what is the primary answer? Process of adding utility to the subject matter to satisfy dash wants. Human. That is called as production. So, creating this utility can be done in 4 different alternative ways. How many different alternative ways? Number 1, form utility. Number 2, place utility. Number 3, time utility. Ownership or possessional utility. Clear? Form utility by changing from one form to simple. Sir, I have a cloth piece. I will go and give it to a tailor. He will cut, he will stitch, and he will make it as a wearable cloth. Form utility. Second one, place utility. Clear? Now, best example, agricultural products. Farmer, where will he grow? In farmland. Where will he sell? Is he selling in a farmland? So, he's bringing that to a place where he can create utility. That is place utility. Next comes rainwater. Sir, whenever it rains well, now we will store it in dams, reservoirs. In summer, when we need a water, we will use it. We are storing it and then we are utilizing it. Last but not the least. Best example, college library. Suppose if you have an habit of going to a library not to sleep, go and study there. If you borrow a book, is that book belonging to you or your college? You just have a possession of that book, but who's the owner of that book? Either you should be an owner or either you should have a possession in order to utilize that goods or services. So these are the 4 alternative ways through which utility gets created. Dash gets created? Utility gets created. Clear? Understood? So this is the meaning of production and forms of creating utility. Next comes human wants. Which ones? Are you guys humans? Really? Anyone alien in the class? First round of sleeping done, pa? Now, when I said, are you human? You woke up. Yes, sir. Okay. When we speak about human wants, there are three important aspects that we need to understand. DTM. What do we call it as? DTM. Desire, taste, and motives. What is it? Desire of a human being is called as human wants. Such human wants are classified into three types. How many types? Number one. Number two. Under necessary also three more classification. Basic necessary, necessaries of efficiency and okay, listen. Basic necessary, roti, kapta or makan, food, clothing and shelter. What is it? Food, clothing and that is a basic essential. Which essential? Next comes necessaries of efficiency. What is it? Necessaries of efficiency. Now, in order to teach you people, see, I need this tab, I need a projection, I need internet connection. By using all these tools and equipments, what is it? Tools and equipments. I'm creating utility. That means now let's say, for example, a tailor, for him stitching machine, needle, thread, these are tools and equipments. By using such tools and equipments, what is it? By using we consider the tools and equipment as efficiency. What do we consider it as? In order to satisfy the human wants. Last but not the least, dash utility, social utility or social necessary. Whether you like it or you don't like it, Shutdown you need to follow for the sake of society. See, best example, in homes, in Hindu homes and all, after evening 6 o'clock, you should not sleep. You should not cut your nails on Tuesdays and Fridays. Tuesdays and Fridays is a bad day. No, haircut also, no haircut and all. See, you should not eat non-veg on Monday, Saturday. See, they have list. Monday for Ishvara, Wednesday for Ganapati, Saturday for Anjaneya. See, they have big list. Now see, whether you like it or whether you don't, you should set and follow. That is for the sake of society. Clear? Our boys will follow very regularly. Now in home they don't say, but outside full belting nicely. And this is what social necessary is all about. What is it? That is not for your purpose, for the sake of society. You should follow certain things. Next comes comfort. What is it? Which provides better level of satisfaction. What is it? See, if I turn off AC and if I turn on fan, okay sir, basic necessary. If I turn on AC, comfort. Nice, that to theory class after lunch. When Shashikaran is speaking, it feels like completely a nice set of sleep. See? Next comes luxury. What is it? All extravagant spendings. What is it called as? Extravagant. That means unnecessary spendings. What is it called as? In that also three types. Harmful luxury, harmless luxury, defense luxury. What is harmful luxury? Which increases social status. What does it increases? But affects on human health. Affects on dash health? AC. No doubt increases your social status. But if you are too long in a AC, automatically your health starts decreasing. Bone density starts depleting slowly. And AC is not for humans. Buying MNC companies and all, ACs are left for equipments. That has to function properly. Na? It has to be in a cool temperature. If it becomes garam, work will become garam. So that has to be in a cool temperature. So that is why they will put all that extreme AC. Have you ever been to server rooms? It will be in -2, -5, -10 degree. That will be in minus degree server rooms. Data storage server rooms. Extreme cold they have to maintain. It should not be heated enough. If it gets heated, full black dhamal dimit it will happen. So that's the reason. So we need to make sure that there are certain necessaries for life which increase of social status. Which increases what? Social status. See, refrigerator at your home, best, especially summer. Now you don't have any work with refrigerator. Still, you will go and you will open the door once. Right? So cool breeze will come. Hello, that's not cool breeze. Chlorofluorocarbon, CFC. Which affects on a respiratory system. Still, no sir. Full outside, very hot sir. So I open the door. Once it will come that cool breeze, now we will feel happy. See, harmful luxury. What is it? Next comes harmless luxury. What is it? No doubt increase of social status, but it will not affect on human health. Bungalow. If you own a bungalow, will it affect your health? If you own a sports car, will it affect your health? If you drive it very fast and if you go and bang someone, that is, if you are owning it, will it affect? Last but not the least, defense luxury. Which luxury? That is for the sake of security. For the sake of what? which can be readily convertible into liquid cash. Which can be readily convertible into gold, stocks, shares, bonds. At the time of emergency, we can convert them into liquid cash. Defense luxury means not CCTV, security guard, or AK-47 gun and all. Clear? What is defense luxury? Which can be readily convertible into stocks, shares, bonds. Clear? So these are the three types of human wants. Necessary, comfort, and now characteristics of human wants. Have a look here. Wants are, can you satisfy all your wants? No. And wants are competitive as well as, sir, first I need cell phone. After cell phone, tempered glass. After that, back case. After that, SIM card. After that, AirPod. You are using everything together. Complementary. What is it? And competitive. One after the other it will come. And they are recurring in nature. What are this? Now after cell phone, next laptop. After that, new bike. After that, new shoes. After that, new girlfriend. After that, new breakup. Like this. It keeps on coming. Recurring in nature. What is it? And want varies with the time, place, and see, our boys will understand this better with local boys, local tea shop, with girlfriend, cafe coffee day. Want vary with person. What is it? Want vary with person. But you want to detailedly ask about it later after the class. Next. Want also varies with time. See, early morning, hot coffee. What is it? Early morning? Evening, French fries. See, want varies with place. Want varies with the time. And also want varies with. See, wants becomes habits and. Now, if you go to anyone's home as your guest, coffee, tea, see, habits and customs. Now, go in summer, they will be having one refrigerator. They will be bringing the 2-liter Sprite bottle and they will be keeping it inside from ages together. Only for guest. Who comes? Now, Miranda. See, Peputi, Miranda, Cola. We'll have all this. Next, wants also becomes affected because of dash. See, by looking into advertisement, pizza, after looking pizza advertisement, you feel like having pizza. After looking Katana ke folding the slice. Clear? So these are the characteristics of human wants. What is it? Clear? Understood? Let's go to the last topic of this chapter. That is factors of. How many factors of production are there? About all these 4 factors of production, we study from an economist point of view. Whose point of view? So don't get confused with your accounting standards, accounts concepts, assets, liability and all. We are not considering from accountant point. Whose point of view? So land, I know that you will say, sir, it is an asset. Land and building is an asset in your accountancy. But here, free gift of nature. What is it called as? Free gift of nature. Not created by any human. Air, water, land, these all are free gifts of. Clear? What is the meaning of land? Now see there, characteristic features. Perfectly. Everyone remains silent, hero. What is perfectly inelastic? Hey, shut. Uncle. You go on,
Which example taken as a demand and the price rate.
Meaning, what do you mean by perfectly inelastic?
There no changes.
No changes in what?
Like a demand.
Stupid fellow. Quantity will remain unchanged. What is it? Quantity remains? See, the supply of land will remain same. We can't increase the land or we can't. The supply of land remains unchanged. Only prices can go up or prices can come down. Clear? And land is indestructible. What is land? Can you destroy the physical land? Physical land can never be destroyed. Next, land is, you can't shift the land from one particular place to. When I'm going, let me say for my native, I will take my home in my pocket and I will go and I will release it out. Is that possible? No, not possible. Next, differs in. That is soil quality. Which quality? And also differs in. If you need to buy a piece of land inside city, it is going to be much more expensive. Outside city, little lesser expensive. And if it is completely rural background and all, you will get it for cheaper price. And land is a dash and dash factor of production. Primary and this time the question has come from this primary and passive factor of production in the previous attempt, Jan 2025 attempt. Primary means anything and everything has to be created on a land space. Now you can't construct a building on air space. You need to create on a land. Even if it is agricultural output, it has to be created on a. Will a land create everything on its own? Human effort is needed. Dash effort is needed? That is passive factor. Which factor? So land is both primary as well as passive factor of production. Have a look here, chapter number 3. So the 91st question. Can you see that? Which of the following is not a characteristic of land? Land is heterogeneous, supply of land is fixed, land has multiple, land is an active factor. It is primary as well as clear. See, like this the question, silly questions are going to come in your exam. Clear? So what is the meaning of land?
Land is a
Free gift of nature. That means it is not created by any human. Clear? What are the characteristic features of land? Perfectly immobile. Differs in primary and second one, labor. All kinds of human efforts. What is it? All kinds of. When I say effort, either physical effort or and such effort should result into production. Just now we discussed. What do you mean by production? Input into output. Adding utility to the subject matter. Was it adding? See, all kinds of human effort, either physical effort or intellectual effort, which results into a production for which dash is paid. Monetary rewards are. And this is most important. This many a times the questions have come. Labor and laborer are inseparable. What is it? Labor and? That means Shashi Kiran and his teaching skills cannot be separated from each other. Shashi Kiran is a laborer. What teaching skills I possess is a labor. Now we can't separate them from each other. Clear? Next, laborer will sell only and only is. If Shashi Kiran is coming and teaching in ArivuPro Academy, that means I'm not selling myself. I'm only selling my teaching skills. What am I selling? My Shashi Kiran is a laborer. Teaching skill is a labor. We are only selling dash. Labor. Laborer will sell a labor. Next, labor is a. See, if I don't take a class today, if I call it off, oh, I'm unable to do, I'm feeling tired. Hello, assumption. Just I'm giving example. Don't consider it real and all. Now, if I just say that statement and tomorrow can I make use of the today's time? No. If a labor hour is not utilized, that labor hour perishes. Labor hour. Next, human in nature. I can't work like 24/7. Leisure time is needed, na? We are not a machine. Next, differs in the way Shashi Kiran teaches, the way Nitin sir teaches, the way Sai sir teaches, or the way Akhilesh sir teaches is not one and the same. It is differed from one person to, and they are less mobile. That means yes, we are ready to move from one place to another place. It's not like more thousands of kilometers and all. Very less distance. What is it? Less distance. And labor has a dash bargaining power. You can't do last month I didn't work properly, you paid me full salary, and this month I'm working more, give me more salary. They will give something more, not salary. So you can't negotiate. Whatever the wages is predetermined. Salaries are predetermined. Only that will be given, whether you work more or whether you work less. You can't bargain. And last but not the least, labor is. All of a sudden you can't change the labor, or all of a sudden you can't decrease the labor. Even though price increases exorbitantly, still you need a laborers to work, na? It is inelastic. Large change in price, small change in quantity demanded. Clear? So these are the characteristics of labor. Next, third one is most important aspect. See, the word capital means all dash made goods. Man-made goods. Dash made goods, which is used for dash production. Further production. See, number one, it has to be who made? Man-made. And it has to lead to dash production. Further production. Then only it is called as a capital. Okay, let me give an example. You tell me whether it is a capital or not. Self-property, self-owned property. Shashi Kiran doing business in his own property. Capital or not? Capital or not? No. It is not leading to further productivity. Na? Okay, let me give one more example. I constructed one building. Ground floor, I am self-occupied. First and second floor I have given for rent. Only first and second floor is capital. Ground floor is not at all a capital. Is it leading to any further productivity? No doubt man-made. But man-made enough? Man-made condition itself is not enough. It has to lead to dash. If it is not leading to further productivity, withdraw it. Yeah, that is further productivity. Na? See, whenever you are given it for a rental purpose, you are earning income. That is further productivity. In your own home, will you pay rent for yourself?
cost entry like rent, if you are doing business.
Uh,
Supply cost.
entire concept, whose point of view are you studying? You are in the different league, man. You are in a different zone. He's already, I should remind him. Which subject are we studying? Whose point of view is important? Akhilesh sir, I know. You like him a lot. You are remembering Akhilesh sir too much. Accountant point of view. Which point of view? Accounting standards, depreciation and all. Akhilesh sir thought, I know. But in economics, it is not there. Next. See there. Types of. Enough man, Pavan, listen. Okay. Types of capital, all bachu things here. See, fixed capital, which will be in one single place. Circulating capital, which keeps on roaming around your cell phone. Best example. Next, real capital, human capital, tangible, individual, social capital, bridge, dam, and all. Clear, chota mota things. But what is most important is capital. This is important. Shortcut to remember is CMU. Who will explain this? Let's see. Who can explain it? Go on, Paul.
So if they give me, if they save money
Hmm.
and they mobilize it
Who will save money?
for individuals,
Individuals, rich fellows.
not sir.
Hmm.
People save the money and mobilize their saving as an investment.
So I think like the circle is like example organization when we work as a labor, it is salary.
Okay.
That salary we will deposit in the bank.
Okay, salary, everything you will deposit in bank.
We'll save and spend. From which one will come and we deposit.
But hey, legends, each of them. But listen, let's say for example, to my right hand side, all of these people are individuals or households. Let's say they are working in one of the other companies or maybe in my bench manufacturing unit. Like this, they all are employees. Who are this? They belong to household or individuals. Now let's say to my left hand side, all of them are banks and financial institutions. Who are you guys? And Shashi Kiran is a business person. Now, once they get salary, individuals, they will also buy goods and services. They will create savings. What they will do? Where will they keep their savings? Bank will mobilize a saving, but who will create saving? Individuals and households will create. Who will mobilize that? After bank getting that money, what will bank do with that money? For whom? Business people, corporates and governments. Clear? See, first creation of saving is done by household. From household, money will go to mobilizing. From mobilizing, utilizing is done by business houses. We will take to the loan. Let me say, we will take a loan, we will put it in business, we will do business. Again, we make sales, again, we pay salary. From that, again, you guys create savings, again, you will keep it in bank. From bank, again, we take loan, again, we do business, again, we pay salary. Like this is a circle. This is called capital formation. Dash formation? Clear? Who will create savings? Who will mobilize savings? Who will utilize the savings? Corporates and. So in short, household saving is converted into business investment. What is it? Household saving is converted into? Through the process of CMU. Creation, mobilization, utilization. This is circular flow of money. What is it called as? Clear? Small concept. Even to explain that, you people got it so much complicated. Clear? Last but not the least, organization or organizer. What is it? Organization or? See, organizer is a person who will bring all the three factors of production into one common place. See, without owner, can you take a land space? Can you appoint laborer? Can you start business organization? No. Organizer is the one who initiates business organization. What does he do? How do we do? By resource coordination, bringing every resources into one common place. And he takes advantage of dash economy. Because the economy keeps on changing. Preferences of the customer keeps on changing. Yesterday you liked honey cake. Today you will like pastries. Tomorrow you will not even like cake. So like this, it keeps on changing. I need to understand the environment and then perform the business. And we need to be more and more innovative. We should bring something new. It may work or may not work. If it does not work, who will bear losses? Owner. See, he will bear all the uncertainties. He will bear all the. See, organizer is a person who will bring all the three factors of production into dash place, one common place. Without him, other three factors of production cannot be hired. He is the one who starts the business organization, who is the one who takes the risk. He is the one who does the innovation. He is an all-rounder. That is organizer. What is it? Objectives and problems. Just go through it like a newspaper once in your ICAI material. Very less chances. What is it? Very? But they may also ask. And one more thing, I forgot to inform you people. See, sometimes your ICAI, if they really want to screw up your happiness, they will not ask a question from your material. After your entire material, there is something called as summary. At last, they have asked questions in the previous attempt. Lot of questions have come from summary part. In the whole content, your entire syllabus, not even a single word is given about that important information. Nothing. In summary, they have given. I will give one best example. That calculation of monetary policy, SDR, SLR, this was recommended by Narasimhan committee. And that information is given in summary, chapter 8. And that has been included. Cut rate, cross rates. In exchange rate policy, there is something called as cross rate. That is CA inter-level question. Earlier it was there. Earlier when economics was a part of FML, that was explained in inter-level. And now they haven't given any explanation. Just that word cross rate is given. And that is in summary part. So, whenever you are reading from ICAI material, make sure that it is not just reading your whole syllabus copy of the chapter. Summary. Even summary is important. You have to read from where? Clear? So, you have to also concentrate on summary. Clear? By this, the entire chapter 3 comes to an clear? Okay, now let us look into few questions of chapter 3. Have a look here. This time, from the chapter 3, full jackpot is there. Which of the following is not a characteristics of land? Already discussed. Cobb-Douglas production function discussed. Next, 93rd question. Which of the following refers to the want satisfying power? Utility. See, reading a statement itself, you got to know the answer. Want satisfying. Next, this is another repeated question. From past 2 attempts, they are giving these missing figures in AP, MP and TP. You need to identify that AP, MP and TP. See, which is very simple. See, first unit of labor is given. How much are they producing? We know marginal. It speaks about one single or one additional. So 10 by 1, 10. Here it will be 10. Okay, see here. They have given marginal. We know that MP should be added to get TP. Now 10 plus 11, 21. 21 divided by 2. 10.5. Next we got 21. Here it is 11. 11 is the average for 3. That means 11 into 3. 33 minus 21. That's it. Next up. 11 is given here. 12 plus 11. How much is that? 20. You need to add all this. Simple. Once we add 10, 11, 12, 11. We got 40. 44 divided by 4. Next 52 is already given. Now 52 divided by 5. 52 minus 44. 8. Next 8 is given here. Or add up all the elements. Total we will get 60. 60 by 6. You just have to identify the missing figure. See 94, 95, 96. Just missing figure should be identified. 3 marks, easy peasy questions. Next. Question number 97. In short run. What are they asking about in? When average cost falls, AC is falling as a result of increase in output. See, AC is decreasing when output is increasing. Then marginal cost is dash of average cost. Tortoise shell. Open your tortoise shell concept. See there. Whenever AC is decreasing, I said when decreasing is happening, be careful. Whenever AC is decreasing, MC. That means MC is lesser, AC is greater. Marginal cost is lesser than average cost. See tortoise shell concept na? In every exam, one question is coming from the tortoise shell concept. Next, 98th one. Initially, a firm enjoys. Initially, whenever output increases. Initially, LAC, SAC we did. Initially, when output is increasing, economies of scale or diseconomies of scale? See, in economies and diseconomies, we have something called as internal economies, internal diseconomies, external economies and external. Okay, do one thing. Homework question. I will not do it. Tomorrow I will touch that point. I want you to read and come. Let's see how many of you can able to crack it. Already by this time you should be knowing all the concepts. Economies, diseconomies, internal economies, external economy, internal diseconomy, external. Homework question. Tomorrow, let's see who can explain it. Next up, in long run, what is it in? Average cost curve is envelope curve. They're speaking about LAC. LAC has three different names: planning curve, least cost combination curve, envelope curve. Clear? Last but not the least. This statement was actually full toss. In ICAI material, there are some stupid people like them. Samuelson. He has defined the Cobb-Douglas production function in his own way. Anyone having ICAI material? Open the Cobb-Douglas production function page. I think somewhere in the second part of the Cobb-Douglas, in bold letters it is given. What is it? Bold letters it is given. Open the Cobb-Douglas production function concept. Tell the page number. Can you find that left side? Bold letters. Samuelson.
Yes.
Read, madam.
The relationship between the maximum amount of output that can be produced.
Pause. What is it? Relationship between
Maximum amount of output that can be produced and input required to make that output.
is defined by Samuelson. But Cobb-Douglas. Whenever we see input, output, Alfred Marshall, Cobb-Douglas. Inky, pinky, ponky. Sometimes economists like Samuelson, A.C. Pigot, they will be defining in their own way. Now see, this is actually a bouncer question. 100. Most of them will either write Cobb-Douglas or Alfred Marshall. But the answer is Samuelson. See, sometimes few economists have defined another person's concept in their own words. That can be a question like this. So that is what I'm saying. You can't crack all 100 on 100 questions. See, it is very simple. In class, multiple times I have informed you guys about this. Scoring up to 60 is not a difficult task. 0 to 60 is easy in economics. 60 to 80 is your efforts after going back home. How much of MCQs you guys are solving, how much revision you guys are doing, that is 60 to 80. 80 to 90 in-depth knowledge about the subject. Interconnection between the chapters. 90 and above, you are not human, you are an alien. You are an alien. Not that easy task. From 5-6 question is going to be general knowledge question and full task questions. If you really want to bag 90 above with negative marking and still scoring 90 above, it's not an easy task, that too in CA exams. See, I'm not just bluffing here. Theory papers are not that easy to crack 90 above. Scoring 60 to 80 is easy. To be frank, 60 to 80 is 80 to 90, it will take your entire talent. 90 and above, to be frank, it is much more challenging. Not that easy. Definitely, if you full toss, see, like this full toss questions will come. 100th question is a full toss. What will you do? Like this, some 3-4 questions will be there. Upon that, sometimes if your bad luck is more, 10 questions can come like that. There only 10 gone. So that is what I'm saying. Scoring 60 is never a difficult. Scoring 60 is like bachchu game it is. 60 to 80 is your talent. After going back home, what have you done? How much MCQs have you guys solved? What is the conceptual clarity you have got? If you have in-depth knowledge, interconnections between the chapters, like how I'm saying now, this will again come in chapter 4. This will again come in chapter 7. There is a particular connection in this particular topic. Like this, if you have that knowledge, up to 90 is not a difficult. 90 and above, definitely it is challenging. It's not that easy. Clear? By this, entire chapter 3 comes to an. Okay, let's also do it from the September attempt paper. Wait, chapter 3. Now, see here, it started again. At the highest level of output, what is that? Output. Average total cost, that means average cost. Average total cost is nothing but average cost, and average variable cost curve comes closer because
Fixed cost is equal to ABC.
average fixed cost accounts for relatively smaller percentage of average total cost. Both are one and the same. Next. See there, the firm produces 5 units of output at an average fixed cost. What is it? Of rupees 4. That means in every single unit there is a fixed cost of 4 rupees. And how many units are they producing? So 5 into 4. That is total fixed cost. We got it. And next, for producing 10 units of output, average cost is 7 rupees. Average cost, AC, So 7 into 10, 70. In that 70, that is total cost minus the fixed cost. We will get to know only variable cost. And what are they asking? Average variable. Average variable formula. Total variable divided by quantity. So simple, 50 divided by 10. Answer is. Even in this, most of them made blunders. That is what I am saying. First, identify total. From that, remove fixed. You will get average variable. Average variable divided by quantity. You will get automatically the answer. Clear? Total variable divided by quantity is average variable cost. Next up. How is production in the economist sense? Which sense? Distinguished from a non-market activities producing within a household. Because whenever you are producing self-consumed goods and services, that doesn't have a marketable value. Which value? Your mom preparing breakfast at home. Breakfast 50 rupee, lunch 100 rupee, dinner 120 rupee. Can you identify the market value? No. They are unable to have an exchange in the market. Next, see again. Identify this. Identify the values. Do it. Let's see. You guys only do it. Number of labor 0. So when 0 appointed, what will be the total production? 0. Do it. One signal unit. So this will also be 20. 50 by 2. 50 minus 20. Next, 90 by 3. 30. And 90 minus 50. 40. Next, 30 into 4. 120. 120 and 90. 30. See, I said now from past 2 attempts, such questions are coming. Easy peasy questions. Next, what does the law of variable proportion or the law of diminishing return becomes irrelevant? Sorry, it becomes relevant in short run. Next, what is the primary characteristics of decreasing returns to scale, DRS? Increases at dash rate, decreasing rate. See, relationship between TP, MP, relationship between TP and same question. Next up. What terms is used to describe cost that remains fixed over a certain range of output, remains fixed up to certain range of output, but suddenly jumps to the next new higher level when output goes beyond a given limit? Stair step variable cost. Every single additional expenses will be same. Next up, which of the following expenses is incurred in cost of producing and termed as accounting cost? Which among the following is an accounting cost they're asking? Research and development, sunk cost. Advertisement, sunk cost. Common cost incurred to general operation of a business. No. Wages, salaries paid is a direct accounting cost. Next, already we discussed this sunk cost calculation. Yeah. Clear? See, these are the questions. Approximately 10 to 11 questions are there. One more question is coming. See, next up. When should a competitive firm consider shutting down? Consider shutdown point. Unable to recover back the variable cost. See, variable, average variable. Average. Consider variable cost. Average variable cost. Or if they have given total variable cost. And also given us average variable. See this word above, below. Clearly given now. If it is below your variable cost, then it is a shutdown point. Clear? That's it from chapter 3. But this entire chapter 3 comes to an. Clear? Let's go to the chapter 4. Chapter 4 will take hardly like 1 hour. Next chapter 5. Half an hour. Chapter 1, 45 minutes. Another 2.5 hours minimum we need for micro. Almost till 6 o'clock. Clear? We'll give an intro, we will do it, and we'll finish perfect competition, and we'll see at what time is the break. Next 4 o'clock, na? 4 to 4:15. At what time we started the class? That Josh is going on now. If I give a break in between, to get back to that Josh, another 15 minutes we need.
Yes, sir, that's right.
That's why I didn't give a break. You are restricting 5 minutes shorter. Okay, chalo, we'll give a break. Don't worry. When the appropriate time comes. Do you need a break? Do you need a break now? Enjoy, 5 minutes break. So, chapter number 4. So, it speaks about market and its types. So, what do you mean by market? Market is the place where. Wrong. Market is not always a place. It is an arrangement or a. It need not be always a physical place. It is just an arrangement or a situation where buyers and sellers either direct contact or in order to exchange goods and services for a value or consideration. So remember, market need not be a physical place. Clear? Now, characteristics, features of market. There are two group of people, buyer and. Now they have to contact either direct contact or, and there has to be a product, that is goods or services. There has to be a value or consideration for such goods and services. So there should be willingness and ability to buy and sell. Clear? Now in this chapter, there are, let me say, various types of market, but we don't discuss in detail about them. In this chapter, we are considering market based on competition. What is it? Market based on? So, market based on area, market based on time, nature of transaction, regulated, volume of transaction. We don't consider much about them, but we consider market based on dash, based on competition. So, market based on competition is mainly classified into two kinds. How many kinds? So, market based on competition. So, number one, perfect competition. Which competition? Second one, imperfect competition. See, under perfect competition, there is only one single type, that is pure competition. Which competition? Pure. Under imperfect competition, actually there are 6 types. How many types are there? Monopoly. What is it? Monopoly, duopoly, oligopoly. Next, monopsony. What is it? Monopsony, duopsony, oligopsony. Clear? Now, remember, the term poly refers to seller. What does it? Poly refers to? The word sine refers to buyer. Mono means a single. What does it? Mono means? Single. Dio means two. Oli means few. Clear? So, monopoly, single seller. Duopoly, two sellers. Oligopoly, monopsony, single buyer. Duopsony, two buyers. Oligopsony, few buyers. So, we will not be discussing about all the 6 types, but in your syllabus, we only discuss about monopoly and oligopoly. Clear? And there is one more, third type of a market, which is a combination of perfect and monopoly. What is it? Combination of what? Called as monopolistic competition. What is it? Monopolistic competition. Clear? In today's world, whatever the market that we are witnessing, that is monopolistic competition. Is it clear? So remember, market we are going to understand based on the competition. Based on competition, market is classified into how many types? Perfect competition and imperfect. Under perfect, there is only one single type, that is pure competition. Under imperfect competition, 6 types: monopoly, duopoly, oligopoly, monopsony, duopsony, oligopsony. Clear? Now listen to this carefully. Suppose in an economy, what is it? Suppose in a, there is only a one single seller and one single buyer. Only one single seller and that is called as bilateral monopoly. What is it called as? Kindly write it down if you want somewhere. If there is only one single seller and one single buyer, then it is called as dash bilateral monopoly. What is it called as? Bilateral monopoly. Clear? No? Example. Usually in Indian Railway, they will only give exclusive, let me say, OEMs like original equipment manufacturer. Now there are certain particular products like rail wheels, rail wagons. Only one institution, BHEL, provides it, Bharat Heavy Electrics and all. Only they are selling to Indian Railway. Only one producer and one buyer. That is bilateral monopoly. Which monopoly? Even customized products. Even customized products will come under the concept of bilateral monopoly. Single buyer and single seller. Clear? Next. There is a third type of a market which is also most important. Which is the third type of a market is called as monopolistic competition. Which competition? Clear? Now let us discuss one by one. In the syllabus, we will be discussing about pure competition, monopoly, oligopoly, and monopolistic competition. If we discuss this 4 types of market, this whole chapter comes to an end. Clear? And see, revenue concepts. TR, AR, and MR. See, total revenue. Already we spoke. Outlay. What is it?
Outlay.
Price into quantity. Average. One single unit or per unit. That is TR by Q. Next, marginal 2 formulas are there. Output, continuous. Output is not continuous. Clear? Now, I will straight away jump to unit 3. Again, I will come back to unit 1 because there is a interconnections over there. Is that clear? Now, first let us start understanding about the concepts of perfect competition. Which competition?
Perfect competition.
Say this perfect competition is myth. It is unrealistic in nature. What is it? Myth or? Sir, why do we call it as myth or unrealistic? Because there is no country on this earth which is purely perfect competitive. Purely perfect. No country. Because that is only theoretical concept. Sir, why do we say this theoretical? There is no country. Because they say this is the type of a market. There is no defects at all. None of them having a trouble. In the whole market, everyone is perfect. Everything goes in a smooth manner. You tell me, is there any country where there is no problem at all? Everything goes in a very smooth manner. Possible? No. And characteristic features. Say that there is an existence of large number of buyers and large number of. Okay, sir. Every market has large number of buyer and large number of. But the biggest blunder is point number 2. Manufacturer is only and only price taker, not a price. Then who will decide the selling price? Market forces or price mechanism. There is nothing but demand and clear. And not just that. Every manufacturer is selling homogeneous goods and services. You go and buy it from anyone. Every single manufacturer is producing same goods. You tell me in economy, will everyone produce same goods? Adding more fuel to fire. They have a uniform pricing throughout the market. Let's assume, suppose in this case, if at all I consider India as a perfect competition. You buy a product in Bangalore, same price. Kanyakumari, same price. Jammu Kashmir, same price. Maharashtra, same price. Any nook and corner in the country. You go and buy. Product price remains. Is it possible? Product price is same. Everyone are producing same goods and services. Manufacturer is just a price taker, not a price. Possible? Possible, yes, sir. Is it possible? That is why we called it as myth or unrealistic. And see, kindly solve this table. Now, TR, what is the formula? P into Q. 2 into 5, 10. Next, 4 into 5. Next, next, AR formula. TR by Q. It will be 5, 5, 5, 5. Now, MR, first see the output. Is output continuous? So, which formula? Change in TR divided by change in quantity. We can't use this first formula. Change in TR divided by. See, previous of 2 is 1. No information is given. Previous of 1 is 0. When we are not even producing anything, do we earn anything? No. Even TR will be 0. So, difference between 10 and 0. 10. 2 and 0. 2. 10 by 2. Same. 20 and 10 difference is 10. 4 and 2 difference is 2. 10 by 2. 5, 5, 5, 5. Clear? Now observe this very carefully. Price, average revenue, marginal revenue. All the 3 are 1 and the. So in perfect competition market, P is equals to AR is equals to MR. And this condition applies only and only in perfect competition market. Which market? So remember, in case of perfect competition market, even the graph is going to be horizontal. It will be dash. P is equals to AR is equals to MR. Clear? See, price, average revenue, marginal revenue, all the 3 are equal. There is no market where all the 3 curves can be equal. Clear? That is why we call this market as unrealistic. See, what is point number one? Existence of large number of buyer and large number of manufacturer is only a price, not a price. Uniform pricing throughout the market. Homogeneous goods and in this market, price, average revenue, marginal revenue, all the three are equal. So graph is going to be horizontal. Clear? Next, point number 5. There is a free entry and free exit of a firm into an industry. What is firm? What is industry? Firm is an individual unit or an organization. Industry is a group of firm with similar activity. Which activity? See, a firm will enter in two situations. Number one, supernormal profit. Second one is normal profit. What are the two scenarios where it will enter? And normal profit. They will exit in case of. Already I spoke about the condition of loss. AR is lesser than normal profit. AR is equal to supernormal profit. AR is greater than AC. Clear? A firm will enter with supernormal profit and normal profit. Firm will exit in case of. Next, either buyers and sellers have a complete knowledge about the market. What do they have? Everyone are selling same goods. Product price remains same. Manufacturer is just a price. Taker, not a price. Maker, do we need advertisement for this? Wherever we go and buy, product is same. Price is same. That means there is no requirement of advertisement cost. There is no requirement of what? All of them are having a complete knowledge in the economy, not just advertisement. There is also no transportation. Even though if we incur, we can't charge to customer. Manufacturer is only a price taker, not a price. Last but not the least, perfect mobility of factors of. Now factors of production can move from one person to another person. You work in an organization A or organization B, rent remains same. You take a bank loan in, let me say, bank X or bank Y, interest rates will be same. You take a land for a rent also remains same. There is a perfect mobility. What is there? So these are the characteristic features of perfect competition market. Clear? So except point number 1, everything else is unrealistic. Point number 1 says large number of buyer and large number of manufacturer is a price taker, not a price. Uniform pricing throughout the market. And they are a homogeneous good. That means perfect substitutes to each other. What is it? And point number 5, free entry and free of a firm into an industry. Next, point number 6, buyers and sellers have a complete knowledge about the market. Clear? Point number 8, there is a perfect mobility of factors of. Clear? Now, remember, if first 5 points are satisfied, that is full knowledge, large number of buyers and sellers, manufacturer price taker, uniform pricing, homogeneous good, free entry and free. That is called pure competition. Which competition? Pure. Now in India, there is elements of pure competition, but we don't have a perfect competition. Best example, agricultural sector. Will a farmer decide the price of his own goods? No. Stock market. Will a company decide the price of the stocks? Uniform pricing throughout the market. Manufacturer is just a price taker, not a price. See, there are few certain sectors where they will follow pure competition, but there is no country on this earth which will follow perfect competition market. Which market? Clear na? Now, if you remember, we explained about industry equilibrium. Total demand should be equal to total. That is for the whole industry. Now, let us understand firm equilibrium. Which equilibrium? See, there are two conditions for firm equilibrium. Condition number 1. What is that condition number? MC should be equal to MR. Condition number 2, I will explain it. First, let us understand MC equals to MR. Yes, sir.
So, if the point is
free entry and free exit. See, usually there is a barriers. Like either government might impose the barrier or natural climatic condition itself as acting as a barrier. Investment can be a barrier. Let's say, for example, we are into a, coaching academy business. Now, can anyone and every, person can start a coaching business? No, you should take a license. Particular profession, qualification should be there. But there, nothing required. Anyone can enter, anyone can. Any business. And everyone are doing same. Everyone. There is no difference at all. Product is same. Service is same. Price also remains same. When you want, you enter. When you don't want, you exit. There is no restriction. There is no barrier. There is no government rules. Nothing. Is there any country which operates like that? That is why I said myth. Clear pa? Okay. Now, We are discussing about firm equilibrium. Which equilibrium? An individual firm, if it has to be in equilibrium, that means no profit or no loss. What is it? No profit or? No loss. See, they are in a state of rest. Equilibrium is a state of? But until you reach that equilibrium, already you should have made enough profits. Already you should have made that is like your maximum output capacity. What is it? Maximum? Until then, I am going to produce it. So, condition 2 is most important. MC should cut MR. What is it? MC should cut MR from above. From above or below? Superb. It has to come from below. See, if you remember, I said in theory of cost, I will not be explaining about MC curve. MC curve is dash in shape. U in shape. Clear now? See, this is MC curve. Now, MC and MR is equal in two different places. See, we know that P is equals to AR is equals to. See, MR curve is there. MC curve is given. Now, this is point X, this is point. See, according to condition number 1, there are two different places where MC and MR is equal. MC and MR is equal. But which one should be considered? Let's say, should we consider the initial one, point X, or should I consider the later one, point Y? Now that comes a confusion. How do we decide it? By based on production capacity. By based on what? See, initially when I am producing goods, I am only and only incurring a losses because I am only a price taker in the market. I am not a price maker. So this is the selling price. See, let's say for example, selling price of my product is rupees 20, but my cost of production is 28 rupees. Slowly when I produce more and more, initially I will come to point X, state of rest, neither profit nor losses. If I produce beyond that, slowly I will start making profits. I will make dash profit. Let's say for example, now I produce some 50 benches. How many benches? 50. So when I produced 50 benches, I was in equilibrium, neither profit nor a loss. But if I produce 50 first bench, I came to profit zone. And when I was producing, let's say 300 benches, I am having a maximum profit volume, maximum profit on per single unit or one more extra unit or one single unit. Let's say for example, my cost of producing is hardly some 10 rupee. How much is it? I am selling for 20 rupee. Let's say this is point B. Now I can make a maximum profit, but I will not stop producing at 300 unit because large number of buyers are there. Homogeneous goods, everyone are producing a same goods. Still, I know if I produce beyond this, slowly my profit ratio, what is that slowly profit? Will go down, but still I will be in a profit zone only. I will be still making a profit. Let's say until 500 units. Until which unit? 500. Now again equilibrium. Even if you produce one extra unit beyond 500, you will incur. So where you will stop producing? Point X or point Y? Point Y. If I stop producing at point X, I have never seen a profit in my lifetime. I have only incurred a loss. See, this was only a loss. But if I stop at point Y, I have already seen enough profits. What is it enough? Already a maximum profit of output level. Maximum profit of? When MC reaches equals to MR, a firm will be producing its maximum profit of output level. Maximum profit of? Got the answer? The question which you are asking now. So when MC should be equal to MR and MC has to cut MR from where? Below or above? Below. MC should cut MR from? Below. MC should cut MR from? Below. Not from. So that's the reason we only consider the second part of the graph. We don't consider the first part of the graph. So we only and only need this second part. We don't need this. So hereafter when we are drawing MC curve, we don't draw U in shape. We will draw it as J in shape. What do we draw it as? J in shape. Clear? So this is the concept of firm equilibrium. Two conditions are there. Condition number 1, MC should be equal to. See, this is condition 1. And condition number 2, MC should cut MR from, not from. Now there can be one more question. Output related question. Which related question? When should we produce? When should we not? Simple concept. Revenue greater than cost. What is it? Revenue is more, cost is less. Let's consider this area. See, point A is revenue. Point B is cost. What is it? Point A is revenue. Point B is, can you observe this one? Point A, point B. Now, point A is a revenue point. Accepted. And revenue is more, cost is lesser. Automatically, we will increase our output. What do? We will increase our clear. Now, suppose, sir, cost is point C. Revenue is point D. Cost is what? point C. Revenue is point D. We are in losses now. See, this position is under a loss. When cost is greater, revenue is lesser, output should decrease. Output should
Decrease.
clear. When cost is greater, revenue is lesser, output should decrease. When revenue is greater, cost is lesser, output should increase. What if cost and revenue both are equal? Now deciding factor is MC curve. Deciding factor is which curve? If MC is cutting from above, output should increase. If MC is cutting from below, output should decrease. So in short, when revenue is greater, MR is greater than MC, output should. If MR is lesser than MC, output should. Suppose if MR and MC are equal, then deciding factor becomes MC curve. MC, if it is cutting from above, output should. If MC cuts from below, output should. This is the concept of firm equilibrium. So equilibrium is a state of rest, where a firm has already incurred a maximum profit of its output, maximum profit of its, or maximum efficiency level. Which level? Clear? Now come back. Behavioral principle 1. In the unit 1, I will explain that. Let me touch that point now itself, since I am explaining the topic. Now, observe. Behavioral principle 1 is about shutdown point. What is it about? Say a firm should not produce at all if its total variable costs are not met. That means we are unable to recover back our variable cost. Next, a firm, let me say behavioral principle 2. A firm will make a dash profit by expanding output. That means by increasing output up to the level where MR should become equal to MR should become equal to clear, and MC should cut MR from which side? Below. And see, at that point of equality, when MR and MC are equal, firm has earned dash profit of its output level, maximum profit of its clear. So what is the maximum output level of a firm when MC becomes equal to MR, and MC should cut MR from not from clear. So this is the concept of firm equilibrium. Which equilibrium? Clear. Now in case of short run, what is it in case of? In case of, that means my intention is to only run a business less than a year. So I would like to make supernormal profit, or I might incur normal profit, or even we can end up with that. So in perfect competition market, during a short run, 3 possibilities are there. Number 1, supernormal profit. Number 2, number 3. Now 2 important logics you should keep it in mind. Now MC curve, no doubt it is U in shape. Which in shape? MC curve or AC curve? MC was also U, but we consider only J second half. But AC curve is dash. And already I said MC will cut AC from dash and dash. Below and minimum. What is it? Below and? So this condition has to be satisfied. Clear? Just now we identified firm equilibrium. Which equilibrium? Firm equilibrium. So what is the condition of firm equilibrium? MC should be equal to MR, and MC has to cut MR from where? Below. Accepted? Okay, let's say for example, P equals AR equals MR. Now this is how the MC curve will be. MC curve will be J in shape. What is it? MC curve will be? The point where MC cuts MR. This is called as dash. Equilibrium. What is it called as? Clear, na? Until this point. Anyone doubt having a graph? No. We need to plot AC curve. Which curve?
AC curve.
Now see there, AC curve is missing. Now we need to plot AC curve. And what is the condition of supernormal profit? Supernormal profit. AR is greater than
AC.
AR is greater than
AC.
AR is greater, AC is lesser. So AC curve has to come below AR curve. AC curve has to come, and we know that AC curve is U in shape. AC curve is dash in shape, U in shape. Yeah. And see, MC cuts AC from below and minimum. What is it? Below and? Now from the equilibrium. From where? From the equilibrium. We need to extend the line. We need to do what? When the extended line touches AC. When the extended line touches? Wait, that is cost line. Which line? Cost line. So this becomes C. This becomes P. Q. Let me name it as point B. So this particular region, this will be supernormal profits. Clear? say I've already given graph in the material. See, I have not mentioned the pointers. You have to mention the pointers here. See, this will be O, this will be Q, this will be price, this will be cost, and let me name it as point S, and this one as point E. Clear? So this particular shaded region is going to be dash. Supernormal. Clear. Next, normal profit. Now this is where exam question usually comes. What is the condition of normal profit? AR is equal to, now observe, at the point of equilibrium, not just AC and AR is equal, even MR is also equal. That means in case of short run under perfect competition market, if the firm has to be in equilibrium, now the condition of equilibrium, P equals AR equals MR equals AC equals MC. What is it? P equals AR equals MR equals AC equals. That is the condition of equilibrium in short run under dash market. Perfect competition. Clear. So next comes the losses. What is it? Losses. So in case of loss, see, this is MC curve, this is AC curve, this is P equals AR equals MR, this is X axis, this is Y axis, this will be the price, this will be the cost, this is going to be the quantity. Let me name this as point B. What is it? Now see there, AC curve is above the AR curve. AC curve is, and that is what the condition of loss na. AR is lesser, AC is greater. AR is lesser, AC is. In such a cases, this is the condition of loss. What is this? This is the condition of
Loss.
done. This is E. Understood? Now, this is important. In case of long run. What is it in case of? See, two scenarios we are understanding. Short run and so in case of a long run. Now, when a firm is operating in a long run, now they say we will only and only incur normal profit. Which profit? Even though we can attain supernormal profit, no, we don't do it. Why? Because it will attract the competition. If I do that, other firms will also do it. Bullshit. In perfect competition market, do you really think there is a competition existing? There is no competition. First of all, you are not price maker. Upon that, product prices are decided by the market forces. Homogeneous goods and services. And uniform pricing throughout the market. Free entry and free exit. So they say that, boss, since there is a free entry and free exit of a firm, manufacturer will not try. What is it, manufacturer? To earn a supernormal. Even though when they have a scope to attain it, because if they do so, it will attract competition. Bullshit. In reality, there is no existence of competition because prices are purely determined by same to same graph, but everywhere prefix as L. Now, what is the condition of equilibrium? P equals LAR equals LMR equals LAC equals LMC. That is the condition. By this, perfect competition market comes to an clear. This is firm's concept. Already industry equilibrium we have studied. Total demand equals total. Clear. Next, monopoly. What is it?
Sir, they
Yes, sir.
mentioned that they will not trade for supernormal profit.
Yeah.
They not have to decide their price of the how they can option of buying for
You have a control on cost, na? By producing at bulk, you can reduce your cost of production. Every manufacturer has only control towards your production cost. You can't decide your selling price. Yes, intentionally will produce at economies of scale, least cost combination. Intentionally will produce at bulk. You will produce at a least cost. You are getting more revenues now. Everyone are selling at 20 rupees only. But cost of production is not everyone's are same. Now, one will be 15, one will be 11, one will be 10, one will be 8 rupees. So you have control on your cost. You don't have control on selling price. And moreover, unrealistic market. No one follows this. Clear? Okay, let's start with Espa.
produce less cost homogeneous products.
Yes, China does that. Dumping. We will discuss that in chapter number 9. International trade, dumping activity. They will produce at economies of scale, huge scale production they will do, unable to sell in their own country. They will start dumping to nearby countries, especially India. Even today, toy market, kids toys, Chinese products are dominated in India. Leave about toys, your own favorite. You name a product in Instagram, all fancy items comes from China, na? They are producing at exorbitantly bulk in order to reduce their cost. Unable to sell, they'll start dumping into some other country. Clear? Okay, let's continue. So first type of a market, that is perfect competition is done. Now let us start with monopoly. Which concept?
Monopoly.
Mono means a single. Poly means seller. What does mono means?
Single.
Poly means there is only one single seller in the entire industry. That means firm equals to industry. What is it firm equals to? So remember the condition, firm equals to industry. What is it firm equals to? Is satisfied in which market? When you are the only single seller in the entire market, will you decide the price or will market forces decide? When you are deciding, what do you want to make, profits or losses? Which profit, normal or supernormal? See, single seller in the whole economy, we are a price maker and we try to always enjoy which profit? And there is no concept of close substitutes at all. Except me, there is no one else in the entire economy who is selling this good. Let's say Shashikiran, chocolate seller. Except Shashikiran, there is no one in India who sells chocolate. Assumption. What is it? Pure monopoly. Which monopoly? Very rare to find. Pure monopoly. Clear na? Next to see there. There is also an entry barrier. What is that? No new company cannot easily come and start the same business or even a similar business. There are mainly 4 types of entry barrier. How many types are there? 4. Number 1. Now the law of a nation itself will stop someone to do the same business. Hello, only RBI can print currency notes. All other commercial banks, stupid fellows, you can't do it. Like that, exclusivity is given by the government's law itself. Next comes natural entry barrier. Climatic conditions of different states will act as a barrier. I know that Bangalore temperature is cool. Can you grow apple in Bangalore? But still, there are crossbreeds, GMOs and all. Many of them are trying. They are staying. In our terrace only, we will grow tomato. Possible. In our terrace, we will grow apple. One of my friends, they tried. In fact, they got the output. But taste was not good. And all that are GMOs, genetically modified. This is the trouble. Next up, business formation. See, initially there is a competition between ourselves. We will convert that into an association or cooperation. Let's say Kormangla Fruit Sellers Association. In that place, only that few people who have that association, only they will sell the goods. Have you ever seen any new person coming in between and doing it? No. Last but not the least, what is it? Sometimes investment becomes the biggest challenging. Even if government gives a permission, such a huge investments cannot be made. Best example, Indian Railways. Indian Railways is open for privatization, but no one is coming forward to buy them because of crores together of losses. Unable to recover back money so easily, even if you invest. And what government has done from 78 years, Britishers have done from 200 years. Such a huge volume of investment, none of a single private firms cannot bring it. Investment becomes a challenging to start a monopoly business. Which business? Monopoly. So these are the 4 types of entry barrier. Which barrier? Entry barrier. Number 1, legal entry barrier, natural entry barrier, business formation, also called as cartel. What is it also called as? Few will come together and they will form association. Only that association people can sell. Last but not the least, investment. Clear. Last and the most important point of monopoly, price discrimination. What is it? What a beautiful topic it is. Your local vegetable vendors, your mom goes, if they say 70 rupee 1 kg tomato, what? 70? Next shop is giving for 40 rupees. She will bring it for 40. Even if the person says 70, if your dad goes, he will bring it for 50. If you go, 70. Charging different prices from different customers for the same type of goods and I see best example, your college fees, general merit different fees, SC, ST, OBC different fees, sports category different fees, NCC category different fees, same classroom, same teacher, same sleeping syllabus of BCom. But fees are different. Price discrimination. What is it?
Price discrimination.
See, because of price discrimination, a monopolist will earn supernormal profit. Which profits? Supernormal profits. AR is always greater than AC. Clear? Next, have a look here. In terms of price discrimination, there are mainly 4 types. How many types are there?
4 types.
Number 1, personal price discrimination. Let's say Shashikiran in his chocolate shop. If my regular customer comes, 10% discount. Student comes, 20% discount. My relative comes, 20% premium. My shop, my wish. I will charge the way I want. Personal price discrimination. If my girlfriend comes, full shop is only free. No wife, no option. She will only be controlling the shop. Next, geographical price discrimination. What is it? Now intentionally North India different price, South India different price. I will bifurcate based on geographical location. Clear? Next, price discrimination according to.
You.
Now let's say the person will come, chocolate shop. Why are you buying this chocolate? Tomorrow my birthday, I want to give it to my birthday celebration. Okay, chalo, less price. Next, some other person will come. I want, sir, fancy chocolate journal. Why? What purpose? Sir, I'm inviting chief guest, sir. For them, I'm preparing chocolate bouquet. Oh, is that so? Same chocolate. For them, 5 rupee. For this guy, 50 rupee. We Indians invented zero. Wherever we want, we'll put. Next, price discrimination according to time. Rainy season. Best example. You buy raincoats in rainy season, exorbitant price. Now buy it in summer. You will actually get it for lesser cost. Now, in Bangalore, it doesn't work. Now, morning winter, afternoon summer, evening rain. End of the day, whatever you want to buy, price is more. Next, price discrimination according to various degrees. What is it, various?
Degrees.
See, first degree price discrimination based on
0%.
extra worth of satisfaction. How much ever customers are ready to pay extra, I will try to extract. Like your local vegetable vendors, they will say 70 rupee per kg. Yeah, last 60 rupee. If you want, take it, or if not, get lost. When you're okay, come here, I will give it for 55. They got to know you are not even ready to pay 60. Suppose you go 70. Kammi madkoli. Kammi illa enu illa munduku hogi. Okay, 70 rupees kodi. They know it very well. Who is ready to pay how much? They will try to extract as much as possible. That is first degree price discrimination. What is it? Second degree is based on volume of. If you're buying at bulk volumes, usually price will be lesser. If you're buying in a lesser quantity, price will be more. Third degree price discrimination based on customer attributes. Maybe high quality customer, rich customers, low range customers. Like this, I will bifurcate the customers. Maybe on geographical region, maybe on customer value, or maybe religion, caste, anything. I can divide it and I can charge different prices. That is third degree. Which degree? And next comes the important revenue curve in monopoly. Which poly? Revenue curve in. Now this table plays a major important role. So kindly let me know the answers. Okay, go on. 1 second. What happened? Yeah. Okay. So next, TR. What is the formula of TR? P into Q. Now what is the TR value? 20. Next 18 into
56.
now.
56. 56. 60. 60. 56. 48.
That is 20.
Okay, next AR formula. TR by 20 by 1. Next up.
30.
Next up.
60.
8, 6, 4, 2. Next MR. Output is continuous. See, quantity is continuous in nature. So first formula. TRN minus TR. So 20, 16, 12, 8, 4, 0, minus 4, minus 8, minus 16. Minus. Clear? Everyone got the answers? Now look at the board. Do not write. What happened?
Minus 12 and minus 16.
Minus 12, minus 8.
Minus 8.
Minus 12, minus 6.
Oh, okay, chalo, fine. Now observe it carefully. Whenever TR is maximum, MR is
0.
and observe in case of TR from 20 it went up to 16 and then it went down to again 20. That means it will be bell-shaped curve like this inverted U. Initially increases, becomes maximum and then starts decreasing. Now observe this very carefully. More than that AR and MR. Now observe this. 1 second. 20 and 18 difference. 2. 20 and 16 difference. 18 and 16 difference. 16 and 12 difference. Next 16 and 14 difference. 12 and 8 difference. Can I say marginal revenue is decreasing double than average revenue? MR is decreasing dash. And observe the price column and AR column. Both are one and the. So AR is also called as selling price. What is another name of AR curve? And there is one more name, demand curve. AR curve is also called as. See, whenever there is a fall in MR, that will fall double than AR. And AR curve is also called as selling price. Hence, AR will never become. AR is also known as demand curve. When TR is maximum, MR is. See, if at all we represent same table in the form of graph. See, this is how the graph looks like. Clear? Now see, AR is also called as selling price. So it will not become 0. So AR curve is flatter. What is it, AR curve? but MR curve will become 0 and it will also become negative. So it will be steeper curve. Which curve? Steeper curve. Clear? Next see. Initially TR will increase. TR will increase. But MR is decreasing, but MR is still positive. And observe, E is greater than 1. AR curve is also called as demand curve. Which curve? Demand. And E is greater than 1. Somewhere we did this middle point on the demand curve is E equals to 1. Point elasticity. See, middle point is unitary. Upper portion relatively elastic. Lower portion relatively clear. Now initially observe, whenever TR is increasing, TR is decreasing. MR is decreasing but still positive. E will be greater than 1. Clear? Next, whenever TR is maximum, what is it? TR is? MR will be 0 and E will be equals to 1. So this will be the exam question. Once they have asked, whenever TR is maximum, whenever TR is MR will be 0. MR will be 0. Clear? And next year TR maximum, MR becomes 0, E will be equal to 1. Clear? Next, when TR starts decreasing, TR starts decreasing. See, MR has become negative, but E will be lesser than 1. E will be. So kindly remember the relationship between all the three, TR, AR, MR. All the three relationships are important. Let me explain it once again. When TR is increasing, MR no doubt decreasing, but MR is still positive, but E will be greater than 1. Next, whenever TR is maximum, TR is MR is 0, E will be equal to 1. Next, when TR is decreasing, MR has become negative, E will be clear. And if you remember, I said there are two formulas for marginal revenue. Which are those two formulas for marginal revenue?
Continuous means TRN.
Continuous means TRN minus TR. So MR is equals to TRN minus TRN minus 1. Next, if output is not continuous, change in TR divided by change in quantity. Now there is a third formula. The third formula will be AR, also called as selling price, E minus 1 divided by. We need to use this third formula when there is information given about selling price and elasticity of demand. What is it? Selling price and this is the third formula, AR E minus 1 divided by E. What is it? AR E minus 1 divided by? Clear? AR E minus 1 divided by? Now, let's say for example, let me give a fictitious example. Let's say selling price is rupees 20. A, B, C, three different concepts. E is 1.4, E is equals to 1, E is equals to 0.6. What is it? E is 1.4, E is equals to 1, E is equals to 0.6. See, common sense. I need not to even solve. I can straight away say what will be the value of MR here. E greater than 1. What is it? E? Just now we studied. If E is greater than 1, MR will be. If E is equal to 1, MR will be. E is lesser than 1, MR will be. Common sense. E is greater than 1. What is it? E is? Automatically I know here MR will be positive. Here E is equals to 1, MR will be 0. E lesser than 1, MR will be negative. That's it. Let's solve it. That's fine. Scenario A. In this, what is the formula? AR E minus 1 divided by. So this will be 20. 1.4 minus 1 divided by. Do it. 1.4 minus 1 is 1.4. 0.4 divided by 1.4 into 20. 5.71. See, 5.71 greater than 1 na MR. MR value is still positive, greater than 1. Next up. AR E minus 1 divided by E. This will be 20. 1 minus 1 divided by 1. 1 minus 1 is 0. 0 divided by any numerical is 0. Next up. AR E minus 1 divided by E. Now AR is 20. 0.6 minus 1 divided by 0.6 minus 13. See, answers are in negative. Clear? So we have a third formula to calculate MR. When do we use this third formula? When there is information given about selling price and elasticity. What is the information given about? Clear? See, this is the relation. There is a relationship between TR, AR and MR along with elasticity of demand. What is the new formula?
AR
AR E minus 1 by,
by E.
if E is equals to 1, TR will be, MR will be. If E is lesser than 1, MR will be, TR will be. If E is lesser than 1, MR will be, TR will be. Clear? This is important. From that particular aspect, you can get a question. And once they have asked the formula also. Wait, let me show that. See the question number 3. Identify the correct relationship among MR, AR and price elasticity of demand. What was the new formula of MR? AR E minus 1 divided by E. See, they have also asking questions in related to the formula part. Even you need to select the right formula. If you don't know the formula, gone. 1 marks, easy peasy marks, gone. Clear? So this is how easy the questions are. Now observe. In case of monopoly, what is it in case of? Let's say, for example, my intention to run a business is only for a year. Only for a year. My intention is only short run. Definitely my intention is to always make a supernormal profit. I will fix up prices in such a way that if people come and buy my product, I will earn supernormal. If the people don't buy the product, loss. That's it. In short run, 2 possibility. Either supernormal profit, if not, loss. Now observe, the graph is not going to be like a horizontal curve. P is equals to AR is equals to MR. No, wrong. Already we decided now, na? In case of imperfect competition, that is in case of monopoly. What is it in case of? Now, just now we decided MR curve will be steeper, AR curve will be, see this is AR curve, this will be MR curve. Firm equilibrium remains same, MC curve, J shape. Whenever MC cuts MR, that is equilibrium. Now we need to only and only plot AC curve. AC curve will be dash in shape, AC curve will be U in shape. Accepted, it will be U in shape. And we need to bring it below AR curve. What is it? We need to bring it what? Below AR curve, because the concept of supernormal profit. What is the concept of supernormal profit? AR greater than AC. Now from the equilibrium, from where? From the, we need to extend the line. What we should do? Now whenever such extended line, whenever the extended line touches the AR, touches the, that is selling price. When it touches the AC, that is cost. Clear? Whenever the extended line touches AR, see this is the point now. This is the point, it is touching AR. So this will be selling price. This is the point which is touching AC. This will be the cost. This is origin, this is quantity. Let me name it as point A and this one as point B. And this particular shaded region, this is going to be supernormal. Now in short, AR curve will be flatter, MR curve will be steeper. Now in case of losses, what is it in case of? This AC curve will come above like this. Clear? Huh? So this is how the graph is going to be in short run. What is it in? 2 possibilities are there. Either supernormal profit, if not, losses. Now in case of long run, what is it in case of? Only and only supernormal profit. Only and only which profit? You are the only seller in the entire economy. Except you, there is no one else. So automatically you will start making which profit? Supernormal profit. Clear? Huh? Let me say this is E and this is P and this one as S. Clear? So now comes the most important aspect of monopoly concept. Most important aspect of which concept? Price discrimination. What is it?
Price discrimination.
Simple. Charging different prices for different customers for the same type of goods and services. By doing price discrimination, we will make supernormal profit. Which profits? Supernormal. And that is also called as abnormal profit. Supernormal profit is also called as dash. And in order to follow price discrimination, there are 4 essential conditions. How many essential conditions? So which are those 4? Number 1, real existence of monopoly power. There should be dash existence, real existence of, and once you are a monopoly, you should be able to separate the market, like North Indian market, South Indian market, anywhere. It's your wish. Male market, female market, or community based. Anything you need to separate the market. And different markets should have a different elasticity of and there should be no possibility of. That means a person, let's say from North India, where it is high priced, he will come to South India, come to Bangalore, he will buy it here and he will go and sell it in North. You are the only seller. There is no possibility of resale. Clear? Now let us understand in detail. Close your books and look at the board. This is where you guys will go wrong. Close your books, look at the board. Now they will give a numerical values like this. I said now we are charging different prices in different market. What is it? Different prices in? That means in one market we charge more price, another market we charge. So in which market we will charge more, which market will charge less? How do we differentiate it? Let us understand. Now they are asking us to identify MR in two different markets. See here. Suppose in a single monopoly, the price of a product is rupees and the elasticity of demand for market A and market B. A and B. B has come to the next line. I will write it B here only. It is 2 and 5. What is it? 2 and? See, for a market A, elasticity is 2. For a market B, elasticity is 5. See, I am not going with a numerical value E greater than 1, E lesser than 1. I am using a word called as more proportion, less proportion. What is it? Can I say market A 2, which is lesser comparing to market B, which is 5? Market B is more proportion. Market A is less proportion. Accepted. See, condition satisfied. Different type of elasticity in different market. What is the different types of elasticity in? Clear? Market A, market B, separated. And different elasticity in different market. What is there? Different elasticity in? Different elasticity in? Next I will get you on pillow tomorrow. See here. They are asking us to identify the MR curve. Which curve? MR curve. Or let's say identify MR. Now, selling price is given. How much is the selling price?
30 rupees.
And elasticity is also given. When information is given about selling price and elasticity, which formula? AR E minus 1 divided by E. What is it? AR? E minus 1 divided by E. Clear? Now let us identify. See, for a market A, already we have solved it. For a market A, MR of market A 15 and MR of market B is 24. That means if you sell one extra unit in market A, you will get 15 rupees. If you sell one extra unit in market B, you will earn. In which market it is more profitable? You will get 9 rupees extra, not 24 minus 15. See, 24 minus 15. We will get 9 rupees extra if at all we sell in market B rather than selling in market. So where should I sell more goods? Market. So I will shift my supply from market A to market B. What I will do? I will shift my from market A to. Now because of which, what happens in market A? There is no products at all, but people are demanding now. That means in market A, demand is more, but supply is. When demand is more, supply is less. What is this called as? Excess demand. What is it? Excess. So this leads to excess demand. Now, since we shifted more supply from market A to market B, here demand was not there so much, but supply is more. This is excess. So you tell me in the market, if there is excess supply, what will happen to the effect of price? Decreases. In case of excess demand, what will happen to the price? Now see, we discriminated price. In one market, price got reduced, another market price got increased because of change in price. What is it because of? Now even MR in both the markets will also change. Now in market A, price increased now. Now MR will also increase. Let's say after discriminating, now MR of market A will become 20. It will become how much? 20. Next, in market B, price decreased now. Now say from 24. Now even MR of market B will also become 20. That means, boss, it doesn't matter where you sell the product now. One extra unit in market A or one extra unit in market. End of the day, you will earn only rupees 20. Now stop shifting supply from one market to. That means there is a limit. You cannot keep on shifting the supply from one market to another market. When the limit is achieved, that means whenever MR of both the market becomes equal. What is it? MR of both the market becomes equal. It will be no more profitable. But when MR is becoming equal, prices are not equal. Na? In one market, more price, less price. Now observe this very carefully. In market A, elasticity is less. In market B, elasticity is more. Now observe, in market A, where there is less elastic, where there is less elastic, we are increasing price. In market B, where there is more elastic. Market B where there is more, we are decreasing the price. So this is conclusion. Listen to this carefully. In whichever market elasticity is greater, we will reduce price in that market. In whichever market elasticity is lesser, we will increase the price in that market. After discriminating price, what is it after? MR of both the markets will become equal. This is post discrimination. What is it post? So 3 points to be remembered. Point number 1. Initially MR will be different for same selling price. See, selling price is 30 rupees. Selling price is how much?
30 rupees.
Initially MR was different, na? See, initially MR is 15 in market A and 24 in. This is point number 1. For a single selling price, there is a different MR, because of which we will shift the supply from one market to where it will be more profitable. Now, in this case, in market B, if I sell one more extra unit, I will earn 9 rupees more than market A. So we shifted our supply from market A to, because of which in market A, demand was more but supply is. That created excess demand. Because of excess demand, price got increased. In market B, since supply got shifted, supply is more but demand is. That creates excess supply, price got decreased. After discriminating price, MR of both the markets will become equal. Now 3 points. Point number 1, at the single price, MR was different in different market. Point number 2, we will increase prices in less elastic market. We will decrease prices in more elastic market. Now, after discriminating, MR of both the markets will become equal. This is price discrimination. Now, MR is equal, but prices are not. In one market, more price, another market. Clear? This is price discrimination. Whatever I just explained now, full pin to pin, word to word, I have given here. Clear? So what is the final conclusion? We will charge higher prices in the market where there is. We charge lower price in the market where there is. After discriminating price, MR of both the market will become. See, market A, elasticity was 2. Market B, elasticity was 5. That means this is E greater than 1. This is E lesser than 1. See, E greater than 1. Flatter demand curve. AR curve is also called as demand curve. Flatter. Here it is. Steeper demand curve. Most important, after combining flatter and steeper, there is a bend. What is there? Such bend is called as kink. What is it called as? Now this bend or kink is appearing because of price discrimination. Because of dash? And the most important, above the bend, in case of monopoly, this is relatively inelastic. Below the bend, this is relatively, this is where exam question comes. Be careful. In monopoly, kink demand curve. Below the kink is dash elastic, more elastic. Above the kink is dash elastic. And this kink demand curve is dash to the origin, convex to the origin, because of combination of relatively elastic and relatively. In monopoly market, why it is kink demand curve? Because of after discriminating price, MR of both the markets will become. That's it. This is the concept of price discrimination. What is the reason for a kink demand curve? Price discrimination. What is the nature of kink demand curve? Convex to the origin. Below the kink is dash elastic. Above the kink, monopoly comes to an end. Clear? Monopoly khatam. Flip back a page. Have a look before moving ahead to oligopoly. Oligopoly and monopolistic competition will get over in 15 minutes. It will not take much time. After that, one shorter break will take chapter 1 and chapter 5. That will take 1 hour. Business cycle and chapter 1 introduction. Minimum it will take 1 hour. Both chapters put together 1 hour. 30 minutes, 30 minutes. Any appointment given outside? No, I can do it. If you want. 30 minutes is enough. Already like wicket 1, wicket 2, wicket 3, and there wicket already ಅದರಿಂದನೇ wicket 4. ಅಲ್ಲಿ ಅವರಿಬ್ರಂತೂ ಅವಾಗ ಒಂದು ಇಬ್ರು ಮುಖ ನೋಡ್ತಾರೆ ಹಿಂಗೆ ತಿಂದ್ಬಿಟ್ಟು ಬಂದ್ ತಪ್ಪು ಮಾಡಿದ್ವಿ ಇವತ್ತು. ಆಮೇಲೆ ಅಲ್ಲಿ ಕೇಳೋದೇ ಬೇಡ, ಅಣ್ಣ ಅವ್ನು ಅರ್ಧ ದಿನ ಔಟ್, ಫುಲ್ ಅವ್ನು ಆಲ್ರೆಡಿ ಫುಲ್ ಔಟ್, ಹಾಫ್ ಡೇ ಫುಲ್ ಔಟ್ ಅಲ್ಲಿ. ಇನ್ನ ಆಮೇಲೆ ಅವ್ರಿಬ್ರು ಕೇಳೋದೇ ಬೇಡ, ಅಲ್ಲಿ ಅವ್ನು ಅವಾಗ ಡೌಟ್ಸ್ ಕೇಳ್ತಾ ಇರ್ತಾನೆ ಕೇಳಿಸ್ಕೊಂಡಾಗ. ಇಲ್ಲ ಅಂದ್ರೆ ಅವ್ರಿಬ್ರು ಅವ್ರದೇ ಲೋಕದಲ್ಲಿ ಇರ್ತಾರೆ. What to do, man? Regular class? The concept will be explained in different manner. In marathon, you can't expect all unnecessary examples and all. Just assume in your home from morning 8 o'clock till almost now already 4:30. Almost like 8 hours. In that 8 hours, consider 1.5 hour break. Even if you remove 1.5 hour break, still 6.5 hours without touching cell phone, without disturbance, completing whole microeconomics with exam paper. Kansalu madala. Not even in your dreams you will do, without touching your cell phone, without that notification, without reel sharing to friends. And temporarily our boys will become Dunzo, Blinkit for their mom, 10 minutes grocery delivery. All this it will be happening. Okay, chalo, jokes apart, we'll continue. Oligopoly. Which concept? Few sellers. Who are there? Few sellers in the economy. Even if you start counting, the number might not exceed beyond single digit. What is it? Number might not exceed? So there are only few sellers but large number of buyers. Who are there? Few sellers but now between all these few sellers there is a close interdependency. What is it? Close? Here one will say I have salt in my toothpaste. Another one will come and say I have chakke, lavanga, pudina, pulao masala items. Double rate. See, like this, almost they are selling by and large one and the same product. My shampoo will make your hair stronger. Another one, I will remove dandruff. Next, use my shampoo, I will totally remove your hair only. Next, price rigidity. What is that? So remember, like price discrimination, price rigidity is important in oligopoly. What is price rigidity? Since there are only few sellers now. If any one fellow decreases price, others will also decrease. But if anyone increases, others will think before increasing. They will never compete in terms of increase in price, but definitely they will decrease the price. Like how price discrimination was important in monopoly, price rigidity is important in clear. And there is an existence of dash cost. What is that selling cost? Advertisement and transportation cost. See, we bring Katrina Kaif, Virat Kohli, Sunny Leon and all for advertising to instigate you people. You need to buy product na Kajal Agarwal. Do you have salt in your toothpaste? See, he doesn't have salt. And we have all Dabur Red, Chakke, Lavanga, Pudina. Next, mixed fruit it will come. Dettol will come up with toothpaste next. There are 5 types of oligopoly. How many types are there? 5. Number 1, pure oligopoly and see, understand the logic here. That is better. Pure means every seller is selling the same goods. Best example, cement industry, iron and steel industry. In cement, we don't have flavors like pudina flavor, mint flavor and all. Everyone are selling the same homogeneous good. That is pure oligopoly. Differentiated, it is not same, but similar. What is it? Similar. Toothpaste example, shampoo example. Next, open oligopoly and in open oligopoly, entry of any new firm is not restricted. Yes, you can come, you can open it. But in closed, entry of new firm is. Next comes collusive oligopoly. In collusive oligopoly, all these few sellers will be selling at a common selling price. Which selling price? Best example, petrol bunks. HP, Indian Oil, everyone have 1 liter petrol price, 1 liter diesel price same. But there is one stupid kid, Shell petrol bunk. You guys sell at your common price. I will not sell at your common price. That is competitive oligopoly. Which oligopoly? We will not come under one roof or we are not going to sell under a common price. We will have our own pricing strategy. Next comes partial oligopoly and now many a times questions have come from collusive and partial. Be careful. In partial, since there are few people now, one stupid fellow will be dominating fellow and he is called as a whenever this price leader changes price, others will change. Even today, Tata Iron and Steel. If Tata changes the price of iron and steel, others will change. And even today, now earlier, before Jio, Airtel was a price leader. If Airtel changes, others will change. Now Jio became a price leader. If Jio changes, others will change. If not, others will not change. Next comes full oligopoly. I will not follow any price leader and all. I want one kidney of customers, Apple. I will have my own pricing strategy. See, competitive and full. They both are one and the same. I will not follow your common price. I will not follow any of the price leader. I have my own pricing. I have. Next comes syndicate oligopoly and organized. Yes, sir.
What's the difference between competitive and full?
Which one, pa?
If in question now, like you said, they have their own pricing now.
Yes.
And if they are asked about it, and
see, in competitive, they will not follow common price. They have their own price. With only respect to the common pricing strategy, differentiation comes. In full oligopoly, even though price leader exists or price leader does not, I don't mind about the price leader. Your price leader might decrease price, but I will increase price. It's my wish, my product.
If like competitive and full is both is given, what should I choose?
Understand on what basis the question is asked. Is it based on common selling price or is it based on leadership? If the question is based on leadership, answer is full. Against leadership. If the, let me say, against common price, competitive. Depends upon the question. Next, syndicate and see Pushpa movie, best example. See, everyone is selling through common syndicate. Yeah, fine. Now in syndicate oligopoly, ಅವ್ರ ಹತ್ರ ಬಾಡಿಗೆ ತಗೋಬಹುದು ನಾವು. ಸ್ಟಾಕ್ ಜಾಸ್ತಿ ಇದೆ, ಅದಕ್ಕೆ ರೆಂಟಲ್ ಇಸ್ಕೋಬರ್ಬೋದು ಬೇಕಾದ್ರೆ ನಾವು. ನೆಕ್ಸ್ಟ್ syndicate oligopoly and organized oligopoly. In syndicate oligopoly, all these few sellers will be selling through a common syndicate. Let's assume that Shashi Kiran is a laptop distributor in Bangalore. Whether you name a laptop, HP, Asus, Dell, Lenovo, whichever laptop, common distributor is Shashi Kiran. Syndicate. Everyone is selling through a common syndicate. Everyone is selling through what? That is centralized syndicate. In organized oligopoly, match fixing, you sell the product in Karnataka for so and so price, so and so quantity. I will sell in Karnataka for so and so price, so and so. We will organize ourselves. What is it? We will, in terms of fixing price, quotas and outputs, everything. That is proper match fixing. Clear? Now, even in oligopoly, there is a kinked demand curve. What is there? Now, such kinked demand curve, the reason is price rigidity. Now, the kink below is relatively elastic, kink above is relatively, but now it is dashed to the origin. But in monopoly it is, in oligopoly it is. So get ready, below kink, what is the elasticity? Above kink, what is the elasticity? Either the question can come from oligopoly or the question can come from. Clear? This brings an end to the oligopoly. Last concept of chapter 4, that is monopolistic competition. This is cocktail of perfect and monopoly. In today's world, whatever the market we are witnessing, that is monopolistic competition. So it is a combination of dash and dash. Large number of buyers, large number of sellers. Perfect competition. And in monopoly, we are a price maker. We are a large number of buyers and large number of, and there is also free entry and free, and most importantly we have a product differentiation. Surf excel, pour, rub, pour. Ariel will get dirt from entire India, will break it and then we will wash it, still it will go. Next tide, one line will come now. That reminds our salary credited, salary debited. When it got credited, when it got debited, Cardinal news. Elephant also. See, next we have all this product differentiation. We always say that my product is better, my product is superior, only we can give you that brighter white shining color and all. Other brands, you would have seen detergent brands, other brands, Ariel, other brands, Tide. See, they will try to always differentiate themselves from their competitors, and there is also existence of advertisement and transportation cost, and this is most important, brand loyalty. What is it? What is your name now? Chetan, do you take bath? Do you take bath? Yes, sir. Which shampoo do you use? Meera Shigekai. Dove shampoo. Now let's say Chetan wanted to buy a Dove shampoo. He will go to a shop. Now shopkeeper will say Dove is not there, Clinic Plus is there, Chick is there, and the Nike soap, Gadi soap, they will say, will you buy that other shampoo? No, he will go to the next shop and he will buy the same. Brand loyalty. What is that? Customers are having a brand loyalty in a monopolistic competition market. Another best example, your mom, assume she asked you to get sunflower cooking oil. By mistake, you got pure cooking oil. Your mom, what did I say? Sun? What have you got? Go get lost. Exchange it and come. See, brand loyalty. What is there? So customers are brand loyal in which market? Monopolistic competition market. Clear? Now this is a realistic market. Which market is this?
Realistic market.
Now let's assume that we will start a business. My intention is to only run for a shorter period of time. I don't want to continue this business for long time and all. My intention is to only run for a Now, if it is a shorter period of time, again two possibility, either supernormal profit, if not, I will create a price in such a way that I will be earning a supernormal. If people don't buy the product, same to same graph. Here we have to mention this is MC curve, AC curve, AR curve, MR curve, quantity. So this is cost, this is price, this is equilibrium. Let's consider this as point A and point B. This is supernormal profit. Clear? Same thing. Now see AC curve is above. So this is cost, this is selling price, quantity, origin, this is equilibrium. Like we say this is T and this is as G. So this particular shaded region is going to be loss. Usually you will not get a question from the graph. But very less chances are there. They might create it. Who knows, if they want to screw your happiness Allah, they can create it. Clear? Next comes in case of long run. Now this is most important. In case of what? Now a firm can actually make a supernormal profit. What they can make? But they will not be making supernormal profit. They will be only earning a same scenario we saw in perfect competition. Na? Sir, then why are we doing this here in monopolistic also? Because to maintain buffer stock. Which stock? That means excess capacity. Which capacity? See, Shashi Kiran can produce 1000 benches in a month, but I will be only producing 800 benches. I will not be producing 1000. If I am producing 1000 bench, AC is going to be minimum. That means least cost combination is achieved. But still, I will be operating at a reducing phase. Which phase?
Reducing.
See, still my cost is reducing. At point B, it is minimum. What is that? Point? It is minimum. See, in this graph, there is a slight mistake. When we take it parallel up, this point we should come here. There is a slight mistake in the graph. So kindly make sure that you are drawing it properly. Wait, let me only draw it properly for you guys. I will explain. 1 second. Now, observe the board. This is MC curve. Which curve? MC curve. So this is point B. Now we are operating at point A presently. See, LAC is tangent to LAR. AC is tangent to AR. So that is a normal profit condition. Suppose in future, if any strong competitor like Jio enters the market, stupid fellow, he will start selling at lesser prices. Automatically we know when price decreases, competition starts. Even I should decrease prices. Na? In order to decrease price, I will maintain a buffer stock. Now when I use this buffer stock, see this is the region of buffer stock. See this is the region of buffer stock. I can produce till 1000, but intentionally I am producing only. I am maintaining a buffer stock. Now when I use my buffer stock, see automatically my cost will come down to point B. Where will my cost come down to? That is a minimum point. See that is where MC is also cutting AC. MC cuts AC from below and minimum. Below and
Minimum.
see, and I can only and only reduce my selling price till point B. I know that I can reduce my selling price till point. But strong competitor like Jio, they have entered market at very exorbitant lesser prices. Now for me, profit is not important, sustenance. What is it? Intentionally, I might still reduce my selling price even below my cost. Even below my cost. That means I will not stop at point B. Now I will make my selling price as point C. Technically speaking, difference between B and C is, see, cost is greater. Point B is cost. Point C is selling price. Cost is greater, selling price is less. Technically loss. Yes, I know that. In order to sustain in the market, what is it in order to? Against a strong competition, against a, I need to reduce price. When I reduce price, automatically demand will
Increase.
So, in case of any strong competitor enters the market, see conclusion, if any strong competitor enters the, we will utilize a dash stock, buffer stock, in order to reduce dash cost of production as well as, we know that when price decreases, demand will. In short, if a firm has to be in equilibrium in a long run, in monopolistic competition market, they need to maintain dash stock, buffer stock. They can, let me say, operate at supernormal profit. Sir, how they will operate at supernormal profit? None of the competitor entered. I can still produce at point B. I can still charge point A as selling price. See, this is my cost. This is my selling price. This particular region will become supernormal profit now. But I will not do that. If any strong competitor enters the market tomorrow, next I can't increase my productivity. If I increase productivity, cost will increase. So I don't want that. So I will maintain buffer stock. What do I maintain? Buffer stock. By this entire chapter 4 comes to an...
Attracting competition.
No, it's not for attracting competition. In order to be ready for the competition. Like Geo, someone comes tomorrow in my manufacturing field, bench manufacturing, you will only come. Chetan Furnitures. If I am selling for 1,000, you will come and sell it for 600 rupees. Now, my customers, will they come with me or will they come and purchase with you? Now,
Soap industry is a monopolistic approach.
which one? Pa?
Soap industry.
Soap industry, oligopoly. Wait, which industry?
Soap industry.
Soap
Industry.
industry, monopolistic competition. There are more. Only if it is few, like very limited, single digit number, like for example, your networks, telecommunication. These all are a few, like cold drinks, two major brands, Coca-Cola and Pepsi. Under that, various products are there. Toilet soap industry, monopolistic competition, MTP question it is. Clear? By this, chapter 4 comes to an end. Now, let's see the exam questions. Chapter 4. Now, we got see the supply curve is perfectly competitive firm. What is that supply curve of a perfectly competitive firm in the short term? They are speaking about MC curve. Which curve? MC curve. AR curve is a demand curve. Supply curve will be MC curve. The portion of MC curve cuts lies below the minimum of average variable cost curve. Next up. A major smartphone manufacturer like Alpha Tech, Beta Mobiles and Gamma Gadgets dominated the smartphone market. Now the companies are in constant competition for a market share and innovation. Which type of market share has been described? Few, na? Smartphone manufacturers are only few. Next up, if marginal revenue for one single unit is 10 and the second unit is, see, present minus previous, second is present, previous is first, accepted. And for the third unit is 3. They are asking us to identify total. Total is cumulative of marginal. Na? That means 10 plus 5 plus 3. How much is that?
18.
Hello, 18. 10 plus 5 plus 3. 10 plus 5, 15. 15 plus 3.
18.
See, such a stupid question. Even that people will confuse. TU is cumulative of MU. Same way, TR is cumulative of MR. Next term. Which market covers a wide area such as few adjacent cities, parts of states and a cluster of states? We call it as regional market. Which market? Within the country. I said now there are different types of market, but in this chapter we concentrate more on types of competition. Types of. Now they are speaking about wider area and adjacent cities. That means very next city. Next to Bangalore city, next we have Sarhosur, next we have Mysore. Like this. Parts of states and clusters of states, different particular state parts. That means within the country, they are speaking about regional market. Which market? Very nearby, regional market. If they speak about nationwide, national market. Here, next up. When, okay, chapter 3 it is. What happens to the equilibrium price? Already we did that. Chapter 4, unit 2 question it is. That's it here. Talcum powder market is an example of following market. Talcum powder. Talcum powder. See here they have given actually a wrong answer. Imperfect oligopoly. But these are definitely an oligopoly. But it is open oligopoly. Anyone can enter and do the business. Na? There is no restriction. But unfortunately in your ICAI answer key they have given it as imperfect. God only knows what they were thinking. Apa? No, restricted means any new firm is not allowed to enter. But usually it is not a monopoly restricted by government. Now only we will do it like defense, atomic energy. Clear. Next up, a software company engaged in a price discrimination. Who does the price discrimination? Monopoly. Next up, according to kinked demand curve, hypothesis. Why does the demand curve facing an oligopolistic have a kink at a particular price level? The segment above the prices, below is, I said na, above kink, below kink. The questions will come. Oligopoly market, concave. What is it? It was concave market. Next, the market structure where there are only a single buyer and single seller. Bilateral. Next, monopolistic competition is characterized by many sellers selling differentiated products. This is the main difference between perfect competition and monopolistic. In perfect competition, everyone sells a homogeneous goods, but in monopolistic competition, different goods. Next, condition for equilibrium of a under which market? MC equals MC should cut MR from clear na firm equilibrium condition. Next, a market structure in which all firms individually are price taker. Perfect competition. That's it. See, such a easy question. See, chapter 4. How many questions have come? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 13 questions. 13 or 14 questions, almost. From chapter 4 alone, 13 or? That is what I said. Chapter 2, chapter 4 is a major in micro. By mistake, if anyone is skipping chapter 2 and chapter 4, your monkey and your friend is Venki. Minimum 35 marks gone case. That is what happens. Chapter 2 and chapter 4. Clear? Chalo, take 10 minutes break. Now time is 4:55. Just a 10 minutes break. If you want me to leave at 6, 10 minutes. If not, that fine, 6:30, 7 and all. We'll take more break. Okay, so chapter 1, Introduction to Business Economics. So one of the chota chapter where you can somewhere expect 3 to 7 marks. How much? 3 to. Same with respect to the business cycle. Average is 3 to 7 marks. Sometimes if they want to screw your happiness, they can go up to 10 marks also. Okay. So this concept of economics was earlier studied as a part of political economy. What was it studied as? So before deriving, or let me say separating this subject, it was a part of political economy. Adam Smith was the first economist who gave a systematic definition of economics, and he gave importance to the subject. In his book by name, An Inquiry into a Nature Causes Wealth of Nation. What is it? Inquiry into a Nature Causes? Clear. Popularly known as Wealth of Nation. So Adam Smith said, economics is a study about wealth. What is economics? And this economics is derived from a Greek language. Which language? Greek. So there are two words in a Greek language, oiko and nomia. Because what is it? Oiko refers to household, nomia refers to? Okay, is economics household management? Yes, it is called as art of household management. What is it? So that is in a Greek language. Adapted to the English, where we say human wants are unlimited. What is it? Human wants are? But resources to satisfy such wants are scarce. They are limited. By using limited resources, we try to satisfy the unlimited wants. So that is what managing things by limited resources to unlimited wants. So oiko and nomia. Oiko refers to household, nomia refers to economics as an art of household management. Who was the first person to derive this subject called as economics? Adam Smith. Henceforth, Adam Smith is called as father of economics. Who is Adam Smith? And he was the person who gave a wealth definition of economics. Which definition? Clear. But later, people started hating this subject because it only speaks about wealth, how to create wealth, how to store wealth, how to increase wealth, only wealth. Later, the subject was redefined by Alfred Marshall. Who redefined it? He said economics is a study about welfare. What is economics? Study about? See boss, what Adam Smith said is correct, but we people have misunderstood. We need wealth in order to attain welfare. Suppose if I need to satisfy my want, I need to buy goods and services. Do I get goods and services for free of cost? I need to pay money, right? That is wealth. Wealth is needed to achieve welfare. What is it? Wealth is needed to achieve? Welfare. So economics is a study about welfare. That statement is derived by Alfred Marshall, and he is called as father of modern economics. Was it father of? So in short, economics is nothing but how are we going to work together to transform the scarce resources into a goods and which satisfy most of our infinite wants, and how are we going to distribute these goods and services among? That is general economics. Which economics? But we don't give much focus to general economics because the main heading itself says we are going to study about which economics. So what is business economics? That is similar to the general economics. Now, let's say for example, now I will say, Shashikaran, anyhow, you are in a chocolate manufacturer. Now, why don't we also come up with ice cream? I will give an idea to all my board members and all. They will say, no. Ice cream is not a good idea. Why don't we start with stationaries? Like how classmate is there now, ITC. Why don't we come up with stationaries of your chocolate brand? Whether people buy chocolate or not, Pakka they will buy the stationery. Now, other person will say, no. Why don't we come up with a cafe, experience center for coffee? Like how coffee is there now. Chocolate experience centers. What is dark chocolate? What is milk chocolate? What are the various kinds of chocolate? Why don't we come up with a chocolate? Now in front of me, 3 options are there. I can't open all the 3 because resources are. That is my inputs, land, labor, capital and organization. I can only select one. I have to reject others. Whichever is helping me to achieve my organizational goals. Whichever helps me to achieve organizational, I need to select the right alternative. I need to reject the wrong alternative. In short, taking right decisions at right time. What is it taking?
Right decision at right time.
That is called as business economics. So how do I take this right decision at right time? Number 1, we need to evaluate the available alternatives. See, in front of me 3 alternatives are there. Either ice cream or stationery, if not cafe. In that any one. In order to understand which alternative to choose, I need to take all the basic information and I should have a rational judgment. And also choosing on the available productive resources. My resources are inputs, land, labor, capital and which are limited. What are these? Which are?
Limited.
And that can be employed in an alternative uses. What is it? Employed in a? If not for one purpose, I can use it for another purpose. So make sure that you need to select the right alternative and you need to reject the wrong alternative. In short, we need to select the right decision at right time. In technical terms, it is called as rational business decision making. What is business economics? In order to achieve organizational goals. In order to achieve dash goals? Clear? That is the concept of business economics. Remember, in business economics, we'll more and more focus about the pragmatic approach. Which approach? Let me see. Our Alfred Marshall Adam Smith has given definition in 1776, 1821. There is no rule that what was applicable 200 years ago might be applicable even today. It may apply or may not apply. What is the present problem that we are facing? According to the present problem, we need to come up with a solution. We need to come up with a. That is called pragmatic approach. Which approach? See there, business economics is used for a rational business decision making, which is going to fill the gap between economic theory and business. Whatever we are finding it difficult today as a business practices, according to that we will concentrate. We don't just concentrate on theory. Whatever is said by Adam Smith and Alfred Marshall. In order to understand that theory and implement it in a practical way, we need lot of economic tools. What do we need lot of? Which are those? Chapter 2, Chapter 3, already done. Clear up. Next comes definition and all said. But here, once they have asked this question, who defined business economics? Joel Bing. He is the one who defined a business economics. Clear up. Next, difference between micro and micro, small, macro, large. I know, but microeconomics speaks about individual aspects in detail. What is it? Individual aspects? Demand. We understood in detail about the demand, individual aspects. In macro, it studies about the entire economy as a whole. That means like national income, unemployment in the country, poverty in the country. Like this, we will consider entire economy as a whole. What do we consider? Entire economy as a whole. But in micro, we don't consider entire economy as a whole. Any one single element. Any one single? And we discussed in detail. And microeconomics is a dash theory. Already we discussed. The central theme of microeconomics is determining the price. Macroeconomics is a. And in microeconomics, every single time, full of assumption, law of demand, assumption, all other things remains constant, only price changes. How come bullshit? How can taste and preference remain constant? Income remain constant, complementary substitute remain constant, advertisement remain constant, LDMU, product is given for free of cost. Where you will get every time for free of cost? Technology remains constant. No perfect substitute for fixed factors. See, everywhere we are considering assumptions and they are unrealistic. But macro, no assumption, they are totally realistic. Micro is internal to organization. Macro is called as worm's eye view. Macro is called as that. See, example of micro: demand, supply, cost, production, chapter 2, chapter 3, chapter 4. And macroeconomics, chapter 6 to chapter 10. National income, poverty, unemployment, population, all that, inflation, everything will come under macro. Clear difference between micro and next comes. Is economics science or is economics an art? Both. How? If any subject has to be called as science, there are 5 conditions. Number 1, systematic body of. That means hierarchy should be there in the learning. First we will learn basic thing, chota mota. Next we'll go to advanced. Next we'll come to toughest part. Same thing. See, first we started with demand, supply, interconnection, market. And then we come to all major concepts tomorrow. Macroeconomics, systematic body of knowledge. Answer should be. We can able to quantify answer. We can able to measure in demand, formula method, arc method. We were able to measuring answers now. Even in science, we can able to quantify the answer. Not just measuring. We can be able to predict the answers. So how do we predict in economics? Okay, let's say Shashi Kiran is a car manufacturer. Who is Shashi Kiran? In 2 countries I am producing car. One in India, one in USA. 2 different cars I am producing. One is Maruti car, another is Audi car. In India, which car is demanded more? In US? See, predicted, na? And we know that when price increases, demand. Price decreases, demand. Able to predict, na? See, we can also predict the answer and there should be tools to measure answer. What should be there?
Tools to measure answer.
Utility is measured by a tool called as util. Kilometers, liters. This is a tool in science. In economics, utils is a tool to measure utility. Last but not the least, universally. But the problem is universally acceptable. In economics, answers are not same throughout the universe. But in science, it is same. H2O. 2 atom of hydrogen, 1 atom of oxygen. Combine, what you get? Any nook and corner of the globe, you do it, you will get water. But in economics, demand, is it same in every nook and corner? No. Car demand. Just now I give example. India demand is different, USA demand is. So economics will satisfy 4 conditions. It will not satisfy universally acceptable condition. Henceforth, no doubt, economics is a science. Economics is not a pure science. Economics is a clear. Understood. Now, this is economics as a science. Total 5 conditions. Which are those 5 conditions? Systematic body of. Answer should be predictable. There should be tools to measure. Answer universally. Economics will satisfy first 4. It will not satisfy universally. Henceforth, economics is not a pure science. Economics is a. Next comes economics as an art, practical application of knowledge into business. We know our people will not come and buy the product. If I just say one shirt is 300 rupee, we'll do one thing. We'll keep it 999, 60% off. Now everyone will come and buy. If I give some offers, promotion, people will come and buy. If I straight away say my price is 300 rupee, will they come and buy? Intentionally for first 2 months, I will keep it 1000 rupee. No one will come and buy. Now I will say 60% flat discount. Now everyone will come and buy. We have learned it. We are applying that knowledge into business. Practical application of knowledge into a business is called as art. Science is theoretical. Art is practical. Whatever the problems we face in a day-to-day life in economics, in order to run a business in a most effective way, we have also inculcated the art of solving problem. What is the art of? So business economics is also a science as well as a clear science in its theoretical and art in its practical. See, science in methodology and art in its. So economics is both science as well as. Now under science there is another 2 more classification. Positive science and standard example. Doctor, senior doctors, junior doctor, Shashi Kiran is a patient, have some symptoms, unable to eat water, drink food. What is it? Unable to eat water, drink food. So I will first go to senior doctor. Now they will ask me to go and get a blood test done, everything, big reports they will give. I will go and get my blood test done. Now after looking into report, doctor will stupefy me. Stupid fellow. Shashi Kiran, in your body more than water, alcohol is there, you are drinking alcohol like water, liver has become fatty. Now immediately we should do operation. If not, you will be ticket to white when red will happen. I will say what is the cost? They will say 5 lakh. I will say no money. They will say tata bye bye honey. Simple. Then I will go to some other senior doctor. Same thing happened with 3-4 senior doctors. All of them are same. They all are uniform. What are they? And they know what exactly is a problem. They will get to know the cause and effect relationship. They will get to know the cause and see, positive science is like a senior doctor. See, they will say, what exactly is my problem? They will speak about a systematic body of knowledge which speaks about dash what it is. All the senior doctors are one and the same. I consulted multiple senior doctors. Everyone said the same thing. Operation. No money, tata bye bye. No money, tata bye bye. They all are uniform. They only just described my problem. They are a descriptive science. Which science? They didn't give any kind of solution and all, how to solve it, nothing. Just a described problem, and they will never pass any kind of value judgment. How should be the lifestyle? What you should make changes? Nothing. And they will only speak about what? Facts. See, blood report, stupid fellow. See, report alcohol content. Next stop. They are more concerned with cause and why it happened, what all it is happening, cause and effect. That is positive science. Clear? Next, normative science, complete opposite. Now junior doctors, now they have to create name, fame in the market, good recognition. Now without even looking reports and all, I think this is your problem. What ought to be? What is it? What? And they all want to be an ideal, role model in the society. Junior doctors' main objective is to be a role model. I will say, I don't have money, I have small kids and wives at home. Small kids and wife at home. Tongue slip down. Little tongue slip will happen. Now, no money and all. Okay, don't worry, we are there. We will give you solution. Early morning, as soon as we get up, stand upside down for 30 minutes. Then eat your food reverse, right? Standing upside down. Things will be solved. I'm just giving example, don't take it serious. Now, they are the one who will act as a prescriptive science. Which science? Who was the descriptive science? Senior doctors. They didn't even give any solution. But who is giving a solution? Junior doctors. All my normative science people. Clear? And they will pass a value judgment. How to be, how should be the lifestyle, what all changes you should make. And they are not at all concerned with any facts. Like all our Instagram university doctors. You would have seen now that Delhi hair transplant treatments, and all, some chemicals and all, they were scrubbing. Hair will come. Many of them actually lost their skin upper layer also because of burning, acid reflex. All stupid people will be there. Next, it suggests how things should be. They will say about what? How things should be. Now, exam question is mainly on 3 important points. Number 1, descriptive science, concerned with facts, cause and effect. Now, they will give a statement. In that statement, you need to understand, are they just defining problem or are they also giving solution? Or are they speaking about any facts? Are they speaking about any facts? Now, we will say, in India, 47% of the youth is unemployed. Fact, na? Positive science. Clear? And they will say, in next 3 days down the line, in Bangalore, there is a heavy expectation of rain. Normative science. Clear, na? Normative or positive? Positive, na? There is heavy expectation of a rain. Just to describe. What is it? Just now, schools and colleges are advised to close if that statement attached. Normative. Clear? If they're speaking about fact, if they're speaking about cause and effect relationship, if they're speaking about any describing of any problem, positive statement. Along with describing problem, if they give any solutions, they are called as a normative science. Clear? And they will not consider any kind of a facts. Only just to solutions. Only just normative. Who is concerned with cause and effect relationship? Positive science. Cause and effect. Positive science. Who is not concerned with cause and effect? Who is prescriptive? Normative. Who is descriptive? Who is ideals? Whose main objective is uniformity? That's how different. The statement will come. According to that statement, you need to write the answer. Clear? Next, pragmatic. Already I said now, whatever practical problem today we are facing, according to that, we should come up with a solution, not just following the books. See there, microeconomics is abstract and completely theoretical and analyzes economic phenomena in unrealistic. In contrary, now in the present world, business economics is dash. In approach, it tackles dash problem which the firm faces in the clear, and it is interdisciplinary in nature. That means while conducting business, we are not independent, we are interdependent. That means if I am conducting business, I should also have knowledge about maths, accounts, science, few other aspects like taxation, environment studies, all this. See, we are also dependent on other disciplines like mathematics, management theory, accountancy, marketing, statistics. And business conducting is an incomplete element because you should be knowing each and every aspect. Like, see, what is the general price level in your country? What is the income earning capacity? How much of employment level, government policies? What is the tax rate? What is the over the industry relationships? All this we need to understand, not just conducting business. Without understanding them, we can't conduct the business in the most effective and efficient way. Last but not the least, Entire business is based on micro. As a business manager, my ultimate goal is to achieve my objective. To achieve my objective, I should take right decisions to take right decisions at right time. I use economic tools. Which are those economic tools? Demand, supply, cost, production. They all are microeconomics. Microeconomics is full of assumptions and unrealistic. See there, business economist is largely based on microeconomics. As a business manager, we are largely concerned in achieving of our objective, and such business economics is concerned with decision making aspect individual establishment heavily relies on, and which is unrealistic in nature. What are they? See, this is unit 1 of chapter 1. That's it. Unit 1 comes to an. And now unit 2 is most important because two major topics are there. Both the topics are at most important. Basic problems of economy and types of economy. What is the concept? Basic problems of economy and. Now, if I just as a layman, if I ask you, what are the problems of India, sir? Corruption, sir, unemployment, sir, poverty, sir, infrastructure is not good, sir. All this you will give a big list. That is from layman's perspective. Whose perspective? But from the economist perspective, the biggest problem for any economy is the allocation of resources. Is it? So get ready, even this word, allocation. You need to remember the word, what is it? Allocation of resources. We know that human wants are unlimited, but resources are limited. And such resources have dash users. If not for one purpose, we can use that resources for some other purpose. So allocating resources to the right place for the right usage is the biggest trouble. With that respect, there are 4 problems. How many problems? Number 1, what to produce. Number 2, number 3, number 4, what provision should be made for economic growth and development. In short, sustainable development. Which development? Sustainable. Now let us understand one by one. So based on allocation of resources, there are 4 basic problems in an economy. Number 1, what to? Also called as problem of choice making. Shashi Kiran, I want to do business. Okay, which business do you want to do? I don't know. First decide that. Should you want to do a durable goods product or perishable goods, single time use or multiple time use, superior goods or? Okay, chocolate manufacturing, durable or perishable? Perishable. Single time or multiple time use, single time. Which chocolate? 5 rupee Alpenliebe chocolates and all. That means inferior goods. Like this, understand what type of goods and services are you going to produce in your country and in what quantity. What is it, in what? Quantity. Not just about the goods, because resources are limited. First one is problem of choice making. What is the problem of? That means what to do, what to produce, what to produce. Okay, Shashi Kiran decided bench manufacturing. Which manufacturing? Okay, what to do is taken care. Choice making is done. I will be producing bench. Now, how to do? That means, will you use more technology or are you going to use more of manpower? A country like India, where we have an enormous amount of labor, we can produce by using labor at a cheaper cost. So, which way of production are you following? Labor intensive or capital intensive? A country like India, where there is more of labor, we will be following which intensive? A country like USA, where labor is less, capital is more, which they will use? Now, it is in short choosing of technique. What is it choosing of? That is called as how to produce. How to? Okay, Shashi Kiran decided labor intensive. I will be producing bench and I will be using a labor. Next comes, for whom are you producing? Who is your targeted customer? And which class of society they belong to? Lower class, middle class, upper class, and what is their ability to? Are they small customers or big customers? Are they ready to buy in bulk volume at high prices? If you charge one bench as 1 lakh rupee, will they come and buy? They will say, stupid fellow, get lost. 10,000, still get lost. 1,000, okay, good price. I need to understand their ability to buy. What is that ability to? In short, who exactly are my targeted customer? Which class of society they belong to? Lower class, middle class or upper class? What is their ability to purchase? How frequently they will buy from you? You need to understand for whom are you producing? For whom are you? Clear? And last but not the least, what provision has to be made for dash growth? We know that resources are limited now. We can't use every resources for present production only. We should protect them. We should preserve them, not just for present, even for future usage. That is called sustainable development, meeting the needs of present generation without compromising the needs of future generation. Kindly use resources in an optimal manner without wasting them, and also protect them, preserve them for future usage. Save drinking water. Only 2% on the water on earth is sweet water. 98% is salt water. Close the taps after using. Don't let the water to flow away. See, awareness. Save water. Why? Sustainable development. What is it? Meeting the needs of present and also considering the needs of future. We can't use every resources at present. We need to also preserve it for future. Clear? These are the 4 basic problems of economy. What to produce? How to produce? For whom to produce? What provision is created? What to produce? Problem of choice making. How to produce? Problem of technique. Whom to produce? Understanding the targeted customer. For what provision is nothing but sustainable development. These 4 basic problems of economy based on allocation of resources. Based on what? Now comes the types of economy. Now be it any country for it matter, any one out of these 3 types of economic system they will be following. See, earlier there were different types of ruling. Monarchy, oligarchy, like this. Even today North Korea, which Korea? Is following a totalitarian state. That means only one family has a control in entire country. That is totalitarian state. But except that North Korea, now either any of the countries will be following either capitalistic, socialistic or mixed economy. Which economy? Capitalistic, socialistic or mixed economy. Capitalistic, simple, controlled by private enterprises. What is it controlled by? Socialistic, controlled by public. That means government. Public, that means mixed economy, as the name itself says, combination of private and public. Combination of, that is mixed economy. Is it clear? Now let us start one by one. Let us understand the very first one. Capitalistic economy. Which economy? Also called as free market economy or laissez-faire economy. What is it? Free market economy or laissez-faire. That means government intervention is almost zero. What is it? Government intervention is? See, complete property, ownership, right to property, everything is with the private enterprise. Which enterprise? So there is a private property and they have a complete freedom. You can choose which product to produce, what to do, what not to do. Everything is decided by private. Government will not at all intervene. Government intervention is almost, that is called laissez-faire economy, and private people are dash motive. And there is an existence of competition between between 2 different producers. Competition is there, so there is an existence of advertisement, price cutting, all discounts, everything will be possible. And consumer sovereignty is not restricted. As a customer, you have a choice making ability. What is that? If you want, buy from the person 1 or person 2, manufacturer 2 or manufacturer 3, with whomever you want, you buy. You have an option to choose. And most important, there is an inequality in distribution of income and wealth. Rich becomes much more richer and richer. Poor remains poor because there is something called as right to property. What is there? Create as much as wealth as possible. No one will come. No one is going to question you. Clear? Now, merits and demerits. Merits of capitalistic encourages the economic activity and maximum rapid and dynamic environment. That economy keeps on changing. Growth is going to be maximum, but disadvantage, unequal distribution of, and business becomes, because dynamic environment, it keeps on changing every now and then. Consumers will be, because we only listen to the rich people's demand, because I want profit. Rich people's demand will make me profit. Next, misutilization of productive. See, if I sell car, more profit. If I sell bike, less profit. But people want bike, but I want to sell. Misutilization of resources, because every resources, everything will be in the hands of private. Now see, private ownership of property, resources, factors of production, they will be in the hands of private. Misallocation will happen. That is capitalistic economy. Which economy? Complete opposite to socialistic economy. This concept of socialism was introduced by Karl Marx and Friedrich Engels. Who introduced it? In their book called as Communist Manifesto, published in 1848. Remember, in today's world, there is no country which is purely socialistic. No one is following. Once upon a time, USSR, presently called as Russia, used to follow between 1917 to 1990. In this economy, everything is controlled by CPA. CPA stands for Central Planning Authority. CPA stands for what? In today's world, there is no country which is purely socialistic, but countries like Vietnam, China and Cuba follows the elements of socialism. Follows? That means they are also socialistic. In the name of mixed economy, most of their policies are socialism, but not purely socialistic. Not purely. Clear? And see, North Korea is the only world's totalitarian state. Only one family has a whole control on the nation. Now let us understand whatever we discussed in capitalistic na, full opposite. There in capitalistic, who was owning all the factors of production resources? But here everything is controlled by public ownership. Which ownership? Public ownership of property and public factors of production. And there is no freedom to private enterprise. Zero freedom. What is it? That means completely controlled by government. That is controlled by CPA. What does CPA stands for? Central Planning Authority. Their main motive is welfare motive, not a profit motive. And here planning mechanism is going to guide. Which mechanism? But there price mechanism or market mechanism, demand and supply. But in case of socialism, which mechanism? And here there is no concept of competition. Everything is decided by CPA. Whether you want to produce, I will say what to produce, how much to produce, what price to sell. No freedom to private. What is it? No freedom to. And absence of dash, consumer sovereignty. Customer don't have no choice. Whether you are rich, whether you are poor, whether you are beggar. Everyone gets same type of goods and services. Clear? Restriction on freedom of occupation. You can't choose what you want to do on your own. Private enterprises, you are under me. If you do your nataks, I will cut your tail. No permission, get lost of my country. So everything is controlled by whom? Everything is controlled by CPA. And there is an equitable distribution of income and wealth. What is that? Equitable distribution of income and wealth. So they will say that no man, we are going to distribute equally. We need to have reduction in poverty and all. See, merits, advantages. Optimum utilization of, satisfaction of, equitable distribution of, demerits, inaccurate calculation of. A government will never calculate things on an appropriate time and right manner. Next, bureaucratic setup. One stupid fellow agree, another stupid fellow does not agree. Hierarchical people has to agree. Next, concentration of power in the hands of governments. Only one who has influence will get a proper service at a fast manner. If not, we don't get. Best example, India. Without influence, nothing works in India. Next, mixed economy, combination of capitalistic as well as socialistic, both existence of private as well as existence of, so ownership of properties in the hands of both private as well as. Now we are going to have a planned economy. Which economy? Government will follow the planned economy, but private is also given freedom. There is a balanced regional development. What is there? That means government is concentrating in village, private is concentrating in cities. Next, there is a dual system of pricing. For the same goods and services, different prices are there. Government prices are different, private prices are. See, private schools and colleges, different price. Government schools and colleges, different price. And there is a freedom to enterprises for whom? Private. But there is no freedom in the. Everything is decided by the government in public sector. But private, there is a complete freedom. Private sector produces for a dash motive. Public sector. In the private sector, price mechanism will solve the basic problem. What to produce, how to produce. Price mechanism, demand and supply. In public sector, which mechanism? Government will guide. Next, competition is existing but limited only to the. Between private sector, there is a competition. In public sector, there is no competition. And consumer sovereignty is, as a customer, you can choose between either government or either private services. And freedom of occupation. Private people, you decide what you want to produce, how much you want to produce, which business to be in. I will only come and frame rules and regulation. I will not intervene. I will not. Clear. Now, next comes advantages, self-explanatory, not that important. Disadvantages is most important. See, in mixed economy, there is a huge difficulty to balance between both private and public. See that? Balancing and adjusting public and private is a difficult task. Not just that. In mixed economy, usually tax rates are heavy. What is it? Best example, Nirmala Aunty, India, 28% tax, 18% tax on each and everything. Tax. Next, you want to breathe? Tax. You want to close your eyes? Tax. Next, you want to come to academy? Tax. You want to go outside of academy? Tax. Next, mixed economy is described by a Schumpeter. He says, mixed economy is nothing but a capitalism in an oxygen tent. It is just a temporary benefit you are giving to the working class of people. You are indirectly curbing that also. It is a capitalistic only. Only for a temporary purpose you are giving advantages, and the economy will be having that type of tax, heavy tax. And there is also working class struggle between haves and have-nots. There is only just a temporary advantage and there is no permanent advantage you are giving. So he was always against mixed economy. What is it against? Schumpeter. Clear? So this is your entire chapter 1. 3 types of economy. Proper differentiation I have given in the chart. In the material it is clearly given. Who will be having ownership in capitalistic, socialistic, mixed economy? Next, freedom to enterprise. That is private enterprises. Where there is a freedom for private business to do capitalistic. No freedom in. And here freedom is only in private sector. No freedom in. Motive of production. Why are they producing? In capitalistic. In socialism. And here profit motive in private, welfare motive in public. Next, who governs the production? Who will control the production? In capitalism, price mechanism, demand and supply. In socialism, in short, CPA, central planning authority. In mixed economy, both private as well as public. Next, where competition is existing? In capitalistic, there is no competition in socialism, but here competition exists only in, see, distribution of income, unequal in capitalistic, equal in. Now see here, considered to be unequal in mixed economy. Even in mixed economy, it is considered to be unequal. Next, ruling or role of government. Here, no role at all. Laissez-faire economy. Which economy? Here, complete role of CPA. Whatever CPA decide that you should follow. If not, damar. Next, full role in public sector, limited role in the. So by this entire chapter 1 comes to an easy chapter, small chapter, but you need to focus on it. Easily you can score up to 3 to 7 marks from this chapter. Clear now? Let's go to the last chapter, chapter 5, and together we will do the MCQs. Clear? Okay. Last but not the least, a chapter of microeconomics. Which economics? This is one of the interconnecting chapter. Which chapter? In order to understand macroeconomics tomorrow, and now only I am saying revise and come to the class. If you want to understand properly, tomorrow Shatabdi Express will be there. We can't go slow like this, like how we are doing today. Tomorrow, if anyone is sleeping in the class, get pillow also. You will not be warning and all. You will be continuously doing. By mistake, 5 minutes concentration goes in the class macroeconomics, full chapter gone. That is how macro is. Okay, chalo, let's come back. Business. Okay, let me put it across in the form of a story. Where and all importance it is, where and all question is coming. Let me give it in detail. Now, few countries will be performing well. Few countries might not perform well. Prolonged period of time, some nations will be performing very well for 5 years, 10 years, 20 years. Some nations from 2-3 years they will perform. After that, they are unable to perform. Like this, ups and downs will be there. What will be there? That is because of business cycle. That is also called as economic cycle or trade cycle. What is it? Economic cycle or? See, each and every country will go through fluctuations in their trade cycle. Whenever such fluctuation is happening, it will affect series of activity. It will affect what? Just assume in an economy, day by day, demand is increasing. If demand increases, production should. To increase production, employment should. Since employment should increase, output should increase. If I don't have money, we have to go and take a bank loan. Bank credits will increase. When I have taken bank credit, I have an obligation to repay with interest. So price level will increase. Profits will. When profits are increasing, automatically income level will. When income increases, we know again demand will. Again chain cycle continues. Automatically day by day production increases, GDP of the country. When income earning capacity is increasing, standard of living. See, chain effect. One getting affected, series of activity gets affected. Clear? See here, business cycle is recurring. What is it? Business cycle is? Appa, these 2 lines are most important. From these 2 lines alone, you can expect a question. Business cycle is recurrent. That means it occurs again and again. It occurs. But not always in a periodic manner. Not always in a. That means I can't say, sir, January I will be in trough. Complete bottommost point of business cycle. In February, I will come to recovery. In March, I will be in expansion. In April, I will be in peak. In May, I will be in contraction. In June, I will be in depression. No, I can't predict like this. Few business cycle are short ending and few business cycle are long ending. What is it? Few business cycle are and few business cycle are. So what is the short ending and what is this long ending? Observe. Let's say, for example, this short ending and this is long ending. That means it will take more time to complete one whole cycle. Red color is taking less time. Black color is taking more time. We can never predict which, at when, what stage we are going to be in. But every business cycle starts from trough. From where it will start? Trough is a complete bottommost position. Which position? From the trough, we will come to recovery. Where do we come to? See, this is recovery phase. From recovery, next we will come to. From expansion, finally we go to. From peak, we come to. There is one more worst phase between contraction and trough actually, but in your syllabus they have not explained. But I need that point in case of chapter 7 and chapter 8. Depression. What is it? And finally it will come to trough. Again recovery, expansion, peak, contraction, trough, recovery, peak, contraction, trough. Like this, ups and down. It keeps on recurring. What is it? It keeps on. Clear? That is why. See, it is recurring. What is it? It is occurs periodically. That means it occurs again and again, but not always a dash interval. And few business cycle are short ending and few business cycle are. We don't have a specific duration of time. When, which phase, at what it will be, we can never predict. We can never clear. See, this is how the business cycle starts. From where the business cycle starts? Complete bottommost portion, trough. From the trough, where will it go? Recovery. Hey. From trough, next it will come to. From recovery, it will come to expansion. From expansion, it will go to. After reaching peak, next it will see the. From contraction, again it will come to. Like this, similar ups and downs keeps on continuing. Clear? Now, stages of business cycle. What is it? According to your syllabus, the very first stage is expansion. What is the first stage? Second stage. Third stage. Fourth stage. Recovery is not a stage. Recovery is not a. Clear? First stage is what? Expansion, also called as boom or upswing. Second stage is prosperity. Third stage, contraction, downswing or recession. Fourth one is or depression. They have merged depression along with trough, but actually it is a separate stage. Clear now? So now let us understand one by one. As I said, if demand triggers, what is the demand? Series of activity will also increase. This is what happens during expansion. All the economic activity will be seeing upwards trend. Which trend?
Upwards trend.
And economy will face inflation. What they will face?
Inflation.
Since there is a inflation in the economy, this will be interconnecting. Listen to this carefully. Every country will be having its own economic policy. Which policy?
Economic policy.
Such economic policy is of two types. First one, fiscal policy. Which policy?
Fiscal policy.
And the second one is monetary policy. Which policy?
Monetary policy.
Monetary.
Policy.
Fiscal policies are created by government of a nation. Monetary policy is created by central bank. Which bank? Now under fiscal policy, there are two important tools. Government expenditure and under monetary policy, various instruments are there. As of now, I will only consider. Now listen to this very carefully. Now I am not going to ask any question. I know beautiful answers will come. The main root cause of inflation and deflation. What is it? Main root cause of? Money supply. What is it? Just assume you will go and ask your parent 500 rupee pocket money. They will give 5,000. Wow. Full on. You will go for movie, shopping, everything. You will start spending more and more. Same way. In the whole economy, what is it in the? If money supply increases, people will get more money in the hands. When people gets more money in the hand, demand will
Increase.
same cycle continues. If demand increases, production should increase. If production has to increase, now employment should. In order to increase production and employment, bank credits will, and price level will, profits will, income will. Since income increase, again demand will, production will, GDP of the nation, income earning capacity increases, so standard of living. See, it's a chain. It's a complete cycle. Clear? So, whenever there is an expansion phase, which phase?
Expansion.
Economy will be performing well and there will be an inflation in the economy. Inflation in the? And in this inflation phase or an expansion phase, involuntary unemployment is almost zero. What is it? Involuntary unemployment is? Have a look here. Now we are speaking about expansion phase. In the expansion phase, see output, income, employment, price, profit, everything is rising. Standard of living is also rising. Output increase, trade increase, effective demand increase, income is increasing, employment increasing. See, involuntary unemployment is almost. That means people who are searching for a job, I am ready to work, willing to work, unable to get a job, Allah, such kind of unemployment will become almost. And interest rates are Why? Because of inflation. Because of dash. So remember, in an economy, whenever there is a inflation, I said now already there is more money in the hands of people. Should government spend more money now? No. Government expenditures will decrease, and our Nirmala aunty will become active. She will start increasing the all types of tax, and interest rates will also, because you people have more money in your hand now. If I increase interest rate, you will come and deposit money in bank. You will come and invest it in stock market, share market, insurance and all. So interest rate will increase when there is inflation in the economy. So during expansion phase, during which phase? Interest rates will increase because of, and there is a larger expansion in the bank credit. Banks are also giving more and more loans, and effective utilization of capital in investment, because the entire overall economy is performing well. Business is getting optimized, business is getting boosted. See, there is a dash employment of resources, level of production will become, and there is also rise in dash, rise in GDP. GDP will also increase, standard of living will increase, employment opportunity will increase. Entire economy is performing well. Entire economy is from expansion. You will come to which position? That is the highest level of the economic activity, and it is also called as boom period. Usually it will be for a short term. A person will be earning a highest profit. Which profit? Highest profit. See, there will be a high level of profit. Which level of profit? See, price and profits will be rising. Price and profits will be. Now comes the beautiful phase. Which phase? Contraction. Whatever we discussed in inflation, complete opposite now. There will be deflation. What will be there?
Deflation.
And not just deflation. Manufacturer will become a negative mindset. Which mindset? You know it very well. Now it is just a entry level. Next worst phase waiting for us. Which is that worst phase? Depression. Yes, ma? Recession means where cost cuttings will be happening. They will be cutting down. Economy is not performing well. We can't make unnecessary spendings. Economy is seeing a downward trend. Receding. Receding means receding down. Depression is worst phase. Recession is just entry. Let's say you will get a new set of friends. Worst fellows. You didn't get to know they are worst fellows. You are in contraction. After joining them, you will also get spoiled. That is depression. Got to understand now? See, now they understood, boys. Now. So, depression is an extreme form of worst stage. Extreme form of contraction is still entry. Now, economy is going down. Now, if government does not take a proper action, next you can't save your economy. Your economy is going to collapse. So, at the point of contraction itself, government has to take all measures. What they will do? How government is going to take all the measures? When there is a deflation in economy. What is that? That means during contraction phase. Now, money is not there in the economy. Now, who should spend more money? Government should spend more money, and to encourage people to spend money, we should decrease the, and we should also decrease the, when we decrease interest rate, people will not keep money in bank account. They will start withdrawing. Once they withdraw, if they will hold simply in hand, no, they will spend more. If they spend more, demand. If demand increases, production should. Employment should. That is the intention of government. So this is what happens during inflation and deflation. But this entire chart is important. Clear? 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 Now see there. During contraction. What is it during? There is completely downward trend. What will be there completely? See, there is a steady decline in dash, 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 dash. They respond dash, 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 dash. Output. And also reduction in the. Why people are taking back money now? Why interest rates have decreased? And also expansion of business will. Stock markets will. Now entry stage itself, stock market starts falling. Business creations will. Why? Because manufacturer has become a dash mindset. He knows this is just a entry point. Worst fellow is waiting next to depression. Clear up. People will start losing jobs. And there is an increase in unemployment. Continuous decline in income and aggregate. Economy enters the trouble. Now comes the worst phase, depression. What is it? See, there is a continuous decline. What is it? In dash, 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 dash. And standard of living will fall, depression will set in. Dash will set in. Now this is extreme trouble stage. Economy is almost like in a ICU. Economy is where? Like ICU batch students. Full do or die situation for the economy. Now see there, fall in volume of output trade, unemployment is rising in the economy, consumption is decreasing, demand is decreasing, and there is a financial crisis. Which crisis? People are not at all spending money with a fear. They were only holding back money. They are only holding back money, and interest rates will also. Why? Because deflation is there in economy now. So interest rate will fall. Firms shut down their several production facility. Temporary shutdown. Which shutdown? COVID time. Temporary shutdown. And firms will shut down several production facility. Underutilization of fallen GDP. 20 employees were there. I throwed away 14 employees. Don't come. You are fired. Only six of them are there. Even for the 6 people, I am unable to give correct work. Underutilization of resource. What is it? Underutilization of resource. Finally, entire aggregate economic activity will come to the lowest, and price and profits will reach its minimum, and finally economy reaches its dash point. That is completely. So what all disasters will happen? Observe, in the depression and trough, economy will be in the due to less interest rate. What is it due to? People will start holding money. They will not keep money in bank, and moreover people are losing jobs now. Unemployment. So people start holding dash cash, and bank credits will also. Now slowly from the trough there is a sign of recovery. New innovations will happen. Slowly economy starts improving. Now from the depression to reach expansion, in between we have recovery. In between we have what? See, during this period, expansion and rise in economic activity. Demand starts rising. Demand starts rising. Most important, manufacturer will become dash mindset. Positive. So remember, at which phase manufacturer is going to become positive mindset? During recovery. During when they will become negative mindset? Contraction. In economy, when there will be inflation? Expansion phase. When there will be deflation? This is most important. Clear? Finally, we will come to the recovery phase. Slowly stock markets will get active. Employment starts. Slowly that revival will become as a demand will increase, employment opportunity will increase, everything will start increasing. This is your business cycle. It keeps on occurring again and so whatever we just discussed, along with that 3 more extra points we need to remember. How many extra points? Point number 1. It generally originates in free market economy or all these big troubles what we have witnessed in the world, Great Depression of America, financial crisis, e-com bubble blast, all of them, majority of them have started in which economy? And it starts in one country, it affects the whole nation, even other countries also it will affect. Clear? COVID, best example, started in China, affected entire globe. 2 years full lockdown, stay home, stay safe. Next up. Secondary and tertiary sector will be affected more comparing to agricultural sector. No doubt effect will be there, but more effect will be there for which sector? Secondary and agricultural sector will not have a much effect. See, these are the 3 additional points we need to remember. Clear? We already studied other points. It occurs periodically, but not always at regular interval. It has got different stages: expansion, peak, contraction, trough. And it is difficult to predict business cycle even before it occurs. We cannot predict which stage, when it is going to come, and it affects dash activity, all the economic activity. It also affects the well-being in the society. So these are the characteristic features. From this you can expect question. Almost from every heading in this chapter you can expect one question. Suppose average if the 5 question comes. How many question comes? From every topic one question will come. Clear? Next up. Sir, why should we study this business cycle? Why? Most important for decision making purpose. Which making purpose, pa? Just now we studied about business economics. What is the meaning of business economics? Taking right decision at to know when to invest money, when not to invest money, when to pump in, when to expand, when not to. You should know how your economy is performing, na? So in short, business cycle is used for a dash making purpose, decision making purpose. What kind of decision? Taking right decisions at policy creation, profit and wealth maximization. Clear? Now, there is a concept called as cyclical business. Which business? Multiple times these questions have come. Business which is highly dependent on business cycle. Business which is highly. If economy performs well, this business will perform well. Economy doesn't perform well, business matash. Best example, construction equipments. Demand for iron and steel, cement. Have you ever seen during COVID, big apartments and all, bungalows and all got constructed? Demand for cement, demand for steel. No, these are cyclical business. Which business? Only and only if economy performs well, this business will perform well. Economy doesn't perform well, this business will not perform well. They are called as which business? Now comes another important area, most repeated question. Which among the following is not an internal cause of business cycle? Which among the following is not an external cause of business cycle? How business cycle are caused? How business cycle are? Clear. Number one, internal causes. Internally within the country, what all will trigger the business cycle to change? Number one, due to change in. Next, due to change in. Why investment will change? Because of mindset of a manufacturer. Pessimistic and optimistic. Optimistic means positive mindset. Pessimistic means. And due to change in dash, government spendings and tax rates. Somewhere we saw that government spendings and tax rates, na? Which policy? Fiscal policy. And why does this fiscal policy is created? Because to control inflation and why does inflation and deflation occurs? Due to change in money supply. Due to change in. It will lead to either inflation or. See, these are the internal causes. Which causes? So, number one, due to change in demand. Number two, due to change in investments. Number three, due to change in government spendings and. Next, due to change in money supply, due to change in psychological factors of businessmen, positive mindset and so these are the internal cause. Which cause? Next comes external causes. Which causes? Number one, war. Now Russia-Ukraine war is going on. Will Ukraine come and say, hey, India, come let's do business? Hey, stupid fellow, first win the war. Concentration is winning the war, not doing the business. Next, okay, war is done. Hello, first reconstruct your economy. There is nothing. Full ashes it has become. Your country has come to the ground. Rebuild your economy. Post-war, reconstruction. Next, because of dash. If population is growing, demanding capacity will automatically investment will grow, production will grow. Next, due to change in whenever technology changes, production capacity will also. Next, due to change in dash factors like COVID, we believe it is natural factor, not from China. Next, drought, famine, earthquake, tsunami, all this. Whenever such natural disasters happens, na, concentration will be on the disaster, not on conducting business, not on conducting. Clear. Which among the following is not an internal cause of business cycle? War, post-war reconstruction, population growth rate, and pessimistic mindset. Clear? Like this, the questions are going to come. Get ready. Every topic, one question. Every topic, there is only 5 topics. Characteristic features, decision-making aspect, features. Clear? Causes. Causes, features, and next comes a cyclical decision-making concept. And next comes your most important economic indicators. What is it? Economic? The last topic of microeconomics. Listen to this carefully. This is actually important. You guys will ignore. See, I clearly said it is highly impossible to predict business cycle even before they occur. What is it? Highly impossible to predict even before that. But our economists will not sit silent. They will be using statistical tools. Which tools? In order to not just predicting, after predicting what is going to happen next, what is going to, and they may be correct or they may not be. They are not always accurate. They will try to predict what is going to happen next in the business cycle. Clear? They are called as indicators. What are they called as? Indicators. There are 3 types of indicators. Important. Meaning and example. What is it? Meaning and? This is where exam questions are coming. Meaning and example. You need to understand the meaning of leading indicator, lagging indicator, coincidental. And examples of leading, lagging and coincidental. Even in ICAI material, they have given extra examples, including example. What is it including? You need to study. Clear? That is important. Number 1, leading indicator. E will change even before economy starts to follow some change. Tomorrow, COVID 3rd wave will come. I will bring all mask sanitizer and I will store in my shop. Tomorrow I will do nice business. I thought nothing happened. I will change even before economy changes. What is it even? That is leading indicator. Lagging indicator, tube light fellow. I will change after economy. Oh, closing stock is increasing. Sales is not happening. Economy is in contraction phase. Hey, from tomorrow, 16 people, you are fired. Don't come to office. Like tube light, I will realize later. Lagging indicator. Which indicator? Next comes coincidental indicator. Neither they will change before nor they will change later. They will change along with the economy. What is it? They will change along with the economy. They will only speak about current state of economy. They will speak about what? Clear? So these are the three types of indicators. Leading indicator will change before. Lagging indicator will change. Coincidental indicator will change along with the economy. They will change. See, examples of leading indicator: change in stock price, new order for capital and consumer goods. That means bulk orders have come. That means in future demand is going to increase. We are preparing. Ganesha festival is coming. We are now only preparing idols and everything and we are stocking it. Why? To sell in the future. Na? Next, lagging indicator: unemployment, corporate profits, labor cost per unit, coincidental, present GDP. What is the present GDP? Present inflation, present industrial. These are the examples. Clear? By this, your entire microeconomics revision comes to an katham. Clear? Any doubts in any topic? On finally, Chetana, but torture mogidi. First day successfully completed. Still MCQs there now. If you don't want to, material online.
Leading indicator ಗೆ ಮತ್ತೆ coincident indicator ಗೆ ಎರಡಕ್ಕೂ ಕೂಡ changes in stock market
Changes in
stock market prices.
Stock market prices or changes in capital goods. See the read it.
In leading they have given for example changes in stock prices and in concurrent they have given financial market such as stock market price.
Stock market, they are speaking about financials, equities, trading, stocks. Here stocking means production goods, consumer goods, durable goods. That is the stocking of consumer and durable goods. Should I do it or not? MCQs. That people are packing their bags already. I will believe, even I studied in same college. You have played all this. Okay, chapter 1 and 5. Chapter 6 has more questions. 5. When entrepreneurs are pessimistic about future market condition, what is pessimistic? Negative mindset. That means economy will face a contraction in the economic activity. Next up. Which of the following is not an internal cause? What is it? Not a technology, external, technological changes. Next up. Change in stock prices, new order for capital and leading indicators. Next up. Variables that change after the economy changes. Lagging indicator. Chapter 1. Buyers ultimately determine what goods and services will be produced and in what quantity. Consumer's opportunity, choice making ability. Which of the following is not one of the 4 basic problems of the economy? Where to produce? See how many questions has come already. 1, 2. Now third question. Which of the following is not an example? Sorry. Which of the following is an example of should? See, I have underlined that word. Should be. Clear? Fourth question. Which of the following does not describe the nature of business economics? Does not describe. It is abstract and purely. Business economics is pragmatic in approach. It is not abstract and theoretical. Next up. I think so. 4 questions have come in the previous attempt. See, only 4 questions. Next, September paper. See, first question itself. Price in capitalistic economy is decided by. Next, Sarah runs a lavender stall. Her decision-making process is involving assessing the demand for her pricing strategy and maximizing our profits. What is it? Maximizing the profits with a limited stock in a small business. Which level of economy? In which economy, the material means of like factories, capital, mines, etc. are owned by whole community, socialistic. Which of the following is related to the total for the production and distribution? Economic. Business economics is basically concerned with, because decision making aspects, not taking right decisions, we need economic tools like demand, supply and all. So microeconomics. Okay, chapter 1 is done. Chapter 5. When there is a fall in the level of investments and employment, producer does not instantaneously recognize the pulse of the economy. Which of the indicator does not recognizes pulse of the economy? Contraction phase. Andre, we will not get to know, but it will slowly start dipping. Later we will realize. Next, what is the term for the lowest point of trough? Next, business whose fortune is closely linked to the rate of economic growth rate. During what time the production of weapons, arms, etc. increases and most of the resources of the country are diverted for their production? War. Whenever war is going on, your concentration is winning the war. Production of arms, ammunition, bullets, where you will be focusing on. Next, in recovery phase. Which phase of the business cycle? The process of reversal is initially felt in labor market. That means usually in labor market demand automatically increases. Employment of labor will increase. That is where we will first initially get to know. Now, how many questions? 1, 2, 3, 4. See, 4 questions. I said 3 to 7 is average. I think so. That's it. See, in this one of the attempt, they have given 10 questions from chapter 10. Observe, in September attempt, 91. Question number 91, 92, 93, 94, 95, 96, 97, 98, 99, 100. 10 questions. That is what I said. Sometimes if they want to screw your happiness, they can also give it 10 questions. In one of the attempt, they have done business cycle, there was 13 questions. Previously, 2023 attempt. 2023, I think 2023 June attempt, if I'm not wrong. Almost like 13 questions had come from chapter 5, business cycle. Clear? Understood? Chalo, we'll wind up for the day. Tomorrow, same, morning 8 o'clock till evening. Tomorrow, no, 6 only. We have to finish by 6. Come on, time. Chalo, bye-bye. We'll meet you guys tomorrow. Good morning. Good morning. Good morning. Finally, you guys woke up from your sleep. So in the previous class, we started discussing about the microeconomics. In today's class, we'll be finishing with the macroeconomics. Clear? So in macroeconomics, totally how many chapters are there? 5 chapters are there. In only chapter 6 is concept based. 7, 8, 9, 10 is full storytelling. So it is going to be a storytelling class, but there you need to understand the logic. Without understanding the logic, if you just listen to the story, you can't crack MCQs. Clear? So chapter 6, that is determination of national income. What is the determination of? There are 2 units in it. Unit 1, that is national income accounting. Unit 2, your favorite economist, who is it? Keynes. Keynesian theory of determining national income. So in microeconomics, we kept on discussing about Adam Smith, Alfred Marshall. In macroeconomics, predominantly, we'll be speaking more about Keynes. Keynes is called as father of macroeconomics. Who is father of macroeconomics? Keynes. Clear? Now we will understand the unit number 1 of chapter 6, that is determination of national income. Now, even before understanding what is national income, we need to know 8 concepts. How many concepts? 8 To understand national income, and not just 8 concepts, there are also 3 methods. How many methods are there?
3 methods.
So there are totally 3 methods. One sec. There are totally how many methods are there? 3 methods. And how many concepts are there? 8 concepts of understanding what? National income. So which are those 8 concepts? Number 1, GDP. Number 2, GNP. Number 3, number 4, number 5, disposable personal income, private income, per capita. Total there are 8 concepts. And how many methods? 3 methods of calculating national income. Very first one, value added method. Second one is income method. Superb. Third one, expenditure method. So there are how many methods? How many concepts?
8 concepts.
Let's get started. The very first one, GDP, gross domestic product. What is it? Gross. So every alphabet is important here. The very first term, that is G, stands for gross. Or gross means, remember, it is inclusive of depreciation. What is it inclusive of? Depreciation. See, in accounts, we studied now, trading account, we have gross profit. After P&L account, we get a net profit. So difference of this gross and net profit is indirect expenses. So in economics, only one indirect expenses we consider, that is depreciation. What is it?
Depreciation.
See, remember, from gross, if at all we need to identify net, we need to subtract depreciation. So the first alphabet will get converted G into N. But first alphabet is G. G stands for gross. Gross means including depreciation. What is it including?
Depreciation.
Clear. The second alphabet is domestic. What is the second alphabet?
Domestic.
So what is this domestic? Listen to this example carefully. Assume this is India. Assume this is an India. There are 2 kinds of income which we are going to earn inside India. One, we Indians producing goods and services inside India. What is it? Indians producing goods and services. And second one, multinational companies who have come to India producing in India. Who have come to India and producing inside India. That is also category B. And category C, Indian MNC. Indian MNC. That is not inside India. That is now I will be focusing only on inside the country. Inside the country, there are 2 categories of people. Indians producing inside India as well as foreigners producing inside India. When I say domestic, domestic includes 3 elements, exclude 1 element. Political boundaries of the country. That means whatever map we see along, the land space, air space, and up to 12 nautical miles of seabed. Along with that, 3 things gets added. Movable assets. Which assets? Second one, immovable assets. High Commissioner offices or embassies located outside India. Located where? Outside. Whichever is located inside India is not a domestic territory. Whichever is located outside India is a domestic territory. So along with the political boundary. What is it along with the? I said 3 things gets included. Which are those 3 things which is getting included? Number 1, movable assets like aircraft, vessels, ships. Now, whenever a ship is sailing, let's say it is sailing in a Pacific Ocean, an Indian ship. No doubt that Pacific Ocean is not an Indian territory, but the ship inside the ship, the space is Indian territory. Same applies to aircraft. Let's say an Indian Airlines, which is, let me say, which has landed in New York, which is in America. We know that, but the space of airport is not an Indian territory, but the aeroplane and the space inside aeroplane is an Indian territory. Same way, embassies or high commissioner offices situated outside India. What is it situated? An Indian high commissioner office is located in USA is an Indian territory. Same way, a US high commissioner office located in India. Now, US high consulate. Now it has opened recently in Bangalore. It is in Hyderabad. It is in Mumbai. It is in Chennai. All this high consulate, the office space inside the high consulate is not an Indian territory. That is a foreign territory. Which territory? So inside India is excluded, outside India is included. See, along with political boundary, along with dash, 3 things gets included, 1 element gets excluded. Which are the 3 things gets included? Movable assets, immovable assets, and high commissioner offices located outside India is included. Located inside India is. So see there. Domestic. What is the second alphabet? That spoke about domestic territory. That spoke about what? First alphabet gross. Gross means including depreciation. Domestic means domestic territory. Land space, air space, 12 nautical miles of seabed. That is political boundaries. Along with political boundaries, 3 things gets added. Movable assets, high commissioner offices located outside India. Whichever is located inside India is excluded. Clear? Now we need to. Not temples, but only high commissioner offices. Yes.
The embassy.
Yes, embassy. Embassy and High Commissioner office is nothing but one and the same. See, we call it in a different name. Temples are not a part of a domestic territory. Let's say, for example, now in Malaysia, there is a Batuk Caves, a Murugan temple of India. That is in Malaysia, that is controlled by an Indian priest or an Indian community, but it is located in a foreign land. That is not domestic territory of India. Only High Commissioner officers get a special status. That is domestic territory of India. Clear? Next. We only and only consider sum total value added. Sum total. Let's say Shashikiran is a bottle manufacturer. Now raw material cost, everything put together, I produced a bottle for 150 rupee. Now I'm planning to sell this for 200. Produced for? Planning to sell this for? 200. So 200 minus 150. My output value is 200. Input value is? That is value added. What is it? We only consider value added. We don't consider the entire 200 rupee. What do we consider only and only? See, it is a sum total value added, or we call it as gross value added. Since first alphabet is G, what does G stands for? So it is a gross value added of dash goods and services. It has to be finished goods or final goods which is ready for consumption and where it is produced. So three important terms in GDP definition. Sum total value added, final goods and services, domestic territory. And remember, every single time, whenever we are calculating the concept of GDP, GNP, NDP, NNP, all of them are market value. Which value? Market value of goods and services. That is value added for goods and services according to a market value. Which value? And first alphabet is G. G means gross of depreciation. And if you remember, I said inside India, category A and category B. What was this category B? Foreigners producing inside India is also a part of GDP. See? Why? Includes foreign companies earning income in India. What is the word? In India. Clear? And GDP can be understood in two different ways. We call it as two dimension. First one based on expression. What is it based on? Second one is based on? Both are most important. Based on expression, we have nominal GDP and real GDP. Based on calculation, GDP market price and GDP factor cost. The very first one, let us go with the expression. So remember, I will teach you the shortcut. If at all, I consider present year price and present year quantity. What is it? Present year price and present year. Let's say 2025. We are producing goods in when? 2025. Let's say Shashikiran is a bottle manufacturer. I produced some 1000 bottles. I am selling for 200 rupees. 1000 bottles into 200. How much is this? 2 lakh. That means value created by Shashikiran is how much? 2 lakh. But I don't consider present year price every single time because I need to understand the base value of the product. Which value of the product? Base value. For that, I will choose a selected base year and I will consider the prices of base year, not of present year. See, present year prices is rupees 200. But I will not consider this rupees 200 because that is 2025 price. Let me say my base year is 2015. Base year is when? In 2015, I used to sell a bottle for 150 rupees. How much? Now presently I am producing how much? So 1000 units, 1000 quantity into rupees 150. 150 is a base year price. How much is this? 1,50,000. So if I consider present year quantity, what is it? Present year, but base year price. Which year price? Base year. We get GDP at constant price. GDP at? Clear, constant price. We are using the word constant because prices are not changing. Whatever the prices was there in 2015, I will consider the same for the present year quantity. This is 2024 quantity. This is 2015 prices. Base year price, present year quantity. This will give me real GDP. Which it will give me? Real GDP. Or GDP at constant price. GDP at? Clear. Suppose if I consider present year price and present year quantity. What is it? Present year price and? That will give me nominal GDP, or else it is also called as dash GDP at current price. GDP at dash price? But for us, which is most important? Current price or real price? Real price. For us, this real GDP is most important than nominal GDP. Sir, why real GDP? Why should we consider base year price? Why are we not considering present year price? Whenever the increase in price happens year by year, that is because of inflation. Because of what? This real GDP does not include inflation, but nominal GDP includes. Best example for all of them. Sir, one plate Pani Puri in 2015 was 25 rupees. If I had 100 rupees with me, I will buy 4 plates of Pani Puri. Now with the same 100 rupee, I can't buy 4 plates and all. Maximum it is 2 or 3 plates. Maximum 2 or. Now it is 40 rupee per plate Pani Puri. 25 rupee it was 2015. Now it has become 40 rupees. That means what is 40 rupees in 2025 was 25 rupees in 2015 because of increase in price. Because of GDP value is also increasing. So we are removing that inflation part. What are we removing? After removing that inflation part, whatever the real value we get, that is the real productivity of my nation. Real productivity of my. Another best example. Let's say in 2015, when Shashi Kiran used to teach, let's say 200 students. How many students? And I used to charge a fees of 5,000. Charge a fees of how much? 5,000 rupees. So how much it is? How much da? 10 lakh da. 1, 2, 3, 4, 5, 6 zeros total. 10 lakh. Clear na? Now in 2025, let's say for example, I am teaching 500 students. How many students? 500. And definitely fees will not be same. In 2015 it was 5,000. Sir, definitely after 1 decade, why it will be 5,000? Let's say now it is 8,000. How much? 8,000. Now it will be 40 lakhs. See, this is a reality value. But what am I doing? Now simply I am erasing this present year price and I am considering base year price. Which year price? Base year. How much is base year price? 5,000. So it will become how much now? 25 lakh. That means my real value of the nation is 25 lakh. But we are showing it as 40 lakh. What is the difference between these two? Inflation. Clear? So whenever we remove inflation, inflation adjusted value in the current year GDP. What is it? Inflation adjusted value in the called as GDP deflator. What is it called as? GDP deflator. Nominal GDP divided by real GDP into 100. What is it? Nominal GDP divided by into 100. That will give me deflator value. That means what is the inflation value you have? This deflator value will be utilized to convert nominal to real or real to. Now let's say for example, they have only given nominal GDP, that is present year price and present year quantity. What is it? Present year price and present year quantity. For every goods, we might not have a base year price. Let's say COVID vaccine. Did we have COVID vaccine in 2015? No. We introduced it in 2021. Let's say we are identifying the value of COVID vaccination produced in 2025 and all, but I don't have a base year price at all. For every product, I don't have a base year price. So I will convert my nominal into real. What do? I will convert my. See, first we will identify this nominal. Na? Identifying nominal is not a difficult task. Present year price, present year quantity, multiply that, you will totally get a nominal. But how do I convert this nominal into real? For that, I need deflator value. Which value? Deflator. How do I identify deflator? Nominal by real into? In exam, remember, either they will ask you to identify deflator or either they will ask you to identify nominal or real. They will only give a deflator value. If they are not giving deflator value, they will give real GDP and they will ask you to identify deflator. What is GDP deflator? Inflation adjusted measures. What is it? Straight away, let's go to the deflator. See, measurement of inflation. What is it? It's called as GDP deflator. And the same formula is given in the form of statement. It is the ratio of value of goods and services of an economy in a particular year. Which year? Let's say 2025, present particular year of a current year price to the prices that was prevailing in a dash year, base year. In my example, which is base year, 2015, prices of current year divided by prices of base year, that is nominal by real. Next year, real GDP is most important for us. Which is important? Because real GDP is an inflation adjusted measure. What is real GDP? Inflation. And that will not affect by the change in prices. Not affect by the. Then which will get affected due to change in prices? Nominal GDP. Remember, simple. Nominal GDP can change because of price and quantity. Primarily because of price, secondarily because of quantity. But real GDP only and only changes due to change in quantity. Due to change in dash. Let me take the same example. Shashi Kiran was teaching 200 students in 2015. He was charging 5,000 rupees fees. Now, Shashi Kiran, let's assume he's still teaching 200 students only. Let's assume that he's teaching how many students? Still, even in 2025 also, same classroom, he can't go beyond that. He's still teaching how many students? Will fees remain same? No, let's say I'm charging 8,000 rupees. Now, how much it was? 16 lakh. Accepted, huh? But there is one trouble here. Sir, your productivity has not increased, na? You are still teaching same students only because of increase in price. Only because of you are earning 6 lakh rupees extra. But in reality, your production capacity has not increased. Clear? So that is where the catch comes. Now, whenever production capacity of the nation increases, that is when we consider GDP of a nation is increasing. Suppose only if price is increasing, only if price is because of that, if the value of GDP increases, that is not the value of GDP increasing, that is because of inflation, value of your nation's goods and services are increasing. So we should remove that inflation. What we should do? That means in reality, Shashi Kiran will not be still teaching 200 students. Let's say I am teaching 500 students, but let us consider same base year price. Which year price? Now automatically it will become 25 lakh. How much it will become? That is the real value. Shashi Kiran, you are producing 10 lakh rupees worth of goods in 2015. Now 25 lakh rupees worth of goods and services in 2025. There is no inflation here. Without inflation, you have increased your productivity by 10 lakh. This is real GDP. In order to increase real GDP, dash has to increase. Production has to increase. But nominal can increase because of price and production. But real GDP increases only because of clear. So real GDP is also called as measurement of economic well-being. What is it? Measurement of economic well-being. So dash is the measurement of economic well-being. Dash is the measurement of standard of living in the country. Standard of living in the country. Hey, I said you to revise and come to the class. Dash is the measurement of standard of living in the country. Per capita income. PCI, per capita. Dash is a measurement of economic well-being. Dash is a measurement of standard of living. Per capita. Write down both, write down once. Together you write it down. When you are reading, you have to read it together. You will remember. Per capita income measurements the standard of living in the country. Welfare of the economy. Economic welfare is measured through real GDP. Clear? I turn on the AC down. It's not working on. ನಮ್ದು ಕಥೆಗಳು ಭಾನುವಾರ ಬಂದ್ರೆ ಏನ್ ಡಿಪಿ ಕಿತ್ಕೊಂಡು ಹೋಗ್ಬಿಟ್ಟಿರ್ತಾರೆ ಹೆಂಗೋ. Hello. Okay, turn on the AC in the classroom. It's really hot inside. Okay, let's continue. So what is the formula for deflator? GDP deflator is nominal GDP divided by real GDP into. Now I said we can't identify real GDP straight away because sometimes we will not get to know the value of a base price. Value of a like COVID vaccination. Now we didn't have a COVID vaccination in 2015. We can't identify the base price. So we will convert our nominal into real. What do? We convert it with the help of GDP deflator. With the help of what? Let's assume just a random example. Let's say in 2025, GDP deflator is 119. GDP deflator is, and remember for base year, which year? Deflator value will be always and always 100. Deflator value will be always and always. That means common sense. Nominal GDP, real GDP both are one and the same. Nominal GDP and real GDP both are. Let's say nominal GDP is 10 lakh, real GDP is also 10 lakh. 10 lakh divided by 10 lakh into 100. What do we get? Value 100. Remember, for base year, which year? Nominal GDP, real GDP value both remains same. That is base year. Whenever you get a deflator value of 100, that means which year it is? Clear? Now, randomly, let's take an example. 2025 deflator is 119. Now, let us identify how to convert nominal into real. What is it? How to convert? We have a nominal value now. Nominal GDP into 100 divided by price index. 100 divided by, this is the formula to create a real GDP, converting from nominal to real. Opposite of that, if at all we need to identify nominal GDP, but the value given is real GDP. So into price index divided by 100. So listen, shortcut to remember. In case of nominal GDP, it is divided by 100. In case of real GDP, it is divided by price index. Keep this in mind. Real GDP divided by price index. Nominal GDP is divided by 100. Clear? What is the formula of deflator? Nominal by real into real GDP, nominal into 100 by price index. Nominal GDP, real into price index by. Clear? Now there is one more beautiful formula. Calculating of inflation. Calculating of what? From past 2 attempts, the questions are coming from inflation. How do we calculate inflation? Now, you will be remembering a marginal cost formula. Continuous, output is continuous, output is not. Okay, let's say output is continuous. What is the marginal concept? Present minus previous. Same formula, na? Present year deflator. What is it? Present deflator minus previous deflator. What is it? Previous divided by previous deflator. What is it? Divided by into. This is the formula for inflation. Present year deflator minus previous year deflator divided by previous year deflator into 100. So these are the formulas. So total 4 formulas we identified. What is the formula for GDP deflator? Real GDP into 100. Real GDP formula into 100 by price index. Real GDP formula. Hello. Real GDP formula. Nominal into 100 by price index. Now nominal formula, real into price index by. How do you identify the price index? That is nothing but deflator. Price index and deflator is one and the same. What is the deflator formula? Nominal by real into 100. If the deflator value is 100, what does it mean? Base year. Deflator value means 100 is base. Yes. What is inflation formula? Present deflator minus previous deflator divided by into 100. Okay. Open the door now. AC has some issue, technical issue it seems. The person is going to come for repair today. Open the door, that would be better option. At least some little ventilation will be there. Main door also there. Let me discuss with them. They have set up everything here. I will ask them to change it after the break. Okay. So these are the main important 4 formulas. Now, there is one table which is given. Even you have in your material. Maybe we have already solved it in the class. Now do it once again. Take out calculator. See there. They have given values of nominal. They have given values of real. We need to identify deflator. We should also identify the inflation. What do we identify? Inflation. Clear. Keep something over there. Keep this element. Keep that element. Okay. So take out calculator. What is the formula for identifying deflator? Nominal by real into 100. See here, 500 divided by 500. See, nominal is also same, real is also. That means deflator value will be. So 2014 is a base year. Next for 2015, 800 by 650 into 100. 123.08. Everyone got the value? Okay, next let us also identify inflation along with that. See, first year we can't identify inflation for base year. Only after the base year we can identify. Now, what is the inflation formula? Present year deflator minus previous divided by previous into. Now, present year deflator 123.08 minus 100 divided by 100 into 100. 23.08. Clear? Next, identify the deflator. 1150 divided by 800 into 100. 143. 75. Everyone got the value 143.75. Now identify the inflation 143.75 minus 123.08 divided by 123.08 into 100. 1 4 16.79. Okay, next up 1300 divided by 950 into 100. 136.84. Now observe, from 143 deflator has gone down to 130. That means there is no inflation. There will be deflation. There will be what? Deflation. See, common sense here. When the deflator value goes down, that means there will be deflation. So take out present year deflator. That is 143.84 minus, 136.84. 136.84 minus 143.75 divided by 143.75 into 100. Minus 4.8. Minus 4.8. Next up, 1550 divided by 1190 into 100. Oh, 96. 130 point. See again, from 136 it has gone down to 130. That means again deflation will be there. So now inflation formula. Present minus previous divided by previous into 100. Deflator of present 130.25 minus 136.84 divided by 136.84 into 100. Minus 4.81. Next up, 1700 divided by 1240 into 100. 137.109. That is 137.1. Now inflation 137.1 minus 130.25 divided by 130.25 into 100. 5.25. Clear? See, in fact, they have asked to calculate the same. Let me show the questions. See the ratio between nominal GDP and real GDP. Ratio, that means formula. Whenever you see this word ratio, that means they're speaking about formula. Nominal by real. Nominal divided by real. What is it? Deflator. What is it? GDP. Deflator. Next, see, identify. If the GDP deflator of the country for 2020 is 140.75 and the year 2021 is 157.33, what will be the inflation rate for 21? See, they're asking for inflation. Present minus previous into divided by previous into 100. So, present is 2021. 157.33 minus 140.75 divided by 140.75 into 100. 11 point. Now, see there. The GDP, okay, wait, this we didn't do it still. We didn't do that still. Okay, see, already 3 questions have come. Whatever we just discussed. See, Bachchu questions, even in Jan atom paper, you got the questions. Where is it? Chapter 6. Have a look here. Question number 26. Find the real GDP if nominal GDP is 720 and price index is 120. They're asking us to identify what? What is the formula of real GDP? Nominal into 100 by price index. 720 into 100 divided by 120. 600. Calculate. Next up, calculate gross value added. This I have to do it, still leave it. Nominal GDP is GDP add. See, such a Bachchu questions will come in exam. For that also people with national income very difficult. What difficult? Nothing difficult. When you know the concept, things becomes easy. Yes, pa. Appa? I didn't get you. 7 and 8, 9, But most of them still, I keep on listening, sir. National income, sir. Full formulas are there, especially Keynesian theory, sir. 2 sector, 3 sector, 4 sector, multiplier. These are like very difficult. I usually get to listen. And others will be like, they might find it 7, 8, 9 is easy. 6 is very difficult. So if you know the concept, you can easily crack it off. Clear, na? So we understood first one, GDP based on expression. What is it, GDP based on? Upper most important of all, difference between real GDP and nominal GDP. So real GDP is nothing but GDP based on base year price. Real GDP is based on Real GDP is based on base year price. Nominal GDP is based on nominal GDP changes due to change in price as well as production. But real GDP only changes because of which includes inflation. Includes. Which does not include. So real GDP will raise only because of real income increase or physical output increase. Nominal GDP can raise even without, what is it even? Real increase in the physical output, and real GDP will give the accurate value with comparison to previous year, but nominal GDP will not give accurate value, it will give a misleading results. Nominal GDP is called as GDP at current price, real GDP is called as GDP at clear. So this is GDP based on expression. Let's go next one, GDP based on calculation. What is it GDP based on? So two types are there, GDP at factor cost and GDP at now factor cost. It is a cost to a factor, that means to a producer. We are using factors of production now. Which are the factors of production? Land, labor, capital, organization. Do they work for free of cost? What does land expects in return? Labor expects in return. Capital expects in return. Organization. Summation of all the four factors of production rewards is called as GDPFC. But life cannot be simple with ICAI. They want to complicate your life. Now, instead of giving such a simple formula, same formula has been elaborated and they have made it as one more beautiful formula. Wherever I ask factor cost, you should remember this formula. There are three components in a factor cost formula. Compensation to employee. If any employee comes and works in your organization, what do you pay?
Wages.
Or we also call it as a. So salary or wages is called as compensation to employee. Now for land, what do you pay? For capital, what do you pay? What does organization expects? That means remaining three things. That is called as operating surplus. What does operating surplus includes? Rent, interest, profit. And there is one more beautiful element called as mixed income of self-employed. Yesterday I said, Shashi Kiran started his own teaching classes, economics classes. I only invested a capital. I have only started this, let me say, classes. I am only teaching. Capital is also contributed by Shashi Kiran. Labor is also contributed by doctor. Example, doctor will set up his own clinic. To set up a clinic, he will only spend money and he is only giving consultation to the patients. Now, in that, we can't bifurcate between capital income and labor income. When a capital and labor, what is it? Is contributed by same person and we can't identify the separate identity of that capital income and labor income, such income is called as mixed income. Which income is that? Of self-employed. Mixed income of developing nations like India, some other countries will be having a lot of mixed income. Such mixed income should also be considered while calculating factor cost. Which cost? So factor cost formula has got three important elements. Compensation to employee, operating surplus. That's it. Listen, for that we will do mixed matching depending upon the scenario. Now what are we identifying? We are identifying GDP. First alphabet is? What does G stands for? Including depreciation. If in case of GDP, they are asking for NDPFC. Bullshit. Don't even minus nothing. This is where I am saying you will go wrong. Let's say inside the dabba, there is nothing, kali. Inside a box, there is nothing, no food, kali. That means there is nothing. Only if you want to put the food, that means you are putting depreciation inside. That means if it is N, don't make it as minus depreciation and all. In factor cost formula, which formula? If the first alphabet is N, first alphabet is don't even add or don't even subtract. Leave it empty. Leave it. Clear, ra? Now this is why CA, come again. In NDP, what do you do? Minus depreciation. Hello, factor cost formula it is. Which formula? See, whole class in a sync. Everyone said minus depreciation. This is what happens. So, whenever you are identifying a factor cost formula, which formula? Three important components are there in factor cost formula. Compensation to employee, operating surplus, mixed income of. That's it. For that, mix matching depending upon alphabets. First alphabet, if it is G, add depreciation. If it is N, nothing. Don't make it as minus depreciation and all. Clear, huh? Understood? So this is factor cost formula. And how do we identify market price? Which price?
Market.
Now, while identifying market price, our Nirmala aunty will come into picture. Now, GDP at market price. That means we are selling these goods and services in the market. That means first we will produce goods. To produce goods, we will be incurring GDP factor cost. What is it? GDP at? Now, for this, Nirmala aunty will come. Hello, my share. Indirect tax. And suppose if government has given any subsidy to produce such goods and services, minus subsidy. What is it? Sometimes in the exam, rather than giving indirect tax and subsidy in a separate information, they will attach it, they will give a net effect. That is called as net indirect tax. Net IDT. Clear? What is the formula of GDP at market price? GDP at market price is GDP at factor cost plus Nirmala aunty minus subsidy. Plus Nirmala aunty. Now, same formula can be used to identify GDP FC. Complete opposite. That will be GDP MP minus Nirmala aunty plus subsidy. Adjusted value of these two is also called as net indirect taxes. If they have given net indirect taxes, if you are calculating market price, you need to add. If you are identifying GDP factor cost and if it is net indirect taxes, you need to. That symbol matters a lot. Clear? See, simple concept. I am selling in market plus Nirmala aunty. I am not selling in market minus Nirmala aunty. Clear? So, indirect tax is the major key there. Difference between factor cost and market price. What is the difference between what? So, if I need to convert factor cost to market price or market price to factor cost, only two things will play around. Which are those two things? Indirect tax and subsidy. Simple. Sir, I have GDP FC. What do I have? GDP. Now, I need to identify GDP MP. I need to convert this factor cost into dash. Now, I am selling in the market. Now, market price has to be identified. So, plus Nirmala aunty plus IDT minus. Clear? Suppose, sir, I already have GDP MP. I need to identify GDP FC. GDP? That means from the market price, I need to go back to factor cost. Now, minus Nirmala aunty plus. So, in short, difference between factor cost and market prices, indirect tax, and you should know when to add them, when to. In the market price, add indirect tax minus subsidy. In the factor cost, minus indirect tax plus subsidy. That's it. This is the concept of market price. GDP based on expression. Real GDP, nominal GDP. GDP based on calculation. What is the factor cost formula? Three important components. Factor cost formula. Compensation to employee. Operating surplus. Mixed income of. That's it. For that, whatever the first alphabet, second alphabet is there. If it is GDP, first alphabet is G. What do? First alphabet is N. Nothing. No minus depreciation and all. Clear? Understood? Though this is the concept of GDP. Now, if you remember, I said there are two types of indirect taxes. Even in yesterday's class, we spoke about this. How many types of indirect taxes there? Two types. Where is that? Production tax and somewhere we wrote. Here. What is it? How many types of indirect taxes there? One is production tax, second one is. See, based on this, we will bifurcate into three more concepts. Base price, factor cost, market price. What is it? Base price, factor cost, market price. So remember, these two will play a role. One is production tax, second one is. So how do we define this base price, product price and market price? Simple. See here. First, we will be having GDP FC. What do we have GDP? We will have a factor cost. Which cost? That means cost incurred on factors of production. Rent paid, wages paid, interest paid, profits earned. For that, if I add production tax, which tax? Production tax. You would have taken license now to produce that goods and services. That is production tax, license fee. And if at all you have got any kind of production subsidy, what is it? To produce goods and services. Now, sometimes government will give subsidy for essential goods and services. In that case, for a factor cost, if you add production tax and minus production subsidy, we will get base price. Which price? Base price. So we get which price? Base. So what is the formula for base price? Factor cost plus production tax minus production subsidy. After getting base price, for this, if I add a product tax, which tax? That is nothing but my GST minus product subsidy. What is it? To sell that goods in the market, if government gives a subsidy, not to produce, to sell that goods if the government gives a subsidy, this will finally get us market price. So this is the concept of factor cost, base price, market price. Difference between what? Factor cost, base price, market price. There the deciding factor is this production tax and product tax. We are bifurcating them into two different aspects and then we are explaining. So there is a new concept called as base price. Which price? Base price. What is the formula for base price? Factor cost plus production tax minus production subsidy. This will give me base price. From base price, how do I identify market price? Plus product tax minus product subsidy. That will give me market price. Clear? This is the concept of GDP, gross domestic product. Clear? Huh? See, I have explained about indirect tax. Indirect tax is of two types, product tax and we also spoke about subsidy. That is a financial assistance. What is it? Financial? Given to whom? Given to a manufacturer. By whom? By a government. To produce which kind of goods and services? Very essential goods and services. Clear? Huh? So this is the concept of GDP, and we understood deflator, we understood inflation, everything nominal, real. Clear? Huh? Now, while calculating GDP, what to include and what not to? So most important, what not to include. First, we will understand what not to include. The very first one, transfer payments. Which payments? We will explain transfer payments. Appa?
Giving pension.
Sir, we received but we didn't earn it.
Why? Why is the differentiation? Why are we not including?
We are
Reason?
not giving any
Not contributing to the
output, any output in the exam because we scholarships for a student.
Question is very simple. You explain what is transfer payment, but my question is, why are we excluding from GDP calculation?
It's not getting evaluated. No production is happening for it.
It is not leading to production, or it is not creating any value. Let's say scholarship given to students. You are not producing any goods and services here. Just money gets transferred from one person to. So that is the reason, not just in GDP, will not even include transfer payment in the whole national income concept. In the entire national income concept, we will never include transfer payments. Clear? Transfer payments are excluded. They are just incomes received but not earned. Incomes but not earned. It is not leading to the production of any goods or services. Now comes non-economic activities also not included. Sir, why sir? It is leading to production. Now, my mom preparing breakfast at home. Yes. Leading to production. But can you identify market value of it?
No.
Oh, morning breakfast 50 rupees. Lunch 100 rupees. Dinner 120 rupees. Can you identify market value? Suppose you are teaching your brother or sister in their studies. Younger brother, younger sister in their studies. Hello, tuition fees. 1 hour 100 rupees. They will say modi to Akbar. That's it. Did I ask you to teach? No. You gave you build-ups and all. Now you are asking tuition fees and all. Get lost, stupid fellow. See, you are, let me say, leading to production of goods and services. But can you identify the market value of it? No. Since you are unable to identify the market value, even though it is leading to production of goods and services, non-economic activity without intention of earning money, if you conduct any activity, is not included in GDP. When you are only unable to identify market value. Unable to identify? But there is one more twister here. See, we will consider self-consumed goods and services. What is it? Clear? See, whenever we consume on our own consumption of produced goods, own consumption of Shashi Kiran, bench manufacturer. I produced a bench and using at my home itself. Yes, market value of the bench can be decided, na? Now, for your mom, when she's preparing breakfast, oh, sir, my next to, let me say, sir, my next to home auntie, she has hotel, sir. She's selling one plate idli vada for 70 rupees. If my mom prepares one plate idli vada, it is also 70 rupees. Can I say like that? No. See, if you can identify the market value and if it is leading to production and if you are still using for self, included. You are producing but unable to determine market value. What is it? Unable to? Not included. This is the main differentiation. Clear? Huh? Market value can be identified, market value cannot be. If market value can be identified, leading to production and self-consumed, own consumption of goods. What is it? Included in calculation. Sir, produced, market value cannot be determined, self-consumed. Now should I include? No, that is a non-economic. Clear? This is the main differentiation. Next up, this is most important. This time the question has been given from the second-hand goods transaction. See, car, best example. Say car is produced in 2020. When is a car produced? 2020. Okay, I bought a new car in 2020 during COVID time. Now I feel, no, I don't want this car, let me sell it off. Now I will sell this car to some person. Now, should I include the value of the second-hand car? But any royalties, commissions, margins earned. Royalties, commissions earned. Only such royalty, profits and commission value is generated this year. Only that royalty, commission, profits has to be included. Not the second-hand goods value, not the And intermediate good, that means still semi-finished goods, yet to complete it, such goods should not be included. And all financial transaction which is considered as economic backs, which is considered as what? Like gambling, drugs, bettings, all this values or income should never be included. Clear? These are the exclusion list. Which list? So these are the items which is never included in calculating not just GDP, even in national income, even in, see, transfer payment never included, non-economic activity is also not included, but there is one exemption to that. In few cases we include non-economic activity, where there is one exemption. Even though it is non-economic, we still include that in the calculation of GDP. There is one exemption, where national income. I'm asking about national income, not personal income. Leave personal income, national income. In calculating national income, even though it is non-economic activity, even though market value cannot be decided, but in one circumstances, we will consider that into a calculation of GDP or national income, where stupidity, government expenditure, policeman services, defense services. I clearly said in the class. Now policeman is providing a services. He is protecting us from becoming worst, from theft, robberies and all. Now no doubt government is giving salary to the policeman. But the services rendered by the policeman, can you quantify? Sir, he is working for 1 hour, so 1000 rupees payment. He is working for 8 hours, so 10,000 rupees payment. Can you quantify the services, quality of services given by the policeman? But no doubt salary is given as a rewards for doing it. Soldiers safeguarding the borders of the nation. No doubt salary is given. Can you actually quantify the services rendered by them, which is preventing us from becoming worst, which is preventing us from, that is a non-economic activity incurred by a government, when it is a huge expenses incurred by the government as a non-economic activity, only and only a government expenses of non-economic, if it is huge expenses included in national income. Every month we pay salary to policemen, every month we incur defense expenses. That is a huge expenses to government. So included in national income, even though it is non-economic, even though non-marketable, since it is a huge expenses to government, since it is a included in calculation of national income. Chetan, clear? Why? Because pension is not leading to immediate production of goods and services, but policeman services, defense services is leading to production. They are providing services, right? It is producing, production is happening, but in transfer payment, production is not happening. Suppose I will give you 100 rupees out of love and affection. Does it lead to any production? Just money got transferred from one person to. Now, if government is paying a salary to the soldier, is he giving out of love? Government? No, man, he is providing services, leading to production of goods and services. Services is also included. Past services. In national income, we only consider present year. Which year? Present year produced goods and services. What is it? Present year produced? Present year produced? See here. Only final goods and value added by the production. Dash period. Pension, is it for current period or previous period production? Got the difference? Pension is paid for a money which you are rendering the services in your past years, not in the present year, not in the current year. Now understood why transfer payment is not included. It is not leading to production of any goods or services. Only present year production of goods and services and the net change in inventory. What is it? Mistake is there. Closing stock minus difference between your present closing stock and present opening stock. That is produced in present year. Produced in. And last but not the least, depreciation of dash year. Depreciation of the only current year depreciation has to be considered, and production boundaries and where you are producing and self-consumed. What is it? Is also included in calculating GDP list. And this time the question has come from second-hand goods. Which goods? Wait, let me show the question. Where was it?
Sir,
32nd question. Read it.
sir, MLA salaries.
Present year. They are providing services present year, na? MLA. He became MLA. He became MP. When is he providing services? Now or past? For present year production of goods and services, it is paid.
How can
How do you measure? There is a fixed salary, na? For every MLA, every MP. Will it change every month? It's a fixed salary. That is a fixed expenditure that comes in budget chapter. Don't worry. Emoluments. We call it as what? President salary, Chief Justice salary. That will come under consolidated funds. There you can't change it. It is fixed amount. Next year, 32nd question. While using income method, while using which method? Which of the following income is included while calculating national income? Capital gains, windfall profits, or any gambling betting profits, income from sale of. No, why? Because not of present year produced, na? Commission and brokerage. Commission and earned is included. Second-hand goods transaction is not included, but the value earned as a profit or a commission or a royalty from the second-hand goods, that is included. Clear? Understood? See questions. Same to same. That is why I'm saying concept is important. Understand the concept. Logic is most important. When you know the logic, you can clearly make out the answer. Clear? Next, let us go to GNP. What is it? First alphabet is still same. G. What does G stands for? What does gross means? Including depreciation. What is it including? Clear, ra? But second alphabet is N. What does N stands for? National. Now listen to this carefully. Let me go back to the same example. Now this is India. Now in India, there are two types of income that is earned inside. How many types of income that is earned inside? Two types. Which are those two types? Indians producing inside India and foreigners producing inside India. Accepted? Let me draw that once again. Wait. This is category A. Indians producing inside India. Category B. Multinational companies producing inside. Category C. Indians producing outside India. Now remember this very carefully. All these foreigners, whoever is producing inside India, don't you think they will take back the money what they earned from India? Same way, all these Indians who are earning in abroad, they will get that money inside to India. These are factor income receivable from abroad. What is it? Factor income? That is category C. Category B is factor income payable to abroad. Factor income? The net effect of both. Payable, receivable. So let's say for example, we need to receive some 50,000 crore. How much? And we need to pay some 40,000 crore. What is the net effect? That is called NFIA, net factor income from abroad. What is it? Net factor income from abroad. Clear? That is receivable from abroad minus payable to abroad. Receivable minus which income? Factor income. Factor income receivable minus factor income. Now simple concept. For GDP, if you add NFIA. For GDP, if you add, this will become GNP. That means how to convert the second alphabet N from D. If I need to convert this into N, we should add NFIA. That's it. Difference between domestic and national is NFIA. Difference between what? Domestic and national will be dash NFIA. Now everything else, formula, everything remains same. See GNP, MP, even the outcome is market value. Outcome is dash value. So GDP, MP we got first. For that just add. We will get GNP, MP. Suppose sir, if I need to identify GNP, FC. What is it? GNP? Compensation to employee plus operating surplus plus mixed income of self-employed. Observe, first alphabet is G. So plus depreciation. Second alphabet is plus NFIA. That's it. Finished. What is difficulty in this? Nothing, no. Such a easy question. So by this GNP also comes to an end. So in short, difference between domestic and national is NFIA. NFIA value can be positive or NFIA value can be. Suppose if NFIA is negative. NFIA is what we need to receive from abroad is less, payable to abroad is more. That point of time, GDP will be greater than GNP. GDP will be greater than? If NFIA is positive, GNP will be greater than GDP. Clear? Now, third one, NDP. What is the third one? NDP. What does NDP stands for? Net domestic product. First alphabet is N. If first alphabet becomes N, what is it called as? Net. What do you mean by net? Excluding depreciation. Simple, sir. From GDP, we have subtracted depreciation, so automatically that will become. That's it. Same GDP concept. Just subtract depreciation, and depreciation is also called as consumption of capital allowances or fixed capital consumption. These are the different names. So just subtract depreciation from GDP, automatically you will get GNP. Clear? Next, fourth concept, NNP. See the first alphabet. What is first alphabet? Net. That means excluding depreciation. Now see the second alphabet, that is N. What is that N? Including NFI. That's it. Same GDP definition. Exclude depreciation, include NFI. So even it will be a market value. Which value? That means we are also identifying what? NNP, MP. NNP. How do we convert MP into FC? Already I spoke now. How do I convert MP into FC? Minus Nirmala and T plus. That's it. Remember, NNPFC. What is it? NNP? It's called as national income. It's called as dash. What is the actual name of national income? Net national product at factor cost. Net national product at. What is the first alphabet? N. What does N stands for? After depreciation. Second alphabet? National. Including? Simple. Whatever we are producing inside India. That means inside the country. Net domestic product. What is it? Plus NFIA. Now you tell me when you add NFIA for net domestic product. Now I will write the formula. You tell me NDP. FC is there. For that if you add NFIA. Now second alphabet was D. We are adding NFIA. What do we get now? NNP. Appa, this is national income definition for a domestic factor income. Which income?
Domestic factor income.
So this is domestic factor income. For a domestic factor income, if you add NFIA, this will become national. So national income is a factor income. What is national income? National income is a? National income is a? So kindly keep this in mind. National income is a dash income. Let me go back. Initial phase. When I started this unit, I said, na, dash income, net value. That means first alphabet is N of all economic goods and services produced within domestic territory. Within domestic territory, that means ND. First alphabet is net value, that is N. Second alphabet is domestic, that is ND. So they are speaking about NDP FC. What are they speaking about? PFC, including dash, including income receivable from plus NFIA. NDPFC plus NFIA is NNPFC. NNPFC is called as dash. So in short, it is a money value of all final goods and services produced within the domestic territory and outside. By whom? By the citizens. Clear up? Within India, outside India, by the citizens of India. Which income? Net factor income. Which income? That is called national income. In short, NNPFC. What is it called as? So shortcut to remember is very simple. Now first we will be identifying GDPMP. What do we identify? GDPMP. Outcome is market value. Now let's go alphabet by alphabet. First alphabet is G. Now we have to convert the G into what? N. So how do we identify NDPMP? Minus depreciation. Chalo. Next, the second alphabet is D. How do I need to convert this D into N? Now we need to identify NNP, MP. So we need to add plus NFIA. And I know that MP is given. But for me, which is important? NNPFC. Because NNPFC is called as dash. National income. So how do I convert that market price into a factor cost? Minus Nirmala and T plus subsidy. That's it. This is the shortcut to identify national income. Go alphabet by alphabet. That is most important. First convert this alphabet G. Next convert alphabet D. Next convert MP into FC. That's it. Go alphabet by alphabet. What is the difference between gross and net? Domestic and national. Market price and factor cost. Indirect tax and subsidy. That means your whole national income is just dependent on three differences. How many differences? Which are those three differences? Gross and net depreciation. Domestic and national NFI. Market price and factor cost. Indirect tax and end of the day, ultimately, we need to identify NNPFC. NNPFC is called as dash. That's it. This is national income now. Ultimately, we should identify NNPFC. To identify NNPFC, we should know three differences. Gross and net difference, domestic and national difference, market price and factor cost. We should know when to add them, we should know when to subtract them. That's it. You should know when to add, when to subtract. If you know this logic, enter national income, gone case. Finished. Clear? Anyone having doubts in national income calculation? How to identify NNPFC? Let's go to the next topic. Okay, chalo. Okay, I think I have made you to solve this problem in the class. Okay, still do it once. Let's see. Can you able to make it out? Don't copy from your class notes. Try to do it once again. That is easy question, man. Hardly takes us 30 seconds. It will not take beyond 30 seconds. So online students, where are you guys from? Bangalore or different place? Apurva, Chirag, Divya, Tarak, Vivek, Pratham, Pravenas, Sridevi, Netra, Vaishali. Still more are there. Mysore. Pratham is from Mysore. Others? Where are you guys from? Andhra Pradesh, Bangalore. Bangalore. UP. One student is from UP. Next. Completed? 413. Okay, they're asking us to calculate what? NDP. But what is given? GNP. Let's go alphabet by alphabet. We have G, but we need N. So minus. Next, there is N, there is D. There they want to go back to domestic. So minus NFIA. So we have market price, but they want factor cost. So minus Nirmala and T plus subsidies. Clear? Let's put the values. 430 minus depreciation 12 minus NFIA. NFIA we should identify. Receivable from abroad 16. Payable to abroad 18. So minus of minus 2. Minus indirect tax. How much? 22. Plus subsidy 15. So 430 minus 12. Minus of minus is plus. So plus 2 minus 22 plus 15. How much is that? 41. How many of them got wrong answers? Anyone got wrong answers? Unable to do it? You got the wrong answer? Found it difficult? Let's continue. Okay, chalo. Already we have done all this. So shortcut to remember numerical problems. Okay, let's go to the personal income. Which income? So hope you guys have also solved numerical problems. Whatever is given in the ArivuPro material. Have you guys solved it? Anyone found it difficult? Should I also do numerical problems? Okay, chalo. Next up, personal income. Which income? See, concept is very simple. As an individual person, as an household, as a whatever money that comes to my hand, add it. Whatever money is not coming to my hand, subtract it. See, from the national income. From where? From the. We should do this adjustment. See, after calculating national income, that is NNPFC, we should do the adjustment. There are two kinds of adjustment. Number one, incomes received but not earned. This is nothing but transfer payments. What are they? Next, incomes earned but not. Sir, we have earned income leading to production of goods and services, but we are not receiving income. Best example, PF, Provident Fund. Sir, I've invested in a company, sir. I've invested on equity shares. Company is yet to declare dividends. Still, company has not declared dividends. Undistributed profits of corporate. What is it? Undistributed corporate profits and contribution to employees by social security. That is nothing but provident fund. Clear up. Incomes earned. We didn't receive. Subtract. Incomes received but not earned. Add. From where do you do all these adjustments? Clear up. See, simple. Whatever money comes to your hand, add it. Whatever money not coming to your hand, suppose if it is going to government, private sector, whichever person, subtract it. Income coming to household sector, add it. See, note, this is most important. Why don't we consider transfer payment in national income? Already I explained. Transfer payments will not lead to the production of goods or. See, national income is not a sum of personal income. Why? Because personal income is included with, but it is excluded in. Why it is excluded? Because not leading to production of goods or services. Clear? Next concept, disposable personal income. See, you might also expect a question from personal income calculation. Numerical values are important. See, simple, whatever comes to your hand. Here, most important, interest on national debt. What is it? That means government has taken loan from public in the form of issuing bonds, treasury bills. So, government will pay interest. That means it is an income to household. What is it? We need to add this 15. Same way, current transfers from government. Government is giving money, transfer payment. Add it. Clear. Current transfer from rest of the world. What is the current transfer from? We should add it. Not government is giving from abroad. We are receiving some money. Maybe, sir, my cousin is working there. He is sending money to his parents. Every single month, money is received. Nah. Whatever you receive to your hands, whether it is inside the country or whether it is outside the country, add it. Whichever is not coming to your hand. See, corporate profit tax. What is it? Company is paying a tax to whom? Government. It is income to whom? Government. Subtract. Clear? Savings of a private corporate sector. Which sector? Is it your income? Individuals? No. Subtract it. Clear? Next comes disposable personal. Already we spoke about it. Income minus direct tax. What is it? So, personal income tax, that is direct tax. From your personal income, whatever money that is left out, that is used to buy goods and services. Disposable personal income. Clear? Next comes private income. See, only meaning you need to identify. Income accruing to private sector. Which sector? Income accruing to from all the sources, either within the country or even within outside the country. Last but not the least, per capita income. What is this per capita? Total income of the country, that is national income divided by population. That is average income of population. What is it? That means how much each person gets. How much? That will define dash. Dash defines the standard of living in the country. Dash defines the economic well-being. Real. Now we also have a concept called as GDP per capita income. What is it? GDP per capital income. That means we consider real GDP. Which GDP? Real GDP divided by population. That means what is the production that has happened in your country. And if you start distributing that to the people of the country, how much each person gets? How much? That is called real GDP per capita income. Which GDP? So, real GDP per capita income. Real GDP divided by population of the country. Is that clear? Real GDP represents dash. Economic well-being. Per capita income represents dash. So, these are the 8 concepts of national income. What is it? 8 concepts of national. Now, let us go to understand the measurements of national income. How many measurements are there? 3. Which are those 3 measurements? Value added method, income method, expenditure method. See, this concept of value added income and expenditure method was initially introduced by United Nations. That is called a system of national accounts. SNA. What is it called as? System of. So they will take all these values, compiling of data, not just compiling. They will also analyze it and evaluate the performance of the. How are you performing? How were you performing last year? How is your neighboring countries performing? They will get a data value for comparison. Data or value for? Clear? See, now 3 methods are there. Product method, income method, value added method. Simple concepts. From this you can expect a question. In case of value method. In case of which method? So even before understanding the value method, there is one more concept called a circular flow of income. Yesterday we discussed circular flow of money. CMU, creation, mobilization, utilization. Now same way, circular flow of income is 3 methods of national income. First one, value added method. Which method? See, when we produce goods and services, we create value. We create, yesterday we discussed this. What is the meaning of production? Hero, what is the meaning of production?
Utility.
What is utility? Wait, let him answer.
Satisfy the wants of people.
Want satisfying capacity of a commodity. Production is not converting raw material into a finished good. Production is adding utility into the product. See, value added method. What is it? Value. That is production method or value added method. We will create value to the goods and services in the process of production. In the process of, that is while converting input into an output, we create a value. So first we will produce goods and services. That is product method. Which method? And to produce goods and services, what do you need? Factors of production, na? Are they available for free of cost? What you should pay for land? Labor, capital, organization. And who owns all these factors of production? Households. Who owns it? Individuals like you and me are the one who is holding a land. We are the one who will work in the company as a labor. Our own money kept in bank, that is itself is going as an investment. Na? They will take a loan. CMU, creation, mobilization, utilization. That money itself, that savings is converted into an investment. Na? And last but not the least, who is starting the business? Same, household people only. Na? They are the one who comes and start business. So who will be owning the factors of production? Households. Clear? Ra? So who is getting that factor rewards? Households. See, first we will produce goods and services, value added method. For producing such goods and services, we will pay income to the factors. That is factor income method. Which method? That is income method. Once you get income, household, once they get income in their hands, will they sit silent? What they will do? Spend on what? Goods and expenditure method. Once you are spending that money, that means again you are creating demand. Once demand get created, again you need to after producing, they earn. Once they earn income, they will. Once they're spending, again production will happen. See, this is a flow. Production happens, income gets generated. Because of income, spendings will happen. Because they're spending, again production will happen. Because of production, income gets generated. Because of income, spendings will happen. Because of spendings, again production will happen. Circular flow of income. What is it? Circular flow of? Clear. What is that circular flow of income? Number one, production. Number two, distribution of income. Third one, disposition of income. Number one, production of goods and services will lead to a distribution of income. Because of such distribution of income, that will lead to a disposition. That is nothing but value added method, income method, expenditure method. Combination of value added, income method and expenditure method is a circular flow of income. Clear. Next comes the very first method. Let us explain. Value added method. Which method? But this time they have screwed up your happiness by asking in a different name. Industry origin method is also called as dash. This time the question has come from industry origin method. They have not asked it in a simple way. Product method, value added method. They have given a word called as what? People were confused. Sir, industry origin now. What is this industry origin? So ICAI know how to screw your happiness. So you should also remember the different names. You should remember the clearer. Now listen to this very carefully. Now we will divide our entire economy into 3 sectors. Primary sector, secondary sector and primary sector. Production of goods and services by using agriculture and agricultural allied activities. Secondary sector by converting inputs into an output into machine equipments and all. Manufacturing. Service sector. That is tertiary sector. So how many sectors have been classified into? Primary, secondary, tertiary. Now every sector is further divided into subsectors. Subsector 1, subsector 2, subsector 3, 4 like this. Subsectors. Now again every subsector is divided into units. Unit 1, unit 2, unit 3 like this. Now let's say Shashikiran, bench manufacturer. Which sector will it come? Now let's say under secondary sector it is subsector 2. Furniture manufacturing. Now under furniture also different units are there. Wooden furniture, steel furniture, plastic furniture. Let's say mine is unit 1. I am coming under sector 2, that is secondary, under secondary subsector 2, under secondary unit 1. Like this, we will divide every sector into subsector, every subsector into units. For me, only and only value added is important. What is important? Whatever is value added by all these units, we get to know the value added by one individual subsector, value added by all the subsector, we get to know the value added by one individual sector, value added by all the three sectors put together, we will get to know the gross value added of the entire economy. That is nothing but GDP-MP. What is it? And we are already punters. Once we get GDP-MP, we know how to convert into NNP-FC. How do we convert GDP-MP into NNP-FC? Sir, first to minus depreciation, next to add NFIA, next convert MP into FC. Ultimately, NNP-FC is called as national income. Clear? This is value added method. And there is one more twister. Sir, how do we identify this gross value added? What is it? That is also called as what? GDP-MP. There is another way of identifying the gross value added. Gross value added can be identified by using value of output minus value of. Now, value of output formula is most important. Value of output formula is sales plus change in stock. What is it? Sales plus, what is change in stock formula? Closing stock minus value of input. Value of input is also called as intermediate consumption. What is it? Intermediate. So we will get to know gross value added. Now from the gross value added, if at all I minus depreciation, I will get net value added. That is nothing but NDP-MP. What is it? That's it. This is value added method. Nothing. We should identify output. We should identify input. Output minus, we will get to know value added. Value added by all the three sectors. Primary sector, secondary sector. Every sector is further divided into subsector. Every subsector is further divided into units. We only need value added by all the units. Value added by all the units put together, we get to know the value added by. Value added by all the subsectors, we get to know the value added by one individual sector. Value added by all the three sectors put together, we will get to know gross value added. That is nothing but. Clear? Understood? So this is value added method. Few things are included, few things are. Already we spoke about it. Sale of second-hand goods should not be by or any margins. That means profits earned should be clear. Own account production of either fixed goods, current assets, fixed assets. Everything is included. Own account production. Clear? This is value added method. Which method? And income method also I have already explained. End of the day we should identify dash. What are the FC formula? I said there are three important components in FC formula. Which are those? Or self-employed. What is the first alphabet? What should we do? Nothing. What is second alphabet? For the three components, if you just add NFIA, straight away we will get. That's it. National income under income method is also done. See, income method is also having a different name. Income method, or also called as or. So kindly keep this in mind. If at all you don't remember these different names, there is a high chances that you will make a blunders. Clear? Next comes expenditure method. Which method? So what is this expenditure method? One person's spending is another person's income. Do you agree?
Yes, sir.
Now when we speak about this expenditure, now again we are going to calculate GDP. What are we calculating? GDP. See, simple. There are four components. How many components? C plus I plus G plus X minus M. Clear? C stands for household consumption. What is it? Household expenditure. I stands for business investments. G stands for. Somewhere we studied this government expenditure now yesterday. Business cycle. Fiscal policy. Which policy? Every country has its own economic policy. Under economic policy, fiscal policy. Now, under fiscal policy, there are two important tools. Which are those? This is what we are referring. Government expenditure. Clear? Understood? So, in case of expenditure method, which method? What is the formula? C plus I plus D plus X minus M. Clear? Now, what is this X minus M? X stands for M stands for, suppose if export is greater than import, what is it? Export is greater than, that is called as net exports. Suppose if export is lesser than import, this is called as net imports. Remember, net imports will be always in negative. Net exports will be always in, see, this is expenditure method. When we add C, I, G, X minus M, what do we get? And we know how to convert GDP MP into NNP. That's it. This is expenditure method. Clear? Understood? Anyone having doubts in all the three methods? Value added method is also called as product method. Income disposition method is called as income method. Clear? Last but not the least, expenditure method. One person's expenditure is another person's. Under this expenditure method, we will speak about final consumption expenditure. Who does the final consumption expenditure? And government. Both. Government will also do it. Household will also do it. In that, one important aspect is there. If, as a household, if we buy any property or land or any residential building, that is considered to be investments made. What is it? Not as consumption made. What is it called as? Investments made. We excluded from the C and we included that in I. Where do we included that in? I. See here, expenditure on construction. And even purchasing any jewelry, work of art, paintings, Mona Lisa, Da Vinci, all these paintings. That is an investment. What is it? Investment made. Clear? That is not a consumption made. That is a investment made. So this is expenditure method. Which method? Clear? So total 8 concepts and 3 methods of calculating national income. That's it. That is chapter 6, unit 1. After that, there are some chota mota theory. First one, system of regional accounts in India. What is it? System of? And this time the question has come from this area. The questions are asked. System of regional accounts, they have asked a question. Now listen to this very carefully. Like how we calculate national income. Which income? We will also calculate regional income. That means state-wise and district-wise. Which wise? Okay, which state in the country is performing well? Who is contributing more to GDP? Maharashtra, Tamil Nadu, Karnataka. You guys are really good. Top 3 countries in the performance of the country in terms of GDP. Good, good, good. Now like that, which country, sorry, which state, which is performing well, which state is not performing? We will also calculate state-wise income. Which income? That is the concept of system of regional accounts. Which accounts? We are identifying the regional accounts. Even inside the states. Hello, which district is performing? Mysore district, Bangalore district, Hubli district, like this, Madurai district, Chennai district, Tanjavur district, Hosur district. Which district is performing? Which district is not? We will get to know inside the state also which district is contributing, which district is not. In the country, which state is contributing, which state is. So we'll understand the regional accounts. That we call it as net state domestic product. What do we call it as?
Net state domestic product.
That means GDP divided by population, that is per capita state income. GDP divided by population is per capita. Like how we calculate per capita income for whole country, we can also calculate per capita income of the individual state. Individual. How do we calculate that? Net state domestic product divided by population. Divided by? Now listen to this very carefully. This is where the exam questions have come. State level estimates are prepared. What is this word? Are prepared. What is this word? Prepared. Prepared by state income units with the help of State Directorate and Economics and Statistics. So who is responsible for preparing state income? State Directorate of Economics and Statistics. But who will assist them? Who will? Don't get confused. Preparation is done by State Directorate and Economics and Statistics. But who is going to assist them? Central Statistical Organization. This time the question has come from the State, Domestic and Economic and Affairs. All this. State Directorate of Economics and Statistics is the one who prepares the regional accounts. One who prepares. Who will assist them to prepare? Central Statistical. Where was it? Let me show that question. Wait. That was superb question. Most of them went wrong. See, 23rd question. Product method or value added method is calculation of national income. Is another name is? Industrial origin method. Wait, that question was superb. Regional accounts question. I think September attempt, if I'm not wrong. Disposable personal income. See the 53rd question. State level estimates are typically prepared by state income units of the respective state. Which organization is primarily responsible for this task? Director of Economics and. But who will assist them? Who will prepare them? See, this is where you will go wrong. That is why I was stressing upon that word. Assisting, preparing, assisting and clear. Understood. That was the concept of regional account. See, there are certain transactions, we call it a supra-regional transaction. Which regional transaction? That means which cuts the state borders. Like for example, central government services, railway services. Let's say from Bangalore, I'm going to Chennai. From Karnataka, I'm going to Tamil Nadu. Sir, for which state the income has to go now? The railway income. Now we have to divide it and we need to apportionate it. That is called as we do it based on relevant indicator. Which indicator? Clear. So system of regional accounts in India. Next comes GDP and welfare. This is completely opposite concept. We will never consider welfare in calculating GDP. What do? We never calculate in GDP. Let's say for example, leisure time. Which time? We say that if a person takes a leave or if a person has a leisure time, because of the GDP of the nation is decreasing. You know what is the working hours in Japan and China? 12 hours a day. So people work for how many hours? So that is the reason GDP of the country is increasing day by day. In India, we work 8 hours a day. In that Sadhu Kapila dialogue is there now. Government officer. Why the one who comes at 10 o'clock, he will never come. He comes at 11:30, no one will ask. Lunch is at 1 o'clock, he will go at 12:30 only, no one will ask. He has to come back at 1:30, he will come at 3 o'clock, no one will ask. In between 2 times tea break, he is supposed to leave at 5 o'clock, he will leave at 4 o'clock, no one is going to ask. Such a beautiful economic system we have. See, no one is going to question. Economic and welfare. These are totally two different aspects. We never include welfare in GDP calculation. In GDP, only one thing is considered. Volume of goods and services produced. Volume of. Clear? And there are a lot of other things. We never include in calculating national income like leisure time. I said, welfare. That means, let's say, for example, crime rate of your country. If day by day, if crime rate is increasing, is it good to economy? More and more accidents are happening in your national highway. Is it good to economy? No doubt, when accident happens, hospital services will be there, legal services will come, car repair services will come. No doubt, GDP contribution is met, but it is good to economy. We are not including few aspects at all. That means we are only considering in terms of production of goods and services. What is it? And see, illegal transactions are there. Day by day, if illegal transactions are increasing, is it good to economy? And see, non-marketable products are there. And all this trouble is there. So GDP and welfare is not a adequate measure. There is an inadequate measure. And disputability of loss of leisure time, economic badge, voluntary works done. That is non-economic activity without any expectation of. That is also good for life, na? See, man, I have to hang out with my friends. I need to enjoy with my family. That is non-economic activity. Even that is important in life. Did you consider non-economic activity for a well-being? No. You are never considering well-being at all. You are only considering value of goods and services produced. How much last year we produced? How much this year we are producing? Only in terms of productivity you are calculating. You are leaving all these qualities of life. You are leaving all the same to same limitation. Same thing gets repeated once again. Go through it like a newspaper once. Clear? Disability of loss of leisure time, economic bad, voluntary works, production hidden from the government, non-marketable product and non-economic contributions. Clear? Conceptual difficulty. See, whatever definition we call for national income, that is an inadequate definition. Which definition? What is national income? NNP-FC, net domestic product at factor cost plus NFIA. There is no proper definition, and see, there is a problem of transfer payment. There is no proper classification between final goods and intermediate goods. Which is final good, which is intermediate good. We don't have a proper classification at all. And next, there is a problem of durable car services. Car is produced 5 years ago. Service is happening this year. Accident took place this year. Spare part produced last year. Problem. Only you say current year production should be included. But spare parts produced. Car produced 4 years ago. But service is happening this year. There is a problem of that, and distribution of income is not proper, and calculating base year price for new goods. COVID vaccination, I said, na, for every good we can't get a constant price. And government services. and all your policeman services, even though non-economic we are including, same non-economic done by householders, not included. And other challenges, the data are not proper, people will not give adequate data, how many of them are produced, self and consumed, how do you get to know? What we say, GDP, self-consumed good should be included. Who will say, Shashikiran, you produced a table and you are using for self, should I declare this to government? No. And also, non-monetized sector, self-consumption, no, illiteracy and ignorance, these all are the biggest challenges in national income. Finally, usefulness. Sir, what purpose are we using? Simple, by international comparison. How we are performing, how our neighboring country, Pakistan, is performing. They are bloody unfit to comparison also. But we always compare with. If you have a gut, compare with China. No. Whom do we compare with? Whom do we compare next with? Sri Lanka. We know we are better than them. Next, whom do we compare with? Bangladesh. Whoever is not performing well, with them they will compare. Whoever is performing well, now compare. Hey, no, anti-Indian you are. You are speaking against the country. You see? We will get to know the level of national income, how income is getting distributed, which sector is contributing more, which sector is not contributing more. Is it primary sector, secondary sector, tertiary sector, how economic welfare is created, different sectors of the economy's contribution. We will get to know the statistics that helps in comparison. Last year, how much we produced, before that, how much we produced, this year, how much are we producing, what is the projection for the next year, and international comparison. And also, it will give you information on inflation and growth and economic forecast, where we are heading towards, what we are focusing on more. These all are the usefulness. What is it? By this entire chapter 6, unit 1 comes to an. So, if you remember, I had already solved some 15 questions in the class. Full inter-level questions, full numerical problem solvings and all we have done. Clear? Huh? Okay, let us also go to Keynesian theory. Let's finish Keynesian theory and then we will go to MCQs. Clear? What is the time? 9:45. 10:15 we will take break. Till what time we will be having breakfast? Till? Alada, in your you are going for PG or having outside? PG over, outside na. Don't worry, today biryani you can have straight away. Brunch. I will leave that, don't worry. 10:15 I will leave. Clear? Okay, chalo. Keynesian theory. Which theory? Of determining dash income? National. So there are only 4 concepts. 2-sector model, investment multiplier, 3-sector model and 4-sector model. In 2-sector model, it is C plus I. In 3-sector model, C plus I plus G. In 4-sector model, G plus X minus. Clear? So these are the elements what we discussed. So listen to the statement carefully. Pravan, enough da. Stop speaking. Now, the whole concept is lying on one simple theory and one simple principle. See, before Keynes, before our neoclassical economist said, see boss, economy will always be in full employment equilibrium. Which equilibrium? That means, let me explain it right. We have already discussed about industry equilibrium. That is, demand and supply will intersect. Whenever demand and supply intersects, the point of intersection is called as dash. Point of intersection is called as? Now, at this point of equilibrium, what is it at this point of? Whatever the goods and services we are producing by using full employment. Dash employment? There is going to be a full employment. In an economy, there is no unemployment problem at all. That is what neoclassical economists said. But Keynes said, boss, it may be at full employment or either it can be lesser than full employment or greater than. There can be even chances that when we are achieving equilibrium, there can be lesser than full employment. Still unemployment can prevail. Or it can be even greater than full employment. There is no rule that every time economy will be in a full employment equilibrium. Which employment equilibrium? Clear? So that is what Keynes argued, and that is what precisely happened in 1929, Great Depression of America. All these economists said, no, government should not involve. Economy will adjust it automatically on its own. Any deliberate action by the government is unnecessary. That is what they used to say. Every time economy will be in full employment, there will be price stability. Inflation is controlled. Deflation is also controlled. But everything went opposite in 1929. That is when John Maynard Keynes introduced a concept called as counter-cyclical fiscal policy. Which policy? And in 1936, which year? He has written a book through which he explained government's role is most important, boss. You can't ignore the role of government. And the book name is General Theory of Employment, Interest and When was it published? 1936. And he gave importance for the role of government. Importance for the... And in this whole unit, we are interested to identify the level of... For that, we need to understand the equilibrium income and equilibrium output. What is it? Equilibrium income and equilibrium? That means we are only focusing on this x-axis. See, output and income, both are represented in x-axis. They said at the point of equilibrium, there will be full employment level of output. Full employment level of? At the level of national income, what we are earning. But Keynes said it may happen, or possibilities are there, even lesser than full employment, we might achieve equilibrium. Even greater than full employment also we can achieve equilibrium. But every time there won't be full employment at the point of equilibrium. Clear? This is the main base of your entire Keynesian theory. Now let us get started. Two-sector model. Which model? For most easy part. Two-sector model, we only have household and firm. Whom do we have? There is no government at all. You tell me, is there any country on this world without government? This is a hypothetical thesis or hypothetical theory. That means this concept is just a theoretical understanding. There is no real life example. There is no real life. Clear? Now, there are only two sectors. How many sectors are there? One is household, another one is who will be owning all the factors of production? So they will give that factors of production to whom? Firm. In return, firm will pay them what? Factor income in the form of wages, rent, interest, profits. Once household gets money, what will they do? They will spend on what? Buying goods and see consumption expenditure. C is happening. In return, firm will give that goods and services to. This is a proper two-sector model. There is no leakage. There is no leakage. That means, boss, there is no money which is saved by the household or retained earnings made by the firm. Whatever firm makes a profit, they will give it to the shareholders in the form of dividends. Firm is not holding back any extra money in the name of reserves, in the name of profits, nothing. Household is also not creating any kind of savings. Whatever money they get, they will completely spend it on buying goods and services produced by the household. Plan is matching with firm's plan. Household plan is matching with. Is that clear? Understood? Now, let's go to the assumptions. Have a look for the assumptions. See, household are the one who will be owning all the factors of, and they sell such factor services to them, and for which they get in return a factor payments. Now, firm hires a factor services from the household and provides, and they sell it again to the. And here, since government is not existing, there is no concept of Nirmala Aunty, there is no taxes. So whatever money we earn, that itself is called as disposable income. Income itself is called as dash disposable. See here, Y itself is called as YED. What is it? Y itself is called as dash YED. YED stands for disposable. Government is not present. And see, since government is also not there, there is no government expenditure or there is no transfer or there is no tax. And economy is still a closed economy. No imports and no exports. And this is the important assumption. Prices of all the goods and services, supply of labor and capital, production, technology, everything remains. And investments are autonomous. I will explain. What is this? Autonomous investments. Clear? So this is a two-sector model flow chart. Now let us go and understand the concept of equilibrium. What is it? Equilibrium. See, what is equilibrium? Total demand should be equal to total. In short, AD should be equals to AS. What is it? AD should be equal to aggregate demand should be equal to aggregate. So remember, aggregate supply always and always represent income side. Aggregate demand always represent expenditure side. This whole Keynesian theory is giving importance for aggregate demand side. Which side? We are focusing on AD. Now AD components are most important. Now in a two-sector model, only and only C and I is existing. Who is existing? Household consumption and business investments, and that will be matching with C plus S. What is it matching with? Now CC gets. Now I will be equal to. Already we did this. That means whatever household creates a savings. By chance, if you create a savings, where do you keep that savings? Bank. What will bank do with that money? Give loan to whom? Business people. That is what? Autonomous investment. What is it? Autonomous. Whatever money which goes to the bank, again it comes to the firm in the form of loans and advances. That is autonomous investments. Clear? Now what is the equilibrium equation? AD should be equal to AS. AD component is C and I. AS component is C and S. CC gets cancelled. I will be equal to whatever savings that is created by household, that becomes a investment for a business. That is why autonomous investment. Which investment? Any doubt in this? Okay, now look at the board. Now, whenever we earn income, we do only two things. Sir, either we consume goods and services or either we create a savings. See, this is the formula for income. Do you agree? Okay, now let us in detail understand about this consumption and in detail about the savings. C stands for what? Consumption. Hey, what is happening there? And S stands for what? Okay, now suppose if I need to identify consumption, now we have a formula. Same formula can be used. So how do we use the same formula? So simple. From income, if I subtract savings, we get to know the formula for consumption. Do you agree? But now I am not explaining you the formula. I am explaining you the equation of consumption. What am I explaining? Equation of consumption is A plus B of Y. What is it? A plus? See, A stands for autonomous consumption. A stands for what? Whether you earn income, whether you don't earn income, you should spend this money. Let's say rent. Suppose I am staying in a rented home. Every single month, whether I get salary or whether I don't get a salary, doesn't matter. I should pay the rent. Do you agree? That is autonomous. A stands for. B is induced. B is my lifestyle expenses. If my income increases, my shopping expenses will increase. Going out with my girlfriend will increase. Roaming around, gifting and all, buying new shirts, shopping and all will increase. That is concept of B. B stands for induced. B stands for what? Clear up. B is dependent on income, but A is not dependent on. Whenever income increases, dash increases. B. Whenever income decreases, dash decreases. And remember, this B is also called as MPC. B is also called as what? Or this is also called as slope of consumption curve. B is also called as what? Slope of consumption curve. So what is this MPC? Marginal propensity to consume. Change in consumption divided by change in income. Same way, we will also have an equation for savings. Now what is savings income? Equation opposite of consumption. Minus A plus 1 minus B of Y. What is it? Minus A plus 1 minus B of. This 1 minus B is called as MPS. What is it called as? And what is the formula for MPS? Change in savings divided by change in income. Most important of all, MPC plus MPS put together should be equal to 1. Is that clear? Both put together should be equal to dash. And we also have a concept called as APC and APS. What is it? APC and average propensity to consume, average propensity to save. Simple. Total consumption. What is it? Divided by total income earned. Total income divided by total consumption. Same way. Total savings. What is it? Total divided by total income. Even APC plus AP. Yes, both put together should be equal to. Clear? Both put together should be equal to. So remember, income formula. Y is equals to C plus. Just a few minutes back, we also learnt I can be also written as. Yes, or S can be also written as. So can I say even income is nothing but consumption plus investment. Consumption plus, because S can be also written as. S can be also written as. With that respect, we know that national income equation Y should be equal to C plus I. What is it? C plus? In the place of C. What is it in the place of? Now we will write it as A plus B of Y. A plus B of plus I. This is national income equation. What is it? National income? In which sector? In which sector model? Two sector model. And the most beautiful thing is there is no taxes. So income is equals to disposable income. Income itself is equal to dash. Clear? See, this is two sector model concept, and especially observe this. Since there is a portion of A, whether we earn income or whether we don't earn income, still there is an expenses. So consumption line starts from a particular point in Y axis. and the slope, this line, that is B, slope of a consumption curve. What is it? Slope of a same to same explanation. We just now understood with MPC, we understood with AP, and this table is important. Solve it. What is the formula for APC? Total consumption by total income. MPC, change in consumption by change in income. Solve this table. Now see there. Income is 0. I'm not even earning anything. 0 income. But consumption is 50. That means from my past savings, I need to remove 50 rupees. Then I need to spend. That means this 50 is A. What is this 50? It is A, autonomous part. Clear? Next, income is 100, but consumption is 125. Savings will become. Now income is 200, consumption also 200. Next, 25 savings. Next, next. Now what is the formula of APC? Consumption by income. 50 by 0. Numerical value divided by 0 is math error. Infinite. Next, 125 by 100. 1.25. 200 by 200. 1. 275 by 300. 0 point. Next, 350 by 400. 0 point. Next, 425 by 500. 0.85. Clear? Next, MPC, change in consumption divided by change in. We are not even earning any income, no consumption is there, but still it is there. 50 is there now. First one we can't identify. It will be undefined. Next, difference in consumption. See, 50 and 125. Difference is 75. And difference in income, 100. So, 175 divided by 100. Calculated for other values. Same, 0.75, 0.75, 0. Now look at the board. Do not write anything. Look at the board. Observe. Whenever income is increasing, whenever income is increasing, average propensity to consume is decreasing. That is what the same question I asked yesterday. Whenever income increases, proportion of consumption, what is it? Proportion of will decrease. Clear? Whenever income increases, APC will. Whenever income increases, MPC will remain constant. It doesn't matter whether income increases or income decreases. MPC remains. But APC, whenever income increases, APC decreases. There is a negative relationship between income and APC. Dash relationship between income and APC. Savings function we explained already. Minus A plus 1 minus B of Y. MPS also explained. APS also explained. See, numerical problem. Solve it. Such a easy question. They are asking you to identify average propensity to save. What are they asking? What is the formula? Savings by income. So they have given consumption is 200, income is 1000. See, if out of 1000, if you consume 200, savings is. So 800 divided by 1000, 8 by 10. How much is that? 0 point. Next, savings is 450, income is 1200. Now simple, 450 by 1200. 0.375. That's it. See, it will hardly take 10 seconds when you know the formula. So finally, table we discussed now. These 3 points, mark it as important. See, whenever income is 0, whenever income is 0, APC will be infinite. APC will be dash. Next, whenever income starts increasing, APC starts decreasing. But whenever income rises, MPC will remain constant. MPC will remain dash. Clear? So remember, we are not focusing much on AS side, aggregate supply side. We are focusing more on AD side. So entire Keynesian theory focuses on which side? AD side. C plus, I plus, G plus, X minus M. AD stands for expenditure side. Which side? Clear? So we are not focusing much on AS side. Simply we will write it as C plus S. C plus S is also called as what? Income. C plus is also called as what? That means aggregate supply is nothing but a income, national income side. What is the income earned and what is the expenditure made? Income and expenditure has to match. That is equilibrium. What is it? Equilibrium. Clear? Now these are the formulas already what we have discussed. Now listen to this carefully. There is one more beautiful formula which will help you to solve the problems if they are asking in indirect way. Now if you remember, I said you an income formula. What is the formula for income? Consumption plus, suppose if I need to identify consumption, income minus, if I need to identify savings, income minus consumption. Accepted? Now we can also use one more formula in this case. Remember, if there is a change in income, what is a change in? This will be change in consumption plus change in savings. Do you agree? Same way, whenever there is a change in consumption, can I say change in income minus change in savings? Or, this is most important, change in income. What is it? Change in into MPS. Change in income into MP. Yes. Clear? Same to same. If there is a change in savings, we can identify by change in income minus change in consumption. Or, hey, wait. Sorry. You made a mistake, man. You guys didn't even notice it. This is MPC, da. Consumption we are speaking, na. Change in income into MPC. But here it will be change in income into MP. Yes. So this formula you need to remember. So remember, how do you identify change in consumption? Change in income into MPC. What is it? Change in income into? What is the formula for change in savings? Change in income into MPS. Clear? If you want, write this down. Done? Completed? Okay. So this is the graph for MPC, MPS, national income. Already I spoke about this equilibrium concept. And this is the graph. Okay. See, this note is important. Come back. Have a look here. This condition of two-sector model applies only to the economy where there is no government or there is no foreign trade. See, either we spend the income or we will. That is what we do now. Income is either a consumption or we create a savings. Either we consume or we create dash savings. And putting both together, that is AD equals to AS. CC gets cancelled. I will be equal to, see, Keynesian equilibrium. Which equilibrium? With a planned aggregate expenditure. Aggregate expenditure means AD, na? And planned aggregate output need not take place. What is this word?
Need not take place.
A dash employment, full employment. See, it is possible there is a still unemployment which is much more. See, in the Keynesian model, neither wages, neither nor will decline even though when there is a problem of higher unemployment and still excess capacity. That means there is a problem of unemployment. Now I can say, if you want to work and continue with me, you work for a lesser salary. If not, I will throw you out. Someone will come and work for lesser salary. No. We don't reduce wages. We don't reduce. Even though there is high unemployment, we will not reduce the wages. Clear? Next, output will always and always remain dash of full employment rate. What is it? Lesser than full employment. That means equilibrium is achieved lesser than full employment. And that is what happened during the Great Depression of America. During Great Depression of America, economy was in equilibrium lesser than full employment. What is that? Clear? And numericals. Take out calculator. We can actually do it fast. Calculate MPC and MPS. They're asking to calculate what? MP and MP. Yes. See, simple concept. What is the formula for MPC? Change in consumption divided by change in income. Accepted? Now MPS will be change in savings divided by. Clear? Now see, they have given national income. They have only given national income. What is that? 2000. Autonomous consumption. A is given. What is given? A is given. Investment is given. 100. Now they're asking us for MPC. MPC is nothing but B, na? We need to identify this B. And we know national income equation. Y is equals to C plus I. Now in the place of C, A plus B of Y plus I. This is national income equation. Now let us put it 2500. They have only given national income. Already in the place of A, how much should I write? 300 plus B of 2500. Already given na. Next, I is how much? 100. So now it will be 300 plus 100, 400. B of 2500. Clear? Now calculate this.
2100 divided by 2500.
See, 300 plus 100 is 400. 400 will come to LHS side. 2500 minus 400, 2100 is equals to 2500 B. So this will be 2100 divided by 2500 is equals to B. So B is equals to 0.84, and we know that MPC plus MPS put together should be equal to 1. So 1 minus B will be 1 minus 0.8. That is 1 minus B will be 0.16. So this is MPC and this is MP. Yes, that's it. Hardly takes us 20 seconds. Clear? Such an easy question. Next, problem number 3. Do it. You guys only do it and let me know the answer. Calculate national income. They're asking to calculate what? Of two sector model, that is C and I. Autonomous is 100. Marginal propensity to save. This is MPS. That means 1 minus B. What is it? 1 minus? If it is 0.8, then what is MPC? MPC will be 0. So automatically Y is equals to, what is the consumption? C value, A. What is autonomous? 100 plus 0.8 of Y plus investment, that is 200. Now calculated 0.8 will come to LHS side. This will become 0.2Y of 300. So Y is equals to 300 divided by 0.2. Answer is 1500. That's it. 0.8 now. 0.2 is MPS. Opposite of MPS is MPC. B is also called as MPC, na? We need to write B. A plus B, na? B means MPC. Now MPC is 0.8. Clear? Understood? Okay, so a couple of other problems also had given. Hope you guys would have solved it. Clear? Last concept. After this, we'll take a break. Inflationary gap and deflationary gap. What is it? But this concept will get repeated once again, even in chapter 7 and chapter 8. So listen to this very carefully. Now, inflationary gap. Now, let me give it in the form of story. Sir, let's say Shashikiran is a laptop manufacturer. Who is Shashikiran? Now, let's assume that in India, there are total 1000 employees. Whoever is ready to work and capable to work. Just an example. Let's say 1000 million. So, let's say 1000. Just take it as 1000. By appointing all the 1000 people, by appointing, I can produce 50,000 laptops. How many laptops can I produce? 50,000. See, this is my full employment output. What is it? Full employment? That is Q star. But in the economy, people are demanding for 60,000 laptops. How much? 60,000. We can only produce how much? 50,000. Can I produce 60,000? No, but demand is 60,000. See, we should have been in equilibrium at point F. But demand is at point G. So now there is a gap which is occurring between F and G. That is called as due to excess demand. Due to dash excess demand. Sir, we can only produce 50,000 laptops. Already I have appointed each and every person who is capable to work, ready to work. Now I can't increase my productivity. So only what is the left out option? Increase the price of a product. Whenever price increases, automatically national income will also nominal GDP will change because of price and output. Price and. Let me continue the same example. Shashikiran is teaching 200 students. Shashikiran is teaching? Let's say in 2024. I was teaching 500 students and I was charging a fees of 2,000 rupees. Charging a fees of? So what is my total income? 1 lakh. Do you agree? Oh, okay, 10 lakh. 10 lakh rupees. Do you agree? So I am teaching 500 students and I am charging how much? 2,000 rupees. Now my classroom is still remaining same. I can't increase my classroom capacity, but more and more students wants to come and join. More than 500 students wants to come in. But can I make them to join? No. What is the maximum that I can produce? 500 students. But I will increase the price now. Rather than 2,000, now I will charge 3,000. That is what is happening. I can only produce 50,000 laptops, but demand is for. Can I produce beyond 50,000? No. Now only left out option is. That means dash is increasing. That is what inflationary gap. Which gap? Because of excess demand. Because of with the full employment. See, this Q star is a full employment. With the full employment, we can only produce 50,000. But the demand is for. So I can't produce 60,000. So what will I do? I will increase the price. Automatically, my national income is going to increase. See, real income remains the same. Nominal income will increase. Real output will remain same. Nominal output will increase due to increase in price. Due to increase in clear. See there, the real output will remain due to rise in price level. Due to rise in dash level, that causes an increase in dash output until we reach a new equilibrium, that is at point E. Now we are reaching a point E, new equilibrium. At this new equilibrium, real input is still same, 50,000 only, but I'm selling for more price. I'm selling for, because of that, national income has increased. National income has, that is inflationary gap. When will this inflationary gap happens? Whenever there is a business cycle dash stage, expansion stage. We said yesterday, during expansion, economy faces inflation. Economy faces
Inflation.
it's interconnection. Clear? Next, deflationary gap. Which gap?
Deflationary gap.
Complete opposite. Boss, we can produce 50,000 laptops. How much? But people are only and only demanding for 40,000. How much are they demanding for? But how much we can produce?
50,000.
I produced 50,000. We should have been in equilibrium at point F. But demand is only and only till point G. There is a gap which is occurring because of shortage of demand. Because of? That is called as deflationary gap. Supply is more, demand is. Now already I have produced 10,000 laptops extra. Next year will also be demand for only 40,000. Already 10,000 extra I have. How much should I produce now?
30,000.
Should I need all 1,000 employees now? Get out. Unemployment will happen. That will happen. See, automatically my production has to come down to 40,000. I am not producing 50,000. So kicked out of employment. National income will also decrease. Why is this happening? Because of insufficient spendings in the economy. Why is this happening? That means people are saving money rather than spending money. People could have bought 50,000 laptops, but they're only buying 40,000. That means another 10,000 laptops demand has reduced. Why? Because people are saving money. Because of insufficient spending. Because of
Insufficient spending.
there is a deflationary. So how do we tackle this deflationary gap? Now government will reduce interest rate. Government will reduce the tax rate. Automatically you will start withdrawing money from bank and you will start spending. And when will this occur? When there is a business cycle contraction. Business cycle deflation, business cycle contraction, inflation, business cycle expansion. See, same topics what we discussed yesterday. Today it has become easy because of excess supply. Because of now prices has to decrease because 10,000 laptops is left out. I produced 50,000 laptops. Demand is only for now Big Billion Day, Amazon Festival Sale, Munyappa Sale, Rangappa Sale, Maranna Sale, everything I will do. Offers and promotions. And moreover, I have thrown out people from my employment. This is what precisely happened in Great Depression of America. Read it here. In the Keynesian model, neither wages nor interest rates will decline. And Keynes argued that this is what precisely happened during the Great Depression. So what happened? The output will remain lesser than full employment rate. Output will remain with the help of full employment. I can produce 50,000 laptops. But now demand is only for lesser than full employment. I should produce now. When I'm producing lesser than full employment, do I need full employment in organization? Get out. That is why unemployment problem created. Unemployment problem created. How do you tackle this? By reducing tax rate, by reducing interest rate, by increasing government expenditure, we will tackle this. Clear? This is the concept of inflationary gap and deflationary. Clear? Understood? Take a break, 30 minutes, come back. Now the time is 10:15, 10:45. We are going to start the class. Investment multiplier, 3-sector model. Hello. Another 2 minutes I will give. She's on. What time we started class? That you didn't say. Sir, you started 7 minutes late. That you didn't say. No, sir, 2 minutes already late you have given. Baba. So before the break, we had finished with the concepts of 2-sector. Now let us get started with investment multiplier. See, concept is very simple. How many times the income is going to increase? How many times the income is going to increase? Hello, what happened? Can you call someone from the front desk? It came back. Done. Okay. Audio check. Online student, just cross check with audio, video. Is everything proper? Okay. So how many times the income is going to increase? What is it? How many times the income is going to increase? Due to increase in investment. Due to increase in dash? Investment. That is called investment multiplier. Simple. Now I am planning to open up a new business. Let's say for example a chat shop or a stationery shop next to a college. Which one do you suggest? Should I open a chat shop or should I open a stationery shop? Sir, snacks are most important. Whether we buy pen, pencil or not, pakka evening snacks should be there. So definitely profit percentage is more in a snack shop comparing to a stationery shop. See, that means where people are ready to spend more money, I am ready to invest my money over there and increase my income. Increase my income. Let's say for example, assume I invested some 1 lakh rupee. How much? And in return I earned 7 lakh. In return I earned how much? How many times my investment has increased? 7 times. How many times? 7. See, that is multiplier. How many times your income is increasing? How many times your income is increasing? That has a direct connection with MPC. What is a direct connection with? MPC. So how, sir? How it has a direct connection with MPC? Okay, first understand the formula of multiplier. Now the multiplier formula says that there is a change in income. What is a change in? Income. Because of change in investment. Because of change in investment. Say this is the formula, or else simplest formula, 1 divided by MPS. What is it? 1 divided by? MPS can also be written as 1 divided by 1 minus B. Do you agree? MPS is nothing but 1 minus B. Now, whenever we invest money, with the intention of earning a profit. What is it? With the intention of? Earning a profit. Hey, what is happening, man? All of a sudden the screen is going blank. Is the screen coming over there? Is it proper? Yeah. But for me, monitor display is going blank. I just can call someone there from the front office. HDMI no signal. Sometimes it was full blank. But the recording is going on. Yeah. See this how it goes and it comes. It goes and it comes. It's happening like that.
Loose connection. If he gets the, there will be.
Sure. Okay. Okay. Listen. So the formula for multiplier, change in income divided by change in investment, or 1 divided by MPS. That means we want people to spend more money. We want people to. Okay, let's take up an example. Randomly, I will give the values of MPC and MP. Yes, and let us also identify the multiplier. What do we identify? Multiplier value. Clear? Now, let's say for example, people when they earn income, let's assume that they are only spending 10% of income and saving 90%. Let's say next they are spending 30% and they are saving 70%. Spending 50% and saving 50%. Next they are spending 70% and saving 30%. Next, let's say they are spending, let's say 80% and saving 20%. Spending 90%, saving 10%. So completely we are spending. We are not at all saving. So these are the two various options which we can be exploring at the moment. Now, according to the formula, 1 divided by MPS. What is it? 1 divided by? MPS. So if at all I go with this 1 divided by MPS formula, now take out calculator. 1 divided by 0.9. What is the value of multiplier? 1.11. That means it is increasing by how many times? 1.11 times. Next, 1 divided by 0.7. 1.42 times. Next, 1 divided by 0.5. 2 times. That means my investment will increase only by 2 times. Next, 1 divided by 0.3. 3.33 times. Next, 1 divided by 0.2. 5 times. Now observe, just a 10% increase in the savings or increase in the spendings. Automatically from 3.3 it has become 5 times. See, 10% savings reduced, 10% spending increased. From 3.3 it became 5 times. Next, 1 divided by 0.1, 10 times. See, doubled just with another 10% decrease in savings. That means when people spend more money, what is it when people? Multiplier is also increasing. Do you agree? Now see, both are in a same direction. Spending more, multiplier is also more. So there is a direct relationship between MPC and multiplier. What is that direct relationship between? Suppose if MPC is increasing, multiplier will also increase. Suppose if MPC decreases, multiplier will decrease. So there is a dash relationship, positive relationship. Is it clear? And with respect to MPS, what is it with respect to? If it increases, multiplier will decrease. If MPS decreases, then multiplier will increase. So there is a dash relationship. That is the reason I said there is a direct connection with MPC. We want people to spend more money. We want people to here. Whenever we are spending more money, automatically we will have more and more multiplier effect. Which effect? Or another way of understanding, what is the formula of multiplier? Change in income because of changes in. What is the formula for MPC? MPC formula will be change in consumption because of change in income. Now change in income smashed off. We invest more money where people are ready to consume more. When people consumes more, multiplier effect will also be more. This is the concept of multiplier. What is the concept of? Here, see, multiplier refers to a phenomenon where there is a change in injection. That means pumping money into the economy, money into the system. Change in injection, that is increase in the expenditures, will lead to proportionately dash changes. Larger changes in the national income. In short, how many times the aggregate income is going to increase as a result of increase in investment. So this is the formula for multiplier. Change in income divided by change in, or else one more formula, 1 divided by MPS, or else we can also call it as 1 divided by 1 minus B. 1 minus? Clear? Now by using the same formula, the first formula, we can also identify change in income. What is it? Change in? What is change in income now? Change in income is multiplier into change in investment. Multiplier into, or else simple formula, change in income is change in consumption plus change in savings. So we are not considering this simple formula. We are going with the multiplier formula. Clear? So total 3 formulas. Formula number 1, simple formula of multiplier, change in income divided by change in investment, or reciprocal of MPS. What is it? Reciprocal of MPS. Clear? So this is the multiplier. See, whenever investment goes up, let's say by 10%, let's assume that increase in income is happening by 50%. That means 5 times. How many times? 5 times. Clear? Same to same. Example. See, there is an investment increase by 200 million. Income increase by 6,000. Sorry, 2,000 million, 6,000 million. So it will be 6,000 divided by how many times my income has increased? 3 times there is an increase in investment. So income has increased by 3 times. For every 1 rupee that is invested, it is giving me how much? 3 rupees. Clear? Next comes marginal propensity to consume. What is it? Marginal propensity to consume. So it is a change in consumption by change in income, which has a direct connection between MPC and multiplier. See, reciprocal of MPS or 1 minus MPC. That means 1 minus B. What is it? 1 minus? So there is a direct relationship between MPC and multiplier. When MPC is higher, multiplier value will be MPC lower, multiplier value will be. What is the maximum value of a multiplier? Infinite. If the complete money is spent, what is it? Complete money is spent. That means we are not at all saving. Everything is completely spent. That means MPS becomes 0. Any numerical divided by 0 is a math error. That is infinite. So what is the maximum value of a multiplier?
Infinite.
Infinite. And the value of a multiplier is nothing but reciprocal of MPS. What is it? Reciprocal of?
MPS.
Next comes the concept of leakages. What is the concept of? Leakage. So what is this leakage? Now the concept of leakage. 1 second, again the same issue is occurring, man. Is this a power button?
Yes.
Just kind of 1 second. Okay, so the next concept is leakages. What is the next concept? Now, simple dog. Whenever we are earning income, we want people to spend more money. If people spend more money, automatically multiplier value will increase. Rather than spending money, if people start saving money, that will act as a leakage. That means this money will not circulate now. If that money is not circulating, automatically the effect of multiplier will decrease. So we don't want leakages to be more. We want leakages to be. So what are all the leakages? Payment of tax is also leakage. When you pay tax to Nirmala aunty, that proportion of money you can't buy any goods and services. That is acting as a leakage. The second one is keeping idle cash. If at all you are simply keeping money at home, will it put extra 100 rupee note? Will put 10 rupees money? Will it? No. If you keep idle cash, that money doesn't get circulated. Multiplier effect will not increase. And also, suppose if you are buying any goods from the existing stock, closing stock of last year is only sold in the present year, then we are not producing any goods and services now. If I don't produce goods and services, employment opportunity will not get created. And if at all you are buying goods from, leave about existing goods. If you buy from import, money is leaving your country. Money is leaving your country. And if you are buying existing shares and existing bonds, we are not speaking about IPO now. IPO means fresh issue. Now fresh issue is not happening. There is a existing shares, existing one person is selling, another person is buying, and undistributed profits of corporate. I invested in a company, profits have been made by a company, but dividends have not been declared. Still money has not come to my hand. Debt repayments are, I have taken a loan. I am repaying that loan. That means you are not spending it on goods and services. You are repaying. These all acts as a leakage. Most important, when economy is already at, if you pump in more money into the economy now, it will only act as inflation. Let's say you already have enough money in the system. If you put more money, people get more money in the hand. Demand will inflationary gap. We can only produce 50,000 laptops, but demand has become. Now prices will. Output cannot be increased. Only prices will. Because of dash. Because of inflation. So these are the reasons for leakages. What is the reasons for? Leakage. See, leakages. Income that is not spent on current produce of consumption of goods and may be regarded as leakage from the income system. If there is an increase in income, if it goes out, what is the effect? Of the cycle of consumption expenditure, then we consider it as what? Leakages. The income which is not spent on present produced goods and services is called as leakages. If more powerful the leakages are, smaller will be the value of a. So we want more leakages or more expenditure. More expenditure. That is MPC. If MPC increases more, multiplier value will be more. If people save more money, if people pay more taxes, if people keep more idle cash, then leakages will increase. Multiplier value will decrease. So we want MPC to increase. Which to increase?
MPC.
Whenever MPC is increasing, automatically we will be earning more and more income. What will we do? We will be earning more and more income. Clear? See, problem number 9. A simple question is given here. See, there is a investment expenditure is increased by how much? 400 crore. And marginal propensity to consume. They have only given MPC. MPC is how much? 0.8. They are asking us to calculate total increase in income and total increase in. So first we will identify multiplier. Multiplier, what is the value? 1 divided by MPS. So MPS will be 0.2 now. If 0.8 is MPC, 0.2 is MPS. How many times? 5 times. And how much investment is increasing? 400 crore. So 5 into 400, this will be 2000 crore. 2000 crore will be the change in income. What is the change in income? And we know that I is equals to S. Investment is made by how much? 400. So savings will be 400. In 2000, savings will be 400. So consumption will be 1600. This is change in consumption. This is change in savings. See, we know the concept. When you know the concept, you need not to worry at all. Clear? Next, problem number 10. See, increase in investment by has led to an increase in national income by. That means this is change in income. This is change in investment. So we know the formula of multiplier. Change in income because of change in investment. 1600 divided by 400. 4 fours are. There are totally how many times? 4 times the investment has increased. Clear? And they are asking us to identify value of MPC. And there is one more formula. What is it? K is equals to 1 divided by 1 minus B. That is MPS is 1 minus B. Now we know the value of K. What is K? 4. 4 is equals to 1 divided by 1 minus B. So this will be 1 minus B is equals to 1 by 4. What is it? 1 minus B is equals to 0.2. 0.25. Henceforth, B will be 0.75. MPC also got. That's it. Such easy questions. Clear now? So let us go to the next problem. Multiple problems I had solved. In the class also we have done it. Clear? So next, 3-sector model. Which sector model? So in case of a 3-sector model. So 3-sector model, that will be Y is equals to C plus I plus G. What is it? C plus I plus G. C stands for household. I stands for business investment. G stands for. Now once government comes into picture, 3 more points will also come into picture. Number 1, government expenditure. Number 2 is, third one is transfer payments. Third one is what? TR. Transfer payment stands for what? TR. Now income and disposable income will be different. Excuse me, someone is scolding very nicely. You guys only, yeah? No, okay. So income and disposable income. These are 2 different concepts now. What is disposable income? We already studied. Income minus direct tax. What is it? Income minus? Now the YD will be Y minus T. What is it? Y minus? Suppose if there is a transfer payment. Suppose if there is a plus TR. What is it? Clear. Transfer payments will be added in disposable income. Where it will be added? Because personal income, national income plus transfer payments minus incomes earned but not received. So transfer payment comes in personal income, not in national income. Clear? That's the reason while calculating the concept of AD is equal to AS. That is equilibrium concept. AD should be equal to. Now components of AD will be C plus I plus G. Components of AS will be C plus S plus T. Now CC gets cancelled. Already we have decided I will be equals to. Yes. Now G will be equals to T. What is it? G will be equals to T. That means whatever government collects a tax money, same tax money is spent as a government expenditure. Same tax money is spent as a government expenditure. That means whatever tax money collected, same money is used as an expenditure made by the government. So G is equals to T. This is called as balanced budget. Which budget? Balanced budget. Is it clear? So this is the concept of equilibrium in case of a 3-sector model. Which sector model? 3-sector model. So usually in your examination you will get a numerical problem from this area. So what is the national income equation? C plus I plus G. Now in the place of C, what is it in the place of? Now you will be having A plus B of Y minus T. What is it? Y minus T, because disposable income, because government is existing. Suppose if transfer payment is present, plus TR, clear up, plus I plus G. This will be the equation for national income. And multiplier formula. What is multiplier formula? 1 divided by 1 minus B. 1 divided by. And in case of 3-sector model, remember this very carefully. There are 4 different scenarios. How many different scenarios? About which we will identify the equation. Now, government expenditure and tax. These are the 2 important things. Government expenditure will come under AD side. Taxes will go under the AS side, because tax is nothing but leakage. What is it? So leakages will go under the AS side. Injections. What is it? Injections will come under the AD side. Observe. Government expenditure, injection. Taxes are leakages. Clear? So now we have 3-sector. Household, firm and government. Still economy is a closed economy. No corporate savings. Prices of goods and services, supply of labor and capital, production technology, everything remains. Now government expenditure is a dash budget. What is that? Balanced budget. Government expenditure is equals to tax. Clear? Now flow. Let us understand the flow. See, national income equation. In the place of C, it will be YD. What is YD? Income minus tax if there is a transfer payment plus TR. So ultimately, this is the equation of national income. Y is equals to A plus B of YD. What is that YD? YD is equals to Y minus tax plus TR. Clear? Now see, instead of C, now we had C plus 1 in 2-sector model. Now in the 3-sector model, C plus I plus G, intersecting at the 45-degree curve, that is AS curve. Intersection is a point of equilibrium. Now at the point of equilibrium, S plus T is equals to I plus G. That is the ultimate equation. Next, flow of the 3-sector model. See, observe this very carefully. Household and business. This was a 2-sector model. Earlier 2-sector flow was very simple. Sir, household is the one who owns all the factors of production. They will give it to the firm. and in return firms will pay the income. Once they get income, they will make spendings. They get goods in. Only this 4 line was existing in 2 sector model, but now complication starts when government comes into picture. So what is that complication? Now we will divide that into a product market, factor market and finance market. Which market? Product market, factor market, finance market. Let me explain only from household point of view. Household owns all the factors of production. They will give that factors of production to factor market. In return, they will get factor income. Once they get income, they will also buy goods and services from the product market. Clear? Consumption expenditure is having goods and services is coming inside. They also pay tax to government. They receive transfer payments from. Money left out, they will save it in the which market? Clear? Now comes business. Now first they will take a loan from the finance market. Clear? And they will also buy it from the factor market. In return, they should make a factor. They will also buy raw materials from the product market. And they will produce goods and they will bring that to product market and they will sell it and they will make income from the product market. They will pay taxes to government, receive subsidy from government. Clear? Okay, next, let's say for example, we will understand about the government. Now government is coming into a picture. Now government, they will collect, wait, let me erase it off, it will confuse. Now let me explain only and only from government. Now government will get the income from whom? Household and business in the form of taxes. And they will pay transfer payments to household, subsidies to. And government will also buy goods and services from product market. And government will also borrow money from finance market. Clear? This is the flow chart, 3 sector model flow chart. Now there are total 4 kind of questions which can come in 3 sector model. Number 1, government is spending a money and that is as a lump sum tax. What is it considered as a? One single lump sum tax has been paid. Clear? So there is a lump sum tax. There is no difference. Whatever we just discussed, C plus I plus G and multiplier formula will be 1 divided by 1 minus B. Same formula, there is no difference. Now along with that lump sum tax, there is a transfer payment. Which payment? That means in case of YD, we will be having income minus tax plus TR. Clear? Income minus tax plus TR and multiplier formula will still remain same. 1 divided by 1 minus B. 1 divided by? Now comes Kahani may twist. Now sometimes they will give tax as an equation. What they will give? Tax as an equation. If you remember, consumption equation A plus B of Y. Same to same way. Now tax will be given as a T dash plus a small t y. T dash plus? Small t. Sir, this T dash is the autonomous part. You have to compulsorily pay whether you earn or whether you don't earn. And the small t is the induced part. Small t is what? Induced part. That will be decided based on your income level. If you are earning more, you will pay more. If you are earning less, you will pay less. Again, there is the autonomous and induced part. Now, the common mistake what you guys will do, that induced part, whenever you are writing as an equation, that plus t will become minus t. Plus t will become? Because when you are writing inside the brackets. Now, what is national income equation? Y is equals to C plus I plus G. Now, in the place of C, what is it in the place of? We will be writing it as what? A plus B of YD. What is YD now? Income minus tax. Income minus tax. Clear? Now, but tax is given as an equation. I cannot just write it as a word as tax. Now, this will be T dash minus TY. What is it? Minus. Now, observe. It is given as minus here. But in the equation, it was given as plus. When you are writing inside the bracket, you need to make it as minus. What Ma's rule? Inside the brackets, decimals will become negative symbol. Is that clear? Now, plus I plus G. So, this is the equation of national income. And multiplier will change. Multiplier will change. Now, when we derive this equation, when we keep on deriving this equation, see, final, this is the equation. Now, observe the multiplier formula. Multiplier formula has changed. Now, the multiplier formula is 1 divided by 1 minus B of 1 minus T. What is it? 1 divided by 1 minus B of 1 minus T. Now, multiplier formula, simple multiplier formula was 1 divided by 1 minus. Now, when tax as an equation, what is it? Tax as an equation. If it is given as an equation, then automatically multiplier formula is going to change. Now, what is the multiplier formula? 1 divided by 1 minus B of 1 minus T. Clear? Understood? Now, for the same tax as an equation, they can give transfer payment. They can give what? If at all they are adding transfer payment. Which payment? Same to same. In the case of disposable income, now income minus tax, that is T dash minus small ty plus TR. What is it plus? Now only and only addition is this plus TR. Can you observe here? Plus TR. And equation of multiplier will also remain the same. Now multiplier will be 1 divided by 1 minus B of 1 minus D. This will be the equation. Clear? So be careful. Suppose if tax is given as equation, what is it? What is the multiplier formula? 1 divided by 1 minus B of 1 minus T. That is 3 sector model. Is that clear? Next, 4 sector model. Which model? See, in case of a 4 sector model, now AD should be equal to AS. Now AD component is C plus I plus G plus X minus M is equals to C plus S plus T. Now listen to this very carefully. CC gets cancelled. Now this particular portion, especially this minus M is there na, that will go to RHS side, because when we import, already I said import is a leakage. What is import? Leakage will come under which side? Leakage will come under AS side. Injections will be under the AD side. So ultimately now this will be the equation I plus G plus X equals to S plus T plus M. This will be 4 sector model, national income equilibrium concept. Clear? CC gets cancelled. This minus M, what is it?
Minus M
Will go to RHS side and it will become plus M. So in short, AD side is going to be the injection. AS side is going to be the leakages. Clear? Now observe, only and only imports. See, from AD side we will subtract. From AD side we will subtract. That means that minus M will go to RHS side and it will become plus M. Clear? Export. What is it? Export is considered to be the aggregate demand because it acts as an injection. What does it act as a?
injection.
But import will act as a leakage. So since it is a leakage, it will come under AS side. Since it is injection, it will come under AD side. Now comes one of the trouble. Suppose if export is greater than import, that means we will be having positive NFIA. What is it? So GNP will be greater than GDP. GNP will be greater than? And this time this question has been asked. Suppose if import is greater than export, what is it?
Import is greater than import.
Then automatically GNP will be lesser, GDP will be greater, because we have got minus NFIA. What do we have got? This time the question was asked from the second one. When imports are greater than exports, most of them did blunders. GDP will be greater than GNP. Domestic income will be greater than national income because of negative NFIA. Because of? Clear? Now national income equation again. Now they want to screw your happiness. Sometimes they can give import as an equation. What is it? See there, M dash. This is autonomous imports. By default we will do it. Plus small my. What is it? Now simple concept. National income equation, we will not complicate it. C plus I plus G plus X minus M. Now in the place of C, what is it in the place of? It will be A plus Y minus tax plus TR. Clear? Plus I plus G. Now comes the complication. Now, 1 second, wait. Now observe this. Plus X. What is it? Plus minus. We are writing inside the brackets. What are we writing? Automatically, I said you, this positive of induced part will become negative. So this will be M dash minus My. M dash minus. This is the ultimate equation of national income. Clear? Now listen to this very carefully. Multiplier formula will change when import is given as equation. When import is given as? Now multiplier will be 1 divided by 1 minus b plus small m. 1 minus b plus, that small m is the induced part of m. What is it? Induced part of m. This small m. Induced part of m. Now totally there are 3 equations for multiplier. How many equations for multiplier? Or 3 different formula. See, normal formula. Normal formula of multiplier 1 divided by 1 minus b. And this particular formula, when import is given as equation, what is it? Import as equation. Clear? Next, whenever Tax is given as a equation. What is it? Tax is given as a
Equation. 1 by 1 minus b into 1 by
1 minus p. This will be used when tax is a equation. What is it? Tax is given as a? So be careful. From the multiplier point of view, you can go wrong. So make sure that you are writing in a proper way. Clear? Understood? So this will be the 4-sector model. See, 4-sector model, national income. That is AS side should be equal to expenditure. AD side C plus I plus D plus X minus M. AS side C plus S plus T. Now same, that minus M will come to other side and it will become positive M. CC gets cancelled. Clear? Now see, in the case of graph, see here they have only and only mentioned the 4-sector graph. Let me draw 3-sector. C plus I plus G. This is C plus I, 2-sector model. See, in case of 3-sector, see, this was the equilibrium in 3-sector. Now this is the equilibrium in 4-sector. That is much more higher. Income is much more higher because there is a positive NFIA. What is that? Positive? But suppose if import is greater than export, import is greater than here C plus I plus G, 3-sector model. Point F is the equilibrium. This is the national income under 3-sector model. But observe the 4-sector model. Now 4-sector model is much more below, much more. And this is the point of equilibrium. See, this is 4-sector model national income. Because of negative NFIA. Because of what? GDP will be greater than GNP. Clear? This will be the graph. Understood? So finally, equation. Solve this problem. Let's see. See, they have only given induced part. What are they given? Only induced is given. Autonomous is not given. Only small m is given. See, what was the equation? M is equals to m dash plus small m y. Now they have not at all given this m dash. They have only and only given small m y. That's it. That is 0.05 y. Clear? Okay, do one thing. Identify only multiplier. Identify only multiplier. Don't identify national income. Identify only multiplier. What is the formula of multiplier? 1 divided by 1 minus b plus m. Now what is the value of b? 0.8. MPC. B is called as what? MPC. Here m is 0.05. So k is equals to 1 divided by 1 minus 0.8 plus 0.05. So it will be 1 divided by 0.25. 0.25. How many times? 4 times. Multiplier is how many times? 4 times. Clear? So this is how the questions are going to come in the 4-sector model. So this is Keynesian theory. Which theory? And 3-sector model, identify the multiplier. Wait, let me show some problems in 3-sector model. Identify only and only multiplier. For this problem. 15th problem. Rest. Done. And it is very simple. K is equals to 1 divided by 1 minus b of 1 minus p. So this will be 1 divided by 1 minus b. What is the value of b? 0.5 of 1 minus t. Small t is 0.1. So it is 0.1. See, Mahan Bhavs, I know there you will make a mistake. Sir, what you will do? Sir, first we will do this. 1 minus 0.1. We got 0.9. So what we do next? 1 minus 0.5. We got 0.5. Here we got 0. Then we will multiply. Wrong. Gone case. Bodmas rule. Mathematics. Important. I know because you are not good in math. You took commerce. But CA will not leave you. You need to understand the basic maths. 1 minus 0.1 is 0.9. You need to multiply that with 0.5. 0.5 into 0.9. Multiply value. 0. So 1 minus 0.45. Finally, k is equals to 1 divided by 1 minus 0.45 is 0.55. What is the end value? 1.82. This is the answer. But Mahan Boss, initially you did 0.5 into 0.9. 0.45 is the answer. That is what we will go. Blunders. So be careful. Mathematics, Bodmas rule. Clear? So this was your Keynesian theory. Which theory? By this Keynesian theory comes to an end. See in the flow chart, last but not the least, simple. Observe here. We will have something called as rest of the word. What do we have? From this rest of the word, one will be imported, another one is going to be exported. One more line will come into the factor market. FDI and FPI. What is it? FDI and money will come inside India. Now foreign people will come and invest in India. That is coming into a factor market. Money is coming inside. Capital is coming inside. By this entire chapter 6 comes to an end. Katam. Almost like 15 to 20 problems I made you to solve it in the class from national income concepts. Clear? Now let us go to your question paper. Let us do the questions from your question paper. Okay, take out calculator. There are more questions this time. See here. Which of the following is not true? What is it? Which of the following is? For the personal income, which is not true. See, it is measurement of actual current income received of a person only from the, not from productive activity. Transfer payment is also included. Even incomes earned but not received, that will be subtracted. Incomes received but not earned will be added from the national income. Next, calculate average propensity to save. What are they asking? Average propensity to save. Calculated. APS formula. Total savings by total income. Savings they have not given. Consumption is given. 300. Income is 1200. So 1200 minus 300 is 900. So 900 by 1200. 9 by 12. 0.75. Next, marginal propensity to consume is between 1 and 0. Value will be always between. Because MPC plus MPS put together should be equal to 1. So it will be, value will be always lesser than 1 and greater than 0. Utility means 1. Next, product method or value added method is also called as industry origin method. Next, calculate. In a 3-sector model, which model? C is 8 plus 0.6 YD. 3-sector, government is existing. G is equals to T. 10. I is 60. Calculate. National income equation. This will be the equation. 8 plus 0.6 Y minus 10 plus 60 plus 10. Calculate and let me know the end answer. So 0.6. This has to be multiplied now. This has to be multiplied. 0.65 and 0.6 into 10 becomes 6. That has to be multiplied. 0.65 will go to LHS side. That will become 0.4. Mathematics, not even economics. This is. Make it fast. Calculate and let me know the answer. So this will become 0.4y is equals to 8 plus 6 plus 70. Answer. 180. Next, 25th question. Unable to do it or able to do it? Able to do it. Anyone finding it difficult? Next up, 25th question. In an economy, investment expenditure is increased by 300 crore. That is change in investment 300 crore and marginal propensity to consume is 0.6. That is MPC is given. What is the total increase in income? They are asking for change in income. What is it? What is the formula for change in income? Multiplier into change in investment. First identify multiplier. Formula of multiplier. 1 by MPS. MPC is given 0.6. MPS will be 0.1 by 0.4, 2.5 times. How many times investment is increasing? So 2.5 into 300 crore. 750. Common sense question. Clear? Next, real GDP already we identified. Next, calculate gross value added. GVA. What is it? Gross value added method. Gross value added. Sales is given 750. Opening stock and closing stock is given. Intermediate consumption is given. Closing stock minus opening stock. 200 minus 350 minus 150. Opening stock is 300. Closing stock is 200. Closing stock minus opening stock. Minus 100. So 750 minus 100, 650. 650 minus 250.
400.
400. That's it. Input minus output. Hello, output minus input. Value of output minus value of input. See, intentionally I will say reverse. Next, nominal GDP is also called as. Next, the investment multiplier is defined as the ratio. Ratio means formula. They're asking which of this is the formula. Change in income divided by change in investment. Now the ratio, again ratio, formula. Ratio, that is total consumption to total income. Total consumption to total income, average propensity to consume. Next, chapter 5. Next, chapter 6. While using the national income, which of the following income is included while calculating national income? Commission and brokerage. Clear, ra? So this was the questions of chapter 6 in the previous attempt. Before that, September attempt. See, many questions have come from chapter 6. Dhamaka questions in September paper. The ratio, again, ratio, nominal than real. That is deflator. Next, the GDP deflator. We solved now, already we solved this, 11.76. And this one, see, GDP at market price. They have given what? GDP at? Market price. And they have given depreciation. They are asking for NDP. GDP, NDP, difference. Depreciation. So, 6,700 minus 530. But 2 questions, 1 mark. 6,700 minus 530, 6170. Next, suppose consumption of an economy is given as C is equals to 30 plus 0.5y and investment is given as I as equation. See, 12 plus 0.1y. What will be national income? Put both together. See, we have to put both together. Now, 0.5y plus 0.15y will come to LHS side. This will become 0.65y. What is it? 0. Y minus 0.65y. This will become 0.35y is equals to 30 plus 12, 42. So 42 divided by 0.35. 120. Hardly 10 seconds. These questions are hardly 10 seconds. That is what I'm saying. Conceptual clarity. You need not to waste 1 or 2 minutes time. Hardly 10 seconds. Stuck. Mark the answer. Go to next question. Next. Which of the following refers to the mixed income of self-employed? First tell me what is mixed income of self-employed. Labor and capital is given by the combination of factor payments which are not distinguishable, which cannot be divided or distinguished. Next, what does disposable personal income represents? Disposable personal income of an individual, income minus direct tax. The income of an individual which are used for consumption or savings after the payment of tax. Now, what you will use for it? Either for consumption or savings. Next, what are the phases included in the circular flow of money?
Production.
3 methods of national income. What is that? Production, distribution, disposition. Next, which of the following is not the limitation of the computation of national income? Not the limitation, which is not a disadvantage. Transfer payment is disadvantage. Service of durable goods, car example, accident. Next, difficulty for incorporating distribution of income between all the 3 sectors. Yes, difficulty. Quality improvements due to whenever technology improves, automatically production will increase. That is not a difficulty at all. Next, which method measures the contribution of each enterprises in the domestic territory of the country over the by considering the production of each industry less intermediate purchase and the output, whatever we have produced, minus intermediate purchase, output minus input. Which method? Next, in the 3-sector model of a closed economy, which sector model? Who all are there? Consumption, investment, government spending. C plus I plus G. See, such a bachu question it is. Next, according to Keynesian theory of income and employment, national income depends upon AD side, that is C plus I plus G plus X minus M. That is the effect of aggregate demand. Clear. Next, which of the following is not a correct formula? What is it? For NNP, MP. Now see here. NNP, MP. GNP, MP is there. G is converted into N minus depreciation. Correct formula. Next, NNP, MP. NDP is there. Second alphabet is D. Here N plus NFIA. Correct formula. Next, NNP, MP. GDP, MP. See. Here G, D. Here N. That means G has to be made into N minus depreciation. Second alphabet D has to be converted into N plus NFI. Both are given correct formula. NNP, MP, NDP, MP minus depreciation. Already N. Why are the minus depreciation? Wrong. This is the wrong answer. Option D. Next. The state level estimates. We have discussed now. Estimates. And which is prepared by, responsible for, Directorate of Economics and Statistics. Next, which of this total income of the value of average propensity to consume is 0.45? Consumption is 900 crore. What will be the total income? They are asking for total income. Average propensity to consume, they have only given. Now, what is the formula of average propensity to consume? Total consumption divided by total income. So, 0.45 into, is equals to 900 by x. So, x will go there, 0.45 will come down. 900 divided by 0.45. 2000. Next, what will be the GDP MP? What will be the? GDP. On the basis of following information. What they are asking? GDP. What have they given? GNP MP. Only second alphabet has to be changed. N has to be made into D. That means automatically from this minus NF by A. That's it. 1100 minus 200. And see how many questions have come from chapter 6. See already 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Dhamaka. 15 questions from chapter 6. That is what sometimes your ICAI will say, I love you by giving such additional questions. When you people ignore it, that is where ICAI will be saying, welcome, please come again. I said, chapter 2, chapter 4 in micro, chapter 6 in macro, or sometimes chapter 9 from macro. Dhamaka, 15-20 questions will come. And if they really want to screw your happiness, wait, let me show. Chapter 10. 10 questions, 91 to 100. Full on chapter 10. That is what, you can't ignore any chapter. If your time constraint is there, what is the time? Then I asked you in the class, ignore chapter 10. Because it will take a lot of time, full of data, full of information. And on average, you will get somewhere between 3 to 7 marks. That is the actual average. If ICAI wants to really screw up your happiness, 10 marks. And September paper, they have made it very beautiful. 10, 10, 10, 10, 10. And only from one chapter 5. So they took that another 5 from chapter 6 extra. 15, 5, 10, 10, 10 in macro. Observe. Now chapter 9. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Chapter 8. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Next chapter 7. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Equal weightage. Only chapter 6, 15. Chapter 7, 10 marks. Chapter 8, 10 marks. Chapter 9, 10 marks. Chapter 10, 10 marks. Macroeconomics 55, microeconomics 45. Welcome to club. That is why don't ignore any chapter. Sometimes your ICAI will play with your feelings. Whichever you feel, Levu will study this chapter. If 15 marks comes from that chapter, 2 white, 1 red, fix. Your monkey and your friend is Menki. Clear? By this, entire chapter 6 comes to an. Now let us go with the chapter 7. Full on storytelling starts. So every 1.5 hour, one chapter gets over now. 1.5 hour, 1.5 hour, 1.5 hour, 1.5 hour. Total 4 chapters, 1.5, 1.5, 3, 3 plus 3, 6. Another 6 more hours class is pending. Now what is the time now? 11:45. Still lunch break is there. One more extra break is there. Class might go up to 7:30 or 8 also. Or 8 also. Depends. And that 2 people have already requested. Sir, 7, 8, 9 we want detail. See, already people have requested. So we can't go fast. Let's see. But still, we'll try to pace up. Okay. Totally there are 4 units. How many units?
4.
How many units? 4. Chapter number 7 has got how many units? Number 1, fiscal functions as an overview. Simple concept it is. Unit 1 is nothing big here. In Unit 1, only 3 concepts are there. How many concepts? 3 concepts. Now, they will say why government intervention is needed. See, there is a Shah Rukh Khan. He will earn 50 crores per movie. There is a Shashi Kiran, poor farmer. He has to get operated, 1 lakh rupee. But my annual income is 2 lakh. Will Shah Rukh Khan identify Shashi Kiran? Will he come and provide some help to Shashi Kiran? No. That is why government will come in between. Government will collect taxes from rich and they will provide welfare to poor. So why government has to intervene in the form of fiscal policy? Which policy? Every country has its own economic policy, fiscal and monetary. Now in the fiscal policy, government will be playing a role. Why government has to invariably perform? Why government has to come in between? If not, things will not adjust automatically, like unemployment, price stability, inflation. This has to be controlled. If it is not controlled, poor people gets affected. Who gets affected? And moreover, in the economy, there is a basic problems. Chapter 1, basic problems of economy based on allocation of resources, based on what to produce, how to produce, for whom to produce, what provision has to be created. Who should solve this problem? Government. And there is also 3 types of economic system: capitalistic, socialistic, and mixed economy. By adapting one of the economy, we are solving the basic problems. In capitalistic economy, who will solve the problem? Private enterprises. Socialistic economy, governments. And mixed economy, private and government. Both are going to solve the problems. Is that clear? Now, role of government from the words of Adam Smith. What is the role of government from the words of? See, Adam Smith said, see boss, even I am a follower of a free market economy. Which market economy? But there are 3 places where invariably government has to perform. Except these 3 places, let private control it. But these 3 places are important. Which are those? National defense, maintenance and justice of rule of law, highly beneficial public institutions and public works. In these 3 areas, government has to intervene. Who has to intervene? Rest everything else, leave it to the private people. Let them dominate. Let them continue. Not a problem at all. Clear? And when did this happen? After the Great Depression of America, when things got affected before Keynes. What is it before? All our classical economists said, no, government intervention is not at all required. Economy will always be at full employment, and economy will always have a price stability. Economy will always and always balance, adjust by itself. See, read these words. Since 1930, as a consequence of Great Depression, government's role, which role? In the economy has gained its importance. The traditional function, which function? What was the traditional function? Government has been supplemented with the economic functions. And while there is a difference among different countries with respect to the nature and extent of government, still all the governments are expecting to play a dash role. Major role. Some countries have major control in the government, some countries does not have a control at all. Best example, Afghanistan, Taliban. They entered, government only ran away. No control at all. And there are full control in few countries. North Korea, Kim Jong-un, almost like full completely controlled. China to some extent they are controlling. In India, government control is comedy. You create one rule, next day strike will happen. You do something, next day stones will come. We have a different kinds of control. Next comes role of government from the words of Richard Musgrave. From the words of, and this is what your unit 1 is all about. The concept of unit 1 is about 3-branch taxonomy. What is it? What is a 3-branch taxonomy? It was introduced by Richard Musgrave in his work called as The Theory of Public Finance, published in 1959. Which are those 3-branch taxonomy? Number 1, allocation function. Income has to be allocated and redistributed in an equal manner, and resources are limited. What is limited? Resource has to be allocated in a proper manner. Basic problems of economy is based on allocation of resources. So allocation of resources has to be done by the government. If you leave it to the private people, stupid people, either they will overproduce or either they will underproduce. They will not optimally produce. They will not. That is the problem. That has to be tackled by government. Now government has to go take resources from the private hands. They should allocate it to the public. Allocate it to the in a sufficient manner for all the various activities. If not, private people, stupid people, wherever they earn more profit, only for that they will allocate the resources. Next comes redistribution. What is that? Redistribution of income and wealth. Same. Collect from rich and give it to the in the form of budget creation, in the form of schemes, programs, economic welfare activity. Last but not the least, stabilization function. This is macroeconomic stabilization, price stability, economic stability, inflation stability. Like this, macroeconomic activities has to be stable. It should not increase all of a sudden. It should not decrease all of a sudden. We should maintain stability. So first 2, that is allocation and redistribution, is microeconomic function. Stabilization is that. So let's go ahead. The very first one, allocation. I gave a background. Now private people, either they will overproduce or either they will. We believe that perfect allocation of resources will only happen in that market. Perfectly competitive market. Yesterday we discussed. In reality, markets are never perfect. We are imperfect competition market. And the biggest problem is private goods will have a sufficient allocation of resources. Public goods will not have a sufficient allocation. Why? Because government works based on budget. In order to prepare budget, there is a procedure. Higher authority should agree. Unless and until they allocate, we can't use it. But private people works on demand and supply. Allocation of resources happens like this, stuck. Clear? Next, why do government fail to allocate the resources in a proper way? If it is left to the hands of private people, either underproduction or overproduction is going to happen. Is it clear? Now, roles of government for resource allocation. Simple. Now, we need to decide what economic performance the nation has to perform in the form of government expenditure and tax. What is it? And this is what fiscal policy, na? They're indirectly speaking about fiscal policy. And in India, who is taxed and what will be? Simple. In India, not who. Everyone is taxed. Not what. Everything is taxed. How and on what public revenue will be spent? We create infrastructure and it will fall. Again, we will create. It will fall. Again, it gets damaged. Again, we will create. Next, it is considered with the provisions of, what is it? Optimum combination of dash goods. Merit goods has to be provided. Reallocation of society's resources from whose hands to whose hand? Private hands to public hands. That is what government should do. If it is left to the hands of private people, they will over-exploit. They will. So government should intervene. Government should levy tax. Government should come up with rules and regulation, where to use it, where not to use it, and government should control it. Government should allocating the resources. Yes, my hero. I will explain. Next unit. Merit goods are a public consumption which brings a public benefit. Best example, colleges, schools. Will you get it for free of cost? You have to pay fees. If you don't pay the fees, will they allow you to come and get access? Leave about that. Medical services. Any private, let me say hospital, will you get free treatment? If you don't pay, they will send you out. And if you are using that bed, can someone else come and use that bed? Non-rival, non-excludable, public good. Rival, excludable, private good. Private good which brings public benefit. Private good which brings? Tomorrow you will become chartered accountant. It was a private good. Now you came and joined ArivuPro Academy. You learnt in ArivuPro Academy. You cleared exams. Now you are a chartered accountant. For whom are you serving? Public. Private goods bringing public benefit. That is merit goods. Which goods? Clear? Public goods, non-excludable, non-rival. Next unit we will explain that. Next. Now these are the various ways through which government will actively intervene. They will only come and produce goods. They will only come and distribute it. They will only allocate resources, electricity, generation, distribution, public transport system, and demerit goods has to be controlled. We will bring Competition Act, go through it like a newspaper. Rules and regulation created by government for allocation. Next one. What redistribution? Income and simple. Collect from rich in the name of tax and give it to them in the name of welfare activity, services, other kind of schemes and promotion, because we are a dash state. First, by the people during election. Next, after winning, for the people. If they speak more, kill the people. See, very simple concept we have. See, democratic welfare state. We work based on democracy. Elected by the people, ruled by the people. But the person who is ruling will never listen to the people. Simple. That is our country. Next, distribution. How do we do that? Redistribution of income to achieve dash distribution, equitable distribution in the society. How do we do that? We have created all these BPL people, below poverty line, power. For them, highly subsidized price food grains we will give, ration we will give, and also school, college scholarship we will give, concession in fees we will give, and free bus transportation for female. And then we speak about gender equality in the country. Male and female are equal, but free transportation for female, and take 5,000 from husband pocket, give 2,000 rupees pocket money to female. Karnataka government. See, we are doing it very extreme. See, provide equity in income, wealth and opportunity. Yes, ma, 2,000 rupees free pocket money for household. Gruha Jyoti Yojana. And 200 units of current free. Free. Next, Karnataka is only free. Anyone can come. Next up, providing security for people who are having hardship and ensuring everyone will enjoy minimum standard of. For that, what government is doing? We have implemented progressive. Earn more money, you pay more money. Nirmala aunty will come. Hello, excuse me, my share. See, up to 12 lakh rupees of salary, no tax, additional 75,000 of rebate. Up to 12 lakh 75,000, we will not be taxing you. You earn 1 rupee extra. From 4 lakh only tax start, not after 12 lakh. From 0 to 40. That means you need not to pay 4 to 8 lakh, 5%, 8 to 12, 10%, 12 to 16, 15. It gets added. That means it is not beyond the 12 is taxed for salary. Hello, excuse me. If you exceed 12 lakh 75, from the 12 lakh 75,000, 1 rupee, if it comes from your 4 lakh rupees only, taxes will apply. See, that is India, where information is given but not understood. That is Nirmala aunty. She will share information, but she will not explain how it works. Now, chartered accountants have to explain it to the salary guy. Even if 1 rupee exceeds, tax is not on that 1 rupee. From 4 lakh 1 rupee it is taxed. Next, proceeds from dash tax for financing which services? For especially poor citizens of the country, BPL households. Next, employment reservation is given and manufacturing of certain products will come under strict regulation, especially related to health and well-being. We will not ban cigarettes and alcohols, but tax rates will be imposed. Undesirable goods, income to government, that is most important. And see special schemes for backward regions, vulnerable, and we are which state? Democratic welfare state. First, purchase the people. Now, I will give 2000 rupees free. Now, Delhi election, see competition. BJP said 2000. Aam Aadmi Party said 2500. Congress said 2500. Now, officially they are doing this scam. Officially they are giving money to people every month. See, if at all I provide employment opportunity, I should give you 30,000 salary every month. Na? We can't. So every month I will give you 2,000 or 3,000. In a year I will give you 30,000 instead of giving every month 30,000. See, our people will not even raise wise. Unemployment compensation. What is it? Then why did you learn your degree for unemployment compensation or getting employment? That you should not ask. We are giving benefit now. See, redistribution of income and wealth. We are taking from rich and we are giving to whoever is working from them. We are collecting tax. How much? 50,000, 40,000. For unemployed, how much you are giving? 2,000. Business. Now, welcome to India. Now, ಹಿಂಗೆ ಹೇಳ್ತಾ ಹೋದ್ರೆ ತುಂಬಾ ಇದೆ. In normal class, they know length and breadth, how Sidhu gets roasted, Stalin gets roasted, Modi gets roasted. Congress to full and deep fry only, no roast. Full deep fry. Next, stabilization function. Which function? The last one. We need to bring macroeconomic stability. Which stability? In terms of labor employment, overall utilization of output and income, bringing the general price level controlled, balancing the international payments, rate of economic growth. First, mainly we need to stabilize the economy from inflation and recessions, that is deflation, because there is an instability in the economy because of excess money supply, lower money supply, and there is a problem of stagflation, lack of growth and development. One way, prices of the goods and services are increasing. Another way, unemployment is also increasing. Economy not performing well, but prices are. That is stagflation. See, there is inflation and unemployment which is existing side by side. That makes the problem much more complicated. Upon that, there is something called as contagion effect. If one country gets affected, automatically dependent country also gets. Best example, India. We are highly dependent on China for raw material. If something goes wrong in China, automatically raw material supply will damar. Best example, COVID time. During 2008 of financial crisis. Like this, we have witnessed a series of things. Like for example, Iranian civil war. All this in between of Afghanistan issue, Russia-Ukraine issue. Oil prices went up like crazily because of war. All these are the effects. So what government has to do? Government will come. They will intervene with their fiscal policy. Number one, government expenditure. When government has to improve the economy, they will inject more money into the system. That means government expenditure will increase, tax rate will be reduced, and during the recession, during the economy is not performing well, so we need to perform in this month.
If they want to increase the expenditure, means they'll increase the taxes only. Why they reduce? From which they'll take.
I will explain. Wait. Next unit. Liquidity trap and crowding out. Next concepts will come. Connection concepts are there. If I say that now, alas, that curiosity will go off there. Clear, Ram? Now, measurements during recession. See, whatever we discussed yesterday, same to same concept. But nothing more. Nothing. It doesn't go anything beyond this table. Every country has a dash policy. Such economic policies of how many types? Number one, fiscal policy. Second one, monetary policy. Now, under fiscal policy, there are two important tools. Number one, number two. Under monetary, there are various, but in short, we call it as, suppose in an economy, when there is a inflation, already there is more money in the hands of people now. Should government spend more money or spend less money? So government expenditure will decrease, but they will increase the tax because you people have more money in hands now. Now if you spend more, you should pay more tax. Will you spend now? So still money is with you only now, danger. So what they will do? They will increase interest rates. Once interest rate goes up, you people rather than spending money, you will save money, you will invest money, you will come and keep money in bank because you will get more interest. See, money came inside. Whatever excess money was there, It will come inside the system. Clear? Now, whenever there is a deflation, what is there? Complete opposite. Money is not at all there in the economy. Economic activity is not at all performing well. So what we will do? Government expenditure will increase. Now government will start spending more money on construction of bridge, roads, dams, compensations and all. Next, tax rates will decrease. When tax rates goes down, when you get more money because government is spending more money now. See, simple concept. See, C plus I plus G. Now when government spends money on construction of infrastructure, they will outsource the work to whom? Business people. Tender. They will issue tender, construction of some bridge. That means private people will get that money now. Private people to construct that bridge, they will take factors of production. Who owns factors of production? Who will get money? Once household's income increases, demand will increase. That is why government pumps money. Government spends money. When government spends money, money will ultimately come in the hands of household. When household gets money in the hand, will they sit silent? Demand will, production should, employment opportunity should, bank loans will, overall economic performance, it will boost. That is what they do during deflation. See, that is what they are doing now. So interest rates will automatically, you will not earn good interest. Why will you keep money in bank now? Moreover, economy not performing well. We have lost jobs. Upon that interest rate low, moreover, government is spending more money. Why should I keep money in bank? I will withdraw. Even government wants the same. When you withdraw, will you be silent? What you will do? When you spend, demand will, production should, economic performance. Clear? Now let me add another 2-3 elements to this only. Now, when government is spending more money, but tax rates are less. Now observe these two. Now these two will play the role. Government should spend more, but government's income will be in the form of tax. Majority of the income to the government will be in the form of government is not receiving money at all. Tax rates have become less, but we should spend more money. Now automatically shortage is there. So in the budget there will be shortage. Deficit budget. Which budget? Deficit budget. That means we need to spend more money. We have less money in our hand. So when we have a shortage, what we should do? Borrowings. So automatically borrowings will increase. Either from inside or either from outside the country. We will start borrowing. Clear now? Now opposite during inflation. In inflation already more money is there now. Now we need to cut down your economic activity. So government reduced its spendings and moreover they are getting more and more tax money in their hands. Now government is not spending more money but they are receiving more money in the name of tax. There will be surplus budget. Which budget? Surplus. That means whatever loans you have taken last time when you had a shortage, now kindly repay that. Borrowings will decrease. What is it? Borrowings will. These are called as instruments of fiscal policy. What is it called as? Which are the instruments of fiscal policy? Government expenditure, tax, interest rates, budget, public borrowings. This will come in unit 4. Last unit, what it will come now? Now only I explain it off. What happens during inflation? What happens during deflation? If you want, write this down. This is the entire chapter. Beyond this, it will not even go anything else. Everything is revolving around these 5 things. Government expenditure, tax, interest rate, budget, borrowings. Public borrowings. Same, Power button, right?
During stagflation, what the government is supposed to do?
It is not covered in syllabus, but let me explain. See what happens during stagflation? Lack of economic growth rate. Now we need to boost the performance of economy, income generating capacity in the hands of people. Now if the prices are increasing, you should be able to afford to buy that. In order to afford to buy it, your income earning capacity should, for that employment creation should, for that more and more infrastructure should. That is what we are doing, they will say, but in reality are they doing? God only knows. Now simple, now I am sowing a seed in the sand. It will take some time to become a plant. From plant it will become time to tree. After it becomes a tree, it will give fruit. That means now if I sow a seed, by the time you people complete your education and come out, employment will be ready. But present government, are they creating any employment opportunity? Are they investing anything on new infrastructures? Are they allowing any foreign companies to enter and start their business in India? Then where will you get job after 4 years? That no one questions. But when government says 2,000 rupees will give every month, everyone will vote. Welcome to India. An educated votes to an uneducated fellow and expects for growth and development. Finished? Now simple. Government wants you to leave India if you have money. We will collect, we will exploit you. Middle class is the one who will struggle. They are okay to contribute more. If you have made nice money, if you have more money in hands, get lost from country. Now see, observe, day by day, the people who are earning above 3 CR, above 4 CR a year, they are not at all in India. They have left India. And moreover, year by year, the people who are, let me say, sacrificing their Indian citizenship is increasing. See, there is one. When you get this knowledge, you will automatically get to know. Thank you so much. We will make money, then we will say Tata bye-bye. We will do business in India, but we will not stay in India. That is what most of them are doing. Now, I will give one best example. Top 10 taxpayers in the country. Who are those? Your Tala, Dhoni, Virat Kohli, Talapati Vijay, all film actors. Have you ever seen Mukesh Ambani name? Adani name? Why? They know how to do business. Because I don't have an income, I have a loan. Simple, I'm a owner. I don't draw salary. I don't draw any income. I have stakes. I will go pledge that stakes and I will take loan from bank. What is my income? Nothing. I have taken loan by pledging a stakes. Business entity concept. Owner is different. Organization is different. Who should repay loan? Organization. Whose stake is that? Organization. Who got money from loan? I got money from loan. Do I have income? No, I have loan. This is business. That is what. Come to Inter. Come to CA Inter. Income tax. There is one paper 3 of group 1. Direct taxing. Now you will learn there. In usually normal class, I keep on giving some trailers for them like this. In between, what will happen, how things will change, how economy is not performing, why India is still developing a country from 78 years.
So, you don't have tax rates.
Who said? There is a tax, but you will also get equally benefited. Okay, chalo, let me give an example. Germany. Example. Okay, US. Insurance is mandatory. What is it? Insurance is? Whether you earn or whether you don't earn, it doesn't matter. Insurance is. If anything happens, ambulance will come, take you, operations done, take you and they will drop you in your home. Not even single rupee to be spent. Pay tax, na? Getting benefit, na? Now tell me in India, what are you getting? Insurance is covered, na? Everything is protected, na? And you are getting in return, na? Good infrastructure, good services.
So if you are paying the insurance, nothing else happening to you. Where that insurance amount?
Gets compounded. Suppose this year you got coverage of 5 lakh. Next year you will get coverage of 6 lakh. That is called as no bonus claim. See, this is the problem in our country. Everyone knows the heading, but no one knows the terms and conditions. That is what. We are studying. We are students. We are interested in studying, not in learning. This is the difference. We are educated for the purpose of our parents' pride. Why banner will come, photo will come. Next 1 year, see my daughter, my son. Knowledge, baad mein ja. Who wants? Marks? What does your parents ask? What does the teacher ask? End of the term result day, what will Shashi Kiran sir ask? Knowledge and all, sir, we will learn later, sir. Vitamin M has to come, knowledge should be there. Then you will come for knowledge. See, that is realities. That is what chapter 7. Okay, enough of Gyan. Come back. During inflation. What is it during? What happens? So already there is more money in the hands of people now. So government will cut down expenses. They will raise the. So they will follow which fiscal policy? Contractionary fiscal policy. Now entire fiscal policy is to contract performance. What is it? But when there is a recession, what was the intention of government? Increase its expenditure, boost the economic performance. That means dash fiscal policy. Clear now, already budget wise I explained it. Whenever their economy is performing well, surplus budget. When economy is not performing well, deficit budget will stimulate economic activity. We should improve the economic activity. Surplus budget will make us become lazy, lethargic. Slow down the economic activity. That was unit 1 of chapter 7. Clear? Next comes unit 2, market failure and government intervention to correct the market. Now, what is this market failure? Now, when the resources are not properly utilized, automatically economic performance will fall and markets are going to fail. Best example, if you are leaving to the hands of a private people, they will overproduce or they will. Now, when we speak about market failure, there are two types of market failure: complete market failure or partial market failure. What is complete market failure? Entire market itself is missing. Market itself is not there. Total missing market. Even though people want that goods and services, we don't produce. Why? You are not ready to pay. You are not ready to make me in a profit zone. Best example, public parks. Only government is providing. Have you ever seen any private organization coming up with public park and then providing for free of cost for public benefit? Complete missing market. Partial market failure. Yes, market is existing. Either I'm selling at a wrong quantity or wrong price. What is it? Wrong quantity or? See, either I'm producing at a wrong quantity or I'm selling for a. That is partial market failure. Next comes, there are mainly 4 reasons for market failure. Number 1, monopoly power or market power. I know once I become a monopoly, I will be a price maker and intentionally I will start producing lesser quantity and sell for higher price. See, that is what I am a single producer or a small number of producers. Market power can cause a market having an inefficiency, because in case of extreme monopoly power or extreme market power, there will be no existence of a market or complete missing market. So I will exploit people in case of monopoly power. That is first one, market power. Second one is, third one, public goods. Fourth one. Okay, let us go for externality. Let's go back to the same example. Shashikiran, bench producer. Darshan is my customer. He gave me order for producing bench, Pokemon, Doraemon, Chota Beam, Tom and Jerry, special chemical. I am discharging that chemicals into river water. River water getting polluted. Now fisherman is unable to catch the fish. Because of transaction between Shashikiran and Darshan, fisherman Praveen is getting affected. Who is bearing the cost of externality? Third party. But the parties to the contract, did we include anything, measures for protecting river? Nothing. Private cost, social cost, external cost. Same concept. Externality. What is it? Externality can either come in consumption or either it can come in production. Either it can be a disadvantage or either it can be a advantage. Now these are the different names of externality: spillover effect, neighborhood effect, third party effect, or
Side effect.
see, externality can be either unidirectional or reciprocal. Unidirectional, one person affecting other person. Best example. Now whenever you are, let's say for example, studying seriously at your home, your cousin, sibling and all, on Sunday, what they will do? Full TV, full high volume, dancing and all. Disturbing now. Next, reciprocal. You will be warning them 2-3 times. Still they don't listen. You will go out, they will take the remote, bang on their head, turn it off and come inside. Reciprocal. Clear? Unilateral and reciprocal. Either it can be one party to the another party or both the sides there can be an externality. Either such externality can bring an advantage or a. Clear? See, negative externality is the biggest drawback of the nation. Clear? Positive externality is also a drawback. Why? Because when it brings benefit, people will don't consume in adequate quantity. Best example, wearing of seat belt, wearing of helmet. How many of them are still doing in our country? Helmet. When police is there, then we will wear. Why? Fine will come. That's the reason. And we have photographers in Bangalore now. You want pre-wedding photo shoot now? Hey, police. You call any traffic police guy. He is a nice photographer. Even if you are coming at far place, he will hide behind and he will take photo. You will not even get to know he captured photo. Candid photography, You jump a signal, AI camera. Captured. Now, one of my friends was sharing me this incident recently. He is an assistant manager in Toyota Finance. And this guy usually uses a bike because in car, you cannot reach on time and all, work restrictions will be there. So, this the police guy, he has observed, I am wearing helmet. Let me say, following every traffic rules. But still, whenever this guy go, he will take photo it seems. First day he saw, he didn't say anything. Second day he saw, he thought maybe backside vehicle, nothing is there, only he is standing. Third time when he took a photo, this guy put his vehicle side, he went and asked, sir, why are you taking photo? I am wearing helmet, documents is there, I am not breaking any traffic rules, signal jump is not there, parking on zebra crossing is not there. Why? He said, where is mirror? Where is mirror in your vehicle? Mirror. When it is becoming mandatory, go check rules and come. Now, day. For that 3 times he has taken photo. First time only he could have informed. Unless and until this guy took back his vehicle, parked aside, went and dashed. He said, okay, chalo, I will put it, at least delete the photo. No, you are speaking about rules, na? You go. I will not delete. This is our country. When we look into police, now we should feel protected. But sometimes in my country, by looking into police, it is not getting protected. We should get protected from fine. That is why we hear helmet. Now see, mirror. If mirror is not there, photographers, Kechik, 1,000 rupees fine, not even 500. 1,000 rupees fine. Then I said for my friend, day 2 mirror will cost 300 rupees. For the 1,000 rupees fine. This was hilarious actually. So can't help it out. We are living in such country. We have to get adjusted or we have to change ourselves. Simple. Either pay fine or follow whatever dumb rules. See, first there was an IND plate. From IND number plate, they made HSRP. Now from HSRP, tomorrow they will change something new. You should check and follow. Again, 1,500 rupees. Nice way of exploiting. See, Bangalore garbage tax. Already unofficially you are paying 20 rupee, 50 rupee, 30 rupee for the person who comes and collects the garbage. Upon that, now BBMP started imposing garbage tax. Nice. See, business. You come. In India, we will show how to do business in various ways. Who said money is not there in India? Stupid fellows. Coldplay concert. Tickets, 40,000. Still stadium full. Come to RCB versus CSK match in Bangalore. 15,000 per ticket. Still high demand. Still, India is poor. Even 30% of salaried people income is not exceeding 3 lakh rupees per annum, statistics will say. But go, RCB versus CSK match. 15,000 per ticket, stadium full. People even are okay to stand and watch. Thala, for a reason, test match. Any Dhoni fans in the class? All the best. Chalo, we said the same in Chennai once. They are like, sir, Virat Kohli. Did I say I'm Virat Kohli fan? No. He is Test Match Pro Max. He is becoming a Test Match player. That's the difference. But still, end of the day, business is important. See, it doesn't matter for Virat Kohli whether we win or not. One Instagram post, 4 crore rupees. He will lose the match here, RCB versus CSK. Then he will come and he will open his Instagram. He will do one brand promotion. You go and open Instagram of Virat Kohli from past 1.5 years. You scroll it down. Any social event? No, only brand promotion. One post, 1.5 crore. If I win man of the match, how much? 1 lakh rupee. One single click of button, 1.5 crore. Business da. End of the day, ticket sales is important. End of the day, people have to come and fight here. Virat Kohli versus Dhoni. Hype is important because we need to earn business. Bloody, they are earning in crores. What are you doing? Concentrate on CA exam. So IPL is not important. Which is important. Marathon is important. But still, RCB versus CSK. Ee sala cup? Adru 30 varsha adru gelala. You know where to keep that lollipop after losing. This time that was the status. Nice status. See, and even they came up with a uniform. 2 girls were with uniform of 2016 and 17. Jail. You didn't understand, na? Good. See, man, RCB has played for 18 years. RCB has played for 18 years. That's an achievement. So, end of the day, business is important. What is important? We have to fight like this. That is when business improves. What is important? Vitamin M. Why do we conduct IPL? For entertainment. Business. One brand promotion. Left side arm. Jio. You know, you observe every team. 8 teams. Left arm. Upper portion advertisement only goes to Jio. When a right hand batsman comes and bat, the camera, what it will focus first? You observe all the team. Jio logo will come. Business. One brand promotion, just for 23 seconds ad during India-Pakistan match. I shared that review for them. One of my clients wanted to give. Man, 1.7 crore. 23 seconds ad during just only 3 hours. Business. But what are our students? India-Pakistan match. They are not fit for comparison also. Oh, India-Pakistan match. They play with Australia. You win. Their business will not come. Where business will come? That is important. Externality. Let's come back to externality. Positive externality. What is it? Positive production externality. What is it? See, there is something good is happening because of our production, because of our positive production externality. Next, positive consumption externality. What is it? Positive? Okay, let's take an example. Positive production externality. What is it? Positive? See there, a beekeeper locating the beehives in the orange growing area, or a firm which trains their employees, and once they leave their employment, they got advanced skills. Now he's going and working in a competitor firm. Let's say, for example, I will appoint you people in my firm. I speak corporate services, market research agency. I will train you people for 3 months. After that, I will say I will take you as an employee per month, 30,000 salary. What? 30,000 salary? Hey, sir, your competitor is offering 40,000. Where will you go now? Who trained you? Shashi Kiran. Who is taking advantage? Positive production. I produced it. But who is taking advantage? Third person. See, whether it is positive or whether it is negative, third party gets affected. Who gets affected? Parties to the contract will not get affected. Now I trained you. Contract is between Shashi Kiran and my employee. But who is getting affected? He is getting positively affected. That is positive production externality. What is it? Positive. Positive consumption externality. Sir, early morning I am going for gym at 6 o'clock. Sir, I am going for yoga class. My concentration is increasing. My working ability is increasing. Now you are working proper. Your productivity is increasing. You took the gym membership. Contract is between your gym owner and you. But your boss is getting positively affected. Work efficiency increasing now. You are doing good work. When like you, everyone start doing good work. He will buy one Rolls Royce next year. Your positive contribution. Third party getting affected. You work well, we will buy Rolls Royce. You work well, we will buy Ferrari. See, your efficiency, third party getting positively affected. See, positive consumption. What is it? Positive. See, positive consumption externality. And even taking COVID vaccine, another best example. Sir, I took a COVID vaccine. I paid money. I took the vaccine. Because of me, now disease will not spread to other. My personal expenses. I took this benefit. But let me say, outsider is not getting affected because of that. So, positive production, positive consumption. What is that? Positive production. Next comes negative externality. Which externality? Either negative production or negative consumption externality. Negative production. Bench example. I produced bench. River water getting affected. Production externality. Negative way. Negative consumption. Cigarettes. Alcohol. Now, sir, my friend is smoking. I am standing next to him. Passive smoking. He is smoking, but more than him, you will get affected. That is negative consumption externality. Which externality? Clear? See, if it is not attended properly, whether it is positive or negative externality, there is going to be a disadvantage to the economy. So, private cost, social cost, already we have discussed. So, what is the social cost? Private cost plus externality. What is external cost? The real cost of damages, which is to the society. Who will bear that? Always and always. Third person is going to bear it. So, conclusion. This is important. We need to give more focus on which externality. See, a competitive market will produce too much of, which is relative to the. This is a clear case of market failure when price fails to provide the correct signals. And whatever price you are buying the cigarette, that is not a correct price. That is spoiling the society. The bench what Shashi Kiran is selling, that is actually not a correct price. That is affecting the river. The prices are not showing the correct signals. That is failing because of externality. Because of what?
Externality.
Next comes public goods. Which goods?
Public goods.
Which is defined by Paul A. Samuelson in his book called as The Pure Theory of Public Expenditure, given in 1954. Now he said public goods means one which is everyone enjoying in common. One which everyone enjoys in common. That is called as public goods. See, mainly 4 differences are there that you should understand. Number 1, public goods will also create utility. Private goods will also create. But public goods are non-rival, non-excludable. What is it? Non-rival and? That means if you are using the road with the street light, if some other person, oh, I am using it, get lost. When I am using, you should not come. Can you say that? Non-excludable. What is it?
Non-excludable.
And when you are using, other person can also use it. Non-rival. What is it?
Non-rival.
They are non-rival, non-excludable, creates utility. The biggest problem of public goods is free rider problem. Which problem?
Free rider.
See, this is the biggest concern. What is free rider? Same, birthday treat of your friend. You will ask birthday treat with your friend. He will incur expenses. Who is enjoying benefit? You guys are enjoying a
Benefit.
government is incurring expenses, but you are enjoying a that is free rider because we are not willing to pay. We are not ready to pay. We don't want to pay. That is the problem with public goods. Free rider problem. Which problem?
Free rider problem.
And there is no additional marginal cost involved in public goods. Suppose if 10 people are using the road, if the 11th person comes, is there any additional cost to the government? No. But private goods, yes, already 20 people took admission. If 21st guy takes admission, now academy should also provide him a space. for invoice of material, for invoice of doubt clarification, faculty payment. There is an additional cost involved in private goods. Which goods?
Private.
But private goods are excludable if you don't pay the fees. Can you come and allow and sit in the class? No, excludable. And rival. Once they give a seat to you, it only belongs to you. Can they give a same seat to some other student?
No, sir.
They are rival, they are excludable, and there is a marginal cost. Even that will create a utility. That will create a, but you need to pay the price. You need to clear. Without making a payment, you can't use a private goods. You can't use a. But private goods are not collective in nature, but public goods are. And the most important thing is, public goods will not conform to the exchange of, will not get, let me say, conform to the settings of market exchange. That means they will not work based on demand and supply. Public goods will not work based on. But who will work based on demand and supply? Private goods. Whatever we just discussed in public goods are full opposite. See here, they have private property rights. Only you can use it. Your cell phone. Can anyone else come and use it? Hello, it belongs to me. Only mine. Only I will use it. Private property rights. Clear? Rival. Excludable. There is no free rider problem. If you don't pay, you can't use it. And there is an additional resource cost. What is there? See, these are the difference between private goods and public goods. Pause it here, especially the students who are watching in YouTube in future. Read these ones. Clear? This is the main difference between private and public goods. Now, the biggest problem of public goods is free rider problem. That means people are not willing to pay. If everyone follows the same thing, then no one can get the advantage. You guys have to at least express your willingness to pay. Now, how much is demand? Only when I understand how much is the demand, then only we can produce, then only we can supply. But people are not willing to pay. They're not expressing their willingness to buy. We don't get to know the exact demand. In that case, now government can only provide a goods which are considered to be excludable public goods. Which goods? Okay, national highway, best example. I know, while purchasing a vehicle, you have paid a road tax, lifetime road tax, but still toll charges. If you want to use it, Bangalore-Mysore Expressway, you don't want to use it, service road. Now, every 100 meters, one ump is there. And go inside every city, get disturbance, stuck in traffic and come out. You want the speed services? Toll, excludable public goods. What is that? Since government has one of the biggest trouble, public goods are non-excludable. No, they will not provide it. They will outsource the work to private. They will. Private people will get tender. They will create that road infrastructure. To maintain that road, now they will collect tax. See, excludable public goods. Which public goods? See there. If no public goods will be provided by the private market because of free rider problem, public park is an example. If I create a park, I should give it for free. People are not willing to pay. Who will pay the maintenance charges then? We don't provide at all. See, no public goods will be provided by the. And private markets will intentionally underproduce the. Even though such goods provides a valuable services to the society. Next comes the last but not the least, incomplete information. What is it? What is that incomplete information? First, understand what is complete information. Buyer and seller both have a complete knowledge about the transaction or what they are entering into a services or goods and service purchases. If one party has full knowledge, other party does not have a full knowledge, that is incomplete information. Which information?
Incomplete.
Best example, second-hand car transaction. The second-hand car dealer, seller knows what all defects are there, whether car is good or not, but will the buyer know about it? This is incomplete information. Which information?
Incomplete.
One party to the transaction has full information, other party to the transaction does not have a full information. End of the day, buyer will choose a wrong car and he will end up buying a problematic car. That is called as Nimbe Hannina Tondare, problem of lemons. What is it? See, that is the first one, asymmetric information. Get ready, from this you will get questions. And this time the question has come from asymmetric information. So what is asymmetric information? Very simple. One party has more knowledge, other party has a. And especially in asymmetric information, defective goods. Which goods? Will override the good quality goods. Defective goods will override the. Now let's say for example, whichever car you go and select in a second-hand transaction, by and large you will feel that there will be some hidden defect. There will be some. Irrespective of whatever the car seller says, oh, this car is amazing, you just press that button, it goes like rocket and all. Still, you know there will be some hidden defects now. You will always value the car with some hidden defects and you will try to reduce the price. Assume, if there is one genuine car coming into a market, even you will value the genuine car in the highs of defective cars. That is called problem of lemons, because markets are only flooded with Lemons. Lemons refers to defective cards. Which cards? See there, asymmetric information occurs when there is an imbalance in the information between buyer and when the seller knows more than the buyer. This is the situation in which one party to the transaction knows more material facts than the other party does not. And the phenomenon is referred as a lemons. It is an important source of market failure where an asymmetric information, that is about the information about low quality goods, can drive the high quality goods out of the market. Even if high quality goods comes to the market, people will not value them properly. People will not. Okay, let me give one more example. Insurance example. Let's say a person who is not having a good health, he will come to take up insurance. Now insurance company should charge little extra premium na. For sure, one or the other day this guy is going to get hospitalized, I have to pay the bill. Now let's say a healthy person will also come, unhealthy person will also come. If insurance company charges same premium for both, now healthy person will say, stupid fellow, he is having defect. You charge more price from him. Logic is there. I am healthy fellow na. After listening all finance class and all, insurance is mandatory, insurance will protect our life and all, I thought of taking insurance and you are exploiting me. Now will a healthy person comes and buy insurance? Adverse selection. What is it? That means insurance company is not selecting their customers rightly. They are making an adverse selection. What are they making? Adverse. They are treating healthy customer as well as unhealthy customer as same, and they are treating both of them in equal highs. That is a wrong selection. What is it? See, adverse selection is a situation where an asymmetric information about the quality eliminates the high quality goods from the market. Good customer is a high quality. Health issue customer is a low quality. He is treating both of them are same, charging both same premium. Now healthy customer, why will I come and buy insurance? Get lost, I will not even come. That is the problem. Suppose if any good car comes to the market, are you valuing good car in a good proportion? You are treating even good car in the proportion of a bad car. You are not valuing the good car in a right manner. You are also valuing a good car in a bad car manner. Wrong selection. What is it? Adverse selection. That is the second type. First one is asymmetric. What is it? When one party has a knowledge, other party does not have a, he will end up taking a wrong decision. That is called as asymmetric. Adverse selection. When we treat both in the same eyes and we choose a wrong one. When we choose a that is adverse selection. What is it? Adverse. Next comes moral hazard. What is it? Okay, let's continue the same insurance example only. Okay, let's say for example, a person got insurance. As expected, he got hospitalized. Now that person is least bothered whether doctor is going to use a simple procedure or a complicated procedure to treat my problem. Why should I worry? Who will pay the bill? Insurance company. I am least interested because of unobserved actions. Because of unobserved. A informed person, that is a doctor. Doctor knows very well which procedure he will do, which procedure he will not do. An informed person taking advantage against less informed person, that is patient. Less informed person is more informed person is. Now doctor is taking advantage because less informed person is not paying the bill. The cost of this less informed person is taken care by some other one. That is insurance company. Now doctor will intentionally increase the procedure, unnecessary tablet, unnecessary MRI scanning, unnecessary X-ray. Now insurance company will say, why should I pay for this, all these unnecessary things? What was his problem? Cardiac. Why did you take brain MRI? What is the problem? Cardiac. Heart related, I will pay. Why did you take brain MRI? Oh no, maybe clot is coming from brain and going stuck in heart. What is the problem? Heart. Anything related to heart, I will claim. Anything other than heart, sorry, I am not responsible. This actually happened in India. All big multinational hospitals and all, they unnecessarily charge higher prices, knowing that insurance is going to pay the, insurance company will pay the bill. Insurance company rejected claim. Now customer should only pay. Why? You didn't observe the actions of a more informed person. That is why now less informed person, you are under liability. You are under a moral hazard. What is it? Straight away come to example. See, and insurance companies are likely to take a greater, knowing that claim will be paid by the insurance company. The more one's costs are covered by the insurance company, less a person will care whether a doctor charges a excessive fee or use an insufficient or a costly procedure for a health care. This caused the insurance premium to raise for everyone. Whoever comes and takes insurance, for everyone premium raised and driving many potential customers out of the market. Why will a healthy person pay more price? Now I will go out of the market. Now this became a big issue in India where health insurance provider and big private hospital came into a conflict, and this issue was resolved by putting place a third party administration, that is IRDAI. What is it? Insurance Regulatory and Development Authority of India. So medical claims got rejected. So in short, what is moral hazard? When a one informed person takes an advantage against a less informed for his unobserved actions. So you can expect a question from any of this, either from asymmetric information, either from adverse selection, or a moral hazard. Because of this information imbalance, markets will fail. Markets will. So these are the 4 reasons for market failure. How many reasons are there? Which are those 4 reasons? First one, market power or monopoly power. Second one, externalities. Third one, public goods. Fourth one, incomplete information. Incomplete. Now, whenever there is a problem in the market and markets will fail, now government has to intervene. Who has to intervene? In order to correct such market failure. In order to correct such. Now, there are 5 important aspects we'll be discussing in intervention of government. Number 1, correcting the monopoly power. Already you guys are in monopoly power. Now government will intervene, come up with rules, and I will not allow you to become a monopoly. I will decide everything now. Second one, correcting the. Next, taking advantages for merit and, in short, correcting the market failure in public goods. Next, correcting information. Last but not the least, equitable distribution of income and same story. Collect it from rich and give it to poor. This is not at all that great. It will hardly get over in 2 minutes. Don't worry. Main is first to 4. Clear? Minimizing market power. See, where there is a monopoly power, you are exploiting. Either you will underproduce goods and sell it for higher prices. You are exploiting people. Now, what will government will do? Come up with the competition-based regulation. See, we come up with something called as Competition Act in India. Under this Competition Act, you need to be regulated. You have to update everything to government. CCI is there, Competition Commission of India. Under that, you will be regulated. 2 companies getting merged, one taking over another for advantage or to create fair competition in the market. We will scrutinize. Then only we give you permission to merge. Now, what often idea got? Merged. In order to compete against Jio. That means you are not creating monopoly there. Suppose tomorrow Zomato, Swiggy merges. Monopoly. Ola, Uber merges. Monopoly. That is unfair competition in the market. No, we don't allow. Like this, restrictions will be imposed. But I will give you exclusive right. I will give you only in case of inventions and innovation, which comes under patents and copyrights law. You invented something, only you should use it. No one can else use it. Only there I will give you protection. Now, earlier, listen to this carefully once the question has come. This actually comes in chapter 10. Let me connect it here only. Before Competition Act 2002, in India, we had something called as MRTP Act. Which act was there? Monopoly and Restrictive Trade Practices Act of 1969. Under MRTP Act, there was MRTP Commission. What is it? MRTP? We were not allowing any private players to become big. Or you want to expand something, government permission. You want to invest something, government permission. You want to do new business, government permission. Like this, we were restricting the private entities to become big. Restricting the private entities to become big. Clear? Later, we scrapped this both and we created Competition Act in India. Under Competition Act, now we have CCI, Competition Commission of India. What is it? Clear? Now, we are bringing rules related to competition along with that other measures. See, market liberalization. Going further, we are reducing rules and regulation. We are making more and more easy access to the private people also. And we are controlling on all mergers, acquisition, price capping and price regulation. You can't charge unnecessary higher prices and all. And also, consumer associations are given more importance and restrictions on monopoly power. Which power? Monopoly. Only single buyer. You cannot sell only for just single person. You have to sell it for even others. And reduction in the import control. And if you don't listen any of this, Brahmastra, nationalization. I will take the control. Government can only do it. You can't do it anymore. Nationalization. Only and only government will do. Next comes government intervention to correct externality. What is that? Government intervention to correct? For us, the biggest headache is negative. We need to control negative externality and we should encourage positive externality. Encourage which externality? And control which externality? Negative externalities. Now, sir, how do you do that? When there is negative externality, impose more taxes. When there is positive externality, provide subsidies so that production will get encouraged. Consumption will also get encouraged. Clear? Now, this is important concept. From this, you can expect more questions. See there, we need to promote the overall well-being in the economy. Social returns should be maximized. What is it? Returns means positivity. That has to be maximized. Cost means disadvantage. That has to be So for the two types of control government has brought in. Number one, direct control. Second one is market-based control. So what is the direct control? In this, especially the second one, market-based control is important. First, let us understand direct control. Straight away, government will come and prohibit certain things. You should not do that. You should not do this. Smoking in public places, ban. What is smoking in? Hey, in country, is anyone smoking in public in front of any bakeries and all? Have you ever seen any person smoking? No. Banned. Smoking in public places. Banned. See, prohibited. What is it? Prohibited. See, smoking in public places banned in many public places, and there is a stringent rule in the place of restrictions on tobacco. Tobacco. See, on packet we have seen cancer. It will lead to cancer. Whenever in movies some hero starts smoking cigarette, in the bottom advertisement or the small warning will come. Nano Mukesh. Now Mukesh has been updated. Now Prakash. You go to movie. Now Mukesh will not come. Now Prakash will come. His uncle. Now advertisement. I was Mukesh. I was chewing tobacco from so many years. If at all we squeeze our lungs, so much of tar will come. But still Indian roads are potholes. Shortage of tars. Next. See, next up. Government may pass. What is it? May. What is it? May pass laws related to affecting the negative externality. What is it? Consumer Protection Act. Same way we have Environment Protection Act. What is it? And environment standard has been brought in. That means protection of environment is important. Now Hyderabad, Telangana, full forest area protected for tech park. Next. Government may. What is it? Government? Fix emission standard. Now they will only say how much you should emit. See, I know you should produce. Emission will happen. I will say how much to pollute. How much to emit. Next. Government can charge which fee? For emitting, let me say, pollutants into the water bodies or anything, air bodies, something. And see, special bodies have been created in the form of Ministry of Environment and Pollution Control Board of State Pollution Control. Now they will be responsible to control pollution because of externalities and all. Negative externality has to be controlled. You give under the table, they will not come to your office. If you don't give on time under the table, they will come and seize your office. Next. Government may limit. What is it? Government? Certain pollutants related into the water and air by individual firms and making them to mandatory to use a pollution control. That means, hello, take out all the chemicals, whichever is harmful, and release the non-toxic one into the river. Who will do that, sir? Get lost. In front of you will say yes. And go, River Yamuna in Delhi, have you seen? Foams are coming out, No, sir, snow. Many people misunderstand. Hey, that is chemical waste, And Clean Ganga initiative. See, our people went to Kumbh Mela. See, we have a very ancestral practices. You need to remove your clothes and all and do it, let me say, leave it into the day. Pollution, And still, government is spending lot of money on cleaning activity. There is one, sometimes we can't educate people. Highly impossible. In India, fooling people is easy. Educating people is highly difficult. You tell him whatever clothes you are wearing, when you go and dip in river Ganga, leave the clothes and come there only. Your sins are gone. Tomorrow everyone will do it. You say, if your sins has to go to river Ganga, clean river Ganga and come. Let my sins be like this only. See, we have a very beautiful religious sentiments. Affecting environment, superb. Cleaning environment. See, that is what sometimes we live by emotional, sentimental dialogues and all. Now, regular class, you have seen it. Chalo. Government may insist. What is that? Government? Polluting firms to install pollution abatement mechanism to ensure adherence to the emission. That means there is a device. When you are polluting, it will count how much of pollution, how much of liters of pollution has been gone out. Based on that, tax will be levied to you. If you are emitting more tax. Emitting less tax. Now that becomes your private cost. That machineries and all will be huge cost. Clear? That is direct control. Which control? Next comes market-based policy. Which policy? Market-based. In that also two types are there. Number one, pollution tax or environment tax. Number two, cap and trade system. What is number two? First one? Pollution tax. So this concept of pollution tax was introduced by A.C. Pigou. So it is named as a Pigouian tax. Which tax? Now Pigou said, see you call them all these polluters, sit them, make them into a discussion, enter into contract not to pollute and all, they will not listen. They will say yes in front of you. Next, they will definitely pollute it. So kindly impose a tax on externality itself. If they want to come for a license, huge tax. On every single unit they produce, Huge tax. Now they have only two options. Either reduce pollution, pay less tax. If you're producing more, pay more tax. Now simple, on every production tax, every sales tax, every place you impose that. Now tax brings revenue to the government. So this is called Pigouvian tax. See, we are making polluters to pay. What are we doing? Polluters to. And the size of tax depends upon the amount of pollution the firm produces. See, Pigou argues that externality cannot be controlled or alleviated by contractual negotiations and all. So the affected parties and therefore tax should be applicable. And the tax is placed on an externality itself. What is that externality itself? The amount of pollution that is emitted rather on the number of output that you produce. And each unit of the pollution, now the polluter must choose either to pay more and more taxes or to reduce the pollution at his disposal. Now tax increases their dash cost. Automatically selling price will increase. And problems are there with respect to tax also. If you keep on putting tax like this, if the demand is inelastic, what is the demand is? Inelastic. Okay, madam, what is inelastic, madam? Hello, wait.
Relatively.
Yes, ma, relatively inelastic.
Relatively inelastic is
What da? Greater than one, na? Inelastic. Apa? What does that mean? The meaning? What does it mean?
Amount of quantity demanded is smaller than the amount price.
That means price increases more, demand decreases less. Alcohol, cigarette, even though price goes up, rather than buying 5 bottles, now we will buy 4 bottles. Will not stop buying at all. That means if the demand is inelastic, increase in tax will have an insignificant effect. Which effect? Because a customer will not going away. He will come and he will buy. As a producer, I will push that burden of tax from producer to consumer. I will increase the price. He will pay the tax now. And if you keep on increasing tax like this, one day the companies will say tata bye bye to your country. They will go to some other country where tax policies are not that strict. Now GDP of your nation will decrease because production inside domestic territory by Indians, by MNCs producing in India, already category A, category B, we learn na. Employment also gets affected. And identifying the right level of tax is a challenge. Okay, what is that right amount of tax? So that private cost plus the tax equals to social cost. Identifying the right amount of tax is a challenge. See, it is difficult to discover the right level of tax. What is it? So that private cost plus the tax is equal to a. Suppose if the demand is inelastic, it will have an insignificant effect to reduce the demand. And moreover, the product of tax burden gets shifted by paying a higher prices, and that will lead to a inflation. And this taxing the polluters may have many limitations. One best example, administration cost. Now government has to establish CBDT, Central Board of Direct Tax, Central Board of Indirect Tax and Customs, one more department, for them employment, for them stay, for them all government facility. Administration cost will also increase, and this method does not provide any genuine solution to the problem. It will only just create another incentive system to only less the polluted, and pollution tax will have a potentially negative consequences on dash and investment. Now the polluters, if they don't want, they will say tata bye bye to your country and they will go to some other country. These are the disadvantages of charging tax. Disadvantages of what? Charging. Next comes cap and trade system. Which system?
cap and trade system.
Now simple. Now government said, okay, pa, if at all I levy tax, tax is a problem. We'll do one thing. We'll give a license. What do? We give a. If you need to produce goods, you should take license. And I will intentionally give lesser license to you. Suppose, let's say for example, steel manufacturing. Now, if you need to produce some 1,000 tons of steel, you should take 10 license. How many license?
10 license.
Clear up. That means for every 100 tons, you need to get 1 license. For 1,000 tons, 10 license. Suppose a person is asking for 10 license, I will give only 7. Like that, for everyone, I will create a shortage. And I will say these are tradable license. Which license?
Tradable license.
If you want, you can use it, or you can sell this license to another person. Now, who has a brain, Allah, he will not produce goods. He will sell this license and he will make nice amount of profit. Now, let's say for example, now Praveen, he wants some 20 extra license. Shashi has some 30 extra license. He will come and approach Shashi. I will charge exorbitant price for that license. And I already made profit now by selling a license. And I will use some another 10 license to produce goods. Intentionally, I will sell my products at lesser cost because already I made a supernormal profit here. No? One way, my product price is less. Customers gets attracted. Another way, I already made a profit by selling a. Now, Praveen, who bought license, he can't sell it at lesser cost. He has to sell his product for. Automatically, in terms of competition, he has disadvantage. Now he is producing more, he is polluting more. For that, he is paying more money to get license. Cap and trade system. What is it?
Cap and trade system.
This is like trading with the license. Trading with the one who sells the license will stand in the advantage rather than one who buys the license and produces goods. By this, we can control pollution, is what government thought. Just assume all the steel producers create a cartel. They will create their own firm, association, like Pushpa. And they will collect all the license and they will start doing business between themselves. Now, this entire cap and trade system will fail. That will not have a significant effect at all. So, that is the entire system of cap and trade. What is it? See, they are tradable, transferable, and allows only fewer permits than the free permission level. And there is a permits to trade, and that will create a positive cost. Which cost? See, a higher polluter has to buy more permits, and that increases their cost and makes them less competitive and less profitable. Now, the lower polluter will get an extra revenue by selling the surplus permits, which makes him more competitive and as well as more and more. How more competitive? Because this product he will sell it for lesser prices. Huh? Customers get attracted, and he is more profitable by just selling the license. And in India, presently, we are experimenting this cap and trade system with various schemes. These are the schemes. Clear? And this can be a question in form of which among the following is a cap and trade system scheme followed by India, or which among the following is a scheme not followed by India. They can be a question. So kindly read them. What are the advantages of following this? Administratively cheaper cost. I need not to spend more money from the government, and it is more flexible and rewarding the efficient people who is not polluting, and administratively cheaper. It provides a strong incentive for innovation. If you don't want to pay more taxes, more license, innovate. Don't pollute. Innovate something and then you come up with. And also, customer may benefit with extra profits in the form of lower firms selling them with a lower prices. They are selling for a lower prices. Now, arguments again. They say that, see boss, you are not controlling pollution. You are only giving license to pollute. End of the day, if they create a cartel, if they create a monopoly power or association of some degree, it will have an inelastic demand. Which demand? Inelastic. And it doesn't matter when whatever charges they make, higher charges, they will pass it on to customer. They will pass it on to whom? So these are the effects in case of negative externality. Which externality? Negative. Now let us understand from positive externality. Which externality? Positive. See, what is the consequences of positive externality? One which brings benefit. We will underconsume them. What do we do? Even if you underconsume a good things, that is also called as market failure. What is it? So what government has to do? Government has to provide subsidy either to producer or subsidy to the. So government is giving more subsidy to producer now. Subsidy to whom? Producer. Whenever you give subsidies, cost of production will decrease, selling price will. He will make more and more production and more sales. Once cost of production goes down, selling price will also. When selling price goes down, my people will buy more and more units. That is how we tackle positive externality, especially in terms of public education, healthcare, fundamental research, and sometimes government will only come intervene, government will only do it, afforestation, reforestation, production of water bodies, treatment of sewages and cleaning of toxic waste sites. Next, government intervention for which goods? I said private consumption brings dash benefit, public benefit. Private consumption bringing which benefit? See, private consumption, that means it is a private good. They are rival, they are excludable, they are limited in supply. What is it? Now, let's say, for example, ArivuPro is conducting free marathon classes. Can I call every person from India and make them to come and attend? No, only limited seats are available. Rest remaining people kindly watch it in online. Or YouTube upload will happen. You can watch it there. In physical face-to-face, limited. What is that? Limited. Next, they can be rejectable if the person is not willing to pay. Suppose if you don't pay the fees, can you come and attend the class? If you don't pay the medical bill, will doctor come and treat you in hospital? No. Next, this involves positive marginal cost for supplying for extra users. Just assume 10 patients are there. If 11th patient comes in, extra bed, extra nurse, extra doctor services, additional cost is involved. Next, substantially positive externalities are involved in consumption of dash goods. Consumption of? See, merit goods can be provided through the market, but they are likely to be underproduced or through the market mechanism, that is demand and supply. So social welfare will not be. Example, education, healthcare, welfare services, housing, fire protection, waste management, public library, public museum, public. Now who should involve now? Government. Now government should only provide all that education, healthcare, facility, public parks, so that merit goods has to be encouraged. Merit goods has to be, see, first government will come up with rules and regulations. Second, they will provide a subsidy. If things don't work, government will directly provide and combine with the government provision with market provision. They will say we will join hands with private and we will only provide it. See, first I will give encouragement to private people to produce that by giving subsidy. If they don't listen, I will only come, I will only produce, I will only provide. If not, we both will provide together. We both will. See, examples. See, wearing up of helmet, seat belts, and right to education, free and compulsory education up to the age of 14 years, and all this will come here. See, merit goods are directly provided for free of cost by whom? Free of cost by government. Like all this public hospitals will have a treatment for various diseases, hepatitis B, HIV. For all this, free treatments are there. Next, government intervention in case of which goods? Which are socially undesirable. What is it socially? Which creates a disadvantage. What does it create? So, which are socially undesirable goods. Which goods socially? We need to discourage the consumption of demerit goods. Alcohol, cigarettes, that will affect the economy. Na? How do we do this? Demeriting them. Additional taxes. What is it? See, demerit goods are goods which are believed to be socially undesirable. Generally, consumers will not be the best judge of welfare. You go and ask any drunkard fellow, he's drinking good. Hey, Amruta idu. Amruta. It doesn't matter whether I am at my home bed or whether in Kochemori. We will get nice sleep. See, people will not judge it properly, and consumption of demerit goods imposes a dash externality on an entire society. As a person will drink alcohol, he will go stand and will start screaming in front of home. Everyone, all public place gets disturbed. Next, government should therefore intervene in where? Market, in order to discourage the production as well as of demerit goods. But sometimes, if at all you totally ban it, that will create a black market. That will create what? Best example, Gujarat, dry state. Recently, one of the law students you saw going and hitting a car, spot out 3 people and coming out and saying Jai Shri Ram. See, in India, we are a secular country. Unity and diversity. Next, cigarettes, alcohol, intoxicated drugs, etc. The price of the consumer which pays for a packet of cigarette is dash determined. It does not. What is it? It does not. For social cost arises due to. And however, we should keep in mind that all goods which are negative externality are not essentially demerit goods. Iron and steel. Definitely when you produce a steel, it helps in construction. That definitely it produces smoke. Externality is there. But I cannot call it as a demerit goods. I cannot call it as a clear. But no doubt pollution is there. Externality is there. Next, government intervention to correct market failure in terms of. So what government will do? Number 1, government will straight away ban, especially drugs, intoxicated, all such things. Trading, possession. What is it? Trading, possession, consumption is made it totally illegal through persuading, which is mainly intending by negative advertisement. Mukesh advertisement. I was Mukesh, unable to live because of cancer. Doctor tried saving me, unfortunately unable. In India, whatever you de-promote, that becomes more demand. And that too when government does it. What a beautiful effective advertisement. Next, through legislation. What is it? Through rules and regulation. We will restrict, prohibit advertisement, promotion of demerit goods in whatsoever manner. We believe. Seagrams, Imperial Blue, men will be men. Music CDs. I have never seen in my life Seagrams as doing music CDs. Till date, everyone knows Seagrams is an alcohol brand. That lift advertisement you would have seen. Some big tummy, 2 uncles will be there. One girl will enter. Now automatically tummy goes behind. Once she leaves, tummy will come out. Men will be men. Seagrams, Imperial Blue, music CDs and sodas. And music CD. They I've never seen in my life. See, whatsoever man. What is it? In books we will learn this. Whatsoever manner. Next, strict restrictions on limiting the access of such demerit goods, especially for vulnerable groups and children and adolescents, especially the one who's in puberty stage, from the child and becoming adult, especially from those ends. 100 meters from schools and colleges, tobacco free. Come in Bangalore, opposite to college, only bakeries there. In book and all, full spatial restriction. Next, imposing higher taxes on production, purchase and marketing and making it very and unaffordable to many, and will bring tax of how much? And also will bring in minimum price below which, what is it? Minimum price below which demerit goods should never be. This should be the minimum price. Beer bottle, how much is manufacturing cost? 80 rupees. How much are you planning to sell? 120. No, 180 you should sell. How much? Minimum 180, minimum 200, below which you should never sell demerit goods. They will bring minimum cost for demerit goods, below which it should never be sold. Next, when government fixes the minimum price, below which demerit goods should never be exchanged, reduces the consumption of, we will believe it. First of all, inelastic demand. Instead of buying 5 bottles, he will come and buy. Money spent is same only. There is no difference. Next, demand for demerit goods such as cigarettes and they are highly. So there is an increase in price resulting in additional taxes causing less than proportionate. That is what inelastic. Now price increases, more demand decreases, less. Seller will always shift the tax burden to customer without losing a. And suppose if you totally ban, by chance if at all you do total ban and all, demerit goods will come under a dash market. Smugglings will start. That is another problem. So government intervention in case of dash goods. What is public goods? Non-rival, non-excludable. What is the biggest challenge of public goods? Free rider problem. Already explained. Now government will only and only provide excludable public goods with the provision of entry fee, and government will give the license to the private firms to build a dash facility, public good facility, and only will be entering with the payment of entry fee. If you are not willing to pay, then no. And I will issue license to private people. I will keep a strict watch on that license, how much fees to charge, what all private has to do. That is how we will concentrate on demerit goods. Public goods. Which goods? See these 2 points and this last point. This is important. Clear? Since it is non-rival in nature, now government cannot strongly impose a entry fee. They cannot do it. So they will outsource the work to private. They will outsource the work to whom? Now comes, this is another important area. Questions are coming repeatedly, especially price floor, price ceiling. What is it? Price floor? Where is the floor? Below. Where is the ceiling? Price ceiling means maximum price that you can charge. Price floor means minimum price that you should be charging. Minimum price it should be. See, usually price floor. What is it?
Price floor.
Will go for agricultural products like minimum support price. Which price? Especially for agricultural goods. Which goods? See there, now a farmer who is growing a tomato or who is growing whichever, carrot, whatever. Now government will say, don't worry, pa. In market, if the price goes below, demand and supply price goes
Below.
Let's say 1 rupee per kg tomato, 2 rupee per kg onion and all, I am there. I will buy it from you. Minimum I will pay 10 rupee. Minimum I will pay 10 rupee. Minimum support price. Let's say food grains. Now government is assuring minimum I will buy it for 150 rupee. In market, if the rice, all that pulses prices goes below 150, don't worry. I will pay how much? In the market now it is 75. But government has assured how much? That is minimum support price. Price floor. What is it called as? Price ceiling. Maximum price that you can charge in the market. Now I know that day by day pulses, cereals prices are increasing. But Pava, middle class people in my country, their income is not even exceeding 3 lakh rupee. Moreover, 50% of population is agricultural income. So agricultural income is tax free. So you can't afford. So you have to sell at this price. You can never go beyond this. You can never go. See, maximum price that you can charge is 75. That's it. Even if the market price becomes maximum, you can charge is that is price ceiling. Beyond which you can't charge. Clear? This is price floor and price ceiling. From this you can expect a question. Clear? Next comes government intervention to correct dash failure. Market failure through incomplete. Now government is making mandatory. Government is making what?
Mandatory.
Accurate labeling and content disclosure of the product. Accurate labeling and see on cigarette packet we will mention it. Cigarette causes cancer, injurious to health. Sir, on packet, not on cigarette. So people are like this, ignorant. And see, nutritional information has to be mentioned in the food packets. Who will see backside and all, sir? Front is important. Katrina Kaif coming and holding mango, falling of droplets is important. Who will think how much of sugar is there? Are they using palm oil? Are they using any kachada water in that? Hey, don't want. Katrina Kaif photo is there enough. See, our people, content disclosure. See, nutritional information on the food product. Next, SEBI has made it mandatory to disclose information on financials. Who is your promoter? What purpose you are taking money? IPO. On what all you will do investment. Complete information in disclosure in prospectus. Where it is? Next, public dissemination of information to improve the knowledge of public. Now you would have seen this advertisement. RBI is giving advertisements and sending messages. See, banks will never ask for OTP. Banks will never call you. Public dissemination of information, creating awareness. Now all these fake calls like police, judge and all. Now see, caller tune itself is coming. Don't believe if anyone calls you like a police or let me say online digital arrest and all. Don't believe it. There are fake calls. There is no such online procedure. Now see, public dissemination of information. What is it? And next, regulating the advertisement and setting dash standards, advertisement standards to make advertisement more and more responsible, informative and dash persuasive. See, less misleading. I know it will be misleading. Without misleading, we can't advertise, but we'll make sure that it should be or like stronger, sharper. Have you ever seen any person becoming taller, stronger, sharper after drinking Horlicks?
Sugar.
It's not tayari jeet ki, tayari diabetes ki. That is how literally the products are. But still, taller. Complan. I have never seen in my life the person after drinking Complan, he has gone on height. Boost is the secret of my energy. Virat Kohli got 10 crores for brand ambassadoring. Dhoni got 11 crores. Sachin got 4 crores. And do you really think Sachin, Dhoni, Kohli will drink Boost? And you drink Boost, you will one day become Boost. That is what in reality. That our people have to understand. One who does the brand endorsing, he will never use that product in his entire life. But who is using it? Middle class people like you and don't include me. People like all our society people. See, so that is the reason we created awareness in Instagram and all. And people, in that also they have doubts. You should see the comment section in my reels. Amazing, that is next level. People will be tuppifying. Oh, fake information. I said, see, there is something called as used clothes. They will collect from all the deceased persons. They will refurbish it. And that is when you will get all deep discounts, 1,000 rupee, 5 sweatshirts, Korean t-shirt for 150, 200 rupee. These are refurbished clothes. It's not a original cloth. What's the problem? Offer is important. Go die off. See, in India, information has to be provided and then you have to sell. Refurbished. 1,000 rupees, 5 sweatshirts. Big line will come to buy. People don't even know the quality of it. Used or fresh. And they will say, directly from manufacturer. Directly from. So I got all that comment. So I did one thing. Did proper research. Where it gets rewashed. Everything gets dumped. Including that video next reel I posted. Now people don't have voice. Now they understood. There are few things about totally misleading. Totally misleading. See, less persuasive. What is that?
Less persuasive.
That is what. We are not saying that it will not be of full information. Less misleading. What is it? Here, books only will agree for it. Next, government intervention for equitable distribution of income and wealth. So what is that? Collect it from rich and give it to the poor. Progressive tax system. And budget has to be allocated in a proper manner. And unemployment. See, Karnataka government, full on strict way they are following. Transfer payment, unemployment compensation, subsidy we will think. Next to social security, religious basis, cost basis. Based on that we will allocate funds in the budget. Job reservation. Hey, this is important tool in India for election. No, if anyone has the guts, let them remove this reservation system. Let's see. Never. What will not come? Next, land. Reforms, tiller is the owner of the land, zamindari system, mahalwari system, raitwari system that was abolished. Gender sensitive budget. This is one big scam in my country. What is it? Gender. Protection of females and childs from harassments. POXO Act, best example. What is it? POXO. Heard, like that, there are many laws which is related to women and children related. There is something called as women rights. There is something called as male rights, but no one knows. What is it? No one knows. There was some comedy now. Women and children are loved unconditionally, but men are always loved with the condition. Salary. Comedy was very So no offense to any females in the class. That is how our constitution of India is. You raise a voice against a female, there is 100 laws will come. You raise a voice against any male, no laws. There was one video which went viral in Karnataka now. One of the High Court judge, he openly made that statement. I should not give that example. How our constitution works for a complaint raised by a female and complaint raised by a male. One incident he took. One vague door incident, bath incident. He took that one incident. If the female files a case, immediate action, FIR, everything will happen. If the same complaint is raised by a male, leave about inquiring. FIR will also be not filed. Constitution of India and gender sensitive budget. See, what is that? Equitable distribution of income and wealth. Clear? Now, sometimes government should know where they should intervene and where they should not intervene. Suppose if government intervenes in a wrong place, sometimes rather than solving the problem will become much more bigger. Much more? So that will create a much more additional problem. So government has to think, always have to understand the possibilities of positive effect and negative effect. And also government is trying to combat which economy? Black economy, and all this has to be controlled. So government, you have to be very careful. See, there is a cost and benefits, that is advantages and associated with any government intervention in the market, and there is important that policy makers should consider all the costs and benefits of a policy intervention. Sometimes government failure, which failure? Where government intervention in the economy, instead of correcting the market failure, that creates a inefficiency and leads to of scarce resources. Even after government failure occurs, when intervention is ineffective, causing wastage of resources, expanding of the interventions, and intervention provides fresh and even more consequently serious. Now that will create a new problem after government intervention. So government has to be very careful before intervening. Clear? Understood? This was chapter 7, unit 2. Done with details. Should I go with the same thing or should I increase the speed? Increase the speed, huh? Same, huh? But get ready till 8 o'clock class will go. If this is the speed, definitely class will get extended. That is for sure. Clear? What is the time? Already 1:10, nah? Chalo, take a break. Have your lunch break, 45 minutes. Come back. We are starting on dot at 2 o'clock. On dot at 2 o'clock. Clear? No, she's 2 o'clock. Another 5 minutes extra break. She's full happy already. Okay. So before the break, we had completed with chapter 7, unit 2. Now let us get started with chapter 7, unit 3. That speaks about the budget. That speaks about what? Budget. So when we speak about a budget, we are going to understand mainly from the central government's point of view. Which part of view? See, even the state governments will prepare their own budget. Even the local authorities will have their own budget. See, remember, budget is a financial blueprint. What is budget? Financial blueprint of anticipated incomes and anticipated expenditure. What is it? Budget is a blueprint of what? Anticipated incomes and anticipated expenditure. Remember, budget is always and always announced on 1st of February every year. 1st of February. So the recent budget was announced on 1st of February 2025, which creates an anticipation for the upcoming financial year. Which financial year? That is from 1st of April 2025 to 31st of March 2026. What is that income the government is going to receive from all the various sources, and what are the expenditures that they are planning? And it is only an anticipation. What is it?
Anticipation.
And this is the main important aspect of a budget, which they provide anticipation for the upcoming financial year. What is it?
Coming financial year.
For the upcoming financial year, there is going to be an anticipation. What is there?
Anticipation.
Now, along with that, for the ongoing financial year, that means when we are announcing on 1st of February, still 2 months is left out in the current financial year, right? February and March. In case of any revision, revision, even they can make any revision for the present financial year. That means which has started from 1st of April 2024, which goes up to 31st of March 2025. Clear? So there is going to be a revision, and there is also an actual value. Which value?
Actual value.
For the past financial year. Which financial year?
Past financial year.
Which is already completed. That means already we have dusted. So what is the actual income that we have earned, and what is the actual expenditure we have incurred? They will give the actual values. Which values?
Actual year.
For 1st of April 2023 to 31st of March 2024, there will be actual. But the most important data which we will be looking out for the upcoming financial year, that is anticipation. What is it?
Anticipation.
Clear. Remember, budget will be announced twice only in an election year. Only in which year? See, when there is a central union election. Recently in 2024, we had a central election. So, budget is presented twice. Budget is presented when? That is on 1st of February 2024, it was presented. And after election. What is it? After. Post-election, once the new government is formed, the actual budget will come. Then, that is on 1st of February, we have an interim budget. Which budget? Interim budget. Clear? Only and only during the election year, budget is presented how many times? Twice. If not, only and only on one single time, that is on 1st of February. Remember, the process of preparing budget will come under the Ministry of Finance. Under where?
Ministry of Finance.
Now, under the Ministry of Finance, there are various divisions and departments. Under them, budget division. Which division? budget division, they are responsible for preparation of a budget, and the process of preparing budget starts 6 months in prior. How many months in prior? When is the budget getting announced? 1st of February. So backing to 1st of February, 6 months, almost by mid of August and September. When it is mid of, the budget preparation starts. So they will send a circular. Now budget division is going to send circular to all the states, all the central government departments, and they will be asking to give what is the anticipated incomes and anticipated expenditure that particular department is going to have. After collecting all the data, they will start preparing budget. They will start.
Preparing budget.
And even before final drafting, they will take consultation and suggestions of experts, and even Niti Aayog will be part of it. All the state governments, ministers will be part of it. That is, chief ministers will be part of it. And all other experts like economists, agricultural experts, industry experts, we will take suggestions from them. What do we take?
Suggestion.
And then finally a budget gets drafted and final preparation happens. And then after preparation of a budget, what is it after? Next we have a presentation of budget on 1st of February. 1st of. After presentation there will be implementation. What will be there? Implementation of budget. And that will be for 1st of April 2000, presently 25 to 31st of March 2026. This is the budgeted year. Which year? Clear. So there are 3 procedures in budget. One, preparation of budget. Second one is presentation of budget. Third one is implementation of budget. Who will be responsible to prepare the budget? Under Ministry of Finance, budget division. Now this budget division is the one which sends circulars, collects all the data, prepares the budget. Clear? Now most important, budget is mainly classified into 2 kinds. How many kinds?
2 kinds.
Budget. One, revenue budget. Which budget?
Revenue budget.
Revenue budget. Second one is capital budget. Revenue budget and capital budget. See, even under revenue budget, again further classified into 2 kinds. Revenue receipt, revenue expenditure. Same, even under capital budget, it will be capital receipt and capital expenditure. So remember, when we speak about receipt, it contains both the receipts. That is revenue receipt and capital receipt. Put together, we call it as dash total receipt. That is RR plus CR. Same way, when we speak about the revenue expenditure and the capital expenditure put together, we call it as total expenditure. Which expenditure? So total expenditure is revenue expenditure plus capital. See, those expenses which are recurring in nature, which are repeated for the normal functioning of a government, they are come under revenue budget. They come under which budget?
Revenue budget.
Which is done in once in a year, one huge bulk expenditure which has to be made. That comes under a capital budget. Which budget? Clear. The major source of income to the government is a tax. Tax is a revenue receipt. Tax is what? Clear. Salaries paid to the government staff, normal functioning of government, all administrative charges. That is revenue expenditure. Which expenditure?
Revenue expenditure.
Listen to this very carefully. Meaning of all these 4: revenue receipt, revenue expenditure, capital receipt, capital expenditure. With the examples, they are important. That is where most of the times the questions have come. Clear? Revenue receipt, capital receipt, revenue expenditure, capital expenditure. Meaning along with examples. Meaning along with. Both are important. Now, suppose when we speak about this budget, I said classifications are 2 kinds: revenue budget and capital budget. When we speak about types of budget, what is it? Types of budget, there are 2 types. One is balanced budget. What is it? And second one is imbalanced budget. What is it? Imbalanced budget. So in case of an imbalanced budget, we have another 2 more kinds in this: surplus and deficit budget. What is surplus budget? Whenever total receipt is greater than total expenditure. Total receipt is greater than? Deficit is total receipt is lesser than total. See, this deficit is also called as budgetary deficit. Which deficit?
Budgetary deficit.
Budgetary deficit. That means in our total budget, our expenditures are more, receipts are less. That means there is a shortage. What is there?
Shortage.
And such a shortage is always and always a part of fiscal deficit. Which deficit? And we will be calling this as a fiscal. That means in a financial year, what all government is planning to do an expenditure, what all government is planning to incur as an income, everything put together, whenever there is a shortage, whenever there is what? We refer it as a which deficit?
Fiscal deficit.
Fiscal Now remember, this fiscal deficit is also including of interest liability. Which liability?
Interest liability.
See, even before this, previously we have acquired loan. Every year we have taken loan now because of shortage. Year by year we need to pay interest for that loan what we have taken. Every year when we are paying interest, that interest money is also included in this deficit. When I say shortage, shortage is not just with respect to the present year shortage. Even with respect to the interest liability. Even with respect to what?
Interest liability.
That means now fiscal deficit is nothing but difference between of total expenditure minus total receipts. Clear? So total expenditure minus total receipt will get to know fiscal deficit. Which deficit? If I need to understand primary deficit, which deficit?
Primary deficit.
Primary deficit. Fiscal deficit, I will read as FD minus interest liability. Minus dash liability?
Interest liability.
Interest liability. That means on a past loan, we need to pay interest. When I remove that interest money from whatever total deficit I have, I will get to know the primary deficit. That means what is the actual shortage of present year? What is the
Actual shortage of
present year excluding interest? What is it?
excluding interest.
If I also include interest along with the present year shortage, what do I get? Fiscal. So remember, fiscal deficit also includes dash. Interest liability. Now, many a times the questions have been asked to identify the primary deficit. Identify which deficit?
Primary deficit.
Let me show the question. Wait. Identify the primary deficit. Yeah. Can you see this? From the following figure related to the country A for a particular financial year. Revenue deficit, fiscal deficit, net interest liability, borrowings, expenditure. What are they asking for? What is the formula of primary deficit? Fiscal deficit minus interest liability. 24 minus 2. 22,000 is the answer. Clear? It's both are same, but little changes are there. I will explain. What is the little changes? But in terms of calculating value, it is the same procedure. Clear? Huh? I will explain. Slight difference is there. I will explain what is that slight difference. Clear? So basically understand whenever we are calculating a deficits in the present year, what is the shortage? That shortage also includes interest liability. What does that shortage also includes? When interest liability is also considered, we call it as a total shortage of the present year, considering our assets and considering our liabilities. That is a fiscal in a budgeted year. Fiscal year. Which year? That's a fiscal deficit. Which deficit?
Fiscal deficit.
Clear? So let's get started. So we understood the entire background now. Budget is classified into two kinds, revenue budget and capital budget. Now we can also identify revenue budget alone. That means suppose, just assume we are only and only consider the revenue budget. Which budget? By considering only revenue budget, if revenue expenses are more, revenue receipts are less. That is called revenue deficit. Which deficit? See, in our total budgetary deficit, if revenue deficit is more, which deficit is more?
Revenue deficit.
That means we are borrowing money to just normal functioning of the government. We don't have a proper money for normal functioning. For our day-to-day expenses, that itself is more. Deficit is more for normal functioning. That is not a good sign for a country. It is really a bad sign. Clear? So basically now understand. I will teach you the difference. Don't worry. So basically understand, whenever there is a shortage, we call it as a budgetary deficit. Which deficit?
Budgetary deficit.
Which also includes interest liability. Which also includes?
Interest liability.
That is called fiscal. If I remove interest liability from the fiscal deficit, which deficit do I get? Primary. Actual shortage of present year, which I need to borrow. Which I need to? Fresh borrowings. Already existing loan is there. Along with that, fresh loan. And fiscal deficit is always calculated as percentage of GDP. What is it as?
Percentage of GDP.
Which is calculated as percentage of GDP.
Fiscal deficit.
Fiscal. Here, see, budget is a financial blueprint of the anticipated incomes and anticipated expenditures of the government of the nation. And budget is always and always referred as a union budget in this chapter. We are not going to understand the budget which is prepared by the or local authorities. Budget usually as a budgetary period, that is 1st of April to 31st of. Remember, till 2017. 2017. Budget was presented on last working day of February. But from 2017-18 financial year, budget is presented on 1st of February. And till 2017 and 18, budget and railway budget was separately presented. But railway budget is also presented together from 2017. From when? 2000. Clear? Before 2017, that was separately presented. Only and only during an election year. Which year? Budget is presented how many times? Budget is presented twice. See, the first there will be interim budget as planned on 1st of February, and actual budget will come once the election is done and the new government is formed. So only during election year budget is presented how many times?
Twice.
The process of preparing a budget is going to commence when? 6 months in prior, that is August and September. And who is going to send the budget circular? Budget division, which comes under Ministry of Finance. And the purpose of creating this budget is to understand the government's redistribution of income and same, take it from rich, give it to. That is the main objective of preparing a budget. See, in the Constitution of India, there is nothing called as separately called as a budget. The process of preparing the budget is considered as a budgeting. What is it considered as? See, the process of preparation of the budget. I said, now first we need to prepare, next we need to present, next we need to. These are the three procedures which is involved in preparation, presentation and execution. See, preparation of a budget. Who will prepare the budget? Under them, budget division. So they will be sending a circular. What they will do? They will send a. See, budget division will issue a budget circular containing detailed instructions of the format in preparing of estimating with all the ministries, states, union territory and autonomous body. And after that, they will collect all the data. After collecting the data, they will start preparing a budget. So there will be pre-budget consultation with experts. With whom? Experts. Who all will be included in that? In the chief ministers of various states, various stakeholders, interest groups. From where? Interest groups from industry associates, agriculture, social and welfare, labor organization, Niti Aayog, economists, like this from different area, experts will be part of it. After taking suggestions, if any, and finally the budget gets prepared and presented in the parliament on 1st of February. And the process of budget is mainly divided into two kinds. Number one, legislative. In the administrative process, that is considered to be like a documents. What is it? Considered as what?
Documents.
Now the budget documents, everything gets prepared. Legislative process is mainly about the implementation and discussing and then finally bringing into action. Bringing into what? Now part A, presentation and enactment of budget. What is it? Presentation and? Now this budget will be presented where? In the parliament for the period called as 1st of April to 31st of
March.
Now for budget document, the most important, in the budget document there are mainly 4 documents. How many documents?
4.
I will explain. In the presentation of budget, total 3 kinds of informations are given. Number 1, budgetary estimates. What is it? Budgetary? I said now for the upcoming financial year. What is it? Upcoming? First there will be estimates or anticipation. And for the ongoing financial year, if there is any kind of a revision, still 2 months is left now, February and April. For that, there might be any revision or actual values of the previous financial year. What is it? Actual values of the?
Previous financial.
In reality, how much money we have spent, how much money we have received, actuals of previous, revision for present, anticipation for upcoming. What is it? Anticipation for? Revision for present, actuals of previous. So these 3 informations will be given in the presentation of budget. Clear? When is the union budget presented? 1st of February. The finance minister makes a detailed budget speech at the time of presenting the budget in the Lok Sabha, and such budgetary speech is mainly considered as a policy document which draws attention for the proposing plans and programs of the government. Such budget speech is mainly divided into 2 parts. How many parts? Number 1, which speaks about macroeconomic situations of the country. What is our present condition? How much loans we are about to take? What is the expenditure we are doing? What all new schemes we are introducing? Which sector is going to get which particular money? Which particular state is getting which kind of new investments? See this time, union budget recently which was announced on 1st of February, na? Indian taxpayers money sponsored to Bihar government. You would have witnessed a budget, Allah. Major plans, major actions have gone to Bihar. This time the major money, major attention, major developmental aspiration has gone to Bihar. So there was actually a meme. Taxpayers money of India presented to Bihar budget. It is not union budget, it is a Bihar budget sponsored by Indian taxpayers money. And second one, part B. This is where all the chartered accountant, everyone will be most important on. That's proposals. Tax proposals. What is a new tax that we are implementing, or continuation of existing tax, or extending the period of existing tax? All modifications in the tax. What is it? Everything will be proposed where? In the tax proposals. Which proposal?
Tax proposal.
Now comes budgetary document. I said now 4 important documents. How many documents?
More important
Number 1, annual financial.
statements.
Under this annual financial statement, another 3 more is there. Consolidated fund, contingent fund, public account. Let me explain all these 3. Consolidated fund. This is the main important account of the government. Even if you want to withdraw single rupee or if you want to put single rupee, Parliament's approval is required. Which approval is required?
Parliament approves.
This is the main account of the government. Clear? Next comes contingent fund. As the name itself says, contingent, emergency. For the purpose of some unexpected emergency, 500 crore rupees. How much?
500
Will be always kept aside. It will be at the control of President of India. At the time of any emergency like natural disasters, COVID, earthquake, tsunami and all, we can use this 500 crore rupees of money or anything in this 500 crore. And subsequently, you should take approval of Parliament and you should give back that money from consolidated fund to contingent fund. Consolidated fund to how much of money should always be kept aside?
500
How much of money should be always kept aside?
500
How much of money?
500 crore.
How much of money? How much of money?
500.
This is called response. After lunch, you should respond. Next.
So Parliament approval is required for contingency.
Yes, subsequently. That means after spending, later you should submit all the bills, documents, Parliament approval, and whatever money you have used out of 500 crore, you should give it back from your main account. That is consolidated fund. Which fund?
Consolidated fund.
And then comes last but not the least. That is public account. Which account?
Public account.
As the name itself says, public money. It is a public account. Government money. It is not a government money. It is which money?
Public.
Government is just holding that money. Example, PF contribution, provident fund, whatever from your salary they get deducted, that money will go to that public account. Government is using that money, but they have to repay back to the respective citizens whenever the appropriate time comes. In order to use public money, you don't need Parliament approval because that is not government's money. That is not. Clear? So under annual financial statement, there are 3 elements comes into picture. Consolidated fund, contingent fund, public account. See, under consolidated funds, which funds?
Consolidated fund.
There will also be some emoluments. That means all these charges, salaries and expenses incurred for the president, his or her office and judges of Supreme Court and high-ranking personals across the nation. All this Army General Chief, all these people's salaries, emoluments, benefits, everything is charged under consolidated fund. Which fund?
Consolidated.
And that can never be changed by the voting of a Parliament. Clear? So these are the main budget document which comes under annual financial statement. Which statement?
Annual financial statement.
Next comes demand for grants. What is it?
Demand and grants.
That means they are informing which department, which state, which union territory is asking for how much of money, how much they are demanding, how much they are,
Demanding.
how much money for which scheme, which particular sector, which particular ministry, for what all purpose they are asking for a money, they will give the statement. That is demand for grants. Next comes most important. What is that? All the tax proposals, new tax, modification of existing tax, continuation of the existing tax period or alteration of taxes, everything will come under. Because this is inflow to government now. Tax is the major source of revenue to the government. So everything which is related to tax will come under which bill? And next, statement as per FRBM Act. There are 9 other supporting documents. Which documents? 9 other? See, 9 other supporting documents will come under FRBM Act statement. FRBM Act. See, this is Fiscal Responsibility and Budgetary Management Act. FRBM full form is. That includes macroeconomic statement and midterm policy statement reviews. All this which is related to budget, where we are putting the funds, what is the purpose of putting the funds, what is the main ultimate intention in long run, all that 9 other supporting document. Which supporting document? 9 other will be provided in that FRBM statement. Which statement?
FRBM statement.
Clear? These are the budget documents, mainly 4 documents. AFS, Annual Financial Statement, Demand for Grants, and FRBM statement, FRBM Act statements. Clear? Now, this time the question has come from FRBM Act statements in the past 2 attempts. Clear? So, in this case, first half of the chapter is extremely important. From there, major question comes. Another half of the chapter is read-only concept. You may get question or, but chances are less. What is it?
Chances are less.
Clear? So I explained about this consolidated fund, contingent fund, 500 crore rupees will be kept aside with the hands of a President of India who will be having a control, and public account. Government is just acting as a banker. That money belongs to public. All that provident fund, small savings, government bonds and all the treasury bills. Next. Budget is mainly classified into two kinds: revenue budget and revenue receipt, revenue expenditure. Capital receipt. Meaning is also important. Now see the meaning of revenue receipt. Those receipts which neither creates any liability nor causes any reduction in the assets of the government is called as revenue receipts. And this time the question has come. Those which never creates any liability nor causes in the reduction of an asset is classified as dash. And today you know, on the day of exam, when you are reading this statement, if you are unable to identify, gone case. Next, revenue expenditure. What is that revenue?
Expenditure.
See, all this expenditure either in creation of physical or financial assets of a central government, it alters this expenses incurred for the normal functioning of government department and various services, interest payments, debts incurred by the government. And see examples. Some of these examples of revenue expenditures are salary paid to government staff, subsidies given, interest payments are the examples of revenue expenditure. Revenue receipt. What is it? Revenue.
Yes.
Biggest revenue receipt is taxes.
Taxes.
Tax is the biggest income to the government. Clear? So revenue receipt, revenue expenditure. Next, capital receipt and capital. All loans raised by the government from the public and borrowings from the government from the Reserve Bank of or any other party by way of selling of treasury bills, loans received by the foreign bodies and governments, and recoveries of loans granted by the central government. For whom central government has given loans? State governments and or even any other parties. Loans recovered. Loans will come under dash. Loans recovered will come under dash. Appa, if next time voice does not come out, if I am unable to listen voice from the class, automatically examples will cut down. Now only I am saying. Second time I am saying, after lunch, you should open your mouth. Open your 1, 2, 3. Only 3 voices coming. Others are like after a few minutes. This is last warning. Automatically examples will go down. Instead of 3 examples, it will become 1. We need not to wait until 8 o'clock. We can finish it by 7. Next. Capital. Capital. Expenditures of the government which results in creation of either physical or reduction in the financial liabilities. It is included as expenses towards building any long-term assets like land, buildings, and these are capital expenditures. So get ready, questions will come even from the statements. You need to be ready. Let me show the question in this attempt. Where was it? Question was superb. From budget only the question was. I think September attempt.
The recovery of loan will not create any asset available.
Recoveries of loan. You have given a loan, you are getting that back.
Then how it will come out?
That comes huge money, na? One shot, huge money will come inside. It will come somewhere. I will show it. Like I have to search now. See here. All revenues received, loans raised, and all monies received by the government in repayment of loans are credited to. That means where it will go. That is a main important account of the government. Consolidated funds. Like this, even revenue receipt question was there. We'll search that later. Chalo, that's fine. Next, demand for? See which department, how much money they are asking for. That will come under demand for grants. Next, finance bill. Which will?
Finance bill.
See, proposals of government to levy new tax, modification of existing tax, continuation of existing tax structure beyond the period approved by the parliaments are submitted to the parliament through this finance bill. Next, appropriation bill. Which will?
Appropriation bill.
See, that means after giving approval to some department, okay, let's say National Highway Development Authority, that asks for 100 crore. After giving, let me say, a green signal for that in the parliament, after voting, approval letter. Which letter? Is called as appropriation bill. With that appropriation bill, you can withdraw that money which is specified to you from consolidated from which fund?
Consolidated.
Next comes gulating. What is this gulating? See, there will be a specific time period within which Parliament has to discuss, debate on this, and then they should vote on the bill. Once the time limit exceeds, now the Speaker of the Parliament, what is it? Speaker of the?
Parliament.
Whether it is discussed or whether it is not discussed, everything is discussed together. That is called as process of gulating. Gumpal Govinda Visena in Kannada. That is what. See, the Parliament has very limited time. Yes. They are very busy in under the table discussion, examining the expenditure demanded from all the.
Minister.
Once the prescribed time for discussion for demand for grant is over, now the Speaker of Lok Sabha puts all the outstanding bill, whether discussed or not, for voting of the House. Putting everything together and then voting together is the process called as gulating. Clear? Next comes cut motion. Suppose some authority, let's say Women and Children Welfare, we have allocated 70 crore. 70 crore? Why? For what purpose? No, more money, take it out. Not required. Now everyone in the Parliament feels that. After allocating funds, if at all we reduce, that is called cut motions. What is it? That is called as what?
Cut motion.
See, seeking to reduce the sum sorted by the government on the grounds of economic and differences of opinions of matters putting in place to voice the grievances. That is called cut motions. What is it called as?
Cut motion.
See, these are the important definitions which you should know under the budget chapter. Now the procedure. How presentation will happen. First, we will prepare the budget as a whole and general discussions will be there. Next, after general discussion, union budget session will over. After that, standing committee will come into picture and the standing committee will have to pass the bill within a stipulated time period. And next, Lok Sabha may approve the bill or refuse the bill, and all this procedure of creating and cut motions will happen. Finance bill get presented and finance bill has 75 days for approval from the Parliament. There can also be a process of gulating and all this, how preparation and presentation happens. And finally, after finance bill has been passed by the and it goes to for any recommendation, and they should let me say return back within
14 days.
either with or without recommendations, and the Rajya Sabha may consider, what does it may?
Consider.
The recommendations of, they may accept it or they may even reject it. Clear? Next comes types of budget. Balanced budget, when revenue and expenditure both are equal. Imbalanced budget, that is surplus budget where revenue is greater, expenditures are lesser.
Yes, sir.
Deficit budget, where revenues are lesser, expenditures are. Now see differences. Revenue budget, budgetary deficit, fiscal deficit. Now slight differences are there. First understand budgetary deficit. The total expenses are greater, total receipts are lesser. See here, it exceeds the total expenditure over the total receipts. That is called budgetary deficit. Which deficit? Simple. Revenue deficit. Only if I consider revenue budget. Which budget? Only if I consider which budget? That is called as revenue deficit. Which deficit? Clear? Now comes fiscal deficit. Which deficit? Revenue expenditure greater, revenue receipt, that is revenue deficit. Now see the words in the fiscal deficit. Excess of total expenses. What is it? Let's say for example, my total expenditure is 1 lakh crore. Total receipt is 80,000 crore. Receipt is 80,000. Expenses is? What is the shortage? That is fiscal. What is it? See that. Excess of total expenses over the total receipts. Excluding borrowing. Still yet to borrow. What is it? For that we will add interest liability. We will add what? Yet to borrow during the given financial year is called as a fiscal. Now this fiscal deficit calculated as a percentage of. Sir, what is the difference, sir? Fiscal deficit and budgetary deficit. In budgetary, we will just simply say total receipt, total expenses. Shortage, present year budgets a shortage. Present year budgets. Clear? That shortage. They will not mention what is the shortage, how much is interest, how much is capital, let me say capital expenses, how much is nothing, just a total shortage. What is it? But in fiscal, they will mention. Now see the fiscal deficit will have to be financed through. Fiscal deficit shows the total borrowings required. What is the total? Of the government from all the sources of the present year to finance the shortfall in the. In case if revenue budget acquires a substantial share. Which budget? This revenue deficit. If it acquires a substantial share, that means it indicates larger part of your borrowings is just used for a dash purpose. Rather than. That means for normal functioning of your government only you don't have money. That is a very bad state of your country. Clear? Now in short, Fiscal deficit. What is the total expenses? Minus total excluding borrowings. Excluding? There we also include borrowings. This is the borrowings part, including borrowings. This is my expenses. This is my receipt. Clear? Now, most important point. Fiscal deficit. Revenue expenses minus?
Revenue receipt.
What is the shortage? Capital expenses minus? Shortage. Excluding dash? Remember this word, excluding borrowings, because this is the money which we will borrow, na? And this fiscal deficit also includes interest liability. Which liability?
Interest liability.
On past loans. Interest liability on?
Past loans.
Clear? Now there is a typo error. This should actually come in the later part. There is a typo error. See, non-debt capital assets. What is it? Non-debt? Sorry, capital receipts. What is it? Non-debt?
Capital receipts.
That means government is getting huge sum of money, but they are not borrowing. They are not
Borrowing.
non-debt. What is it? Debt means we are borrowing. We are speaking about what? Non-debt capital receipts. Money is coming. One huge shot of money is coming inside, but we are not borrowing loan. Then what is it? Number one, recoveries of loans advanced by the government. To whom? State governments, union territories, or some other chota-mota country, nearby country like Maldives, Nepal, Sri Lanka. We have only given loan, na? We'll recover that back. Next, sales proceeds of government assets. What is it? That means, man, some assets are not used by the government. That belongs to government. OLX may beach do. Simple. Sell off that asset. Will get huge money, na? Next stop. When your PSUs, what is it? Public sector undertakings. If they are not working properly, sell them off to one or more private. That is called as divestment. What is it called as? Either because of divestment of your PSU, either by sale of your asset, or recoveries of loans. Recoveries of? These are the three examples of non-debt capital receipt. Non-debt? Clear? They might give a question. Which among the following is a non-debt capital receipt? Four options will be there. You should identify the non-debt capital receipt. Next comes primary deficit. Which deficit? Already we did this. Fiscal deficit minus interest liability. If I remove interest from fiscal, what do I get? Clear? Next comes outcome budget. That is your progress card. That means past financial year. Already budget is completed, na? How much expenses incurred? How much revenue incurred? Which progress we have done? Which scheme we implemented? What is the result of that scheme? This is like your report card. Which card? That is called outcome budget. Which budget?
Outcome budget.
Now, sources of revenue. From where all we are going to get revenue. Now, under Ministry of Finance, like budget division, there is something called as Department of Revenue. What is there?
Department of
Under Department of Revenue, there are two boards. One is Central Board of Direct Tax. Second one is Central Board of Indirect Tax. And that means Direct Tax Department, Indirect Tax Department. In India, classification of tax is mainly on two kinds, direct and indirect. Now, both the direct and indirect tax will come under Department of Revenue. Department of Revenue is under the control of. Clear? Now, sources of revenue receipt. Examples of revenue receipt. From where government regularly gets the money. Corporate tax, taxes on income, wealth tax, customs duty, union excise duty, GST, taxes on union territory. Clear? Next, non-tax revenue. Non-tax. This is not a tax, but income to government. Interest receipt of government investments, dividends of government investments on PSUs, recoveries of, receipts from union, or traffic police fines, or any television charges. Let's say, for example, IPL telecasting, education, sports, arts and culture, broadcasting, housing, all this, railway, technology and entertainment, general administrative services. Which services? Electricity distribution and generating the revenue out of electricity. All these are non-tax revenues. What is it?
non-tax revenue.
Yes, sir.
Money we pay for registration and all things.
Non-tax revenues. That will come under non-tax receipts. Where will it come?
Non-tax.
There is only smaller portion.
It will be capital receipt, sir. We will not pay again.
Which one?
For registration we will pay also.
Every single day you will buy shares, stamp duty charges, registration. It keeps on happening on a regular basis. You are not buying on a regular basis, but in the economy, people, one or the other person is doing on a regular basis, na?
For land also.
Yeah, every single day either buy, sell, something is happening in the country. Only you might not do it on a regular basis, but among the population, every single day some transactions are happening, na? Revenue. That is non-tax revenue. What is it?
Non-tax revenue.
Clear? Next comes sources of capital receipt. Which receipt?
Source of capital.
Non-debt capital receipt. Just now we discussed, na? What is it? Recoveries of loans and advances. And divestment. What is it? Divestment. And one more. What is it? Sale of government assets. Sale of? See, divestment, other. PSC, public sector enterprises, recoveries of loans from state government, any foreign government, union, territory, sales proceeds of government assets. That comes under non-debt capital receipts. Now, debt capital receipt, we are borrowing money. We are either within the country or outside the country. If it is within the country, from my own public, either for short term or either for see, market loans for different purposes, short term or treasury bill borrowing, security issued against small savings, net provident, net external debt, outside. External means net, this is outside. First four are inside. First four are
Inside.
treasury bills, open market operations, chapter 8, RBI. That is what, treasury bills. Next, other receipts. What is that other receipts? SGB. Now, government temporarily stopped this SGB because gold prices are skyrocketing. Sovereign gold bonds and any other receipts in the form of any savings bonds, NSC, National Savings Certificates, Post Office Savings Certificates. These all are other kinds of receipts to government. Clear? So, these are the sources of capital receipts. Until this point, budget is important. Beyond this, go through topics. Very less chances of getting question. You may or. Now, how there is a revenue department, under Ministry of Finance, there is also an expenditure department. Which department? They want to control expenses because every year by year deficit budget, na? There is only shortage. So, we need to control unnecessary subsidies, unnecessary transfer payments, all unnecessary expenses of government. If at all we don't control, expenses keeps on. Revenue is less, expenses are. Oh, we conduct a budget, we conduct an audit. According to that audit report, we need to, let me say, operational wise, we need to do it accordingly. We'll instruct state governments not to do unnecessary spendings, unnecessary compensations like this Gruha Jyoti Yojana, Bhagya Lakshmi Yojana. That will actually discourage the economic performance. And if that continues, what are all the effects? See, larger, higher level of low economic and few resources are available for using elsewhere, and greater debt not just in present, even for clear. Now, Department of Expenditure will focus on these things. What all? Expenditure profiling. All these are read-only concepts. Which concepts? Next comes public debt management. Which management?
Public debt.
Simple da. How government is going to borrow money from public and how it is going to manage from the public. Simple concept. I will take one loan. To repay that first loan, I will take second loan. To repay second, I will take. To repay third, I will take. To repay fourth, I will take. In Kannada, there is a saying, Kereye neerannu kerege chelli. Take the first loan, repay with interest by borrowing second loan. To repay that second loan, repay with. To repay the third loan, take the. In reality, you are doing this by one or the other way. Every single month, some part of government debt becomes matured. That is what public debt management. What is that? See, the process of setting up and implementation of strategy for managing public debt in order to raise the required amount of funds in a desired risk and cost level. That is public debt management. See, government is generally the largest borrower to support the deficit budget in the nation. In order to fund the deficit, government may borrow either within the nation or from its own by issuing bonds and treasury bills, or it may borrow from some international agencies, some international institutions and international. Now, government debt from internal as well as external sources consisted in the consolidated funds of India is defined as a dash debt. Now, the government raises these funds primarily for a domestic market. Primarily, they raise from which market? Internal. Whenever there is a shortage, first they will raise it from which market? Using market based on fixed rate instruments and seizing for fiscal deficit. Next, public debt in simple words means debts incurred by the government in mobilizing savings. Mobilizing dash?
Savings.
Who will create that savings? Household savings. That means government is also collecting that savings of an household of a people in the form of who have to repay that in future date with now public debt is not just one time exercise of borrowing and repaying. It is a dash exercise because some portion of your debt falls due each month. That means last year at this month you have taken loan, now you repay for that new loan this month. Next, see, government does not actually cut its expenditure or raises the tax to provide funds to retain or repay the matured bonds. Rather, now see, the actual truth comes out. Rather, government simply, that means sell the new bonds using the proceeds to pay off the holders for the whichever bonds got matured. For that, issue new bonds, take that money, give it to the matured ones. Again, to repay the second loan, take the third loan, repay the second. To repay the third loan, take the, repay the cycle keeps on continuing. That is what they say. It is a continuous exercise. Which exercise? So sovereign gold bonds, all that public debts, everything used to be a part of it. The main objective of central government's debt management, to control debt. If at all we don't control debt, later on it is going to become a burden, not just for present, even for future. So anything which is of internal in nature, internal debt is controlled by RBI. External debts are controlled by Ministry of. Clear? And combined, internal as well as external, total Ministry of Finance will control the budget. Reserve Bank of India. That means Reserve Bank of India will also come under Ministry of Finance. That is under Government of India. Now FRBM Act. I said na. Question was asked once. What are the objectives of FRBM Act? See, which among the following is not an objective of FRBM Act? That was a question. See here. Yes, sir.
Public debt management come under RBI.
Yes. Public debt. That means within the country. Na? Within the country means RBI will come into picture. Chapter 8. Open market operation. Buying and selling of treasury bills to control inflation and deflation. That is called as what? Public debt management. Clear? Huh? Next, objectives of FRBM Act. See, intergenerational of equity in fiscal, long-term macroeconomic stability, better coordination between fiscal and transparency in fiscal operations by the. From this area, they have asked question once. Which among the following is not an objective of FRBM Act? Clear? Now see, final, last but not the least, how much money we have borrowed from years to years. By end of March 2023, internal borrowing within the country, 147 lakh crores. What is it? 147? External, 4.83 lakh crore. Now see, increased in 2024 March. 164 lakh crore external, 5.22 lakh crore. Sorry, that is external. 5.22 external, 164 internal. See, internal debt is almost 3 times greater than external debt because take first loan. To repay that, take the second. To repay second, take the third. To repay third, take the. You will never repay in reality with interest. That is why it is burden is increasing. Because in external debt, whenever you borrow, your country's currency will deplete. The value of your currency will be lost. And moreover, if you are borrowing more and more from external, that shows a weaker sign of your government. Your government's value, or let me say the currency value of your nation will decrease in international market. That is one of the reasons. What is that? One of the reasons. Still, various reasons are there. Clear? Next, we asked government, why did you borrow more money? See, in order to combat COVID during 2020, 21 and upon that, we are still unable to get debts properly. So, we started something called as G security market. Which security market?
G security market.
Officially, government only started begging from people, hello, give your money. Whatever savings you made, hello, give your money. Now, retail direct. What is it?
Retail.
Even retail investors can buy the government bonds and government securities and invest it in government securities. They started this provision from February 5th, 2020. COVID, in order to combat COVID. Clear? You can buy government securities. Now, who? Retail investor. Who is that? Through online access, you can buy the government securities. Which security? Primary security as well as secondary government security markets. You can access and you can invest. That is G security market. Which market? Clear? This is your budget unit. By this, budget comes 12. That is chapter 7, unit 3. Katham. Clear? Unit 4 will get over in just 15 minutes. It will not take much time. Because cocktail of unit 1, unit 2, unit 3. Fiscal policy. Which policy?
Fiscal policy.
That means government is the one which creates a fiscal policy. Fiscal refers to dealing with public money. What is it dealing with? Clear? And this fiscal policy is also a demand-sided policy. Which sided policy?
Demand.
And most important, listen to this carefully. If economy is already in full employment, economy is already in?
Full employment.
Government intervention is not required in the form of fiscal. Already full employment is there. We are earning better. Price stability is happening. Everything is happening. Now, if government fiscal policy conducts and pumps in more money, inflation. Government is pumping in more money, that will lead to what? Inflation. Remember, if already economy is in full employment, we don't need any deliberate actions by the government. Economy is stable. That is what economists said before 1930. That is what they were arguing. Economy will always be at dash employment. Full employment level of national income. But Keynes said it may happen or it can be lesser than full employment or greater than. Now let us understand. 4 concepts are there. Objectives of fiscal policy, automatic stabilizer, discretionary fiscal policy, instrument. I already did this now. I said now, instruments of fiscal policy. See, government expenditure, tax, interest rate, budget, borrowings. These are the 5 instruments of fiscal policy. Clear? And last but not the least, types of fiscal. Expansionary fiscal policy, contractionary fiscal policy, inflationary gap, deflationary gap. Already touched about it. See, that is what I said. Unit 4 is cocktail of first 3 units. Nothing much. See, objectives. First one. What is it? See, all our classical economists, I already said in a story. They said government intervention is not required. Always full employment will be there. Price stability is always maintained. Inflation, deflation is always controlled. Same story. Classical economists. Next comes John Maynard Keynes, 1936. Disaster happened in 1930 in the form of Great Depression of America. And these stupid fellows didn't add any answer. Later Keynes came in. All that story, background story, whatever I said, same to same given. Read it once. Clear? Next comes objectives of. As a government, when you are coming up with your own rules and regulation, there should be some objectives of doing it now. What is that objective? Achieving dash employment, maintaining, accelerating the growth of, and equitable distribution of. These are the 4 primary objectives of fiscal policy. But the problem is you can't achieve all the 4 together. You can't achieve. Let's say, for example, if you want to achieve equitable distribution of income and wealth, rapid economic growth is not possible. If you need to achieve a price stability, then you can't achieve a rate of economic growth. Problems are there. You can't achieve all the 4. Developed nations have few priority, developing nations have few. See, developed economies, their priority is first stability, next equitable distribution. For developing countries like India, first priority, next full employment, next equitable distribution of income and wealth. Like this, developed countries have few priority, developing nations will have a few. Next comes automatic stabilizer and discretionary fiscal policy. What is it? Automatic stabilizer and
Discretionary fiscal policy.
see, concept very simple. Whatever our earlier economists said before 1930, classical economists, government intervention is not at all. Automatically things get adjusted on its. That is automatic stabilizer. Automatically inflation and deflation is stabilized. Price is stabilized. Always full employment. That is automatic stabilizer. What is it? See there, they are built-in fiscal mechanism that operates automatically. That operates. So what all gets changes automatically? Level of tax, level of government spendings, and there are built-in tax and expenditure mechanism that increases automatically whenever there is a recession and that decreases automatically when there is a. That means government intervention is not at all needed. See, any government progress or any government programs that automatically tends to reduce fluctuations in the GDP is called as automatic. We don't need any government actions in the form of fiscal policy, but discretionary says complete opposite. Yes, man, we need government action in the form of fiscal policy. It should include government expenditure. It should include tax. It should control the output, that is GDP of the country. It should control the price stability and also borrowings. So government will intentionally do this and it will control dash. It will control the gross domestic. That means it is a deliberate actions by the government. What is it? Deliberate actions by the
Government.
see, deliberate policy actions by the government in order to change the level of expenditure, tax, output, employment, price form of. Clear? That means it will control through its demand side. Which side? What are the components of AD? C plus, I plus, G plus, X minus M. Clear? That is towards the right side of the equation is where we have an aggregate spending or aggregate expenditure called as AD side. Which side?
AD side.
Now, market demand is influenced by the government actions such as tax rates and government expenditure. That is a part of fiscal policy. So, once government spends money directly, that will have an impact on C, I and NX in an indirect way. Exports, imports, consumer expenditure, business investments, that will have an indirect effect. Which effect?
Indirect
effect.
Types of fiscal policy. Expansionary and spoke about this now. When do we need to expand economy? When economy is not performing well. When economy will not perform well. Business cycle. Contraction. Business cycle. Or recession. Clear? That time now government has to spend more money. Government has to reduce tax. Or they should combine both. What is it? Either they should increase expenditure or decrease tax or do both. Increase expenditure, decrease tax. See, whenever you are increasing your expenditure, total expenditure will be greater than total. That will lead to a deficit budget. Which budget? Now, what are all the problems of economic recession? When economy is not performing well, there is a fall in lower aggregate, reduction in consumer, rise in. To tackle this, now government has to spend more money. Government expenditure should increase, tax rate should decrease, or adapt combination of both. See, number one, how does the government will solve this issue? Number one, government may reduce. What is it? Government may reduce all type of its taxes, direct tax, indirect tax, all government tax, corporate tax, everything, and increase all the government. Increase all the government. When I'm giving pause, that means you should read that. Increase all the government. When government spends money, that will bring more money into the economy. Pumping of money will happen. Injection of money. What will happen? Or adapt combination of both. Adapt. That is called expansionary fiscal policy. Opposite is contractionary. When inflation is there in the economy, you guys are overperforming. You guys are spending more and more money. Price levels are increasing in the economy. Inflation is increasing. I should tackle that. How do I tackle that? Decrease my government spending. Increase the rate of taxes, or adapt combination of both. Adapt what? Now, what are all the issues with respect to inflation? Higher aggregate demand. Demand is really increasing. Next, increase in dash spendings. Because of the general price level in the economy will also. So, how does government has to tackle? Now, government has to decrease their spendings and increase all type of tax, business tax, personal tax, income tax, every tax. Adapt combination of both. One way government spending should decrease, another way personal tax and government tax has to decrease. That's it. Next comes instruments of fiscal. Last topic. See, I said now 15 minutes, hardly it takes 15-20 minutes. The entire unit is cocktail. Already we spoke about government expenditure. When government expenditure will increase, when government expenditure will decrease. But what you need to understand is direct effect and indirect effect. What is it?
Direct effect and indirect.
See, government expenditure is mainly of three types. Current expenditure, capital expenditure, transfer payments. Current expenditure, day-to-day operations of the government. Capital expenditure is in the form of investment, infrastructure building. Transfer payments, incomes earned but not. Hello. Incomes received but not. After lunch, even if I say reverse, with the confidence you will say yes. Stupid fellows. Now see there. There is a direct impact. Which impact? That means whenever government spends money, that money will go to whom? Households. Whenever household gets money, demand will. Production should. Employment of labor will. And purchasing of multiple goods and services will. That will have a direct effect on income of the. And also supply of raw materials and indirect effect. Even government money will also act as a multiplier. Because people spending more na. When MPC increases, multiplier will. Let's say in the economy there is a shortage of 1,000 crore. Shortage of how much? 1,000 crore. And I know money will get circulated 5 times. How many times? 5. That means government need not to bring 1,000 crore. They will only bring 200 crore. The 200 will multiply 5 times and it will become 1,000 crores. Government expenditure also acts as a multiplier. Acts as what?
Multiplier.
Suppose if there is a inflation in the economy, government expenditure, should it increase or should it decrease? Government expenditure will decrease. Now comes the important topic. Close your books and look at the board. When the economy is not performing well, that is called as contraction or recession phase. Contraction or recession. Already we discussed. Now government expenditure should increase, tax rate should decrease. Government has to give more and more compensations. All that kind of activity should happen. Yes, super. Your fiscal policy. Which policy?
Fiscal policy.
Will work only during contraction. It will work only during when? Contraction. It will not work during depression. It will not work during
Depression.
Depression is an extreme worst form of contraction. If you remember business cycle yesterday, I said na, bottom phase is called as trough, recovery, expansion. In your syllabus only contraction is there, but they are merging trough and depression together. But there is one more worst phase called as a
Depression.
In depression phase, fiscal policy will not work. Fiscal policy will only work until contraction. Until that means it is an alarm. Government, you need to take actions now. If you don't take actions at the contraction phase, and if your economy slips down, if your economy to depression, your policies will not work. Policies will not work. So fiscal policy will work only during your recession phase, that is contraction phase. That is when you should spend more money, pumping more money to economy, build more infrastructure works, like public works has to be expanded, let me say increase, irrigation facilities, sanitary works, ports, electrification of new areas. When you do that, automatically money will go to the hands of people, automatically demand will
Increase.
production will
Increase.
economic performance will
Increase.
if you don't take that measures properly, and if at all you are sitting back and if you are looking silent, and if the economy slips down into depression, fiscal policy will not work. Only two options are left out. Which are those two options? Pump pricing and compensatory spending. What is it?
Compensatory and compensatory spending.
One shot huge injection of a money into an economy is a pump pricing. That means just assume tomorrow all of a sudden you will get gunny bags full of money, some 10 crore rupees of money, you will become full rich. I used to ask my friend this example and he used to give a beautiful answer. What if tomorrow you get 10 crore rupees? My neighbors will become rich. What? My neighbors? Yeah, because I am moving to rich colony. Na? Who are my neighbors? That means he is indirectly saying that I am going to change the place. Why will I bloody be with you people if I have money? My neighbors will become rich. See, that means when the economy receives one huge shot of money inside, automatically people get more money in the hand. Now, will you sit silent? What you will do?
Increase the demand.
Demand increases rapidly. Demand increases, but we can't match the demand. Now all of a sudden, it is like an ICU patient about to die. Electric shock. When you hold that electric device and if you go and put it on his chest, he will bounce back now, wrap up like this. That is what we are doing for economy now. We are giving electric shock to economy in the form of pump pricing. In the form of what? One shot huge injection of money into an economy. When we do that, automatically demand will rocket. It will go like a rocket. Zik. People will get money. People will start demanding more. And to, let me say, meet the demand, now production should
Increase.
now economy will bounce back, or else compensatory spending. What is compensatory spending? See, we know it is a demand sided model. What is the demand sided model? C plus. Now these two people are not at all spending. C and I is not at all spending. To compensate them, who is spending? That is compensatory spending. In the economy, C and I is not at all spending. So who has to spend now? Only and only government keeps on spending to revive the economy because they have become negative mindset, pessimistic mindset. Which mindset?
Pessimistic mindset.
And people are withdrawing money from their bank account. They are holding liquid cash in the hand. Something worst might happen. They are expecting something worst. So they are not spending. Now to compensate them, who is spending? That is called compensatory spending. Which spending? That is government expenditure. Next comes tax. Already we spoke about length and breadth about tax in detailed way. Direct tax, indirect tax. Taxes will reduce the person's purchasing capacity. Direct tax, disposable personal income. Indirect tax, your demanding ability. See, disposable income. Role of tax during recession and depression. Whenever you levy a tax during depression and let me say economy is not performing well, it becomes much more worse. So should you increase tax or should you decrease tax? So people will be left out with money in the hands and they will start demanding. Whenever there is an inflation, you should implement dash tax. You should levy more and more new taxes. Clearer. Next, budget. Already we spoke length and breadth about this. What is deficit budget? What is balanced budget? When do we adapt a deficit budget? Recession. When do we adapt a surplus budget? Inflation. All this we have discussed. Clearer. Last but not the least, public debt. Which debt? Now I said there are two kinds of debt. One, place of borrowing. Second one is, when I say place, either internal or either. When I speak about forms of borrowing, either it can be market loan or small savings of people, national savings certificate, national depository certificate, SGBs, sovereign gold, bonds. All this are small savings. Market loan. In the market loan, we finance any capital project by having a long-term bonds. What is it? For a short term, we will issue a treasury bill. Which bill? For a shorter period of time. RBI does this. Open market operation. Which operation? Next chapter 8 it will come. Next, external borrowings. Borrowing from outside. Borrowings from inside is called as a internal borrowing. From our own people. Who is it? From our own. So in order to combat inflation and deflation, in order to bring stability in the economy, we will make borrowings. What do we make? Clearer. Next comes, in order to grow any economy in the, we need to focus on certain things. Number one, we need to follow and we need to concentrate more on that to which kind of infrastructure, and more importance should be given to, and we should give importance as well as, and long-term economic for human capital, and taxes is going to act either in the positive way or so designing a tax policy is most important, and especially your subsidies, agricultural subsidies and all has to be controlled and it has to be given in the proper manner. and environment tax has to be increased, externality has to be controlled, and subsidy has to be given for farmers, minimum support price, input tax credit, fertilizers and all. See, these all are the areas the nation has to concentrate if you are planning for a dash development, long-term development. Next comes fiscal policy for reducing inequality in income and what is it? Reducing inequality in income and same concept. Take it from rich, give it to. We will come up with new plans, policy, inequality in income distribution is there. So main important, a nation has to focus on equitable distribution. Which distribution? So for that, what we should do? Progressive tax system. Collect from rich and give it to the poor. That is the direct tax. Indirect tax also increase for rich people who buy luxury goods. Taxes are heavy. For the poor people who buy necessary goods, tax rates are lower. Next comes through public expenditure. You create a welfare activity. How? Poverty alleviation program, reservation, all this training, enhancement, job reservation, medical, education, housing, everything has to be given at a subsidized rate. In short, take from rich, give it to. That's it. Now this progressive tax system is also having a problem. What is that? If you keep on increasing tax rate, you are discouraging people to produce, earn more and save more. If they earn more, they should pay more. So why should I earn more? And if at all you are giving too much of benefit to poor people, even they will be discouraged to work and save money. Hey, Amma canteen is there. Don't worry. 1 rupee lunch, 2 rupee breakfast, 5 rupees dinner. In a day, if I have 8 rupees, they gone. See, government is only giving free electricity, free bus. Like this, if you keep on giving free, what will people do? Will people develop themselves? No. Will people increase their skill? No. You are making your people more and more lethargic, more and more stupid fellows. See, that is problem. Additionally, all this fiscal policy, providing any excess social program that reduces incentives to work and clear. Next comes the beautiful point, crowding. Now open your ears, eyes, everything and listen. Now people who are sleeping, get up. Then madam, first round of sleep. Next pillow you need. After lunch she came, she didn't even sit in her place. She went corner, proper talker. You're there only, huh? Oh, you're sleeping from there only from the morning. See, truth came out. This is called undue influence. Okay, chalo, fine. Now, when economy is not performing well, what is it when economy is not performing well? That means we are in a contraction phase. When we are in a contraction phase, you tell me what all measures will be taken by the government. Government expenditures will, tax rates will, interest rates will, pakkawa. Now, there is one stupidity that government can do it. Now, especially all our thumbs up. That means all abet fellows who don't know read, write and understand, also becoming prime minister, MPs and all. Rather than borrowing loans outside the country, when economy is not performing well, they want to borrow loan inside the country. Where they want to borrow loan now? From our own people. Now you tell me, when will you give money to government? When interest rate is more or when interest rate is less? First of all, economy not performing well. Interest rate, should it increase or should it decrease in the economy? It should decrease. But stupid fellows, instead of decreasing, they increased interest rate. Now, one small mistake. What is that small mistake? Increasing the interest rate. Why did they increase interest rate? Because they wanted to borrow inside the country. Where they wanted to borrow? See, public debt. Which debt? Public debt. So, in order to increase the public debt, they increased interest rate. Okay, why government is borrowing money from people? Economy is not performing. If I spend money, money will go to the hands of public. When public gets money, they will demand more. When they demand more, production will, employment will, overall economic activity will. With that belief, government borrowed from public. Government. And government is spending money. Government is. As expected, even government is spending money and automatically people are receiving money in the hands. But now people will not spend money. People will not spend. Why? Because interest rates are. Economy not performing well, but interest rates are. Now, I will put money to bank. I will save money rather than spending money. Rather than spending money, what I will do? Why did they do that? Because interest rates are. When economy is not performing well, if we want to increase demand, if we want to increase the performance of economy, interest rate should be. One stupidity they did, increasing interest rate. Why they increased interest rate? In order to public borrow. Now, when economy is not performing well, where you should borrow? Outside. But like stupidity, where they are borrowing? To borrow inside. What they do it for interest rate? And they bought loan from public and they're spending money in the public. That means in the economy. When people got that money back, what people are doing now? Rather than spending money there, your entire motto of fiscal policy got collapsed. People are not at all spending. This is the crowding out disadvantage of fiscal policy. What is it? Simple. Instead of people spending money, they started saving money. Why? Interest rates are. When economy is not performing well, when you give better interest rate, people will not spend. People will. Now economy will not improve at all. Your intention of government is to improve economy. But did it happen? Crowded out. That means which went opposite. Which went? Fiscal policy will not work. Fiscal policy will? See, in short, government wanted to increase their expenditure. So they did public borrowings. Which they did? In order to do that public borrowings, what they did for interest rate? Increased. When interest rate increased, when government started spending money, household got money, but household started to rather than spending. So automatically consumption of household decreases, investments by business will decrease. People are not demanding at all. What will I do by investing money and producing goods and services? Clear, huh? So remember, consumption of household, that is C, and investments of business, that is I, both will decrease. Why did that happen? Because of increase in. Now people, rather than consuming, people started to. So consumption decreased. Business borrowings will also aggregate demand, rather than increasing much more, it crowding out. What is it called as? Important concept. Clear? This is limitation of fiscal policy. What is it? When you are fighting recession, that means contraction phase of business cycle. Anyhow, if you come to depression, your fiscal policy will not at all work. We need pump pricing or compensatory spending. Pump pricing or clear? This is the concept of crowding out. Limitation of fiscal policy. Limitation of which policy? Clear? Next, last but not the least, limitation. First one we discussed already. Crowding out. Decision making is not always on a correct time. Decision making lag is there. Recognition lag, implementation lag, and also everything. Government is always late, and lack of information and uncertainty about inflation and deflation. And moreover, in our politician, there is an integrity issue. Hello, our government did this. Hello, our government approved it. Hello, our government gave money. Or fighting between themselves only. Next, cost is increasing. Day by day, government spendings and tax policies are changing. Every time we can't reduce the government expenditure, especially in case of defense and like this, borrowings has to be decreased. But day by day, it is. That is are the problems. Public works cannot be adjusted with easily transmitting of business cycle. All of a sudden, I can't reduce the public works and all. When I'm constructing some long gestation project like road, bridge and dam. Now, inflation is there in the economy. Don't spend. Hey, get lost. Before monsoon, if I don't finish this work now, rain will come and every work will wash out. See, problems are there. So, limitations of fiscal policy. What is it? By this entire chapter 7 comes to an khatam. Clear, huh? Now, let's go to the MCQ questions in the past 2 papers. Okay, chapter 7. See there. Non-debt capital receipts of government includes non-debt capital receipts. Just now I spoke about this. Recoveries of loans and advances is a non-debt capital receipt. Next, when the outcome of a policies are not visible, when you are creating policy, when it is not visible, that means government is implementing, but there is a lag. Just now we said now, limitation of fiscal policy, impact lag. So when you are not implementing properly, you will not get the good outcome. That is dash lag, impact lag. Now the excess of government expenditure. What is that excess of? Over its total receipts, excluding borrowing. Now you got the difference. Excluding borrowing. That is called as fiscal. Now that this is what I was searching that time. See, receipts which neither creates any liability nor causes reduction in the assets of the government is called as revenue receipt. Next, chapter number 7. Next, the progressive direct tax system ensures what will a direct tax will do. Those who have a greater ability to pay contributes more. You earn more, you will pay more tax. So tax burden is more and it is distributed fairly among the population. Take it from rich, give it to the poor. Distributed fairly among the population. That is the purpose of budget. Next, progressive tax system. Next, which constitutional body maintains fiscal federalism in fiscal, that comes under finance. Public money, public expenditure, government expenditure, that comes under Financial Commission, that is Ministry of Finance. What is it? Ministry of? Next, which of the following is not a chapter 8, that is not a characteristics of money. 7th chapter. The cap and trade method of using government to ensure the pollution is minimized in the most cost effective way is an example of correcting externality. We decided now direct intervention, cap and trade system, externality. That's it. Next September paper. Sarah is considering purchasing of a used car from the name John. John claims that the car is in excellent condition. It has never been in a. However, John is aware. Who is aware? Car had significant damages. One person to the contract knows more information than a other person to the contract. Lemon's problem. Asymmetric information. Which information? Next, the primary deficit. What is it? That means excluding interest liability. Primary deficit will not include interest liability. If I add interest liability to primary deficit, what do I get? So primary deficit 2500, interest liability 3500. 2500 plus 3500. That's it. For this, many of them did blunder. 2500 minus 3500. They are asking fiscal. Fiscal includes interest liability, na? Next, this definitely over and the above. Over the above question only. Articles of Indian Constitution containing specific provisions regarding the distribution of among the states will come under Article 268 to 268 to 281. This is, to be frank, above the concept only. You can't remember each and every data in this. Next, Richard Musgrave. Who is that? Who introduced the concept of? Describes the role of government in the market economy. Which of this is their branches? Resource allocation, income redistribution, macroeconomics, allocation, redistribution, stabilization. That is called 3-branch taxonomy. Next, same to same concept. This was the GK question. We read newspaper. Will we keep on instructing in class? Na? GK question. See, under which Supreme Court verdict? Under which Supreme Court? Unions and state legislatives have equal and simultaneous and unique powers to make laws for GST. This was the verdict given in 2022 May by the Supreme Court. GK question. Which question? I said now some 5 to 7 questions will always go above your head. Highly impossible to remember everything. Next. Under institutional responsibility for public debt management. Which debt management? External debt is responsible for.
Ministry of Finance.
But this time both were answered. Department of Economic Affairs, Jaishankar, Finance, External Affairs Minister. Even they are responsible to get the public debt management. So both are answers. Anyone marked. Both are considered as answer. But to be frank, Ministry of Finance. That is a direct answer. But they also consider Department of Economic Affairs because that comes under Ministry of Finance. That is what is primarily responsible, who takes care of public debts. Under Ministry of Finance. Next, which actions can be taken during see, implementing measures. That means government measures and reduce government
Spending.
yes, inflation, excess money is there, and also levy new taxes and raise the. Both were answers. This time, ICAI has considered both as answer in the answer key, suggested answer key. They have given answers as B as well as. Next, which of the following are considered tools? What is it? Of fiscal policy. Just now we discussed tools of fiscal policy: tax, government expenditure, public debt. One more is missing. Which is that?
Interest rate.
Monetary policy, interest rate,
Borrowings.
public borrowings, public debt included. External borrowings is not included, only public. They have given the word public. Even external borrowings will come. Internal, external. Next, see there. Already we did this. Primary deficit. Next, all revenues raised. We did this, which comes under consolidated fund. See, this is the question. Now tell what is the difficulties? Easy questions. That is what many of them feel chapter 7, 8, 9. Once you get conceptual clarity, automatically it will be easy. Clear? By this entire chapter 7 comes to an chapter 8, unit 1 will not take time, unit 2 will not take time, unit 3 will take time because RBI concepts will come into picture. Clear? Now let's get started. There are some chota mota topics in this, all your 11th and 12th syllabus that I will not touch. Now only I am saying that I will. What is money? Characteristics of money, all that money. Apa? Theories of money. That is what, that I will do it. Don't worry. That is important. See, chota mota 11th, 12th topic, I will leave it. Characteristics of money, generally accepted, means of payment, deferment of value, used in deferred payment, history of money, barter system, all those. It is 11th, 12th topic that is. Clear? Now, let us understand. Chapter 8 has 3 units. How many units? 3. What is the time now?
3.
What time we started the class? 2 o'clock now. 4 o'clock we'll give a break. Every 2 hours once break. Again 4 to 4:15 break. 4:15 to 6:15 class. 6:15 to 6:30 break. 6:30 to 8. If you want extended in detail, it goes till 8. And let me know, we'll finish it by 6 or 7. Now 5 minutes, later 5 minutes. Now 5 minutes, do you really need it?
No, sir.
Had lunch nicely, panke, neer manchge and all, winter. I know. He was partially sleeping. Another partially he was busy with something else. You come outside, I will tell it. ನೋಡೋ ನಾನು ಅದೇ ಸ್ಕೂಲಲ್ಲೇ ಓದಿರೋದು ಆಯ್ತಾ, ಅದೆಲ್ಲ ಮುಗಿಸ್ಕೊಂಡು ಫ್ಯಾಕಲ್ಟಿ ಆಗಿ ಬಂದು ಕುತ್ಕೊಂಡಿರೋದು. ನೋಡೋ ನಮ್ಮ ಹುಡುಗರಿಗೆ ಕ್ಲಾಸ್ ಅಲ್ಲಿ ಕೌಂಟರ್ ಡೈಲಾಗ್ ಹೆಂಗ್ ಬರುತ್ತೆ ಅಂತ ಗೊತ್ತು. ನೀನ್ ಅಪ್ಪಿತಪ್ಪಿ ರೆಗ್ಯುಲರ್ ಕ್ಲಾಸ್ ಅಲ್ಲಿ ಇದ್ದಿದ್ರೆ ಕತೆ ಬೇರೆ. ಓಕೆ, chapter number 8. What is that chapter number? It has got 3 units. How many units? 3. So unit number 1 that speaks about money demand. What is that? Money demand. Unit number 2 speaks about money supply, and unit number 3 is monetary policy. What is that? Demand for money, supply of money, monetary policy. Clear? Now straight away question: do people need money? What purpose? On what?
For basic goods and services.
Or is it only for goods and services? Sir, emergency, sir. So demand for money is for 2 types. Demand for money is for 2 types. Number 1, sir, holding money in the form of goods and services. That is derived demand. Which demand? Derived. Second one, for emergency purpose, liquidity preference. Which preference? Liquidity. So demand for money is for 2 types. How many types? 2 types. Liquidity preference and holding money in the form of goods and that is derived demand. Which demand? Derived. These are the 2 main purpose of money. And what is the meaning of money? Liquid financial asset. What is it? Set of? Liquid financial asset. Straight away answer. Set of liquid financial asset is called as a money. That is called as money in terms of policy purpose. Which purpose? Money does not have any specific definition from RBI, but we consider money is a legal tender. Money is a generally accepted within the political boundaries of the nation as a medium of exchange, mode of payment, store of value, transferring to the purchasing power. So in short, money is nothing but a legal tender. Which tender? Legal tender. Considered from the eyes of law. Considered from the eyes of. See, all that barter system and all, I will not go. Whatever currency notes that is printed by the government of the nation, that is central bank of the country, is called as dash money. What do you mean by fiat money? Materially worthless. What is it called as? Clear? That means just a sheet of paper. That statement in your currency note, I promise to pay the bearer a sum of rupees 50, 100, 500, whatever it is. Okay, happy Diwali. Next. Now, that is materially worthless. What is it materially? Clear? That is called as fiat money. By considering it as a legal tender. What is it? Considering it as a legal tender. From the eyes of, we call it as a money. Now, nature of money and all 11th to 12th standard syllabus. Enjoy it. All this. Clear? Functions of money, all this 11th to 12th syllabus, just go through it like a newspaper. Now demand for money. Now demand for money, mainly 2 reasons. I said number 1, holding in a liquidity preference. Second one, derived demand, to buy goods and see, these are the 2 important demands for money. Now yes, direct demand. First I need money to hold, liquidity. Derived demand as a hedge against the securities, or let me say I will get money once in a month, but I need to spend money throughout the month. Temporary abort of value. What is it? That is what? Theories of demand for money. I will explain it now. Now, total 6 theories are there. How many theory? 3 plus 3. What is it?
3 plus 3.
First 3 is most important. After the third one, that is Keynesian theory, your friend, macroeconomics. Post Keynesian theory, another 3 more. So, how many theories of demand is there? 6 theory. 3 plus
3.
Okay, let us take up an example. Okay. There are 3 friends. How many friends?
3 plus.
Chetan, let's say Pawan and Shashi. So all 3 friends are working in a same company. All 3 are getting same salary, 15,000. How much?
15,000.
How much?
15,000.
Now, Chetan is very much busy. He will go out with girlfriend, he will hang out, he will be spending money. Now, Chetan is only and only using money for a transaction purpose. Which purpose? Full entire 15,000 damar in a month. No savings, nothing. But Pawan will be receiving lot of phone calls from his mother from Hubli. She will be keep on saying, save some money, don't spend everything. So, he will also spend transaction purpose and also precautionary purpose. That is savings. Clear? Shashi Kiran learned some finance and all. Now he wants to invest money. So, Shashi Kiran is using for 3 different purpose. How many different purpose?
3.
Transaction purpose, precautionary purpose, speculative purpose. Which purpose? Now, this first 2, transaction and precautionary purpose is dependent on income. What is dependent on what?
Income.
But speculative money is dependent on interest rate. Speculative money is dependent on? These are the first 3 theories of demand for money. Chetan example is Fisher theory. Which theory?
Fisher theory.
Chetan example is which theory?
Fisher theory.
Or QTM, quantity theory of money. Pawan example is Cambridge theory. Which theory?
Cambridge theory.
And Shashi Kiran example is
Keynesian theory.
Keynes theory. Keynesian.
Keynesian.
Clear up. So, in case of Fisher theory, money is exclusively used only and only for dash purpose. And in case of Pawan example, money is used for transaction and in Keynesian theory, transaction, precautionary and transaction and precautionary is dependent on speculative money is dependent on. Clear. Now let me straight away explain the Keynesian theory first. Interest rate concept. Now listen to this carefully. Now Shashi Kiran, he is investing money. What is he doing? Let's say for example, out of 15,000, I will spend some 11,000 for transaction, 2,000 for precaution, another 2,000 for speculative. Now this 2,000 speculative demand, I will invest on 1st of January, 1st of 2025, when bond price is rupees 100. Bond price is rupees 100. And the interest rate was 10%. Wow, good interest rate, high interest rate. So whenever interest rate is more, I will not keep money in hand. I will invest. I will clear. Next, after 6 months, that is on 1st of July, 1st of 2025. Now bond price has become 500 rupee. Bond prices have increased and interest rates have been reduced. Now, how much money I invested on bond? Now, how much it has become? Now, what will I do? Take out. I will take out to liquid cash. That means, now when interest rates are low,
Low.
speculative demand. Here, I will consider it as demand dates. Speculative demand for money is high. I will hold money in my hand. I will not invest. I will hold money in my. When interest rates are low. When interest rates are high, I will not keep money in my hand. I will keep money in my hand low because I will invest. I will. So remember, bond price and interest rate is also inversely related. Speculative demand and interest rate is also inversely. When will you invest money? Interest rate more or interest rate less? Interest rate. When will I withdraw that money? Clear. So whenever interest rate is more, I will not hold money in hand. I will invest. I will
Invest.
whenever interest rate is low. Whenever interest rate is whatever I have invested, I will take it out. Now there are 2 types of income. How many types of income is there?
2 types of
See, the primary returns is a interest returns. Which return?
interest return.
Let's say what is 10% of 100 rupees? Rupees 10. What is 4% of 500? Take out. 16, 20, rupees 20. See, this is interest returns. Which return? But for me, the biggest return is capital gains. Which gains? How much did I make money? So there are 2 types of return, capital gains and interest returns. But I take a decision based on interest. Decision based on?
Interest.
So remember, when will I invest more money? Interest rates are
When interest rate is less, I will take back my money. So speculative demand is more when interest rates are less. Speculative demand is more when interest rates are
Less.
I will hold more money in my hand when interest rates are
Less.
speculative demand is less when interest rates are so speculative demand and interest rates are dash related, but income, transaction and precautionary purpose are directly related. When you get more income, you will spend more. When you earn more income, you will save more for a precautionary purpose. There is a direct relation. Which relation? But interest rate and speculative demand is income and transaction and precautionary motive is positively. Clear? Understood? This is Keynesian theory. Which theory?
Keynesian theory.
People use money for three purposes: transaction purpose, precautionary purpose. Now, in this theory is given more importance for dash purpose, speculative purpose. When will the demand for speculative money increases? Interest rate. When will the interest rate decrease? Speculative demand will
Increase.
inverse relationship between speculative demand and interest rate. Is that clear? Understood? Now, remember, they can ask a question either based on bond price interest rate or speculative demand and interest rate. Both are inversely related. Both are. When bond price is less, interest rates are more. When interest rates are less, bond price is more. Even that is inversely related. Clear?
Yes.
Understood? Okay, let us go to Fisher theory, QTM, the very first one. Now, let's take up an example. Now, Chetan wanted to buy a chocolate. You wanted to buy what? Okay, now let's say, for example, the price of chocolate is rupees 100. Price of chocolate is rupees 100. Let's say you want to give a chocolate 5 times in a week. How many times in a week?
5 times.
Because he's working now, MNC company, Monday to Friday is working day, Saturday, Sunday holiday. So he is meeting his girlfriend only for 5 days a week. So he will buy 5 chocolates. Number of transaction made is?
5.
So how much is the total demand for money?
500.
So he need total 500 rupee. So price and transaction, P and T. Is it clear? Next up. Let's say in an economy, now the money supply, which supply? Is also rupees 100. Let's assume that there is 100 rupees in the economy. Product price is also 100 rupee. Now people can buy the product, right? Let's assume product price is 120 rupee. Product price is?
120.
But people have only 100 rupees in the hand. Can they demand the product?
No.
Remember, there is a direct relationship between money supply and price level. Direct relationship between prices of the goods are decided based on how much of money is there in the economy. If money supply increases, money supply
Increases.
if government spends more money, if money supply increases, people get more money in the hand, they will start demanding more. Prices will
Increase.
That means if money supply increases by another 20 rupee, automatically price will also increase by another. Clear? There is a direct connection between dash and dash, money supply and price level. Now this money, whenever it is spent, it is getting circulated, na? That is called velocity. That is called as what? That means this 100 rupee is circulating 5 times. How many times? 5 transactions made, na? Like that, from one person to another person, it gets rotated 5 times. How many times?
5.
So there is a direct relationship between velocity and transaction. Direct relationship between what?
Velocity and transaction.
Now there should be in an economy total supply of money also 500. Also, see, this is demand, AD. This is supply, AS. Now AD has to match with?
Yes.
But QTM, that is Fisher theory, is never giving importance to demand side. See, Keynes gave importance to which side? C plus I plus G plus X minus M, demand side. But now Fisher is not giving importance to demand side. Fisher is giving importance to supply side. Which side?
Supply.
And Fisher said, see boss, in terms of actual money. In terms of which money? See, this is actual money concept. Whatever I just said, M and V, P and T, price and transaction, that is demand side. Which side? P into T should be equals to M into V. P into T should be equals to? There was one superb question asked on that. P into T, M into V. That requires your little skill. Wait, let me show that question. The question was really nice. I enjoyed it actually. Chapter 8, chapter 8, chapter 8, chapter 8. The question was easy. To be frank, question was what? Easy peasy. Later we'll squeeze you with that easy. Where is that? MV is equals to PT. Same question was there. Searching this question will only take some time more. Chapter 8. I think September paper. There was a numerical. We got it. Question number 71. What is it? Question number? First, understand the question. That is most important. In an economy, in a money supply, what is it? M is 500 crore and the velocity of money supply is 5 times. That means money is getting circulated how many times? Now M is given, V is given. Now what is the formula? MV is equals to PT. MV is equals to PT. And the number of transaction T is 10,000. Number of transaction is what? 10,000. They are asking you to identify the price level. Identify the Kahn twist. Listen. Crores. They have given value in terms of what?
Lakh.
Crores. Here 1,000, lakh, 1,000. That is what I said. Question is easy. Option is not easy. What is it? Question is? Easy. Option is not? Easy. Now, we know the formula. MV is equals to PT. What is it? MV is equals to? PT. Now observe. M, money supply 500. And number of transactions? 5. 500 into 5. 2,500. We got the supply side. We got which side? Now, demand side. We need to identify P. Number of transactions we know. Now you need to cross multiply. Suppose for crores, if I am considering crores, that means when you are converting crores into lakh, that will become decimals. That will become what? Clear? Suppose 1 crore is equals to 1. What is it? 1 crore is equals to? If I consider 1 CR as a value of 1, that means 50 lakh is 0.5. Clear? Suppose 10 lakh, 0.1. Understood? See, this conversion you should know. If you don't know this conversion, gone case. Now mix match. 25,000. What is it?
25,000.
That means 0.025. 0.025 into 10,000. Will you get 2,500? Check. 0.025 into 10,000. Transaction is 10,000 na? 250. Next up. 25 lakh. What is it? 25 lakh can be written as 0.25 na? 0.25 into 10,000. Matched. Answer was 25 lakh. 99% of the students went wrong with this question. And that, especially September attempt, 19 questions have come in practical. How many questions? If you don't believe, calculate. See, sometimes they will give more practical questions. See, calculate how many practical questions are there in the entire question paper. See, just calculate. 1, 2, 3, 4, 5, 6, 7, 8, 9. Only 9 da. 9, 10, 11, 12, 13, one formula is there na? Okay, leave the formula. 12 only. 13, 14, 15, 16, 17, 18, 19, see, 19 questions. Upon the data, some 4-5 questions. Approximately 25 questions. How much questions? 25. From data, formula, numericals. Usually 10 questions will come. How many questions? But in September paper, double. Instead of 10, they made it 19. Upon that, 2 formula questions, 3 GK questions. Almost 1/4 of your question paper was based on practicality. See, they know how to screw your happiness. That is what I'm saying. You can't ignore. You can never predict a question paper. One attempt to another attempt, the question paper flow will not be same. Question paper flow will. If they really want to screw your happiness, you can expect 30 practical questions sometime. And if that comes, to be frank, jackpot. More practical comes in economics, national income, money supply concept. From there, it is a jackpot if you know how to solve it. You should just know the formula. You should just know what? Clear. So this is with respect to actual money. Which money? Now there is one more concept, credit money. Which money? That means people started also including banking habits. Which habits? They don't just keep money in their hand. Now they also keep money in the bank. So there is something called as M dash. What is there? And there is also banking velocity. That means credit creation is happening now. When banks get the money, they will give loan. That money also getting circulated in the economy now. So with respect to actual money and credit money, see this formula is only respect to actual money. Now actual and credit money, PT is equals to MV plus M dash. This is the formula with respect to actual and credit money. What is it? Actual money and clear. This is Fisher theory. Which theory? And remember, Fisher gave importance to which side? Supply side. Which side did a Fisher give importance to? Now see the formula here. MV is equals to PT, actual money. MV, M dash, V dash. That is the total supply side. That is actual and credit money. Now comes the final conclusion. Money is only used as a medium of exchange. Dash purpose. And V dash is going to remain constant. They believe there is a dash employment in the economy. That means Fisher is an old economist. He has given theory in 1911. When? Even before Great Depression of America. That is what everyone was following now. Government intervention is minimal. Automatically things get adjusted. So Fisher gave importance to which side? Fisher has given importance to supply side. Which side? Now comes the second equation, Cambridge equation, which is supported by all your John Maynard Keynes, A.C. Pigou, Robertson, Alfred Marshall. Clear? Now transaction purpose is not given importance. Which purpose is given importance? Precautionary purpose. Which purpose? See, when your money demand is increasing, suppose if you are getting more and more money, automatically you will save more money. See, proportion. What is this word? Of your money holding as a cash will increase when your income is increasing. Sir, I was getting 15,000 income. How much? So I was just saving, let's say 20%. How much percentage? 20%. That means I was only having 3,000 as a savings and remaining 12,000 as a spendings. Now if your income increases from 15,000 to 20,000, automatically even if I consider same 20%, what is 20% of 20,000? Now 4,000 will go for savings and remaining 16,000 will go for. See now demand for money increased. Now earlier 12,000, now it became 16,000 there. It increased. Clear? So that is precautionary purpose. Which purpose? Why sir? Why are we holding more and more money? Because temporary abort. That means I will get income once in a month, but I should make a spendings throughout the month. Sir, next week I need to travel somewhere. Next week I should bring groceries to home. After 15 days I should buy something. Everything I cannot just keep it in form of cash savings. I should hold some money to buy in future. To buy in temporary abort. That is temporary store of wealth. What is it called as? So money demand is a proportion. Money demand is a of your nominal income. Money demand is a proportion of your clear. Conclusion. See, why do we need money? We don't need money just to satisfy our wants. We also need it for emergencies. According to this neoclassical theory, the quantity theory of demand was only and only transaction purpose, and that is hypothesis. That is based on some assumptions. But now Cambridge theory will focus on both transaction as well as precautionary purpose. See, QTM, only medium of exchange. Here medium of exchange as well as their transaction motive. We are transaction in. Now money is a flow concept in QTM, but money is a, we are holding that money, we are storing that money. Here supply side is given importance here. Now, and Keynesian theory side already we have explained. What is that? Money is also used for a, the first two, this is dependent upon income, but speculative money is dependent on interest rate. So I will not touch transaction, I will not touch precaution. Straight away will come to, see there, speculative money refers to people desire to hold cash in order to equip and exploit an attractive investment opportunity which requires a, and I am taking advantages of future change in bond price. What is it? Future change in? presently bond price is 100 rupee. In future it can become.
500.
So when it is 100, I'm putting money. When it becomes 500, I will take out money. Clear? See, that means I'm taking an advantage of future change in bond price. Taking advantage of dash. See, according to Keynes, people demand to hold money balance to take advantages of dash change in rate of interest. That is same as future change in. That means now interest rate is 10%. Future it will become. Even interest rate is also changing in future. Na? Future change in interest rate is nothing but future change in bond price. So the impact of Keynes theory is based on dash. That is the real returns on the bond. What is it? Real returns on the. See there, the returns on the bond is interest rate. Along with interest rate, we also have dash gains. So not only interest rate, along with interest rate, we also have a capital gains. If you just hold money in your hand, will it put extra money? If you hold money in the hand, that has an opportunity cost. There is zero. You will not earn anything. Opportunity cost becomes dash. Opportunity cost becomes zero now. Opportunity cost is interest foregone. Opportunity cost is and money will not increase if you are just holding your money in hand. Now, in terms of speculative demand, which demand? See, if the current rate of interest is higher, suppose if current rate of interest is higher, critical rate of interest in future is lower. Current rate of interest is, what will you do? Hold money in hand or will you invest? See, in future we expect that interest rates are going to fall, bond price is going to rise. So we will convert all our cash balance into, I will not hold money in hand, I will convert cash into opposite. See, whenever current rate of interest is lower, current rate of interest is 4%. Critical rate of interest in future it will become higher. That will be 10%. That means we are expecting in the future bond prices will fall, interest rates will rise. So what we will do? We will convert all our bonds into clear. Understood. So higher the interest rate, lower will be the demand for speculative money. This is the conclusion. Higher the interest rate, lower will be the demand for
Speculative money.
an increase in income will increase transaction and precautionary purpose, but increase in interest rate, increase in
Interest rate.
will decrease the demand for speculative purpose. Increase in interest rate will decrease the demand for speculative purpose. I will not hold money in hand. I will convert it into bonds. Clear? So transaction and precautionary is dependent on
Income.
speculative is dependent on. So according to Keynes, people demand money for dash dash purpose, transaction, precautionary and speculative. All three put together is the total demand for. Clear? Now same graph. See, let's say interest rate is 10%. I will not hold anything in speculative demand for money in cash. I will hold this. Suppose if interest rate becomes 8%, some portion I will hold money, some portion I will hold bond. Next it becomes 6%. Next becomes 2%. More I will hold in cash, less in bonds. Clear? Next comes liquidity trap. Which trap?
Liquidity.
Now we understood crowding out. If you remember, what was crowding out? When interest rates during contraction phase of business cycle. But what should happen during contraction phase? Interest rate should? Okay, let us decrease and I will make it almost to zero. I will make it? See, even if interest rate increases also problem, interest rate to extreme level. Interest rate decreases to like almost zero, 0.1, 0.5, real like Japan. In Japan, interest rates are extremely low, 0.1, 0.5%. That's it. People borrow loan from Japan and invest in US. Good returns will be there in US. Interest rate is available for a very cheaper rate in Japan. And you don't believe, stock markets made all-time high in Japan after 32 years. After? Last time when they saw all-time high was in 1997. 93 if I'm not wrong, 1993. Now recently, Japan market hit all-time high once again, 2025. 1993, 2000? Almost 20 plus years, 32 years. That is the gap. They claim that almost after 27 years, we are seeing the growth rate because of lower interest rate. Because of lower. Will people invest money when interest rate is low? When they will invest? Liquidity trap. When interest rate becomes extremely low. Interest rate becomes? Even if I hold money in hand, it will not give me any return. Even if I keep money in bank, also extremely low interest rate, like some peanut 0.1, 0.2. Better I will hold money in hand only. Money is getting trapped in the hands of people. Money is getting because of extreme lower interest rate. Extreme? This is limitation of monetary policy. Limitation of which policy? Clearer. And there is another reason. Suppose if there is a war going on. Which going on? Between the country, or when there is an anticipation of business cycle depression. Business cycle? Not contraction. Depression. When the economy is entering depression, people will not keep money in bank. They will keep money in. That is liquidity trap. Which trap? In real life, Japan has experienced a liquidity trap. See, liquidity trap is a situation where an expansionary monetary, that means economy is not performing well. Government expenditure should, tax rate should, interest rate should. Now, because of which money supply should, government is spending more, na? Money supply should increase. Does not increase as the interest rate, income, and hence that will not stimulate the economic growth. Liquidity trap is an extreme effect of monetary. In this situation, the general public is prepared to whatever the amount that money is supplied at the given rate of interest, at the given rate of, and such given rate of interest is extremely low with a fear of deflation or war. In this case, monetary policy carried on in the form of open market. What is open market operations? Buying and selling of public security, that is treasury bills by the RBI, to control money supply. That means when there is inflation, people have more money in the hands, na? RBI will sell the bonds. People will buy, money will come inside RBI. When economy is not performing well, economy is not. Now RBI will purchase the bonds what they sold during inflation. When RBI purchases the bonds, automatically bonds purchase, money will go out. That means injection of money. What is happening? There is money supply increasing through open market operation. But people, rather than spending that money, what are they doing? Holding the money in the form of cash. It has no effect on either the interest rates or the level of. It is the liquidity trap where monetary policy will become powerless after the effect of. Such interest rate is like almost zero. What is it almost? Like 0.1%. So whatever money that is supplied, whatever money that is, it becomes perfectly inelastic. Perfectly. Whatever money that is pumped in by the government, people are holding everything in the form of liquidity. Everything in the form of. See, x-axis parallel to x-axis. Speculative demand becomes perfectly elastic. Speculative demand will become. They don't invest at all. Everything is holded in the form of. And whatever money gets pumped in, everything will be holded in the form of liquid cash. This is the situation of dash. Liquidity trap. So failure of fiscal policy, crowding out. Failure of monetary policy, liquidity trap. See, in real life, Japan, they had only 0.2% of growth rate. 0.2% of growth rate because of their deflation. Because of their what? And almost interest rates was zero. Interest rates was what? See, in the monetary printing, that means whatever the central bank prints the currency, that was hoarded. That was hoarded by the people with the anticipation of future. Rather than Japan's 10-year yield dropped to record of 0.2%. 0.2%. Interest rates was almost zero there. Clear? So this is the concept of liquidity trap. So first three theories are done. QTM is done, Cambridge is done, Keynesian theory is done. Now post-Keynesian theory. Which theory?
Post-Keynesian theory.
Now three more theories are there. Number one, transaction balance, or also called as inventory approach. Which approach?
Inventory.
Okay, let me explain it one by one. Easy. It will hardly take 5 minutes. It will get over in another 5 minutes. Clear? Now see, what is inventory approach? Now Baumol and Tobin, who introduced this? They said, see boss, you name it whatever purpose you want, whether transaction purpose, precautionary purpose, or speculative. I consider everything as a transaction demand. Which demand?
Transaction demand.
You call it the name you want, but we consider everything as dash transaction. That means you are holding money for the purpose of transaction. Purpose of? And every time when you convert your money into bond or bond into money, there is something called as brokerage charges. Which charges? And if you convert more times, you will lose money in brokerage charges. If you don't convert and keep it in cash, you will have an opportunity cost. What is there? So you should have a combination of both. You should have what? Combination of. You should also hold some cash. You should also invest to take advantage of opportunity. That means rising interest. Rising. Clear? That means don't convert more number of times. You will lose out money. Whatever profits you made, you will lose out in the form of brokerage charges. So hold a combination of both. What does it hold at? You should also hold cash as well as interest-bearing alternative financial assets in the form of. And every time whenever you convert the cash into bond, there is a fixed cost that is called as. Clear? Why? Relatively liquid financial asset. What is liquid financial asset? Money. Money is a set of liquid financial assets. That means you can also keep it in bank deposit. Where you can keep it? Some returns you will earn. Don't keep money in hand. Don't keep money in. Keep it in your bank. At least some returns. What is it? You will get from your bank deposit that will offer a positive returns. Which returns? But whenever you convert that money into asset, asset into money, that is bond, you will have a fixed charges. Which charges are there? Such fixed charges are called as brokerage charges. Clear? See, there is an opportunity cost involved. If you just hold money in the hand, you are foregoing the opportunity of interest earning. And if at all you keep your money in the demand deposit, that is your current account, business account, you will not get any interest. If you keep in your savings account, you will get some interest. If you invest it on bond and shares, you will get a good interest. But there will be high risk. You can also lose that money. You can also gain money. Clear? So he introduced something called a square root rule. Which rule? In this formula, you can identify how much to keep in cash and how much to keep in bond. Only formula is important part. Once they have asked in MCQ. Which among the following is a square root formula introduced by Baumol? Clear? Next. Same to same transaction. Whatever I just explained now. How it will take place if you increase your number of transactions. See, brokerage fees will be higher. So automatically marginal cost of bond holding transactions will. That means more number of times you will not convert. You will hold more money in the form of bond. So automatically number of transactions will decrease. You will not convert more times. So average bond holding will decrease. Transaction demand for money will increase. Next comes Friedman's restatement theory. What is it, Friedman's? Now this is interesting. Listen to this carefully. Now Keynes, he said, boss, people consider transaction purpose, precautionary purpose as well as. And they consider present income. Which income? But Friedman considered future income's present value. What is it? In statistics, you have a concept called as time value of money. What is that? Time value of same to same. Let's say in 2025, if Pani Puri is 40 rupees, in 2015, Pani Puri is 25 rupees. That means what is 40 rupees in 2025 was 15 rupees in 2000. That means, sir, in future Pani Puri price will rise. That means, let's say in 2030, one plate Pani Puri is 70 rupees. How much?
70.
In 2030 it is 70. That means presently how much? That means what you will earn in 2030, its present value is only future income's present value. Future incomes? What you will earn in future, identify its present value today. Identify its based on 5 different asset class. Based on how many asset class?
5 different.
And then you decide about investing. All your speculative purpose. Is it worth investing or not worth investing? That is called Friedman's restatement theory. Which theory? See, Keynes speculative demand. What is it? Keynes speculative demand considered only present income. Which income? And this guy, Milton Friedman, extended the same Keynes speculative demand and he considered permanent income. What is it? And he said cash is like any other capital asset. Cash is like any other capital. So we will have a permanent income and also relative returns on such assets. Suppose if I buy a building, I will get rental income, relative return, and that rental income will come for next 5 years, 10 years. What is the 10 years? Next 10 years you will earn. Identify its present income. Identify its. See there, permanent income. Which income? Permanent income. See, this statement is important. Friedman considered dash income. But Keynes considered only in order to identify the demand for money. And Friedman said wealth is the present expected value of dash income, all future income. What is it? Present expected value of all the money is a good. Money is dash like any other durable commodity. Like money is like a inventory. Like how your closing stock is there, na? For me, money is like any other durable good. How much is the stock of money we have? How much is the? And calculate future incomes present value. Future incomes. And he considered 5 different asset class. How many different asset class? See, if you just hold money in your hand, that will get 0 returns. Opportunity cost is there. If you invest in bond, you will get interest. If you invest in equity, you will get dividends. Clear? So how do we identify the discounted value of the future incomes present value? See, permanent income, what you earn in real, total or lifetime of its asset, divided by discounted value. Divided by which value? Clear? That is called as current value of total wealth. Current value of? See, I considered 5 important asset class. Money, bond, equity, physical capital, and there is a positively related with price level. That means if prices are increasing, the asset value will also increase. And inverse relation with opportunity cost. If you don't invest and if you're keeping simply cash in your hand, you're losing out opportunity. You're losing out what? And why is that opportunity cost coming? Because of inflation. Year by year, inflation is increasing. Just assume you kept 100 rupees note in economics book and you forgot. After completing your articleship, you saw, oh, Shashikiran sir, stupid fellow, assumption fellow. You will open that book. You found 100 rupees. What 100 rupees can buy in 2025? Is it same in 2030? Because of inflation opportunity cost. Which cost is there?
Inflation opportunity cost.
Clear. Opportunity cost arises because of inflation rate. So you should not hold money in cash. You should invest. If you don't invest, if you just keep money in cash, now you will lose out opportunity. Inflation will eat your money. Inflation will. So even before investing, consider all your future incomes present value. Future incomes. But Keynes didn't consider nothing. Only present income. That's it. Friedman considered future incomes. Last but not the least, behavior towards risk. What is it? Behavior towards? So what is this behavior towards risk? Simple. If you are ready to take more risk, invest everything. Don't even hold cash. No. If you don't want to take any risk, don't even invest. Hold everything in cash. No risk. Or keep it in your demand deposits, safe assets, bank account. Suppose if you want to take low risk to high risk. What is it? Low risk to? Learn about investment. Slowly you start increasing your investment. Or take high risk to low risk or low risk to or no risk at all. What is it? Liquid cash. See, combination of safe and risky assets. What is it? Combination of? That means you should also invest. You should also hold cash. When you are investing, you should keep it in bank. You should also invest in bond. You should also invest in shares. Multiple places. What is it? So take less risk to more risk. They are called as risk averse. That means slowly you are taking up the risk after understanding and giving a positive return. Next to more risk to. First you took high risk and slowly you are reducing your risk or completely zero risk. That means I will not even invest everything. I will hold it in the form of cash. But you will have opportunity cost. Which cost? Clear? So this is the concept of chapter 8, unit 1, money demand. Money? Clear? Unit 2 will speak about money supply. Unit 2 speaks about what? 4 concepts are there. Especially this last concept is interesting. Money multiplier. Which multiplier? Same. Investment multiplier we studied now. Same to same way. We have a concept of dash multiplier. Money multiplier. Clear? Understood? So time is already 4 o'clock. 15 minutes break. How many minutes? 4 o'clock to 4:15 break. 4:15 to 6:15. Then we will decide how much is left out, what to do, how much to do, how fast to do, who is still having energy, who will be sleeping, who will be looking each other's faces, why the hell did I come to class? That you can decide later. Chalo, bye-bye, take a break. 4 o'clock, 4:15 we will start. Okay. So unit 1, money demand is done. Now let us start with the unit 2, that is money supply. So in case of money supply, we will be discussing 4 major concepts. Number 1, sources of money supply. Second one, measurements of money supply. Third one, determination of. And last but not the least, money. See, now when we speak about money, it is a set of liquid financial asset which is in the hands of public. What is it? Which is in the hands of? Now money can be attested as a stock concept as well as flow concept. So in case of a stock concept, which concept? Stop. That means what is the total money which is printed and circulated by the RBI, that is central bank of the country. Out of that money printed and circulated, how much is getting rotated in the hands of public on a regular basis? That is a flow concept. Which concept? Now let us understand who is public. Rather than saying who is public, if you get to know who is not included in the definition of public, that will make more sense. Remember, producers of money. What is it? They are not included in the definition of public. Who are the producers of money? Number one, government. Number two, banking system. So government and the banking system is not included in the definition of public, except them, everyone else, all local authorities, NBFCs, non-departmental public sector undertaking, foreign central banks and foreign government is a public in India, and IMF, even World Bank, even their money which is kept with RBI is a public money. It is a public. So in short, except producers of money, except everyone else is considered as a public. And any interbanking deposit, interbanking, one bank keeping money with another bank, that is not a public money. Same way, money held by the governments and the banking system is not included as a public money. Not included as what? When we speak about government, that means all central governments, state governments and local bodies. Banking system means one which comes under the Reserve Bank of India, one who accepts CASA deposit. Which deposit? Current account and savings deposit. They are called as a public. Clear? Now, sources of money supply. What is it? Sources of? There are mainly two sources. Primary source of money supply is a central bank. That is called as high-powered money or fiat money. What is it? The secondary source is a credit money. In the process of lending and borrowing activity, commercial banks will create a credit money. Commercial banks will create which money? Credit money. Clear? The central bank of all the countries are empowered to issue currency. They are the dash source of money supply. Primary source of money supply. When we are understanding the total supply of money, we should also include the commercial banking money which is created in the process of lending activity. That is in the form of dash creation, credit creation. That is credit money. Which money? See, whenever RBI issues the currency, they will keep backup in the form of reserves, gold, foreign currency exchange, all this. And that is concept of fiat money. Which money? Clear? Whatever paper money we are using, that is a fiat money, materially worthless. The real money is a backup. Real money is a, but credit money does not have any kind of a backup. Clear? So remember, there are two sources of money supply: high-powered money or a fiat money. Issued by whom? Issued by the central bank. Credit money is created by whom? And now we also have something called as digital currency. Now, not your phone pay, Google Pay. Now, instead of printing paper, we are issuing in the form of digital form. That is called as digital rupee or CBDC, central bank digital. Going further, it will be issued as a legal tender. Presently, it is still under the experimental phase. Final launch is pending. Going further, it is called as dash digital rupee. Whatever paper is there, that paper will be coming in the form of digital currency. Which currency? And cryptocurrencies is not a legal tender in India. It is classified as an asset. It is classified as what? Now comes the important point of the chapter. Measurements of money supply. Straight away, let's go to the topic. M1, M2, M3 and
M4.
there are total 4 measurements where M1 is called as most liquid. M1 is called as and also called as narrow money. Which money? M3 is called as a broad money. M3 is called as a or least liquid. Which liquid? And from this there is one superb question which has been asked from the summary part. Which part? See, this concept of M1, M2, M3, M4 was given by the recommendations of Narsimhan Committee. Which committee? And that word of Narsimhan Committee explanation is given in the summary part of your ICAI material. In the entire study material, nothing information is given. They have given in the part of where? So, few questions they can ask even from summary. So, kindly read a summary without fail. You can get the questions even from summary. So, most important formulas M1, M2, M3 and M4. M1, currency, notes and coins with the public plus net demand deposit. What is the first word? All interbanking deposits has to be subtracted. See, interbank deposit should be deducted in order to get the net demand deposits. One bank money kept with the another bank. Next, other deposits with some foreign countries government or IMF keeping money in India with RBI. Money in India with even they are called as a public. They are called as public money. See, in the next page I have given it in detail. See there, other deposits with RBI. See, deposits of quasi-government institution, other financial institution, balances of foreign central banks and foreign, and IMF money and World Bank money, which is with the RBI, which is with, that comes under the definition of public. Clear? So, what is the formula for M1? Currency, notes and coins with the public plus net demand. Deposits, that is CASA deposits, current account and savings account deposits, and other deposits with RBI. This three put together will be called as dash M1. Next comes M2. What is it? M1 plus savings deposit with post office savings bank. Savings deposit with whom? See, people don't just keep money in bank, they will also keep money in post office. So M2 includes M1 plus post office savings. M3, M1 plus net time deposits. Which deposits? Your FDs, RDs, all those in the banking system, that will come in M3. Now that is called broad money. Which money? So M3 is called as broad money, M1 is called as a narrow money. M1 is most liquid. M1 is dash? Which is the most liquid? Most liquid is M1. Least liquid is M3 and M4. Usually M3, consider it as M3. M4 means very least. Clear? Next, M4. It includes M3 plus total deposit with post office excluding NSC. What is that? Because these are public borrowings. Government is borrowing by issuing bonds, small saving certificates. So that is used by government. Public money. Which money? Public account, annual financial system, consolidated fund, contingency fund, public fund. This is public fund. Clear? So which is belonging to public, but is used by whom? Used by the. So these are the formula part. This formula is important. Every single attempt, one question comes from either M1, M2, M3 or. Get ready. So formula is important. What is the formula for M1? Currency, notes and coins with public. M2, M1 plus savings deposit with post office. Clear? Next, M3, M1 plus net time deposits. M4, M3 plus total deposit with post office minus NSC. Minus? Say, remember this in the exam. Only and only if they have mentioned. Only and only if they have NSC is included. NSC is? Then only you should subtract from total savings deposit of post office. If they have not mentioned, if they have given NSC separate, if they have given NSC, see in this question, in the third question, I think third or fourth question somewhere, they have given NSC, National Saving Certificates, and other deposits with post offices. Separate, nothing is mentioned. If there is nothing mentioned, don't subtract. Don't. Clear? So M1, M2, M3, M4. This formula is most important. You will get the questions from M1, M2, M3 and highest chances are in M1. What is the M1 formula? Currency, notes plus coins with public, net demand deposits of the banking system, that is CASA deposit plus other deposits with. And there was one more concept in Inter called as reserve money. Reserve money calculation. Unfortunately, it is not there in foundation. So bachao. If not, comparison between M1 and reserve money. Most liquid reserve money. That was there in CA inter level. Next, maybe for your juniors, they might introduce reserve money calculation also. That is little complicated. Clear? So formulas are important. From this, definitely you are going to receive a question. Clear? Let me show. Wait. They have asked a question. Try to solve it. Easy questions it is. Chapter 8. Chapter 8, monetary policy. Now, this is another type of a question which can also be asked. Look at the word once again. Calculate currency with the public. What does it calculate? Currency with who is called as public? Except producers of money. Except currency notes in circulation. Yes, it is with public. Currency of small rupee coins in circulation. Yes, these are in people's hand. Currency in the hands with. Hello, it is not a public money. So only this has to be subtracted. Add this 3, subtract this 27,500. Answer 19,750. Clear? Made mistake? Happens. Clear?
So,
Yes, sir.
why we are subtracting cash and
One bank money which is in another bank. That is interbank deposits. Now money which is with the bank, which is not in the hands of people to circulate to buy goods and services. See, currency with with you, withdraw. If you are using it, included. But here, at the moment, where is it with? If bank has that money, what purpose bank will use? Giving loans and advances. That nothing is mentioned. Loans granted by the bank. Nothing mentioned. They are just which is money with the hands of a bank. Public money with whom? Is it your circulation now? Subtract. Whichever is available at the moment for your hands. Include. Clear? So M1, I think Jan attempt or maybe June 24 attempt, M1 question was there. Here only it is given. See, M1, 49 question. Calculate M1. Calculate narrow money, that is M1 from the following data. Currency with public, demand deposit with the banking system, time deposit with the banking system, other deposit with RBI, savings deposit with post office. Only 3 things has to be added. Which are the 3 things? Currency, notes and points, demand deposits with banking system, other deposits with? How much? Clear? So formula is important. If you don't remember the formula, gone case. Clear? Okay, let's go to the next topic. Hey, what happened to this? One sec. So let's go to the next topic. So the concept of money supply and money multiplier. What is the concept of money supply and? Okay, listen to this carefully. Let me teach you in a very shortest form and easiest form rather than going length and breadth in the theory part. Now, to understand money multiplier, which multiplier? We need to understand the behavior of 3 individuals. How many individuals? 3. Behavior of a central bank. Behavior of a? Next, behavior of a commercial bank. Behavior of which bank? And behavior of general public. Behavior of which? Now, currency notes are printed and circulated by whom? That is called high-powered money. Which money? High-powered money or monetary base. Also called as what? Monetary base. If RBI prints more currency and circulates more currency, money supply will increase. And how many times that money is getting circulated? That is called multiplier. That is called as what? So the formula of money supply. Formula of multiplier into monetary base. What is it? Multiplier into monetary base. Clear. This is the formula of money supply. By using same money supply, we can identify money multiplier. What is money multiplier? Money supply divided by monetary base. What is it? Money supply divided by? Or there is one more formula. 1 divided by RRR. Not your Rajmouli's RRR stupid movie. Required reserve ratio. What is it? That means now RBI will ask a commercial bank. See, you can't give every money what you receive into banking system. You should hold back some percentage of money. You should hold back as a reserve. See, some people might withdraw money, some people will deposit money, some regular banking business purpose, you should hold some part of money. Let's say, for example, you keep a required reserve ratio of 10%. How much?
10%.
So, what is the required reserve ratio?
10%.
So, hold back 10% and remaining 90% can be left for a circulation and giving a loans and advances. But sometime my commercial bank, they will show their extra talent. Which talent? Now, RBI has to keep them a required reserve ratio. Along with that, these guys will keep excess reserve. Which reserve? Along with required reserve. Along with which reserve? Required reserve. RR, they will also keep excess reserve. Now, RBI asked them to keep 10%. This guy kept another. Now, what is the total reserve? Total reserve is? But RBI asked them to keep only and only?
10%.
Now we know that whenever reserves becomes more, multiplier effect will decrease. Investment multiplier, MPC should go up, MPS should decrease. Saving should be less, consumption should be same way. Now RRR, now see 1 divided by 10%, that is 0.1. What is it? 0. 1 divided by 0.1, how many times? Now rather than keeping 10% reserve, how much did the banks keep? 12%. Excess reserve of how much? 12%. So 1 divided by 0.12. 8 point. See, instead of money getting multiplied by 10 times, now it is getting multiplied by? Now you tell me, should the RRR increase or RRR decrease? decrease. Even excess reserve should decrease. Whenever reserves are less, automatically multiplier will
Increase.
So behavior of all the three people will matter a lot for multiplier. Number one, commercial banks should print more and central bank has to print more and more currency and it should circulate in terms of high powered money. Next, commercial banks should not keep excess reserve. Does it? Should not keep whatever RBI says. Only that required reserve they should keep. By mistake, if they keep excess reserve, then multiplier value will
Increase.
and public behavior. They should not hold more cash in the hand. Rather, they should deposit more to the bank. If money comes to bank will give credit. If you hold money in your hand, will you put extra money from that? No. If you keep it in bank account, you will earn interest, na? You will get returns, na? So people should not hold in the form of cash. People should deposit. People should. Now, in short, three people's behavior. How many people's behavior? Number one, central bank has to print more currency and circulate more currency. Commercial bank should not keep excess reserve. General public should not hold more cash. They should keep more deposits. All the three people's behavior put together, multiplier effect is dependent on. Which effect is dependent on? Clear. The reserve ratio should be always less than. Excess reserve should not be kept. Excess reserve should not be kept. So with that respect, there is one more formula for calculating multiplier and money supply. Multiplier and the formula for multiplier, new formula, 1 plus C divided by R plus E plus C. R plus E plus C.
Sir, if you bring more money, it gives inflation.
No, they will control. They will bring balance. Monetary policy, next unit. Unit number 3, I will explain that. That means, in order to increase the circulation, in order to increase the of multiplier effect. Which effect?
Multiplier.
We want more money to circulate in the economy. Number of times people do the transaction, that will have multiplier effect. Which effect?
Multiplier.
So now this is the formula. 1 plus C divided by R plus E plus C. How do you identify cash ratio? Cash in hand divided by deposit. Cash in hand divided by deposit. How do we identify small e? That is excess reserve. What is that excess reserves created by the bank? What is that excess reserve created by the bank divided by deposits received? Divided by clear, excess reserves to deposit. What is that excess reserves to? Clear. How much money deposit received? In that we should only create required reserve, na? RRR. What RBI said. But these people showing extra talent. What are they showing? Excess reserve to deposit. Clear, na? Next comes R. R is already given by the RBI only, na? What is my example? In my example, R was 10%. That means 0.1. What is it?
0.1.
So here we will take a ratios. Now understand. 1%. Okay, why 1%? Let's make it 100%. Wait. 100% is considered as 1. 50% is considered as 0.5. 10% is considered as okay. 1% is considered as 0.1% is considered as 0.001. Clear, huh? This clarity should be there. Understood? There is one numerical problem. Superb numerical problems here. This one. In Gladys land. What is that in Gladys?
Land.
R. That is required reserve ratio is 10%. So it is mentioned as 0.1. Currency in the hands of people 400 billion. What is it? 400? Deposits in the bank 800 billion. Excess reserves. That means over and above required reserve. Bank has created excess reserve of how much? 0.8 billion. And money supply in the economy will be both currency in hand plus deposits put together 1200 crore. Clear? Now they are asking us to identify money multiplier. Which multiplier? Money multiplier, new formula 1 plus C divided by R plus E plus C. Now listen to this carefully. How do you identify the small c? Cash to deposit ratio. How much is the cash in hand? 400 billion. How much is deposit? 400 divided by 800. 0 point. Clear. Next E, excess reserve. How much is the excess reserve created? 0.8 billion. And how much is the deposit received? 800 billion. So what was the formula for excess reserve small e? Excess reserves divided by deposit. Excess reserve is 0.8 billion divided by 0.8 divided by 800. Point. Got it? Apa?
800 means
800 million. Here values are in
Billions.
million, billion. Clear, huh? Understood? Now we got the values. Now what is the value of C? C value is 0.5. What is the E value? 0.001. What is the R value? 0.1. 10%. What is it? 0.1. Put every information together. Use this formula. 1 plus C divided by R plus E plus C. What is it? 1 plus C. Now small m is equals to 1 plus C. In the place of C, 0.5 divided by R, 0.1 plus excess reserve E, 0.001 plus C, 0.5. So 1 plus 0.5 is 1.5 divided by 0.1 plus 0.5 is 0.6. So it will be 0.601. What is it? 2.49 times. See, this can be a question. This is the new formula. Which formula? So this is the new formula to calculate money multiplier. Which multiplier? So how many formulas are there in total to calculate money multiplier? Total 3 formulas are there. Number 1, money multiplier, MS divided by MB, money supply divided by monetary base. Second, 1 divided by R. If not, 1 plus C divided by. Now, by using same formula, we can identify money supply also. How do we identify money supply? Same formula. 1 plus C divided by R plus E plus C into H. H stands for high powered money. What is H? High powered money. So, this is the first formula to calculate money supply. That is multiplier into MB. Multiplier into, and this is the second formula. 1 plus C divided by R plus E plus C into H. H stands for high powered money. H stands for what? Same to same, na? MB is also high powered money. High powered money is also called as monetary base. And this is small m. What is it? This is? How do you identify the small m? Same formula. That means small m into MB. Small m into? They are represented in different way. Clear? These are the formulas. Now, in short, money multiplier is dependent on 3 people's behavior. How many people's behavior? Number 1, central bank. We want central bank to print more currency and circulate more currency. They should not hold back currency after printing. Point number 2, commercial bank has to keep only the reserve which is required by RBI. You please don't show your extra talent. No excess reserves and all. And general public, don't hold more cash in your hand. What they should do? Deposit more money. What they should do?
Deposit more money.
Clear? Understood? When all the 3 are working, automatically money multiplier value will increase. Number of times money getting circulated will increase. This is money multiplier. By using the same money multiplier, we can also identify money supply. We can also identify what? How many times the money is getting multiplied? Let's say 3 times. And how much currency got printed? 100 crore. 100 into 3. Total money supply? 300 crore. So money supply, money multiplier. Both are dependent on 3 people's behavior. How many people's behavior?
3 people's behavior.
Appa, that is what this 4 sheets. See, determination of money supply, behavior of central bank, behavior of general public, and combined behavior. Which behavior? Of central bank, commercial bank, and general public. That itself is a money multiplier approach. Which approach?
Money multiplier.
See, formula, money supply, small m into MB, money multiplier, money supply divided by monetary base. Clear, na? Now, assumption. What is it? Can a money multiplier become infinite? Yes. That means entire money is only and only getting credited. Required reserve ratio has become 0. Required reserve ratio has become? Or see the assumptions of money multiplier. Now, whenever RBI prints the currency notes and circulates, we believe that banks, that is commercial bank, will never have a
Excess reserve.
they are not keeping any kind of excess reserve, and individuals like you and me and other non-banking corporates, all these non-banking finance companies are not holding excess currency, or no excess cash has been held, never holds a currency. In that case, money multiplier is going to increase. Money multiplier is going to increase. What is another formula for money multiplier? Increases. Reserves are less. Flow is more. What is it? Reserves are? Flow is more. Multiplier will increase. So what is another formula of money multiplier? 1 divided by R. In short, reciprocal of required reserve ratio. What is it? If you remember, investment multiplier is reciprocal of MPS. What is it? Reciprocal of? That is investment multiplier. Now money multiplier is a reciprocal of required reserve ratio. What is it? Reciprocal of? See here, if the required reserve ratio is 10%, required reserve ratio is 5%. That is 1 divided by 0.1. Here 1 divided by 0.05. Clear? Huh? So here 10 times, here it will be. See, if reserve is 10%, money multiplier will happen how many times? If reserve is 5%, money multiplier will happen 20 times. Clear? Now, the behavior of money multiplier approach depends upon three people's behavior. Number one, behavior of a. Second one, behavior of a. Next, behavior of a general public. See, how do we identify this small e? This is not R, this is small e. How do we identify the small e? Excess reserves to deposit ratio. Clear? Next, how do you identify the small c? Cash divided by deposit. What is it? Cash divided by? See, and we say to the people that, see, you should not hold more money in the cash. Rather, you should have more and more money in circulation. So, kindly come and deposit. Kindly come and. So, you need to increase your banking habits. What we should increase? See, smaller the cash deposit, smaller the larger will be the value of. Suppose instead of keeping in your savings account, if you come and keep in time deposits, FD, bumper lottery, we know that banks, customers will never come and touch that money for next 1 year. I can use that money and multiplier will much more increase. So, summary of money multiplier approach. The size of multiplier is dependent on three people's behavior. Number one, number two, number three. We believe that all of them are having the lesser ratio. All of them are having the so money multiplier will become clear. This is the concept of money multiplier and the new formulas. See, money multiplier, money supply, grad Island concept. Clear? Next, money monetary policy and money supply. They are speaking about open market operation power. Where money supply will increase, where money supply will decrease. When RBI sells security, money supply will decrease. RBI buys the security, money supply will through the open market operation. What is it? Open market? We can bring changes in money supply. We can bring dash changes in money supply. Clear? Next, is it possible that the value of multiplier to become zero? Yes. When central bank prints currency notes, let's assume that RBI printed 100 crore rupees worth of currency and circulated. Now, commercial bank keeps excess reserve of 100 crore. Nullified now, one credit, one debit. Automatically nullified, multiplier becomes. Yes, they can. Even if they want to nullify the effect, they can. Okay, leave about commercial bank. Now, general public is holding liquidity trap. Now, possible na? See, second answer. It happens when the interest rates is too low and bank prefers to hold the newly injected reserves as a interest rate is too low. What will happen to the liquidity in the hands of people? Increases. Liquidity trap will happen. Na? When excess printed currency goes to the hands of people, instead of depositing, if they hold it in the form of cash, liquidity trap, money multiplier will become zero. Suppose, let's assume that our people are not holding money. Now, our commercial bank will keep excess reserve. Which reserve? Again, multiplier will become zero. Possibilities are there, na? Next, government expenditure on money supply. What is it? Government expenditure on? Now, we know that RBI will always try to maintain balance. What will RBI will do? RBI will always try to maintain balance. But sometimes it can also create an imbalance. It can create an imbalance. How, sir? How it will create imbalance? Let me give an example. Assume that Karnataka government has a shortage to pay salaries to the staff. That is state government staff. Now, Karnataka government will go and ask loan from RBI. They will go and ask loan from? Yes, RBI can give a loans to a state governments. That is called as ways and means advances. Which advances? Or in short, it is called as overdraft facility. Which facility? Overdraft. Okay, let's assume that now Karnataka government is taking 500 crore rupees of money. How much? 500 crore. Now, that means RBI is giving money to whom? Karnataka government. How much? 500. That means money is going from whom to whom? RBI to. Now, why did Karnataka government take the loan? To pay salaries of whom? Staff. State government staff. Where is the state government staff's bank account? Commercial bank or RBI? Commercial. All your Canara Bank, Vijaya Bank, SBI and all. Commercial banks. Now RBI will say to commercial banks, SEPA, I am giving 500 crore loan to Karnataka government. That money will come to you guys only. They will credit salary. Once they credit salary to the staff, that means that money will come where? Commercial bank. Now you create excess reserve worth of 500 crore. Commercial banks. One way I am giving 500 crore into the system. Another way you are pulling out 500 crores from the system. One credit, one debit. Again balance maintained. Again balance. If commercial bank don't create excess reserve of 500 crore, if only and only RBI gives loan to state government, and if state government spends money, government expenditure will increase. Economy which is already in balance, now money supply will increase. Inflation will increase. Clear? Understood. This is called nullifying effect. Which effect? Nullifying. See, when Reserve Bank of India lends government under this ways and means advances or overdraft facility, it results in generating dash reserve with to whom excess reserves with how much ever loan they give to a government, they will make commercial banks to keep excess reserve worth of same amount of loan. Why? To maintain balance. To maintain what? This happens because government incurs expenditure in the form of paying salary to their government staff. So RBI account gets debited, Karnataka government accounts gets credited, and later from Karnataka state government, commercial banks accounts gets credited, salary accounts. Clear? Whenever they create excess reserve, that can potentially lead to increase in the money supply through the money multiplier process. Clear? In order to increase money supply, then I should not create any excess reserve. I should leave it. Already RBI has bought a balance now. Things are in control. Inflation is in control. Price stability is in control. They have bought that stabilization function of Richard Musgrave, bringing stability in the economy. After bringing stability, now if Karnataka government pumps in 500 crore, money multiplier will imbalance will to nullify that. RBI will ask commercial banks, hello, I have given 500 crore. You create excess reserve of? Once Karnataka government gives back that money to me, now you release that 500 crore into the system without keeping excess reserve. Without keeping. This is called nullifying effect. Which effect? Last but not the least, credit multiplier. Which multiplier?
Credit multiplier.
See, like money multiplier, there is also a concept of credit multiplier. Which multiplier?
Credit multiplier.
Now, whenever commercial bank gets the money, okay, let me take up an example for your better understanding. Now, have a look here. Now, Shashi Kiran will go and deposit 1000 rupees in bank. Who will deposit? Shashi Kiran. He will go and deposit how much? 1000 rupees in bank. Let's say I have an account in bank A. Where do I have an account in? Now, RBI has set to keep a reserve of 10%, required reserve ratio, RRR, out of 1000 rupees. Now, how much money has to be kept as a reserve? 10%, that is rupees 100. Now, what is the balance money which can be used to give loans and advances? 900 rupees. Okay, now let's say for example, now Chetan will go and take a loan. Who will go and take a loan? Now, Chetan will borrow a loan. He will borrow loan. This is loan of 900 rupees from the bank A. Now, in reality, bank has how much of money with them? 1000. They gave loan of 900. Now, that means loan account got created. Loan account got? Now, Chetan at any point of time, he can withdraw 900. Even Shashi Kiran can withdraw 1000. But in reality, bank has how much? But bank has a liability of 1900. Listen, Shashi Kiran deposited 1000. I can withdraw 1000 at any point of time. My account, my wish, my money. I will withdraw any point of time. In that 1000, 10% reserves created. Remaining 90% granted loan to Chetan. Now Chetan is having a loan account in bank A. Shashi Kiran is having savings account in bank A. Shashi Kiran account has 1000. Chetan account has 900. Now Chetan can withdraw how much? Shashi Kiran can withdraw how much? But in reality, bank has how much? 1000. How much bank got it? 1000. They only have 1000 rupees in the hand. Bank asset is only 1000 rupees. What is it? Bank asset is only 1000 rupees. But bank has a liability. Bank has a of 1000 rupees for Shashi Kiran, 900 rupees for total. Now they made a thin air of this 900 rupees. How? Credit multiplier. What is it? Sir, how sir? They are giving credit na. The 900 rupees, whatever they give loan for Chetan, is there any backup for that money? That is called credit money. Which money? In the process of lending. In the process of commercial banks will create a credit money, and this credit money, what is this? Gets multiplied. It gets. Now let's say, for example, let me continue the same example. Listen to this carefully. Now, Chetan, he will go and buy chocolates. You will go and buy what? Now Chetan is going to go and buy a chocolates, let's say from Praveen. Praveen has a shop. Now Praveen got 900 rupees. Now Praveen go and deposit that in bank B. He will go and deposit in. Now bank B will also create 10% reserve. That is 90 rupees out of 900. Remaining money. Now this 810 rupees is taken as a loan. Let's say, for example, who will take loan? Dhoni uncle. Which uncle? Now Dhoni uncle will take a loan of how much? 900 rupees. And he will go and, let me say, do Paytm for umpire. Sorry, 810. Sorry. 810. So Dhoni uncle will go and take a loan of how much? 810 rupees. And he will go and do Paytm for umpire. Umpire changing. Next, after paying it for umpire. Now let's say, for example, umpire will go and deposit this in bank C. Now bank C got how much? 810. Now they will create reserve of how much? Remaining money. Now let's say Kohli uncle. Why Kohli uncle? Wait, Mukesh Ambani. Mukesh Ambani uncle. He will go and take loan. He will go and take it from bank C. How much? And he will also do Paytm for umpire. Now umpire 2 will got 720. Again 10% reserve. 72 point. Now remaining money. Like this, the money keeps on getting circulated. Money keeps on getting. Now most important, the initial deposit. Which deposit? Who did that? Shashikiran. How much? 1000. This has a capacity of multiplying by n number of times. Multiplying by? Sir, how do you identify that n number of times? What is the required reserve ratio? 10% is what RBI said na. Same formula. 1 divided by RRR. 1 divided by 0.1. How many times? Initial deposit is how much? 1000. So this credit money has a multiplier effect of 10 times. That 1000 rupee has an effect of multiplying 10 times and it will become credit multiplier. Which multiplier? Same formula. 1 divided by RRR. 1 divided by RRR. Clear? Understood? Yes, sir. CRR is same. It is same, not different. Same. Next unit. I will explain. RBI concepts. Required reserve ratio, cash reserve ratio. Both are one and the same. Clear? Understood? By this, chapter 8, unit 2 comes to an clear. See? If required reserve ratio is 20%, 1 divided by 0.2. How many times? 5 times. If required reserve ratio is 10%, it will become 10 times. If required reserve ratio is 5%, it will become 20 times. That means when reserve ratios are less, multiplier value will be increased. Whether it is credit multiplier or money multiplier, it doesn't matter. Now credit money is getting multiplied. Which money is getting multiplied? Now commercial bank is giving loans now. That loan money is getting circulated. It has a potential of increasing. Potential of increasing. N number of times of its initial deposit. N number of times of its initial deposit. Clear? Understood? By this chapter 8 unit 2 comes to an end. There are 2 numerical problems. Try to solve this numerical problem. See there. What will be the total credit created by the commercial bank? Credit created by which bank? Commercial banking system for an initial deposit of how much? 3,000. And required reserve ratio is 5% and 8%. 5% and 8%. Now, you know the formula. 1 divided by RRR. Now, in case of 5%, 1 divided by 0.05. How many times? 20 times. Next, 1 divided by 0.08. 12 point. How much is the initial deposit? 3,000. Into 3,000. Do it. Here it is 37. 60. First one now. So, first one is? So, answer of credit multiplier is 60,000 and here it is 37,000. That's it. Clear? Understood? By this chapter 8 unit 2 comes to an. Now let us enter into the unit 3. Monetary policy. Which policy? Monetary policy. Now, like fiscal policy, the central bank of the country will also create a monetary. For what all purpose they will create a and adjusting the money through open market. and adjusting dash rate. That is why I kept on saying interest rate, interest rate, interest rate. Interest rate is the biggest factor here. Interest rate will be having a more and more elements to play. Clear na? Monetary policy framework. What is it? Monetary policy?
Framework.
Total 3 concepts are there. First one, objectives of monetary policy. Second one, analytics of monetary policy are also called as transmission mechanism. Which mechanism? And the third one is operating procedure. This operating procedure is where we will discuss about RBI. We discuss about what? The very first one, objectives of monetary policy. Objectives are classified into 2 kinds, primary objective and other objective. What is it? Primary objective and? Now in primary objective, which objective? There are 4 primary objectives. How many primary objectives? 4. Sir, 4. There is only 2 here. Na? Another 2 gets added. See, first one, price stability. Second one, and the third one, exchange rate stability has been shifted to primary. Exchange rate stability has been shifted to. And the fourth one, inflation targeting. What is it? Inflation targeting. So there are 4 primary objectives. Which primary objective? 4 primary objectives. Which are the 4 primary objectives? Number 1, price stability. Second one, economic stability. Third one, fourth one. Now other objectives. See there, rapid economic growth, debt management, long-term interest rate, stabilized long-term interest rate, adequate cash flow for credit purposes. For which sector? That is industrial purposes. Next, stable long-term interest rate for encouraging investments, creating effective market for JAS security. Government security, G security market. We discussed in the budget chapter. See, these all are other objectives. Which objective? So first concept done, objectives done. Now analytics of monetary policy. But here I will not go much in detail because I have already explained interest rates. When will you invest more money? Interest rates are higher. When will you save more money? Interest rates are higher. When the asset price keeps on increasing, asset price keeps on. You will borrow a loan and you will invest it. If you want to borrow a loan, interest rate should be lesser. If interest rate is more, will you borrow a loan? Any businessman for it matter, when will he borrow a loan? Interest rate low or interest rates high? Next, economic activity will increase. Economic activity will increase whenever there is more money supply in the economy, and that will also increase the inflation. So government has to control the inflation. To control inflation, during inflation is there, expansion, interest rates will increase. During deflation, interest rates will. So savings and investment channel. When people will invest, when people will save, depending upon interest rate. Depending upon, already we have done length and breadth on this. Again, it becomes a repetition. Next, cash flow channel. When will keep money, people keep more cash in the hand, when they will keep not cash in the hand. When they will invest it on asset, when they will not invest it on. When asset prices are going, I will not keep cash in hand, I will invest it in asset. Same, cash flow channel. What is that? Next, asset price and wealth channel. Asset price and when asset price is increasing day by day. When asset price is increasing, people's wealth will also increase. By using the same documents of asset, I can go and pledge it as a collateral. I can go and pledge it as a and take more bank loans. See, asset prices are going up, wealth of a people are also. Next, exchange rates are. I will test this in chapter 9. Not now. Chapter 9, unit 4. Completely about exchange rate. Clear now? Last but not the least, operating procedure. Which procedure?
Operating procedure.
Related to RBI concept. Which concept?
RBI concept.
Simple. RBI has mainly 2 functions. One is qualitative, another one is quantitative. In short, wherever money is involved, RBI either involves directly or RBI involves. The very first one, required reserve ratios. We spoke, if you remember, RRR, reserve ratio. Which ratio? Okay, just as a random example, if any customer comes and deposits 100 rupees in bank account, it gets divided into 3 parts. How many parts? 3 parts. The very first one. Let's take a random example, just fictitious example. Now, first part, RBI will say to keep asset 10 rupees with themselves. 10 rupees with? And they have to keep it with RBI. With whom? RBI. So, 10 rupees commercial bank out of your deposit, you should keep with whom? RBI. And another, let's say 25 rupees, you should keep it with yourself. You should keep it with? Either in the form of gold, either in the form of or foreign investment, approved investment. That is government approved investments. That is RBI approved investment. Which investment? Now, which is the remaining money? 65. This can be used to give loans and. Now, this first concept. Portion of deposit which commercial bank keeps with RBI. This is called cash reserve ratio. CRR. This is what we called RR in the previous unit. If RBI wants more money with them, they will increase the RR. If RBI doesn't want more money, they will decrease the Next, a portion of deposit held with the bank themselves, either in the form of gold, or in case of government approved security. Government approved SLR, statutory liquidity ratio. Which ratio? See here, statutory liquidity ratio, cash reserve ratio. Cash reserve ratio is the banks are required to set aside a portion of cash and they have to keep it with whom? RBI, and they will never earn any kind of interest on such CRR. But SLR, they have to keep the portion of deposit, it has to be kept aside in the form of gold or RBI approved security. They can earn interest, but such interest will be very. Next comes open market.
So then RR also will do with
RBI. Yes, that is what required reserve ratio. Clear? Open market. We spoke about this already more number of times. When there is inflation in the economy, RBI will sell security. RBI will wipe off that excess liquidity from the market. When there is a deflation, RBI will buy back that security what they sold during inflation. Money will go outside. Government expenditure will increase. Next comes qualitative tools. Which tools? Marginal requirement. Which requirement? Simple. Now let's say for example, now Pawan, he will come, sorry, Praveen will come with the documents. Let's say he has one corner site in Kormangla. What is it? Corner site in? Which is worth 10 crore. How much worth? He will come to a bank manager. He will submit the document. I see, I bought my land property worth of 10 crore. Give me 10 crore loan. Now RBI, bank manager will say, no, we can't give. Why? RBI says, you can't give 100% value of collateral. What is that 100% value against? Some portion has to be kept as a requirement for a safety purpose. Requirement for a? What if tomorrow you take a loan and run away like Vijay Mallya or Nirav Modi? Problems are there, na? RBI will say, I can only give 80%. How much? 80%. See, 10 crore is your value, na? I can only give a maximum loan of how much? 80%. If RBI does not want to encourage to give more loans, they will increase that required ratio. Last time you got 80%. Now this time you will get only. That means for every 10 crore, you are getting 8 crore. Now you will only get. If they don't want to increase money supply in the form of credit, they will increase that marginal requirement. Which requirement? Next comes moral suasion. RBI will morally persuade commercial banks to keep only in RBI approved government securities, that SLR money. Which money? SLR. And whatever rules and regulations created by RBI. Hello, I know you will not like it, but still you should shut and follow that. If you don't believe, now I know how to cut off your tail. I know how to indirectly control you, directly as well as indirectly. See, directly as well as RBI will control even through moral persuasion. Next, selective credit control. What is it? RBI will say for whom to give loan, for whom not to give. For what purpose to give loan, what purpose not to give. For speculative business, we don't give loan. Only for some selected industries, we give loan. Go and take education loan for coaching for CA. Let's see. BCom? Yes. Engineering? Yes. UPSC exam? Competitive exams, they don't give it. Why? Risk is more. You may pass or. But engineering, definitely you will pass. You will also become unemployed. Then we will bug you up for repayment of loan. Your civil scores will go down. See? Next comes market stabilization scheme. Which scheme? Listen to this very carefully. Let me create one full story and let me connect it in the form of story. Because there are two twisters in this concept. Let's say for example, now Chetan and Shashi Kiran, we both are business people. We both are. Now Shashi Kiran is bench manufacturer. Na? Now I will take raw material supply from Chetan, wood, worth of let's say some 50 lakh rupees. How much worth of some? 50 lakh. So 50 lakh rupees worth of wood. How much? 50 lakh rupees worth of raw material. I have taken from whom? I have taken from Chetan. Now I will say to Chetan, see Chetan, I don't have money. I will pay you on next month. Assume that I have taken this 50 lakh rupees of raw material on 1st of February. When did I take? 1st of. Now I will tell him I will pay him after 1 month. I will pay him after. Now Chetan is a smart guy. He has attended Sai sir class. Sir, okay sir. Kindly sign a bill of exchange. Kindly sign a stating that you will pay me after 1 month and I will give a time for 1 month. Okay, Shashi Kiran agreed, sign bill of exchange, but in between Chetan has an emergency. One important date is there in between. 14th of February, Valentine's Day. If we don't gift a diamond necklace, breakup is going to happen. So he wants money. What to do? No other option. He will take this bill of exchange. He will go to banker. Where he will go? He will go to bank. He will get it discounted. He will get it discounted. Okay, let's say that. Madam, what's your name, madam? Menaka. Now, let's say for example, Menaka, she is a bank manager. Now she will discount this bill worth of 50 lakh. Worth of? 50 lakh. And Menaka will give Chetan only and only 45 lakh rupee. How much? 45 lakh rupee. Madam, what's your name? Varsha. Assuming Varsha, very old customer in the bank. Let's say SBI bank. When she got married, long ago, very long ago, 5 years ago. And her all relatives have given some monetary rewards. We call it in Kannada, na? Worth of 70 lakh. Worth of how much? Even in teams also it will not come. Not even 70 rupees will come. Only example. How much worth of? 70 lakh rupees. And she has done FD. She has done what? Now this FD is money getting matured. Now she will come to a banker. Menaka, 5 years ago, I have kept a FD. Now that money is getting matured. Please give back my 70 lakh rupee with interest. With the interest. But whatever extra money she had, yesterday she has discounted this bill for how much? She doesn't have any money at the moment. Now she will ask all other commercial banks, see, please pa, give me some 70 lakh rupees of money, save my mana maryada, I have to give it to my customer. No one agrees. Finally, the banker has a last approach. Which approach? She will come to where? RBI. Now RBI knows each and every transaction made by the commercial bank. Government's accounts and commercial banks accounts are maintained by whom? RBI. Now RBI will say, yesterday you have discounted one bill now. That rediscounting you have done now. Get that bill. Now RBI will rediscount. RBI will rediscount that bill and RBI will give 40 lakh rupee. How much? Now she is like, hey, I need 70 lakh da. Wait. I will give 40 lakh rupees now. Another 30 lakh rupees needed na? Yes. I will give that loan. But two simple conditions. How many conditions? Condition number 1, you should pay me 8% of interest and you should get back this money within 14 days. Within how many days?
14 days.
Upon that, for this 30 lakh rupee, there is no security. Kindly come and pledge a government security. Which security? As a repurchase agreement. Which agreement?
Repurchase.
That means you are giving this agreement and paying that money for me. That is the repurchase. What is it?
Repurchase.
I have given you 30 lakh rupees na. For 8% interest na, for that security is government security na. If you don't pay me within 14 days, government security belongs to me. That means once you pay back that 30 lakh rupees to me, that means you are repurchasing this government security. Repurchasing this. Clear? Now kahani mein twist, listen to this carefully. First time discounting of bill is done between manager and Chetan. That is Menaka and Chetan. That is discounting of bill. Which of bill?
Discounting of
Now second time rediscounting happened. Which happened? Between whom? RBI and bank. And let's say now RBI will say this 40 lakh rupees is there na. On this I will charge 9% interest. How much? 9%. And this is long term interest. What is it? And this 30 lakh rupees is there na. Only for 14 days. Only for? 14 days. This is short term interest. Which term interest? Now, listen to this carefully. Rediscounting of commercial bill. What is it? Rediscounting of? Is called as bank rate. Is called as? Bank rate. Which was existing once upon a time. Which was existing? Presently, this bank rate has been scrapped. That means rediscounting of bill has been. Now, in my example, how much was that bank rate? 9%. How much was that? 9%. Now it has been completely scrapped. Now the bank is not going to get a money by rediscounting of bill through RBI. Then how can they take the loan, sir? This 8% is called as repo rate. What is it? Repo rate. Earlier they used to get a long-term loan. Which term loan? Long-term. Now that long-term loan of bank rate has been scrapped. No more existing. No more. In the place of that bank rate, now you can take a loan only for a short term. Only for a 8% interest rate. 8%? In my example, 8% interest rate in my clear. This is called as repo rate. What is this concept called as? What is this concept called as? Repo rate is an interest rate at which RBI lends loan to commercial bank. RBI lends loan to commercial bank. Clear? Okay. Now she took a loan. She cleared that loan. Also took back the government security. Everything settled. But in future, after 1 month, I got to know SBI bank. Menaka, she has more money. She has more money. If at all I leave that more money with Menaka, she will unnecessarily give loans and advances and she will increase money supply. Now intentionally RBI will ask for that money. Hello, Menaka. Last time I helped you, right? Now I need money. Give it back. Now Menaka is smart girl. Stupid fellow, RBI, did you give me for free of cost? How much interest you charged? How much you charged? Now you want me to give it for free. I will charge 7%. I will charge
7%.
whenever RBI borrows loan from commercial bank for a rate of interest. This is called reverse repo rate. What is it? Reverse repo rate. Remember, reverse repo rate is 1% lesser than repo rate. Reverse repo rate is how much?
1% lesser than
In my example, what is repo rate? 8%. Reverse repo rate is 1% lesser than repo rate. Now, this concept of repo rate and reverse repo rate is called as liquidity adjustment facility. Which facility?
liquidity adjustment facility.
See, repo rate, lending rate of RBI. What is it?
Lending rate of
Reverse repo rate, borrowing rate of RBI. What is it? Borrowing rate of? See, that borrowing rate will be 1% lesser than a repo rate. 1% lesser than a? Earlier, there was a concept called as bank rate, which was a long-term rate. Which was a? Now, presently, this has been scrapped. Presently, this has been?
scrap.
And we are considering that bank rate as a penalty rate. Which rate? For not maintaining sufficient CRR and SLR. For not maintaining sufficient CRR and? Now, let's say Menaka has one more time emergency. First I helped it. RBI helped in the form of repo rate. In the form of? Now, once again she will come. Another time emergency. Will RBI help? Yes, definitely we will help. But this time not in the concept of repo rate. Not in the concept of? This time we call it as a penalty rate. Which rate? Earlierly called as bank rate. That is 1% greater than repo rate. 1%? Clear? Now, presently bank rate is not existing. Bank rate has been converted as a penalty rate for not maintaining sufficient CRR and now that earlier bank rate concept is presently called as marginal standing facility. Which facility?
Marginal standing facility.
Once upon a time, long ago, we had a concept of bank rate. We had a concept of? Which was a long-term funding. Which funding?
Long-term
And repo rate was short-term funding. Presently, only short-term funding is existing. Long-term funding has been scrapped. And that bank rate is now considered as a dash rate, penalty rate for not maintaining sufficient CRR and
SLR.
under which facility? Marginal standing facility, which is always 1% greater than repo rate. Reverse repo rate is 1% lesser than.
Repo rate.
See, there was a question which is related to your repo, reverse repo, 1% greater, 1% lesser. There is a formula. I think this paper. Question number 70. Oh, not 77. Wait. Here. 79. Reverse repo rate. Which repo rate? Is 1% lesser than. Clear? Bank rate?
1% greater.
There is no bank rate. There is no? Now what is bank rate called as? That penalty rate is 1% greater than repo rate. 1% greater than? Clear? So this is the concept of RBI's quantitative and qualitative. What is it? Quantitative and qualitative. What happened to this all of a sudden? 1 second. Understood? Let's go to the last topic of chapter 8. That is organization structure for monetary policy decision. What is it? Organization structure for? Now, simple. Now, RBI and the government of India together have created a new agreement. Called as Monetary Policy Framework Agreement. What is it? Monetary Policy. Under this agreement, now they have created a new committee. That committee name is called as Monetary Policy Committee. What is it called as?
Monetary Policy Committee.
Now, what do they do in this committee, sir? What do they do in this according to that agreement? Now, RBI and Government of India will decide to bring price stability in the economy. To bring what stability? In order to achieve this price stability, now they started inflation targeting. Which targeting? Inflation targeting. Now they have kept a target for inflation. See, we need to achieve this target. Now the target is 4%. How much is the target? 4%. With a maximum tolerable limit of 6%, lower tolerable limit of 2%. Now what is the target? Target is 4%. Maximum tolerable limit, lower tolerable limit, 2%. That means every time we need to achieve 4%. Sir, what if we don't achieve 4% or if it goes beyond 6% in any 3 consecutive quarter? What is it in any? 3 consecutive quarter. Appa, boys, not the quarter what you are thinking. Quarter means every 3 months once. Every April, May, June, Q1, quarter 1. July, August, September, quarter 2. October, November, December, quarter 3. January, February, March, quarter. In any 3 consecutive quarters, if at all the inflation goes beyond upper tolerable limit, beyond, then we have been failed. Then we have been to achieve the target. Same way, in any 3 consecutive quarter, if it goes below the lower tolerable limit, below the, then means we have been failed. So what is the target to be achieved? The target to be achieved is, and that is according to consumer price index inflation. Which inflation?
Consumer price index.
And RBI will also come up with the data. RBI will also come up with the, we call it as a monetary policy report. Once in every 6 months. Once in every 6 months. They will come up with a report stating from where all we are getting this inflation in the next 6 months to 18 months. Next 6 months to 18 months. Clear. This is called as monetary policy framework agreement. Monetary policy. Now they have kept inflation targeting. Inflation. After the expert committee of Ujit Patel has suggested. After the expert committee of clear. Now going further. What is it? Going. We are not just keeping inflation targeting in the country. Going further, we will also keep dash targeting. Nominal GDP targeting. Which targeting? We will keep a target for nominal GDP and we also work according to that target. And this targeting of inflation is not new to India. This is also there in the other countries. New Zealand, USA, UK, European Union and Brazil. Now India is also following. India is also mainly based on CPI. What does CPI stands for? Consumer Price Index. Consumer Price Index. Clear. By this entire chapter 8 comes to an revision comes to an end. Clear. Now see the MCQ questions of chapter 8. Hmm. 46th question. Which of the following is not a characteristics of money? General. Easily reproduce. That means, let me say counterfeiting. That means duplicating by the people. No, it cannot be. Now the currency issued by the central bank is known as high powered money or monetary base. 3 names are there. What is it? Monetary base or fiat money. Next up, considering that with the money multiplier as 1.5. What is the value of money multiplier? 1.5. There has been increase in the money supply by 600 crore. What is monetary base? They are asking for monetary base, high powered money. See, we know the formula of money supply na, or money multiplier. What is money multiplier? Money multiplier is equals to money supply divided by monetary base. They have given multiplier value. How much is multiplier value? 1.5. A money supply they have given. No, that is what we should identify, or what we should identify. Monetary base. So what is money supply? Divided by monetary base. Now this will be monetary base is equals to 600 divided by 1.5. Next, already we identified M1. Yes. Next, dash is a penal rate, penalty rate at which RBI lends money to the bank over and above the rate available under repo rate. Earlier it was called as bank rate. Presently penalty rate under which facility? Marginal standing facility. Next, this is what I said now. From the summary they are asking question. Liquidity adjustment facility, that is repo rate and reverse, was introduced by the RBI on the basis of recommendations of a dash committee, Narsimhan committee. Next, money created by the commercial bank is called as credit money. Clear? Next, under the concept of money supply, the term public does not include. The producers of money is never called as a public. Next, compute the total credit money. Which money? Created by the banking system if the required reserve ratio is 15% and initial deposit is 12 lakh. Now what is the formula? 1 divided by RRR. Now this is 1 divided by 0.15
6.6.
into 12 lakh. 799999. That means 80 lakh. Got the answer? Next up, calculate currency with public. Already we did this. Currency with public. See, this is the questions of chapter 8. Now tell me what is difficulty. Next up, September paper. You guys only do it. 10 questions are there. Already we did with the 71st question. Next up, if the monetary base in the economy is 250 crore, how much? MB, that is high powered money issued by the central bank. And there is an open market operation by the central bank and the money supply is how much? They are asking you to calculate money multiplier. See, they have given monetary base, they have given money supply. Formula is money supply divided by monetary base. Answer is 4. Next, if the required reserve ratio is 0.10, that means 10%, and there is an increase in reserve. What is it? Increase in reserve. That means change in reserve. What is it? Change in? We said now 1 divided by RRR into change in reserve. That will give us the answer for change in money supply. Change in money supply. Formula was there. So this will be 10,000. How much it is?
10,000.
Sipa, 1 second. Let us show that. That is better option. If not, people will be thinking, sir, you didn't teach that, sir. Where is that formula? Sipa, where is that formula? Here is the formula. Change in money supply. 1 divided by R into changes in reserve. Clear? Understood? Next up. Next, 74th question. Which of the following is not a function of money? Not a function. Repeated question. Same question was also there, na? Next, the concept of aversion of risk. Risk taking. That means risk aversion theory. Six theories. 3 plus 3. James Tobin. Who gave that risk theory? James Tobin. Next, which type of a currency is issued by the central bank? Fiat money. Next, which of the following is the correct formula for dash reserve? Total reserve minus required reserve. See, required is 10%, but bank kept total of. That means excess reserve created is 2%. Clear? Next term. What does RBI publish every 6 months once? Just now we studied every 6 months once RBI will publish a monetary policy report which will say inflation for the upcoming dash to dash months. 6 to 18 months. Already 49th question we did. Next to 80th question. Real money refers to. Which money refers to? Real national income, money demanded at given rate of interest, nominal GDP divided by price level, nominal money adjusted to the price level. Real money refers to. Homework question. Do this. Let's see. I will not help this. You have to read ICAI material for this. That is one homework question. Real money refers to. At least one question you guys do it. Let's see. This actually there in summary part. This is there in summary part. Clear? So let's start with the chapter 9. Unit 1 will not take more time. Unit 1 will get over hardly in 15 minutes. Clear? Can I break bekena? Lali, ಈಗ ತಾನೇ break ಕೊಟ್ಟಿದ್ದೀವೋ 1 hour ಆಗಿದೆ ಕಣ ಅಷ್ಟೇ. 6:50, not 6 o'clock. 2 hours once. So 4 to 4:15 was break. And 4:15 we started class. ನಾವು ಲೆಕ್ಕದಲ್ಲಿ ಪಕ್ಕ ಅದ್ರ ಮೇಲೂ ಎಲ್ಲಾನು ಇಂಡಿಯನ್ ಸ್ಟ್ರೆಚಬಲ್ ಟೈಮ್ ಫಾಲೋ ಮಾಡೋದು ಬಿಡ್ಬೇಕಾದ್ರೆ ಸ್ಟಾರ್ಟ್ ಮಾಡ್ಬೇಕಾದ್ರೆ ಮಾತ್ರ ಇಂಡಿಯನ್ ಸ್ಟ್ಯಾಂಡರ್ಡ್ ಟೈಮ್. ಓಕೆ, ಚಲೋ ಲೆಟ್ಸ್ ಗೆಟ್ ಸ್ಟಾರ್ಟೆಡ್. Chapter 9, International Trade. Which trade? See, there are 5 units. How many units? Only unit 4 is little bigger. Unit 4 is little, except that everything will get over in half an hour. Tuck, 15 minutes to half an hour. 15 minutes to half an hour. Units will get over. Clear na? Last chapter, let's see your energy. Full on data, full on information. Or I will do one thing. I will instruct how to prepare. Okay. You prepare it. But sometimes if ICAI wants to screw your happiness, you know how many questions will come? 10 questions will come. Clear? Okay, let's concentrate. Chapter 9. Theories of International Trade. What is the unit 1? Now, simple, whatever we do internal trade, if at all we extend that and if at all we take little greater risk, that is called international trade. That is not just movement of goods and services, not just movement of goods and it also includes resources. That is the exchange of goods and services as well as resources between the country is called as international trade. That will be much more complicated than internal trade. Now, when we are doing international trade, it involves multiple nations currency, shipping business, multiple documentation procedure, and multiple legal environment gets involved. Other countries' laws are different. My country's laws are different. There is a tariff, taxes, quotas means quantity restrictions, and other in terms of rules and regulation. What is it? Rules and we call it as non-tariff. What do we call it as? See, international trade is much more complicated than a domestic trade. International trade should be dash. Mutually. That means both the countries should get benefited. Both the countries should get clear. Now, with that respect, there are totally 5 theories of international trade. How many theories of international trade? Number 1, theory of mercantile view. Second one, theory of absolute advantage. Third one, theory of comparative advantage. Fourth one, HO theory. Fifth one, new trade theory. Let us go one by one. The very first one, mercantile view. Very simple. We should only export. We should not at all. That is called mercantile view. We also call it as zero-sum game. Which game? But international trade should not be zero-sum game. International trade should. But mercantile view is zero-sum game. That means only one country will give, another country will gain. Only one country will only and only export, another country will only and only import. Clear? That is mercantile view. Next comes theory of absolute. Introduced by Adam Smith. He was the first person to say, boss, international trade is not a zero-sum game. That means mutually beneficial. Which beneficial? Mutually beneficial trade. Sir, how? Let us take up an example. Straight away we'll come to the concepts rather than reading theories and all. Let's say India and USA. India and they are producing 2 different types of crops. Let's say one is rice, another one is wheat. Let's say India will take 2 hours to produce 1 kg of rice or 2 labor hours. How many labor hours? 2 labor hours. But USA will take how many labor hours? Who is better? India is better. See, in terms of comparison with USA, India is better in production of rice. Okay, now let's see for wheat. USA will take 5 labor hours to produce 1 kg of wheat. India will take. Who is better in wheat? See, USA is better in wheat. India is better in. Mutually benefiting trade is possible. India, you produce rice, export wheat to. Export rice to USA. USA, you produce wheat, export that to. Mutually benefiting trade is possible. Clear? Next. Sir, what if one country itself is specialized in production of both the commodity? What if, sir, India is only good in both? 2 hours for rice, 5 hours for wheat. USA will take 10 hours for rice and 20 hours for wheat. Now, how mutually benefiting trade is possible? Still it is possible. Still it is. How? Take out ratio. What you should take? Ratio. Now, can I say this is 5:1? USA will take 5 times of what India will take a time to produce rice. If India takes 2 hours, USA will take 10 hours. That is 5 times. How many times? 5. Okay, let us do it for wheat also. India will take 5 hours. USA will take 20 hours. That means 4 times. That is 4:1. What is it? 4:1. Clear? Now 5:1, 4:1. 5:1 for rice, 4:1 for. That means India has advantage in both. India has advantage in both. Can I say greater advantage in rice? Advantage in both, but greater advantage in lesser advantage in. I know that USA has disadvantage in both. Lesser disadvantage in. So advantage country you select greater advantage. Disadvantage country you select lesser disadvantage. So India you forego one product. You can't produce everything because resources are limited. We need to have an alternative users. So you can't produce everything. So you select rice and you forego wheat. Let USA produce wheat. Mutually benefiting trade is possible. Mutually benefiting trade is simple. Take out ratio. Whichever ratio is more, advantage country. Whichever ratio is less, disadvantage country. Now this becomes comparative advantage. Which advantage?
Comparative.
After comparing, India has a comparative advantage in rice. USA has a comparative advantage in wheat. Clear? Understood? Now, same concept is explained by Heberler to confuse your life with the concept of opportunity cost. Which cost?
Opportunity.
See, concept is simple but little complication. What is it? Now, by India, you are taking 2 hours for rice, 5 hours for wheat. Let's consider you are producing wheat. You are producing what?
Wheat.
How many hours you need?
5.
Instead of wheat, in that 5 hours, instead of wheat in that, if you wanted to produce rice, how many kgs of rice can you produce? 2.5.
Yes.
Because I only need 2 hours now. That means to finish chapter 9, I need 5 hours. I need how many hours?
5 hours.
But instead of doing chapter 9, I thought of doing chapter 10. Chapter 10 only takes 2 hours. How many times I can do chapter 10? 2.5 times. That is what. Clear, huh? Same way. Do it opposite. Suppose if you are producing rice, you will take how many hours?
10 hours.
Day, rice, India, 2 hours. India, 2 hours. Instead of producing rice in the 2 hours, if you wanted to produce wheat, how many units of wheat can you produce? 0.4. What is it? 0.4? Do the same to USA. It will come 0.5 and 2. Now observe inside the country. Observe. Now observe. India has 0.4 as sacrifice. India has 0.4 as. USA has 0.5 as. Who is sacrificing less?
India.
India select rice. India will select. Next, do it for wheat. USA is sacrificing 2. India is sacrificing 2 point. Who is sacrificing less? USA you select wheat. Whoever is sacrificing less, whoever is sacrificing
Less.
of the another commodity, that product has to be selected. Little confusing. So don't go with a burler. Consider David Ricardo. Consider what? He was the one who introduced a comparative advantage. Which advantage? Clear. Next comes HO theory. Which theory? Now, we were only considering labor as an important factor. Absolute advantage, comparative advantage. Now, not just labor, not just. You should also consider capital. You should also consider what? See, I'm considering labor as well as I'm considering capital. Now, what is that, sir? Labor and capital. Okay, let us continue with same example. India and USA. India and. Now, is India having more labor or more money with India? Capital. More labor. USA has more money or more labor? That is capital. Money is nothing but capital. So simple, da. In whichever country you can produce by using labor or capital at a cheapest cost. Cheapest. Let's say bench. Now Shashikiran can produce bench in India by using a labor at cheaper cost. Now USA can produce machinery by using capital at cheaper cost. So USA you produce capital intensive goods and send to India. India you produce labor intensive goods and send to USA has shortage of labor. So you produce labor goods. USA has shortage of labor. So who should produce labor goods? India has shortage of which goods? Capital goods. So who will produce that? Exchange, mutually benefiting trade. This is step 1. This is now step 2. USA has shortage of what? Labor. From India you send labor to USA. India has shortage of what? USA you send capital to India. Now automatically both the places, now whatever shortage was there, that gets nullified. That is called factor price equalization theorem. What is that? Factor price? Clear. Now in absolute advantage and comparative advantage, we were only considering labor as an important factor. Now along with labor in HO theory, we are also considering labor and capital. So by using labor and capital, whichever country can produce at a least cost. Which cost? Least cost. You select the technology, either labor intensive or capital. Now India can produce with labor intensive cheaper cost. USA can produce capital intensive with cheaper cost. So India produce labor intensive goods and send to USA. USA will produce capital intensive goods and they will send to. This is step 1. And step 2, from India send labor to USA. USA you send capital to. Now prices of both will get equalized. In USA labor price was more. In India capital price was. Since USA sent capital to India, now prices of capital, that is interest rates, will decrease. And labor wages was high in USA. Since India sent the labor, wages rate will decrease. Factor price equalization theorem. What is it? Factor price? Now the same theory of HO theory got extended much more by a person called as Paul Krugman. By a person called as? And he also won a Nobel Prize in 2008 for his theory. And he observed, see, according to HO theory, one labor country, one capital country are exchanging. Na? That was at that point of time in 90s. But now I am observing that 2 capital countries only exchanging between each other, 2 labor countries only exchanging between each other. Sir, how? Let me say Sweden and USA. Both are capital intensive country. There are producer, let me say they both are producing cars. USA is also producing cars. Sweden is also producing. Sweden cars are demanded in USA. US cars are demanded in Sweden. See, they are exchanging same capital goods only between them, na? India and Bangladesh. In India, we are also producing textiles. Bangladesh is also producing. We also send textiles to Bangladesh. Bangladesh also send textiles to. Both are labor-rich country only, na? That is what identified by Paul Krugman. Earlier, Hexo theory was exchanging between capital-rich country and, but now no rule between these two countries only it should get exchanged. Now both capital-rich country can only exchange between each other. Two labor countries also exchange between. That is Paul Krugman's theory. Clear. Last but not the least, globalization theory or new trade theory. Globalization theory or
New trade theory.
same product is Paul.
Exchanging same like capital. They can adopt that technology.
Inter-level, come, costing, financial management. Now we will send our people to Japan. We will make them getting trained there. After coming back in India, we will produce the same. We will make them to go there, learn, and then come back, do it. Cost efficient model. What is it? Costing. You will learn. What you asked is totally correct. But in your syllabus, it is not covered. Clear? Huh? So we will send our people there. Let them learn there. Let them adapt the technology. Then we will bring the technology to our country and then we will only do it. That is what China did to USA now. They sent all their engineers to work in Tesla. They learned nicely. Coming back to China, they built a same car called as BYD. Now entered Indian market even before Tesla entering the market. Now already in Indian market that BYD cars are booming. Everyone are buying. Still Tesla is yet to enter. Clear, huh? Next, globalization theory or new trade theory. What is it? Globalization theory or new trade? That means same product is exported as well as same product is imported. What is it? Same product is exported as well as same product is survives, sir, because of two reasons. One, economies of scale. What is it? That means large scale production is happening, unable to sell in their country, so they are dumping their China. Best example, they do it to India, Bangladesh, Nepal. They will start dumping their products into the country. Other countries, they are unable to sell it. Second one, because of popularity, bandwagon effect. Which effect? Because of popularity. Sir, I need that same Jordan Nike shoes only. I will import it. I know prices are more. Still I want. Same shoes only. Because of popularity. Because of what? Lifestyle commodities. Clear? Shoes, cell phones, watches, cars. Even we are producing cars in India. We are also importing cars from abroad, na? Luxurious car, Lamborghini, Bugatti, Ferrari, Rolls Royce. Importing, na? See, that is what. Same product is exported, same product is imported. Why? Because of economies of scale and the network effect or bandwagon effect. Clear? These are the 5 theories of international trade. Mercantile view. We should only export, not at all. Absolute advantage, comparative advantage, HO theory, new trade theory, advantages and disadvantages of international trade. See, first one, specialization will happen. One country will be known for certain commodity. Best example, cheap labor ka dukan, India. In India, availability of labor is very cheaper cost. That is why all multinational companies are coming to. If you want to produce industrial equipment at a cheaper cost, China does that. Large scale production, very cheaper cost. Clear? Like the specialization will happen. Next, effective use of bullshit. We'll start over exploiting later. Next, high level of consumers are wide between imported goods, domestic goods, private goods, public goods, and next there will be, because of competition, there will be. Next, we'll try to produce always that economies of scale. We will start sharing of technology because of international trade. Next, division of better international precursor to FDI. I will explain. FDI, foreign company coming and establishing in India. That is second stage. First stage, they are sending goods, na? First, they will send goods. Apple, that is what happened. They were sending Apple products to India. And in India, demand started increasing day by day. And problem happened in China. COVID. They shifted their manufacturing plant to India. Now they're producing in India, selling in India, and exporting from India. Clear now? Next, helps foreign exchange earnings. When we export more, we will earn more. Na? Next, helps increase in the and employment. When we are exporting more and more, production should happen more. For the GDP will increase. Employment will also. And access to new material and new products or new markets to sell our products in the abroad. Advantages. Now disadvantages. See, dependency on some other to sell the product or for raw materials. Next, political turmoil. Best example, Trump. See, from our past 1 month, what all Nataks he is doing with respect to tariff rates. Next, strategic importance only for dash industry. Like telecommunication, defense, only certain industries are increasing. Next, scarcity of goods. In which nation? Stupid fellows. First, you should sell in your country. No, you are exporting everything. Exporting more and more rather than selling. Next, infant industries of my country gets affected because of free trade. Because all big players will enter the market and they will start selling. And also depletion in the because of more and more and dumping activity. See, China extremely lower cost, they will produce, unable to sell, they will come and dump inside India. Next, quick transmission of that cycle. And finally, that rivalry will get into a risk, and trade associations will, due to change in the government will start changing policy. Once they get it is no, it is not good to America. That is what they are doing now. See, all of them started opposing US. Why, stupid fellow? Because of you, entire world market is getting tumbled off. Clear? Advantages, disadvantages of international trade. By this, unit 1 comes to an clear. Understood?
Yes, sir.
Flip back your pages, have a look. Any doubts, let me know before moving to unit 2, because unit 1 continuation is unit 2. Clear? Okay, so unit 2, instruments of trade policy. What are the instruments of?
Trade policy.
See, there are certain rules, regulations, restrictions which will be imposed while conducting an international trade. So let us understand them. Number 1, in terms of trade policy. What is this policy? Policy refers to what? Those rules and regulations which are designed as well as implemented by the country in order to regulate. What is it to regulate? International trade. That means what we will allow for exports in and what we don't allow. How are we going to bring rules and regulations for exports in? What are our rules with bilateral agreement and multilateral agreements? Now let us understand. Mainly, it is mainly classified into 2 kinds. How many kinds? 2 kinds. Tariff measures, non-tariff. Tariff is nothing but taxes, customs duties. Non-tariff in terms of rules and export-related measures. What we will export, what we will not export. What we encourage and what we don't encourage. Let us get started. The very first one is tariff measure. Which measure? This is the most visible measure. Which measure? We are imposing a taxes, and there are mainly 15 types of tax. How many types of tax are there? 15. Now the very first one you need to understand is bounded tariff and applied tariff. Which tariff? Bounded tariff and applied. See, between WTO members there will be an agreement. According to that agreement, we will be charging a tax. Let's say, for example, all the Asian countries, let's say assume we are a WTO members. We have agreed in WTO agreement to charge only 10%. To charge only what we are bound, that is what we are charging. Suppose that can I charge lesser than 10%? Yes, that is called applied tariff. Which tariff? Clear. Once an agreement is created, we are bound to charge a tariff. We can't increase the tariff. Sir, what should I do if I need to increase tariff? You should negotiate with your trading partner. Negotiate with your compensate them for possible losses. Compensate them for and then only you can increase your bounded tariff. Without that, you can't increase the bounded. Clear? So remember, bounded tariff means according to WTO agreement, what we are bound. What we are? We are only charging the tax, that is called bounded tariff. We can't increase it, but we can charge lesser than bounded. That is called as what? Applied tariff. But there are 2 circumstances where you can charge even beyond bounded tariff. Even beyond? Number 1, in case of anti-dumping duties. In case of what?
Anti-dumping duties.
I said, China, they will produce in excess and they will start dumping. To protect the domestic manufacturers from such dumping activity, who will sell at extremely lower cost in the country. China intentionally will try to sell it at a extremely lower cost and take advantage. People will start buying from them. Local market people cannot compete with Chinese product. They will close down. One fine day will become monopoly and they will start increasing the prices. That should not happen. So a country will impose additional tax over and above bounded. Over and above. Called as anti-dumping duty. Very much valid. WTO will also agree. That is anti-dumping duty. Next comes countervailing duty. Which duty?
Countervailing duty.
Now suppose if the nation is giving subsidy. Nation is giving
Subsidies.
to export their excess produced goods. Export their? Now India does that to Bangladesh usually. Now Indian government gives a subsidy for textiles exporting to Bangladesh. If Bangladesh gets to know, you are also doing dumping on me. For dumping purpose, your government is giving. Oh wait, whichever textile is coming from India to Bangladesh. Now Bangladesh government will charge additional tax over and above bounded. That is called as countervailing duty. Which duty? Only and only in case of anti-dumping duty and countervailing duty, it is very much legal and very much valid to charge beyond bounded tariff. If not, you can never charge beyond bounded tariff beyond. Is that clear? So we understood with bounded, we have understood with applied, we understood with tariff as a response to trade distortion. Now next one, specific tariff. Which tariff? Fixed monetary charges. What is it? Sir, I will buy one bicycle. Let's say price of bicycle is 5,000 rupee. In that 1,000 rupees is tax. How much is tax?
1,000 rupees.
That means we should pay 1,000 rupee as a tax. Sir, suppose because of inflation, if electricity cycle price goes to 10,000 now, same 1,000 rupee tax. What is it? Same?
1,000 rupees.
Fixed monetary tax. What is it?
Fixed monetary tax.
Fixed monetary tax. That is called as specific tax. Next comes ad valorem. What is it? Fixed percentage. What is it?
Fixed percentage.
10% is tax. How much?
10%.
Whether your bicycle is 5,000 or whether your bicycle is 10,000, it doesn't matter. What is the tax percentage? The percentage remains fixed. That is called ad valorem. What is it? Next comes mixed tariff. Which tariff?
Fixed tax.
Now we will charge a tax on both specific and ad valorem. Whichever gives highest tax to government, whichever brings,
Highest.
I will charge it. Either specific or ad valorem. Either specific or ad valorem. Can you see this word? What is it? Or. Either specific or ad valorem, whichever is higher. Whichever is?
Higher.
That is ad valorem. Sorry, mixed tariff. What is it?
Mixed tax.
Now compounded tariff. It is not or. It is and. What is it? I will charge both specific and ad valorem. That is called compounded tariff. Next comes variable tariff. Which tariff?
Variable tax.
Now sometimes you will ask your friend, hey, you are going to US, man, get me one iPhone 15 Pro Max. It is lesser in USA comparing to India, or lesser in Dubai comparing to India. Oh, is that so? Indian government will say, how much lesser it is? 30,000. Pay that only as a tax. Whatever is the difference between domestic price and international price, that is charged as a tax. Variable
Variable tax.
tariff. Next, escalated tariff. On raw material, lesser tax. If you are importing raw material, less tax. If you are importing finished goods, more tax. Most favored nation tariff. What is it?
Most favored nation tax.
Simple. Between WTO members, lesser tax. Between non-WTO members.
Higher.
Next comes preferential tariff. Which tariff?
Preferential tax.
Now nearby countries will form our own small group, our own small Kuttisa association, and we will charge lesser tariff than bounded. That is called preferential. Nearby country. Which country?
Nearby.
Next comes technical tariff. Which tariff?
Technical tax.
Based on technical specifications. Sir, I am importing one drone from USA, DJI Mini drone. On drone parts, 10%. For battery, extra 10 rupees for every kg. Battery, extra 10 rupees for? That means on technical specification. Sir, car I am importing. Car body different tax, car battery different tax, car engine different tax. Based on technical specification. What is it based on?
Technical specification.
Next, tariff rate quota. What is the tariff rate? I will specify the quantity. Up to that quantity, either no tax or limited tax. Either no tax or
Limited.
if that quantity exceeds. Quantity?
Exceeds.
More tax. Quantity exceeds?
More.
Next, prohibitory tariff. Which tariff?
Prohibitory tax.
Done playing with the phone and back case. Keep it inside. She said, sir can see everything. You could have understood that. Everything. Next, prohibitory tariff. What is it? Clear? Now, prohibitory. Name itself says, my intention is to prohibit the product coming inside my country. 500% tax, 600% tax, 1000% tax. Intentionally, I want to prohibit. Import subsidies. What is it?
Import subsidies.
I am only encouraging you. I am only to import because they are life-saving drugs or important machinery to my country, MRI scanning and all some advanced machinery. Okay, government will only give a subsidy. Either on every single unit I will give subsidy or on your total billing or on your 10%, 20% like that. So these are the 15 types of tariff measure. 15 types of? Yes, go.
So 14 for example, Tesla, why they are putting more tax?
Because they want to manufacture in India. Modi government said, see boss, I'm okay to allow you inside country. But kindly produce cars in India. I want make in India to happen. But you are saying, no, I will produce everything in USA. I will import and I will just sell it in India. Okay, do it. 300% tax. If you produce in India, 30% tax. If you import it, 1 0. We invented 0, na? We will put wherever we want. Clear, na? Next comes tariff as the response to already we explained all those 15 types of tax. Clear? And this is where exam questions have come. Any individual, they will give a definition. Whatever I just explained, you have to identify which of this is a tax. Clear? Next comes non-tariff. What is it? Non-tariff. That means rules and regulations. What is it? Rules and? Remember, you cannot impose non-tariff measure under all the circumstances. We can only impose non-tariff measure under certain circumstances. Which circumstance? Not under all the circumstances. Under non-tariff, there are two types. How many types are there? One is technical, another one is non-technical. One is what? Technical. Another one is? Okay, let me explain both. Technical and non-technical. The very first one, technical, SPS and TBT. What is it? SPS and? Sanitary and phytosanitary measures, technical barriers to trade. Remember this very carefully. Meanings are important. Now, because of your product, if there is any effect happening on human life, animal life in my country, or plant life in my country, or any biodiversity, very extreme rare species, if it is getting affected because of any additives, pests, contaminants, toxic or disease causing organism, COVID-19 disease causing, I can completely ban your product or temporarily prohibit your product. That is called SPS. What is it? SPS. Sanitary and phytosanitary. Next comes technical barriers to trade. Which barriers to trade? Now, based on technical specification, which is that size, shape, design, labeling, marking, packaging, functionality, and like how I have said it has to be. I said to put it in triangle shape. You did square shape, rejected. Like this, size, shape, design, labeling, marketing on technical requirements. Which requirements? Technical. That is called TBT. What is it called as? TBT. That are technical measures, SPS and TBT. Now be ready on this, you can expect questions. Most of the times on this the questions have come, SPS and TBT. Now non-technical, another 13 are there. How many are there? 13. First one, quota. For example, they will give definition. If animal life, plant life, biodiversity life gets affected because of any contaminants or pests in a product, which kind of barriers can be imposed? Sanitary and phytosanitary measures. Clear? Next, quota means quantity restriction. Which restriction? Quantity. That means up to certain quantity you can import. Beyond that, more tax or maybe restriction. Or there is also a restriction on origin. There is also restrictions on what? Hello, goods coming from Pakistan? I will not allow. Goods coming from Syria? Not allow. Iraq? No, I will not allow. Either there is only quantity restriction without any origin restriction. There can be both quantity restriction as well as origin restriction. Next, embargo. Embargo means complete ban. What is it? Complete? I will ban this product. I will not allow that product to come inside my country. Next, government procurement. What procurement? In this one case study was there. India lost that case study. India lost that case in WTO. If you remember, treat your neighbor as how you treat yourself. Shortcut. Neighbors. No, sir. Treat your neighbor's daughter as how you treat your own daughter. Example. If video recording has been watched, then you will get to know the full length and breadth of that case study. India wanted to become a solar manufacturing hub. So they introduced Jawaharlal Nehru National Solar Mission, but only one condition. 100% has to be domestically produced solar cells and solar modules. That means, now government will say, you manufacture the solar energy. For that you set up the solar power plant. I will be the 1 point power purchaser and I will only sell that. I will only give money to you. But I have only one condition. When you are setting up the solar power plant, even including nuts, bolts, solar panel, everything has to be government procure means. That means Indian origin product. Indian origin. You should not use any imported articles. If you are using imported articles, I will not buy power from you. But China had a problem with this. Why? In India, solar panels were expensive and they were not as good as Chinese products. So people used to always import from China. Now if government makes these rules, no one will import from. Now government also thought, okay, correct na, but China went and filed a case against India in WTO. There is something called as national treatment principle. Which principle? That says, see boss, if you want, you can impose taxes. After imposing taxes, when the goods enters your country, now you cannot discriminate between your product and foreign product. That is national treatment principle. You should treat your domestic good and the international good as one and the
Same.
Now you cannot discriminate based on the nation of origin. Nation of, that is government procurement policy where you can impose restriction stating SIBA. Out of 100%, at least 30% should be Indian product or 90% should be. That is accepted. While government is accepting some tender, government is outsourcing that work to some other people through tender. But you can't say 100% should be only and only from. That is against the national treatment principle. See, government procurement means you can impose restriction out of that whole product. Now, car has been manufactured. In that, I can impose restriction. Hey, Toyota people, minimum 30% should be used from Indian origin product. Nuts, bolts, or car tires, seat cover, bulbs, whatever it is. Minimum 30% should be where? Which products? Domestic product. Then only I will give tender to you. Then only I will purchase from you. That is government procurement. When government is purchasing, they can impose restriction to some extent. What does it do? But they can't do it 100%. Against the national treatment principle of WTO. What is it against? Trade related investment measures. Even while investing, up to certain percentage we will allow, certain percentage we don't. Next, marketing and after sales. Okay, you can come to India, sell your products in India, but you can't do after sales services. Lamborghini, you can only come and sell. You can't have your official service center. Then who will do? My people will do. Hello, Rado watches, you can only come and sell it in India. You can't have official service center. Who will do? Our Titan will do it. You can only come and sell. You can't have after sales services. Next, financial. We will not allow you to import certain kind of commodity. I will not allow you to give certain financial measures. That means some permissions. Some kind of international currency permissions. I will not allow. Next, price control. Intentionally, I will be controlling in terms of prices. Your product prices, I will make it always and always higher than my domestic prices. So, I will discourage your product to be sold in India. Non-automatic licensing and prohibition. One time I will give you license. Next year, I will not give it. I will not renew that license. There is the rule that every year I should renew. No, only one time I gave last year. This year I will not. Measures affecting the competition. I will give permission only for some organization like Adani, Ambani, not for anyone else. Only they can import and they can sell it in India, or state trading corporations. Only government agencies can import. Private people cannot import, like this. Next, distribution restriction. That means only special permission should be taken. Only with that special license you can distribute and you can sell. Others cannot do it. Next, administrative. I will not give license on time. I will intentionally make it delay. Already our government, we know how effectively they will work. If intentionally they want to delay until you die, we will never give. Rules on. If certain products are coming from certain country, show me the certificate of origin. I know car has come from Singapore, but where is the spare parts have come from? Iraq, don't want, take it out, get lost. Certificate of origin. What is it? Last but not the least, which measure? My intention is to safeguard my domestic players first. I know you, I will allow your product, but your product has already flooded in my country. Still, that only we are unable to sell. For a time being, I am restricting. For a time being, I am restricting. That is safeguarding measure. Which measure? So, these are the non-technical measures. 13 types of non-technical in detail. See, especially this government national treatment principle or national treatment obligation, important. Again, it will come in WTO concept. Which concept? Clear. And last but not the least, export-oriented measure. Which measures? Export. Now, even there are some rules and regulation in terms of exporting goods and services. What is it? Exporting?
Goods and services.
Number 1, ban on export. What is it?
Ban on export.
Certain products cannot be exported from India, especially agricultural origin product. Hello, we are only having shortage of rice. Now you can't export. Potato, we are only having a shortage in the country. You cannot export. For a time being, I can export. Restriction can be imposed. Oh, still you want to export? Pay the tax. Pay tax here also and pay tax in the importing country also. Now I will make your condition much more worsen. Sometimes to export only government will give or any kind of incentives. See, next one, last but not the least, voluntary export restraint. That is quantity restriction. Which restriction? Up to certain quantity you can export. Beyond that certain quantity you cannot export. Clear? This is unit 2 of chapter 9. Clear? Next, Chota unit, unit 3. Trade negotiation. Which negotiation?
Trade negotiation.
I will take only 15 minutes. Exact, we will give a break after 15 minutes. Clear? Now, I said you, bounded tariff. Which tariff?
Bounded.
What is bounded tariff? Whatever we have agreed as per WTO agreement, we should charge it. Can we reduce that? Yes. But can we increase it?
No.
If you want to increase, what you should do? Sit, negotiate, compensate for losses, and then only. That is what? Trade negotiation. What is it? See, these are complex interactive process between the nations who are having a conflicting objectives. And such meetings is not just one round of meeting, it is multi-level meeting. Which level meeting? Engaged within the nations and other stakeholders who will get affected because of the changes in rule. And trade negotiation will formulate new international trade rules. What does it formulate? Your old rules got altered. New rules will come into a picture. One such agreement is regional trade agreement. Which agreement?
Regional trade agreement.
Earlier we discussed about preferential tariff. Nearby countries will form their own small group. They will charge lesser tax. Now, that is nearby country. Now, even though if you are not nearby country, you can still form your own agreement between the different continents, and you can charge lesser tariff. You can charge and improve international trade. That is regional trade agreement, RTA. What is it called as? See, it is an agreement to reduce trade barriers and promote economic welfare among the member country. Among which country? And such member country need not necessarily from the same geographical region. Best example, BRICS association. Which association? See, Brazil, Russia, India, China, South Africa. We are not from the same geographical region. Brazil from American continent, Russia, India, China from Asian continent, South Africa from African continent. See, we are from different continent, created our own agreement. We are promoting international trade between ourselves by reducing restrictions and barriers. Under RTA, there are 8 types. How many types?
8 types.
Many a times the questions have come under this types of RTA. Especially this time, the question has come from Customs Union. Customs. Example, European Union. In class, we have clearly said European Union is an example of under RTA. This question has come in this attempt. Don't expect same question. Expect a different question. But definitely it will come. Let me explain. If you remember, lunchbox example. In a class, small set of friends will be there. Now between them, they can exchange the lunchbox full complete. Let's say for example, now Chetan, Shashikiran and Praveen. We 3 are friends. Now we can exchange lunchbox between ourselves. I can give my entire lunchbox to Praveen. Praveen can give entire lunchbox to Chetan. Chetan can give it to us. If at all we need to share with others, common regulation, only 1 chapati, only 3 spoons of chapati, 3 spoons of rice. Common regulation with non-member. Now next level, that is trading block. Now I will explain it and I will connect it to the topic. Next up, free trade area. What is it?
Free trade area.
Earlier there was a common regulation. Now no common regulation. Now if you want to share with someone else 2 chapati, your wish. If I want to share only half chapati, my wish. If he wants to share only 2 spoons of rice, his wish. That means we are free to enter into relation with non-member. Free to enter into relation with
Non-member.
But between ourselves, there is still free movement of goods and services. Free movement of
Goods and services.
that is trade area. Next comes customs union. In the customs union, now not for just exporting, even for
Importing.
even if I want to take from other member, I can take from other member. Even for that rules and regulation, not just for export, even for
Import.
but with free trade between the members. Now, along with free trade between the members, we'll go one step ahead. Now, there is also free flow of output and factors of production. Output and that means not just exchanging of lunchbox. Now, we will also exchange our geometry box, bag, keychain, cell phones, watches, shoes. Anything can be exchanged. Like that in international trade. Like that in see between the member country, there is a free flow of goods and services. Free flow of what? See, there is a free trade agreement between themselves. No restriction, nothing. Complete movement of goods and services free. That is trading block. Which block? Examples are important. Arab Union, European Free Trade Association will form the trading block. Next up, free trade area. See, between member country free trade, and they are eliminating all kinds of tariff and quota. No restrictions on terms of taxes or quantity. Next up, common to enter relationship with other. Now let's say Japan wants to trade with European Union. Now Japan, let's say with Germany, they have a different rule. Japan with let me say Portuguese, they have a different rule. Japan with Switzerland, they have a different rule. But earlier common rules was there now. Now not common rules. Members are free. European Union members are free to enter into negotiation. Next up, who follows that? NAFTA, North American Free Trade. Next comes Customs Union, free trade between members, free movement of goods and services, and common regulation with whatever we decided, only 1 chapati, 3 spoons of rice. Now next is here, common external tariff, which distinguishes the Customs Union between the members even for importing goods. Earlier only exporting goods rules was there. Now even
Importing goods.
That is called customs union. Next comes common market. Which market?
Common market.
See, free trade between members. And also not just free trade, even free flow of factors of production and free flow of output, not just goods. Now even land, labor, capital, or any other technology, resources, anything can be exchanged between ourselves, no restriction. Common regulation with non-members. Why do we do this? In order to harmonize our institutional arrangement to encourage international trade. Next comes one more step ahead. Free flow between members. Common regulation with non-members, not just goods. Now also factors of production between the members. Common currency and common central bank. European Central Bank with euro as common currency. What is it? European Central Bank. Next, unilateral trade agreement. Which agreement?
Unilateral.
One country opens its doors to some other country in order to send the goods. Now India will say, oh, Sri Lanka, your economy is not good. Okay, I will not charge any taxes. You send the goods to India, you sell it in India. One country is opening its gates to another country. Unilateral trade agreement. What is it? Unilateral. Without any obligations. Bilateral. Between two country agreement is happening. Now India and Japan. We have our own rules and regulation. Bilateral. Between two country. Between? Multilateral. Between group of country. Middle East, European Union, Asia Pacific. Between group of country. Between what? That is multilateral agreement. Which agreement? So total 8 types of RTA is there. How many types of RTA is there? Number 1, trading bloc. Second one, free trade area. Third one, customs union. Fourth one, fifth one, monetary and economic union. Sixth one, unilateral trade agreement. Seventh one, bilateral trade agreement. Eighth one, all 8 are important. With the example. What is it with?
Example.
It is important. Clear? Next comes story of GATT and WTO. See, very simple story. 5 minutes it will get over. After Second World War, in 1945, your favorite economist, John Maynard Keynes, he wanted to establish 3 world-class institutions. IMF, World Bank, ITO. But only first 2 got established. And the last one, ITO, didn't get established because of one stupid country called USA. He didn't agree to become a member. So it was taking a lot of time to establish a ITO, International Trade Organization. As a substitute of it, for a temporary purpose, we established GATT as a secretariat, Now, GATT will cover trading in goods. What is it? Only and only trading in goods. And over a period of time, after 1948, it got established when? 1940? In the mid of 1980s, services started booming. New innovation started booming. It was not covering services and intellectual properties. It was only and only covering and member country. There were 123 member country. All the stupid fellows, 123 member country was not listening to the words of GATT properly. There was lot of disadvantages with GATT. So later, in a Uruguay round, which round? That was the biggest round. See, it was the 8th round of meeting. Uruguay round that reshaped this GATT into WTO. Reshaped GATT into? Now, under WTO, it is covering all the 3. WTO is covering what? Now, see, goods, services, intellectual property, trade-related intellectual property. Whatever we used to call it as GATT earlier, GATT. That is now considered as a goods council. Which council? Now, GATT was culminated into WTO in a Uruguay round. In which round?
Uruguay.
And that happened in 1994. When it happened?
1990.
So, GATT was existing from 1948 to 1990. What are the main objectives of GATT? See, the main objectives of GATT. Restoring the economic health of the world after the devastation of World War II and boost the international by reducing quotas, quantity restrictions and trade was the main objective of same WTO. Encouraging international trade. What is it? Reducing all the barriers. Your barriers of in terms of tax, non-tax, STS, TBT, all this. Now GATT was established. WTO got established in the Uruguay round. GATT lost relevance after 1980. So these are the ways by which it was losing the relevance. Go through it like a newspaper once. Clear? Now Uruguay round and the final round, which made GATT to become WTO. We established bigger organization WTO and GATT was included as a WTO. Clear? Now the head office of WTO is in Switzerland, which is in Geneva. Clear? Sorry, Geneva, which is in Switzerland. I said other way around. Now there are total 164 member countries. 95% of world trade which is happening today is controlled by WTO and it covers all the 3: goods, services, intellectual property services. Started its operation from 1st January 1990. Now, main objectives of WTO. See, rising standard of full employment and steady growth of volume of real income and effective demand creation and facilitating flow of international trade smoothly, freely, fairly, predictability and open trade between all the members without any barriers, and it will act as a forum. It will act as dash for any dispute between the members and resolving the dispute, and administrative trade agreements and relevant trade policies, reviewing the trade policy and helping which country? Always focus is given for developing countries. See, I've given 6 main important objectives of WTO. Framing rules and regulations for which trade? It will act as a forum for dash. If the trading partners has any dispute, trade dispute resolution, and it also makes a decision in a transparent manner. Which manner? And all other major international economic institutions is also having coordination with WTO. It is which country? Developing country. So these are the layers of WTO. At the top level, they have ministerial conference. They will meet once in 2 years. Once in 2 years. And the general council, they will meet several times in a year. They are the one who will actually run the show. Under general council, we have Goods Council, Service Council, Intellectual Property Council. Go through this like a newspaper. Clear agreements. What all agreements we have? See, guiding principles of WTO. There are 13 guiding principles. See, most favored nation tariff. Already we discussed now MFN, nearby country, and also between WTO members, lesser tax, between non-WTO members, more tax, national treatment principle, that India lost the case. Next up, trade negotiation has to be done over gradually. We need to reduce the trade. All transparency should be there. So here very less chances of getting questions, but still you have to read it like a newspaper. In short, this is the shortest way. Principles of WTO. What is it? And WTO agreements. What all agreements are there? Agreement on agriculture. See, agriculture is always a dispute area. Every meeting, agriculture, there will be a big dispute because say nations will not have a self-sufficiency. They are unable to feed their own population. Day by day population is. They are unable to feed for their own population. Upon that, they are asking for agricultural exports. For a time being, we will promote. Going further, we will not promote. Next, agreement on sanitary and phytosanitary measure, textiles and clothing, TBT, technical barriers to trade, trade-related investment measures like this, dumping, see, anti-dumping duties. All that, totally there are various agreements, 16 agreements. How many agreements? 16. And there was one more, Doha round of meeting. Which round of meeting? Now this became one of the 9th round. 8th round was Uruguay round. After the World War and after establishing, 9th round is Doha round. Which round? Again, they framed new rules and regulation. They restricted all the 20 areas where earlier it was several rules were there. They started reducing the rules and they formed one more association called as. Now you would have witnessed this G20, Global 20 Economy. Once the question has come, which country is not a member of G20 in the following? You should remember the 20 country. Who are the members of G20? And all these people will meet once in a while or whenever there is a crisis. Recently they met for COVID-19 pandemic. Now Russia-Ukraine war, 2008 financial crisis, Iranian nuclear power and Syrian civil. And they have put some other restrictions, blah, blah, blah. First in the context of COVID-19, later because of war between Russia and Ukraine. Still there are some 52 restrictions which are in place. Still on agricultural, non-agricultural, and this is what they have done, trading and all, blah, 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 blah. Full on data and information. What is it full on? Clear? This was your unit 3. In this, RTA is important. Which is important? RTA. Regional trade agreement. Which agreement? Regional trade. And 8 types of regional trade agreement. And intro of GATT and WTO. Intro of GATT and G20 economy. This is where usually the questions are going to come. Is that clear? Chalo, take a break. 6:20 is the time. 6:30 we will start. 10 minutes break or 15 minutes break? 15 minutes. You take it. I am not at all worried. You take how much ever you want. Later we will start. Again, anyhow it's going to extend today. See, still unit 4 is there. Unit 5 is there. And chapter 10 is there. Minimum 2 hours needed. Bare minimum. Even if I speed up 1.5 hours, though needed. Pakka sure. So chapter 9, unit 4, that speaks about exchange rate and its economic effects. What is that? Exchange rate and its economic effects. So this whole chapter we are divided into 5 parts. How many parts? 5 parts. See, there is a connection with part 2 and part 5. I will do it together. In short, to be frank, 4 parts, but we have divided it as how many parts? First one, foreign exchange rate. What is it?
Foreign exchange rate.
How do we decide the value of one nation's currency with respect to another nation's currency? That is what exchange rate. Now today we say now $1 is equals to 87 rupee. How much is $1?
87.
Now, in this, there are two currencies involved. Left side, what we write is called as base currency. Right side, what we say is called as counter currency. Which currency?
Counter currency.
Suppose if base currency is a foreign currency, base currency is a and counter currency is a domestic currency, then it is called as direct quote. Which quote? Opposite. Suppose if base currency is a domestic currency, counter currency is a foreign currency, that is called as indirect quote. In India, we are following a direct quote, that is rupee per dollar. Rupee per dollar. Now rupee per dollar is 87. Clear? Now exchange rate. What is it?
Exchange.
For what all purposes do we use this exchange rate? To buy and sell any goods and services which is denominated in foreign currency, borrow or lend funds, or become a party to the future unperformed contracts. I will explain this next. And in order to dispose of any asset, acquire any new asset, settle off any liability, we need a dash currency. Foreign currency. That is part 1. So value of one nation's currency with respect to the another nation's currency to buy goods and services, acquire assets, or incur any liability. Next, part number 2, foreign exchange rate regimes. What is it? Foreign
Exchange rate.
See, there are mainly two types. How many types are there? So let me explain it. Let me make it very short and simple. Number 1, fixed exchange rate. Which exchange rate?
Exchange rate.
Fixed exchange rate. Second one is floating exchange rate. What is it?
Floating exchange rate.
Floating exchange rate. Now in fixed exchange rate, government of the nation will decide what is the value of your nation's currency with respect to the another nation's currency. And in floating exchange rate, demand and supply, they are market determined. Which determined? Where government will not at all involve. Government will not decide what is the nation's value, currency and all. But in floating exchange rate, there is one more type called as the T float. Which float? Or managed float. Which float? Or the T float. This is what India follows. That means government will not decide. Demand and supply will decide. If there is a too much of fluctuation, what is it?
Too much of
Government will become a participant. Government will become dash in a currency market. Which market?
currency market.
Clear? That means we will enter the domestic market, or let's say in the currency market, we will either buy or sell domestic currency. Buy or sell? Let's say, sir, $1, sir, which was 87 rupee. All of a sudden, $1 becomes 95 rupees, sir. Too much of fluctuation, na? Now government will interfere, or the RBI will interfere. RBI will start selling the dollar which they have from their currency reserves, na? And their demand for Indian rupee. They will sell dollar, they will demand for Indian rupee. When they demand more and more rupees, automatically dollar value will decrease, rupee value will
Increase.
That means they will not decide the value, they will become participant. They will become what? In the currency market. That is called as managed float. Which float? See, basically there are two types. First one, fixed exchange rate. Second one is
Floating exchange rate.
now, when there is a fixed exchange rate, the biggest disadvantage is you should keep a huge foreign exchange reserve. You should keep what? In order to support that fixed exchange rate. Because government decided, let's say 2 years ago, 3 years ago. Now, rate is still same. Whether you do today, whether you do tomorrow, whether you do any day in the future. Until government changes the rate, the exchange rates will not at all change. It is going to be stable. It is going to be what? Stable. Okay, let's assume. Let us think that if India is following a fixed exchange rate. In India, remember, until 1993, we had a fixed exchange rate. We had a from 1993 and later we had a floating exchange rate. Which exchange rate? And this was an exam question once. India floated its exchange rate for very first time in which year? 1993. 1990? Until 93 we had which exchange rate? Fixed exchange rate. From 1993 we have which exchange rate? Clear up. Let's suppose that we'll go back. We are in 1991. Now they will say $1. What is it? 1 is equals to 70 rupees. Is equals to how much? Until government changes, $1 will be 70. But today, present, what is the market rate? $1 is. Now suppose I wanted to leave India. I wanted to go for US. I forgot to exchange it in India. $1 was 70. If I go and exchange it in US, how much is $1? Where should I exchange? India or USA? So to maintain huge exchange reserve. Why? Because everyone will start coming and exchanging your country. Your nation's currency value is not according to present value. Some old value. 2 years ago, 3 years ago, 5 years ago, what was the value? So that is the problem of fixed exchange rate. That will be stable, encourages international trade, but it will not be flexible. It will not be flexible. Which is more flexible? Floating exchange rate. Which exchange rate?
Floating exchange rate.
Clear? Mainly there are two types of exchange rate. Fixed exchange rate and
Floating exchange rate.
see there. Straight away let us come to category. See number one, market determined. Which determined? That is demand and supply. Clear? Floating exchange rate. Next, government becomes a participant in the dash market. Currency market. It will allow the value to change. Government is participating in the currency market to affect the influence those values, manage it float or that T float. Next, government determined. Which determined? Fixed exchange rate. Which exchange rate? So mainly there are two categories, floating and fixed. In case of floating exchange rate, which exchange rate? Who will decide? Totally decided by demand and supply. It is a free floating system. It is self-regulated. What's regulated? There is no intervention required in the form of government or from the central bank. So what are the advantages? Now such independent monetary policy can be created by the government and they can operate. In case of floating exchange rate, monetary policies are needed and it allows exchange rates to be using as a policy tool. That means your tools of monetary policy, interest rate, price stability, economic stability, all that policy tool. And they need not maintain. What does it need not?
Maintain.
Huge foreign exchange reserve. Who should maintain huge foreign exchange reserve? Fixed exchange rate. And there is one more, floating exchange rate. That is what India follows. What is it? Central bank or the nation's government will become a participant. See, monetary authority, that is central bank of the country. Either it will increase or decrease the
Exchange.
in the process of buying or its own currency. Now the monetary authority will become a participant. What they will become? In the exchange market, in the exchange. Clear? Fixed exchange rate is also called as pegging. That means fixing. Now government will only fix the rate. It will become same until government changes next time. It will not at all vary. See, they need to maintain huge foreign exchange reserve. What they should maintain?
Huge foreign exchange.
And no doubt it will be stable. There will be less risky. That will encourage international trade. But it is not flexible. It is not.
Flexible.
See this note will say why floating exchange rate is more important than fixed exchange rate, because floating exchange rate will see the present value. Fixed exchange rate is not giving the, you are trading with some particular year's value. That is not good now. Next comes nominal exchange and real exchange. What is it? Simple. What is the present rate at which market is running? That is nominal. Present price. What is it? At which market is running. That is called as nominal exchange rate. Today $1 is 87 rupee. How much is $1?
87.
Now same like nominal GDP, real GDP. Now real GDP concept. Now real exchange rate. Which exchange rate? Now I am not exchanging in terms of the currency value. I will exchange, I will determine the value of the nations between goods and services. Between what?
Goods and services.
Okay, let's take up an example. Tomato. Let's assume 1 kg tomato in India. What is it? 1 kg tomato in India. Tomato. 1 kg tomato in India is 80 rupees. How much is 1 kg tomato?
80 rupees.
Now, same 1 kg tomato in USA. Same 1 kg tomato in
USA.
is $2. Today, what is the price of $1?
87.
With that respect, same 1 kg tomato in USA is how much of rupees? 87 into 2. How much is 87 into 2? Do it. 170.
4.
Now see, in India, you get 1 kg tomato for 80 rupees. Same 1 kg tomato in USA, it is 174 rupees. That means now let us identify the value of nation's currency in terms of goods and services. In terms of what? For that, we need to identify the real exchange rate. Which exchange rate? For that, first I need a nominal exchange rate. Which exchange rate?
Nominal exchange rate.
Nominal exchange rate into domestic price. Which price? In India, what is the price of tomato? Divided by foreign price. Divided by which price? With that respect. Now, in India, present exchange rate is 87 rupee. In India, 1 kg tomato is 80. In USA, it is 174. Now, what is the value? 87 into 80 divided by 174.
47.
That means, in terms of goods and services, $1 is not 87 rupee. $1 is how much? This is the real exchange rate. Which exchange rate?
Real
Now, let me explain real effective exchange rate. What is it real?
effective exchange.
Suppose in India, 1 kg tomato is 87 rupee. 1 kg tomato is?
87 rupees.
In USA, 1 kg tomato is $1. 1 kg tomato is? That means what you get in USA for $1, you get in India for 87. And today's exchange rate is also $1 equals to 87. Real effective exchange rate is equal. Even in terms of value, even in terms of goods. Both are same. Both are what? That is real effective exchange rate. Which exchange rate? Clear, huh? Now see here, we also exchange real exchange rate formula. What is real exchange rate formula? Nominal exchange rate into domestic price divided by. So this is the concept of nominal exchange rate and real exchange rate. Real exchange rate we consider in terms of goods and services. Which side is it? Goods and
Service.
next third one, foreign exchange market. What is it?
Foreign exchange market.
Simple, it is an electronically linked market. Which market? Electronically linked market. Between whom? Brokers, institutions, banks and other dealer who will transact 24/7. That means who all are the parties in this foreign exchange market who will be trading and transacting on a daily basis. That is banks who are doing it. Banks, institutions, brokers and other dealers who will trade 24/7. See, there is a two different rates. One is ask rate, another one is bid rate. Suppose if at all you want to go and purchase a currency. Today $1 is how much? 80. That means if you give 87 rupee, will you get $1? No. His commission is there, na? Plus Nirmala aunty will come, na? GST. That means in reality, you will not get $1 for 87. It will be somewhere 89 rupees. This is ask rate. What is it? See, ask rate will be much more higher. Bid rate. That means when you bring the currency, you will get 87. How much you will get?
87.
This is bid rate. See, bid rate and ask rate will have a difference based on taxes of the country and the profit percentage of the dealer. Profit percentage of the See, there is foreign exchange market. What is it?
Foreign exchange.
There can be current transaction or future. Current transaction means spot exchange. I will give money of one country, you will give me the money of other country. Future exchange. We are entering into transaction today, but we will do the exchange
Future.
in future on the future rate, not on the present rate. On the
Future.
but we have entered into contract. It is like executory contract. What is it?
Executory contract.
Forward contract. What is it?
Forward.
Clear. Next, participants in the exchange market. Who all are the participants? Number one. Number two. Brokerage houses will have their own price. Banks will also have their own. You can instruct your bank to buy from any other broker also. So these are the participants. Just go through it like a newspaper. Clear. All these brokerage houses will not have all this blah 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 blah. Little in detail they have given. Not required for foundation level. To be frank, not required. Very less chances. This area. All that forex market, two different currency, and US dollar is used as a vehicle currency. Which currency? See, some countries you can't straight away convert your currency, rupee. Let's say for example Indonesia, Bali, rupiah. Now you straight away you can't convert sometime. So you will take dollar. After going there, you will convert dollar into rupiah. From India, you gave rupee and you converted dollar. There, from dollar you will convert into other country. That is a vehicle currency. Which currency? Intermediary currency. That is US dollar. US dollar is used as a which currency? Vehicle currency. Clear? Now comes the important area. Determination of nominal exchange rate. Which exchange rate?
Nominal exchange rate.
Just few minutes back we decided about nominal exchange rate. What is nominal exchange rate? Present rate at which market is running. How it is decided in floating exchange rate? Floating. Who decides it? Demand and supply. What is it?
Demand and supply.
Same to same thing. We will identify the demand and supply. Demand curve is downward sloping, supply curve is the point of intersection. That is the point of intersection, that is equilibrium. The price whichever gets established at the equilibrium, that is the market price. Today $1 is how much?
87.
87 rupees for the so and so quantity. What is it for the so and so? Quantity. Clear? $1 will be 87 rupees. How much is $1? 87. This is what is market determined for this particular quantity. Clear? Demand and supply will intersect. Now, either you understand it from the demand perspective or either you understand it from the supply perspective. Do not mix because they will get confused. Now, let me teach you the shortcut. There are 3 steps. How many steps?
3 steps.
Understand whether money is coming inside or whether money is. That is most important. Whether money is coming inside or whether money is going. That is most important. Sir, let's say for example, people are demanding for dollar. What is it? People are?
Demanding for
That means they are giving Indian rupee and they are asking for dollar. That means people wants to take this money and go outside. People wants to take this money and go. Sir, why? To buy some asset, to open Swiss bank account. Like this, various reasons are there. See, demand side, to purchase goods in which country? Or unilateral transfer. Sir, my cousin is studying in abroad. Sir, his parents are sending money every single month. The unilateral transfers. Making investment income payable. They have come and invested in India. They have earned income. Now we are paying them into abroad. NFIA. Payable to abroad. What is it? Or purchasing any financial stocks or Where? Opening up of
Foreign bank account.
direct ownership of real capital. I'm buying one flat in Dubai, sir, and speculation and hedging activity I'm doing. So for all this purpose, you need foreign currency. That means you are demanding foreign currency. That means you are asking for foreign currency. Money is going
Outside.
outside. Now, whenever you give rupee and ask dollar, whichever demand increases, whichever demand, that currency will get appreciated. That currency gets
Appreciate.
So in this case, whenever there is a demand sided, which sided? Dollar gets appreciated, rupee gets depreciated. Dollar gets,
Appreciated.
rupee gets,
Depreciated.
whichever nation's currency is demanded, whichever nation's currency is,
Demanded.
that currency gets appreciated, opposite currency gets.
Depreciated.
Now supply side opposite. That means people are coming to India. They are bringing foreign currency and supplying foreign currency. What are they doing? Supplying foreign currency, and they are asking for Indian rupee. Asking for which rupee?
Indian rupee.
Supply is increasing. That means they are bringing dollar, asking for rupee. Which demand is increasing? Rupee. So automatically rupee gets appreciated, dollar gets.
Depreciated.
That means money is coming inside. This is inflow. Which flow?
Inflow.
So either understand from supply side or either understand from demand side. Don't mix up yourself. You will go mad. Clear? Which are those supply side? See, number one, purchase of home export. That means we have exported. Money will come inside. Unilateral transfer, sir. Now, my cousin was studying there. Parents was sending money. Now he got job. He is sending money to his parents. Unilateral transfers from other country. What is it from? Or which is coming to home country. Which is coming? Investment income payments. Which we are receiving. We have done investments, sir. In Dubai, I have done investments. I am receiving that. Money is coming inside. Foreign direct investment and foreign portfolio. FDI and FPI. Next unit. That is what I will explain. Money is coming inside. Next, placement of bank deposits and
Speculation.
we are receiving money. NRIs are coming and depositing money in India. Clear? Money is coming inside. That time dollar value depreciate, rupee value appreciate. So understand, money is coming inside or money is going. Clear? See, how do we determine the exchange rate? Based on demand and supply. Point of intersection is the point of where we decide the exchange rate price. Now, demand sided. Which sided?
Demand.
Okay, let's understand. Demand for foreign currency is increasing. What is it?
Foreign currency.
See, this is what. Let me draw the graph for you guys also for your better understanding. X-axis, Y-axis, demand curve, supply curve. Point of intersection of demand and supply was called as what? Equilibrium. So this is supply, this is demand. Now which is increasing? Demand is increasing. Accepted. Now earlier this was the equilibrium price. What is it? Equilibrium. Now demand is increasing. So which side shift? Right hand side shift. Now we will draw a new demand curve towards right side. This is the new equilibrium. Even at this new equilibrium, what is happening to the currency value? Increasing. Sir, earlier it was 87. How much it was earlier? 87 rupees. Sir, it was 87 rupees. Now prices are going up. Prices are? Sir, now it is becoming 90. That means rupee got depreciated. Which got depreciated? Rupee got depreciated. Dollar got
Appreciated.
clear. Understood. Now, supply side. Which side? They are bringing currency inside our country. Foreign currency is coming inside the nation. Now, observe. This is the point of equilibrium. Earlier, this is what the exchange rate was. See, we had 87 rupees. How much?
87.
87 rupees. So, this is demand. This is supply of dollar. Demand for dollar and supply of. Now, what is happening? They are bringing currency. Supply is increasing. Right shift now. When supply increases, this is S1. Now, this was the earlier price. Now, automatically, the things get changed. Now, observe. This will be the new price. Now, that means it is becoming 80. It is becoming what?
80.
That means rupee got appreciated, dollar got depreciated. That's it. This is the concept of nominal exchange rate. Which exchange rate?
Nominal exchange rate.
The changes or variations in demand and supply. Changes or variations in?
Demand and supply.
Clear? Last part number 5. I have given few couple of questions to solve. Even in the class, we have done this. We have solved it. Clear? When money is coming inside, when money is going outside, which currency appreciate, which currency
Depreciate.
depreciates. Clear? Next comes devaluation, revaluation, depreciation, appreciation. What is it? Devaluation, depreciation, clear? Now, remember this very carefully. In case of floating exchange rate, which exchange rate? Who will decide the exchange rates? Demand and supply. There we have appreciation and depreciation. What do we have?
Appreciation and depreciation.
Sir, what is that? Let's assume, sir, $1, if it is 87 rupee. if $1 from 87, if it becomes 80, if it becomes, is it appreciating or depreciating? Appreciate. That means rupee is becoming stronger. Earlier, I wanted to purchase $1 by giving 87 rupee, but now I will only give 80 rupees. That means currency got appreciated. Domestic currency got appreciated. That means, let's say Shashi Kiran is an exporter of bench. Earlier, I used to export bench for $1. I used to earn 87 rupee. Now, same bench if I export, how much will I get? 80. Earlier, I was earning how much? 87. Now, I will earn how much? So, what should I do now? Export increase or decrease? Decrease. Earlier, I was getting 87 rupee. Now I will get only 80. But earlier, when I was importing some chocolates, I was paying 87. But I should now only pay 80. Automatically, imports will. When domestic currency get appreciated, exports will decrease, imports will increase. Now opposite, suppose if $1 from 87, suppose if it becomes 90, if it becomes what? 90. This is called depreciation. We are losing value, rupee is losing value. But Shashi Kiran is happy now. Why? When I export, earlier I was getting 87, now I will get. So exports will, but I will not import now. Import becomes costlier. Clear? This appreciation and depreciation will happen in floating exchange rate. Which exchange rate?
Floating exchange.
And if the same happens in fixed exchange rate, that is called as revaluation and devaluation. What is it? Revaluation and deliberate upward adjustment, revaluation. Deliberate downward adjustment, revaluation. Clear? That is the main difference. See, devaluation, revaluation. Clear? Fixed exchange rate, floating exchange rate, where inflation is included. Inflation is included, floating. That is not adjusted, not controlled. What is it? Not. That means included, where inflation is controlled. That means excluded. Inflation is not a part at all. Clear? Next year, who requires huge foreign exchange reserve? Who does not require huge? Only adequate reserve. Where stability is more. Fixed. Where flexibility is more. Clear? See, this is the main difference between fixed exchange rate and by this, unit 4 comes to an end. Only one topic is there. Impact on exchange rate. When we appreciate, when it depreciates, what will happen? Come to the other side of the sheet. I have given shortcut. Instead of reading full length and breadth, I have given a shortcut there. Come there. Come to the shortcut. Suppose if Indian currency gets appreciated. What is it? Indian currency gets? Appreciated. When appreciation happens, exports will decrease, imports will increase. We have already discussed now. That means $1 which was 87, now it is becoming 80. Now our currency is getting much more better. Domestic currency is becoming stronger, foreign currency is becoming cheaper. In such a case, whenever foreign currency becomes cheaper for us, we will not export. We will reduce our exports. We will reduce our exports. We will start importing more. We will start importing. Clear? Next, Indians traveling to abroad will increase because I need not to buy a currency that is dollar for 87 rupee. I will only buy it for 80 rupees. But any foreigner coming to India will witness that expensive. We will become costlier. Now this is important. Last 2 points. Listen. Indians who have invested in abroad. Indians who have. I always want foreign currency to appreciate. Foreign currency to? Let's say I have invested in Dubai. Every month I will receive $100. Every month I will receive $100. Even exchange rate was 87. I used to receive 8,700 rupee. Now if exchange rate becomes 80, I will only receive 8,000. Is it good? So if I have invested in abroad, I want foreign currency to become domestic currency to become. But if I have taken loan from Dubai, I want domestic currency to appreciate. Let's say I have borrowed when $1 was 87. At the time of repayment, if $1 becomes 80, I need not to repay 8,700. I should only repay. See, if I have borrowed money, I want foreign currency to depreciate, domestic currency to. Clear? Next comes rupee depreciation. What is it, rupee? If rupee gets depreciated, what happens? Rupee gets depreciated. That means, boss, $1 which was 87, now it has become. Exports will increase. Imports will decrease. We will be exporting more and more. In order to export more, we should produce more. To produce more, employment will increase. GDP will increase. Since we are producing more, but there is one biggest trouble. Rather than selling in domestic country, I am focusing on selling in other country. So in my country, shortage gets created. Because of shortage, demand is more, supply is less. Inflationary gap. What happens? prices will
Increase.
and moreover my imports have become expensive na. But still I can't control some imports like life-saving drugs, medicines, petrol products. I should still import. If I'm importing themselves at a higher cost, can I sell them at a lower cost in my country?
No, sir.
So both inflations will go up. Demand pull inflation, cost push inflation. One, because of shortage in demand, prices gets increased in domestic country. Because of expensive imports, cost push inflation in my country. See there, next term, Indian goods becomes cheaper to the rest of the. That is why exports are increasing. Exports will increase, imports will decrease. Now foreign goods will become costlier to Indians. So that is why imports are decreasing. Now since we are exporting more, we should produce more. GDP growth rate will happen, employment will increase. Now Indians who are traveling to abroad will become expensive. Earlier I was buying at 87 rupee $1, but I should buy it for 90 rupees now. And let me say if I have borrowed money, I should repay more. I should. See, Indians who have borrowed from abroad, the cost of borrowing will goes up. That is the problem of depreciating the domestic currency. No doubt exports will increase, rest everything else gets screwed up. See, what are good things? GDP will, employment will, exports will, your current account value, balance of trade and balance of payment value will increase. See, bad things, cost of traveling, cost of borrowings, cost of essential imports, inflation will increase in the country. What will increase? See, whenever we speak about exports and imports, these are the shortcut things. These are the things we should give focus on. Exports, imports, travel, investment abroad, GDP, employment, growth rate, and by this, unit 4 comes to an clear. Last.
When we started doing more export, how inflation?
Now assume Shashi Kiran is an exporter of benches. There is a huge demand for benches in India. I am not supplying in India. I am not, let me say, selling in India. Where am I selling there? Outside the country. Not just Shashi Kiran. Every producer is doing the same. Because we are earning great money by exporting rather than selling in domestic country. Even in domestic country, demand is there, na? Are we selling? Shortage of demand, na? Sorry, shortage of supply. We are not supplying. Demand is more, supply is. People want goods, but goods are not available. What will happen to price now? Demand pull inflation. Because of excess demand, prices went up. Now, since domestic currency got depreciated, imports becomes expensive. But I have to import petrol. I have to import life-saving drugs. If I am importing at higher prices, can I sell in my domestic country for less price? I should sell for inside the country because of excess demand, already prices are. Now imported goods should also be sold for. Both the prices have gone up. Now one demand pull inflation, another one because of cost of importing is high, cost push inflation. Both the inflations are going up. Prices will increase. Clear? Understood? Let's go to the last unit of this chapter, that is international capital movement. What is it? International? Concepts are very simple and easy but little technical in nature. See, when we say capital movement, that means money is getting moved from one country to. In terms of movement of funds or movement of capital, there are 4 concepts. Number 1, aid. Aid refers to help. What does it? Aid refers to? We need not to repay the money. When we borrow money, do we have obligation to repay?
Yes.
With interest. Next, NRI deposits. Foreign, let me say Indians are working in abroad, they are sending money to India. These all are flow of money. The capital movement, which movement?
Capital.
Will happen in case of foreign investment. Which investment?
Foreign investment.
There are 2 types. Foreign direct investment and foreign portfolio investment. Sir, what is the main difference between foreign direct investment and foreign portfolio investment? Yes, sir. Now, what is this? FDI. Let me write it in the left side. FDI and FPI. Now, in case of FDI, what is it in case of?
FDI.
A person will come to India, he will invest it on assets or on infrastructure. Assets are? In FPI, he will not invest it on asset or infrastructure. He will invest it on capital market. Which market? Or stock market or securities markets. That means he is bringing the money. He is not starting business. Rather, he is investing on the securities market. Which market? But in FDI, where is he investing on? Assets. Building infrastructure. Creating your own building, your own setup, your own manufacturing units. Clear? Huh? Now, when you build on investments on assets, is it long term or short term?
Long term.
Long term. But here, you are not investing on asset. Whenever you want, you will keep the money. If you don't want, you will say, bye bye. either short term or long term. Now, whenever you are bringing your asset infrastructure, you will also bring your technology, you will also bring your, and you will use local manpower. Will you bring your people from Australia and will you make them to work here? No. You will use the local manpower. Now, that means employment opportunity will, and you are producing inside India. So, GDP will, if you invest on capital market, is there any effect on employment and GDP? No effect. And when you are coming to India and investing on assets, infrastructure, long-term investment, employment, GDP increasing, you want to control the business or someone else want to control business? We have a management control. Which control? That is why I am holding the stakes. Management control. Foreign direct investment. That means foreign companies, MNC companies coming to India. Who is making rules and regulations? Government. But who is running that business? Foreigners. They are the board of directors. They are the one who has invested in India. They will be having management control, decision making rights. Which making rights? In the organization. What to do, what not to do, what to sell, what not to sell. But here, is there any management control? Purely profit motive. I will invest, money grows, I will take out money, I will say tata bye bye. There is no management control. What is it? No management. Here purely I am a speculative motive. Which motive?
Speculative.
Clear, right? And most important, if at all investment is greater than 10%, what is it greater than?
10%.
FDI. Investment lesser than 10% FPI. Sir, what is greater than 10? What is lesser than 10? Simple. Let's assume that Shashikiran want to start a insurance business in India. Assume I am a US citizen. I am a US company. I want to come to India and invest in India. Now, government of India has a rules. For few business, they will allow 100% investment. For few business, only 51%. For few business, 49. For few business, 74. For few business, no investments, prohibited. What is it? Prohibited. Now, for insurance, earlier it was 49%. Earlier it was? That means 49% foreign company can invest. You need to come under Indian company and you should work under a Indian company because Indian company has 51% stake. You have 41%. Who has major decision making? Indian company. Bharati AXA Life Insurance. Bharati Indian. AXA is not Indian. Bajaj Alliance. Bajaj is Indian. Alliance is not Indian. They had 49%. Now, government recently increased this 49 to 74. How much they increased it? Clear, huh? But there, no control, nothing. If it is lesser than 10%, considered as FPI. What is it? Considered as? If your overall investment exceeds 10%, that is considered as what? FDI. Overall investment lesser than 10%? FPI. See, this is the major difference between FDI and FPI. Where does FDI will invest? Assets or infrastructure. FPI? Securities market, mutual fund market, hedge market, pension funds, on all these things. FDI long term. FPI or long term. FDI employment will increase, GDP will. They will just bring technology. They will use the local manpower. So automatically employment will go up and management control is there. Which control is there? He wants to control the rules, regulations and all, what to do, what not to do. But here no management control. Purely profit motive, speculative motive. And there is no effect on employment and GDP. Greater than 10% FDI, lesser than 10% FPI. Clear? Now see, straight away we'll come to the pointers what all I just discussed. Greater than 10% investment. Someone from the resident of home country is investing in host country. Let's say home country USA, host country India. Clear? Here is investing on the assets in the host country. Assets in the, and he is coming and investing for a long-term purpose on the physical assets. And there is a direct investment. Especially all your transactions made, present investment and future investment, present and or any subsequent investment bought, which is greater than 10%, which is greater than 10%, will come under FDI. And how can I perform the FDI business? Now simple. Number one, equity injection. What is it?
Equity injection.
That means I am bringing equity capital. Which capital?
Equity capital.
Or else I can have through merger and acquisition. Merger and or joint venture. Which venture? We are jointly doing the business. Or greenfield investment. What is it? Completely fresh. I am totally investing fresh. This facility is not at all in India. Complete from scratch we are doing. Or brownfield investment. What is it? Brownfield investment. Already facility is there. Someone is selling. I am coming and I am taking that and I am taking over. Especially in India, airport construction and development is allowed for brownfield. Clear? And either franchising. What is it? Your McDonald's, Pizza Hut, Domino's, Subway, franchising, or being a subsidiary company. Which company? Nestle Switzerland Private Limited, parent company, Nestle India Private Limited, subsidiary of Nestle Switzerland, being a 100% subsidiary. What is it? Or maybe 49%, 51%, depending upon government allowances. Clear? These are the ways through which you can create FDI business. Which business? Now, when you are entering India, now 2 ways of entering. How many ways of entering? There are 2 ways to enter. Number 1, automatic route approval. Which approval? Automatic route approval. And second one is government approval. Which approval? See, Government of India along with RBI, they have come up with one big list. See, these are the business important to India to increase the economy. But unfortunately, we don't have. If any of your foreigners wants to start such business in India, what we are expecting, automatically enter the country, need not ask government permission and all. Companies Act, register, start doing company, start running your company. Suppose if the mentioned list, your, let me say, business nature is not there, then you should apply for government permission. Only if government approves, enter. Government does not approve, tada bye. Earlier we had also third option called as Foreign Investment Promotion Board, FIPB. Now it is scrapped. In the place of FIPB, we have just one website called as Foreign Investment Facilitation Portal. What is it? Foreign Investment? Earlier we had FIPB, that is Foreign Investment Promotion Board. But presently we have only Foreign Investment Facilitation Portal. That is just a website portal. You can come, you can upload your documents, you can ask, can I enter India? All that document registration. But mainly there are only 2 ways to enter India now. Which are the 2 ways? Automatic route approval and clear. So these are the ways through which you will conduct your FDI business here. Example they have given. Suzuki of Japan entered into joint venture with government of to set up Maruti Udyog Limited. Suzuki will bring only culture and technology. India, they will improve employment and GDP in the host country. Clear? Now, how can I start business? Equity injection, retained earnings, whatever profits you make, again reinvest, or by giving. Sir, is giving loan an FDI? No. But if you have a stake of greater than 10%, if you have a stake of, and then if you give a loan, then if you give a, even such loan money is called as FDI. Straight away, last page you come for this chapter. I have given one example. Last page. Straight away, last page. Straight away come to last page. John extended loan to Victoria, a power producing firm, in which John has a stake of how much? Greater than 10%. Na? If any person owns a stake of greater than 10%, then if he gives the loan, such loan is called as FDI. What is it called as? See, lending loan is not an FDI. Lending loan is not a. But if a person has greater than 10% stake and then if he provides a loan, that is considered as clear, understood. So that is the concept of FDI. Clear? Now, see here, who can do an FDI? Individuals, corporate, unincorporated, private or public enterprises, associated groups, government and foreign government agencies, estates, trust, or any combination of above. Any combination of. How can they do it? Opening up of overseas company or your branch or through joint venture or joint development of natural resources, purchase and annexation, taking over. Clear? Next, what are the types of FDI? 4 types are there. How many types are there? 4 types. First one, horizontal. Same business I am doing. Let's say Yamaha, famous for what? Motorbikes. Where are they from? Japan. They are coming to India, also doing same business, motorbike. That is horizontal FDI. Sir, vertical investment. What is it? Similar business. I am famous in motorbikes. I will come to India. I will produce tires. I will produce, assume, Yamaha tires. Yamaha. Similar, na? You are using the tires where? Bikes only. Next comes conglomerate investment. Which investment? Totally different business. Which business? I am known for bikes, motorbikes. I will come to India. I will start manufacturing piano, guitar, music system. Yamaha has it. Yamaha guitars, Yamaha keyboards. Totally different business. Totally. That is conglomerate investment. 4th one. This is where the question has come once. This is called two-way direct investment or reciprocal investment. Two-way direct investment or? You invest in my country, I will invest in exchange. That is called reciprocal investment. Which investment? Clear? Modes of entering FDI. Already I spoke now. Opening up of subsidiary company or associated company. Who is associated company? Stake of more than 20% is associated company. But in FDI, greater than 10%. Clear? If you own greater than 20, you are called as which company? Next, equity injection or acquiring or mergers and acquisition, joint venture, greenfield investment, brownfield investment. See, brownfield investment, brownfield airport project. Which projects? And why do you want to come and invest in some other country? Sir, common sense question. I want to expand my market. I want more profits. In your country, economy is growing well. In your country, resources are available for cheaper cost. Or maybe in your country, rules and regulations are lower comparing to my country. So I'm coming to take that advantage. Main profit motive, expanding market, new resources, cheaper labor, and regulations, rules are less in your country. That's why I'm coming. See, number one, market seeking, expanding my products in your market. Next, resource seeking, labor cost is less in your country, technology is improving in your country to earn higher and diversify. I want to start new business, new customers. New business, like Toyota, like Yamaha, guitar, pianos. Next, tax benefit. In your country, taxes are lesser comparing to my country, not in India. Don't worry. Next, avoid dash barriers. So your country was imposing lot of tax, all that anti-dumping duty, countervailing duty, ad valorem, specific, preferential and all. Okay, I will only come to your country and produce rather than sending goods because of trade barriers. Next, because of environment factors. In your country, in India, environment law, full comedy. Next, political. Modi is supporting, that's why I'm coming. Next, there is an interdependency. One or the other way was dependent either for raw material, either for labor, either for technology. But I will only come there. Internationalization. My product should be available everywhere. International. Nestle, best example. KitKat, Maggi. Present in 190 countries. Next, geographical. Your country is located in such a beautiful place. I can connect east. I can also connect west. Afghanistan, best example. That is why US and Russia both were fighting for so many years. Next, growth rate of your economy is growing very faster comparing to my economy. So take that advantage. So benefits of international FDA and costs of FDA. See, benefit. Large varieties of goods and services will be available for a lesser cost in my country, and foreign company starts competing with our domestic company and removes domestic monopoly. Tata, Birla, Adani, domestic monopoly gets vanished, and effect on technology, because technology will improve, effect on employment opportunity, effect on, we will start optimum utilizing of resources. Bullshit. We will actually start over exploiting, over usage. See, cost. They will bring which technology? But India is a labor intensive technology, but they will bring which technology, pa? And employment, which kind of employment? All lower level employment you will create. All decision making, managerial is in your country only. Only low level employment. You will bring inequality. Next, brings outdated technology and over exploitation of resources. See, exploitation of resources, and over a period of time, you people will only grow. You will people become monopoly over a period of time. Problem. Next, FDI history in India, pa simple till 1991. New economic reforms, LPG, liberalization. We never allowed any foreign companies to enter India. We are a closed economy. Which economy? We were only giving importance for industry. Even after independence, 1948, we had industrial policy resolution, that chapter 10. 1956, industrial policy statement, and 1990, see LPG. Earlier, there was Foreign Investment Promotion Board. We also established FEMA, foreign exchange. Under RBI, if foreign funds are coming inside, from India funds are going. Who will regulate that? FEMA. And we also established SEZ, Special Economic Zones. Heard about SEZs? SEZ Act. We will give a space in India. You guys, foreign company, come and establish in India. Produce in India, but don't sell in India. From India, you export. From India, you? Sir, why, sir? GDP will increase. Employment will. Special Economic Zones. I will give you some special advantage. Free electricity. Or free resources, free land, you come and establish here. Special economic zones. How can you enter India? Automatic route approval or government approval? See, government initiatives to promote FDI. What does it promote? FDI. One, automatically we are giving approvals and simplification of procedures, setting up of foreign investment, promotion. But now it has been scrapped. Now in the place of FIPB, we have Foreign Investment Facilitation Portal. Next, we are signing one agreement called as MIGA. Now government is there. Modi, you are supporting. What if tomorrow Pappu, Rahul Gandhi comes? Full stupid fellow, he will change rules and regulations, na? So why don't worry, we'll enter into agreement. According to that agreement, we'll do for next 10 years, 15 years. Next, permitting to use a foreign trademark and foreign brand names. In India, you can sell under your foreign name only. 100% FDI in multiple sectors. And we have established FEMA, which regulates foreign funds. And special economic zones have been created under Special Economic Zone Act. Merger, acquisition, greenfield. Investment is encouraged. Encouraging for foreign technology collaboration. Same way, there are few business where we don't allow FDI. Number one, lottery business, gambling and betting, chit fund, nidhi fund, that is NBFCs, non-banking finance companies, and trading in transferable development rights. That means establishing or developing some land development and then shifting to someone all these plots, layouts and all next door. Real estate, construction of farmhouse, tobacco and tobacco substitutes. What is it? Tobacco and we will not at all allow, and especially those sectors which are only and only dedicated to public sectors, not allowed to private sectors. Atomic energy, railway, in these many areas, FDI is totally prohibited. What is it totally? Now FDI in India, history, blah, 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 where and all it is happening, how much money is coming, full on finance data. Last but not the least, FP, foreign portfolio investment. Which investment? Foreign? Was less than 10% investment. We are investing on stocks, bonds, etc. There is no management control. We are completely speculative and opportunistic. Whenever this money comes, now huge money will come inside, huge money will go. That will make your domestic market more and more volatile. It will not have any kind of impact on employment and read-only concept after spacing. That's it. This is FPI. Difference between FDI and by this entire chapter 9 comes to an revision. FDI. FPI, danger. Now that is what happening from India in past 4 months. They are taking money, they are leaving India. Markets are volatile, highly volatile. It will not create any job opportunity, nothing. They are profit motive. They will come, they will make profit, they will set it up. The money will not stay in your country. But FDI, money will stay in your country. They are doing business in your country. They are providing services in your country. They are giving opportunity in your country. Without borrowing loan, we are bringing them and they are only providing all money, infrastructure, facility, everything. FDI. That is why government is promoting FDI. What are they doing? Promoting. Clear? Let's go to the last chapter. Here I will not bug you up more because full hardcore theory and full of data. And any nook and corner question can come. I already said you. If they want to screw your happiness, 10 marks. If they don't want to screw your happiness, average is 3 to 5 marks. Average is how much? But usually expect 5 marks. How many marks? 5. In that 5, general knowledge question. Some questions definitely 2 to 3 marks you will definitely crack. And another 2 to 3 marks bouncers. Another 2 to 3 marks? Definitely it will happen. Clear? Now, totally 4 concepts are there. How many concepts? 4. Now, wait, let me give a time frame for you. Wait. See, we will discuss before independence. What is it? Before independence. And after independence. Before independence, again 2 more category. Under ancient India. What is it? Ancient India. How we were having rules, regulations, policies and all. And under British rule. Under which rule? British rule. Clear? Next, after independence. From 1947 to 1990. Disaster period. Which period? Whatever rules, regulations we created, nothing were full disaster. And 1991, new economic policy. Which policy? New economic policy. Until now, 2025. Total 4 concepts. How many concepts? 4. This is the time frame. And after reading this time frame, we will discuss about primary sector, secondary sector. Primary is agriculture, secondary is industry and allied activity, tertiary is in India, which is booming more. Tertiary sector. 53% of GDP contribution comes from tertiary. 18.8 comes from primary. 30% comes from secondary sector. This is the GDP contribution. Which contribution? Which is the most? Tertiary sector. Which sector? Clear? Now, let me give a background of all these things in the form of story. I want you to read it once. See, ancient India, the most important aspect is Chanukya, Arthashastra, this point. Even today, and India had almost 1/3 to 1/4 of the world's wealth. And India was self-sufficient. Even villages had an opportunity, artisans, all these things, more than cities. They are also having more and more importance. Later on, colonial era will come. All these disasters will start. All these British people, once upon a time, India was an exporter of finished goods. Exporter of what? Handicrafts, artisans, arts, toy works, all these things. But these people forced us to become an exporter of raw material. They were taking raw material, sending to Britain, they will finish into goods there and again send it back to. They wanted a market to sell their finished goods. They made it India as a market and they used to exploit Indian. How? By waging war against dynasties, expanding their provinces, and they take all build up. We were the one who bought railway to India, we were the one who bought industries to India. They were not actually supporting India. That was demotivating our, let me say, growth. How? They created railway system. For what purpose? Taking the raw material from villages to port to export it and send the soldiers from one provinces to another provinces to wage a war against Indian kingdom. And see, they take all build up. We were the one who made all kind of industrial development in India, blah, 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 blah. Here they will give. See, we were the one who got cotton milling, jute, brewing, paper milling, leather, blah, 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 blah. And it reached so and so great heights after the 19th and 20th century and all. In short, they were not actually encouraging. They were positively discouraging us. Was it positively? See, the production of good industry, however, did not show the high level of expansion. The most importantly, the factors that led to the state of affairs was pressure exerted by the English producers in matters of policy formulation that was positively the development of industry. They were not actually progressing. They were discouraging us. Clear? And hardly during 1900s, 0.4% of population was dependent on industry. During the independence, 1.4, almost 2%. Almost of population is dependent on industry. This is British rule. They completely exploited. These were the stupid fellow who are bought the zamindari system, mahalwari system, all this bullshit concepts to India. See, they introduced heavy tariff on finished goods, lower tariff on raw materials if you try to export it. And India's foreign trade from exporter of manufacturing to exporter of a, they made us to forcefully be like that. And we also got fascinated towards machine made goods. We got, let me say, fascinated towards Western culture. We adapted Western cultures and machine made goods were available for cheaper cost. All this happened. Clear up? So just go through it like a newspaper. Next comes disaster after independence. What is it? Whatever policy we created, whatever rules and regulations we created from 1947 to 1980. 1980. It was counterproductive. What is it? It was not at all improving. Our condition was becoming much more worse. Let me give it in a form of short background story. Listen. After independence, we were a closed economy. Which economy?
Closed economy.
We never encouraged any foreign companies to enter India or foreign goods to enter India. And upon that, at that point of time, if the nation has to grow, progress and develop, we should concentrate on industry. We should concentrate on hardly 2% population is dependent on industry. More than 70+% is dependent on agriculture. We never gave importance to agriculture. We gave importance to immediately after the independence of India. We started giving more and more priority for industry. We created some new special resolutions for industry. At that point of time, in 1947, India was mostly rural inhabited. Most of the population was in rural and we were illiterate and we were also 1/3 to 1/4 of the world's wealth was with India before Britishers coming to India. Now we are in poverty. Next, we were divided between heterogeneity. Even today same, based on caste, creed, race, community. See, politicians' biggest weapon this is to get the votes. Next, India's literacy rate was only, life expectancy was only. That means there was no proper medical facilities in India. If a baby is born, guarantee 32 years it will be alive. Beyond it, we don't guarantee. India's poverty was not just with income alone, even with respect to human capital, and there was a conflict between these Congress people only. Nehru will say we need to establish more heavy industries in city. Gandhiji will come and say no, we should establish small and cottage industries in village sector because most of our population is living in village. After agricultural season, they are unemployed. To give them employment opportunity, small and cottage industries has to be established, and we created 5-year plans. What we created? Under Planning Commission of India, till date 12 5-year plans has been implemented, 3 annual plans. In none of the 5-year plans, target is achieved. What a beautiful targets we had. Even lesser targets we are unable to achieve. One where poverty is more. We need to eradicate poverty. Government is spending huge money and taxes incomes are less. Expenditures are more. Upon that we are borrowing huge amount of money and moreover closed economy. Which economy? We are not allowing foreign goods or foreign company to enter India. Now domination of public sector. Domination of? In the name of mixed economy, we were adapting socialistic practices. Which practices? Only for namesake mixed economy. Private people were never given freedom. Private people were discouraged, completely curbed on with rules and regulation. Only PSUs were dominating. Who were dominating? PSUs were dominating. See, I said now after independence, more relevance was given to industry. See, Industrial Policy Resolution 1948. They changed it once again in 1956. More and more powers was given to much more PSUs. And later on, 1951, Industrial Development and Regulation Act we brought in. And all that balance of trade, balance of payment crisis occurred in 1958. We closed our economy. See, from 1950 to 1980, growth rate of India was hardly.
3.5%.
And see, the major shift was happening. Especially agriculture got devastated, and India being one of the most predominant in agricultural product, we started importing. We were dependent on food aids by USA. By whom? There was a negative growth rate in agriculture, and we were completely dependent on USA for the food aid, especially the period between 1960 to 1981. See this word, what is it? Worst in Indian independent era. To such extent, devastation happened till 1980. See, they were playing test match, stupid fellows. 30 years and plus. Later, after 1985, what is it? Later after? Growing realization. What is it? Among our policy makers and industrialists, that whatever we were doing till now, that was counterproductive. Which productive? Then precisely 1985. When they started changing all rules, and now slowly they started opening up. Now growth rate increased to 5.7 and 5.8%. Now disaster happened in 1991. When? 1991. New economic reforms. Because of balance of trade crisis, we had only $1.2 billion with us, foreign exchange reserve, which was hardly sufficient for 2 weeks of imports. Beyond which, no money. First of all, rules and regulation very strict. Private people are not encouraged. Closed the economy. Now, no one is giving money. Finally, we approached IMF. IMF agreed to give a loan, but 3 simple conditions. L, P, G. L stands for? Simple. Rules and regulations are extremely high. Reduce it. Second one, you are not giving importance to private people. Your PSUs, we know how effectively they are working. Sell them off to private people. Privatization. And third one, you are closing your gates of economy. You are not allowing anyone. Open that. Treat entire globe as one single market. Globalization. Then all the policies got changed. All blah 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 rules and regulations got changed. Now growth and development start increasing. Especially industrial sector reforms. Which sector reforms? New industrial policy 1991. This is important. From this you can expect more questions. Clear? Earlier, for each and everything, you should take license. We reduced it to 18 industry. From 18, substantially, we reduced it to only 5 industry. Which are those 5? Which is related to health, safety, and environment. And public sector was limited only just for 8 sector. Gradually, we made it only 2. Which are those 2? Railway and atomic energy. Earlier, we had MRTP. I said, positively discouraging private sectors. Later, we changed it to Competition Act 2002. And small scale industry was given more and more priority. Almost 800 list of items was exclusively reserved. Exclusively? Except small scale, no one else can produce. And these people were unable to produce in bulk. Because if you want to produce in bulk, you should invest more. If you invest more, you are no more small scale. That means you can't produce. That we de-reserved. What did we do? Whatever reservation was there earlier, we de-reserved it. And now we are giving more and more importance for private people and foreign investments and foreign liberalization for FDI and FII, and further future liberalization was made, and heavy tariffs was there earlier. See how much? 55% of customs duty. Later we brought it down to 85, later to 50, later to 10, and in some cases complete automatic approval up to 100%. Rupee got devalued. Rupee got what? Devalued. Fixed exchange rate till 1993. Till 1993, which exchange rate? Devaluation was happening. 18% they got devalued, and disinvestment of government holding. See, trade policy. This is important. See, till 1991, India still had which exchange rate? And for the very first time in 1993, India floated its exchange rate for a very first time. Clear? And what all happened after 1991 in the past 31 years? What all growth and development we have made? Blah 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 blah. Any nook and corner question can come. Appa, if I go on word by word, you should bring pillow now only. That is what happened. See, full on data, full on information. Niti Aayog. They scrapped the Planning Commission of India in 2015. Once BJP came into power, they bought into Niti Aayog. Much for longer period, 15 to 20 years of development. They started from 1st January 2000. Now, but the biggest problem is Niti Aayog don't have powers. It is just a think tank. What is it? Wherever Planning Commission of India was not concentrating, these people are concentrating. Now it is a shared vision between national development. They will also involve state governments. Now both central government as well as Both will involve, and they will also do planning from dash level, even including national security, and all this acts as a think tank, international think tank, shareholders, blah 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 blah. See, full on. Next comes primary sector, secondary sector, full on data, full on information. In that, industries is important. Which is important? Secondary sector, purchase manager index, PMI index. There you can expect questions. Some rankings is there. Rankings has been given by World Bank. All those are important. Clear? See, 47% of India's population was directly dependent on for livelihood. Clear? Even today, how much percentage? What is the GDP contribution? 18 point. And there are also some food problems in agriculture related problems, disadvantages in India. Schemes introduced by government. In that, the question has been asked from INAM. Already once they have asked a question from INAM. From any nook and corner, they can ask a question. Get ready. Clear? Next comes industry, most important. See, contribution to GDP, how much? Informal sector is contributing almost by 50%. India wants to become global manufacturing hub. We are concentrating more and more on manufacturing, and this time they played around with this. DPIIT. What is the full form? What is the full form? Department of Promotion of Industry and Internal Trade. Correct? Huh? Now observe. Now see the question paper. No, almost somewhere at last it is late. September attempt or Jan attempt? September attempt. Huh? Now see here. Question number 98. DP. IIT. See the difference? Industry, industrial, industry, industry, international, internal. If they decide to screw your happiness, one word they will play around. See, Department of Promotion of Industry and Internal Trade is the answer. Observe here, industrial and internal trade. Most of them got confused and marked B also. Industry, industrial. Different from the answer. See, just a few words. September attempt it was, but there is no guarantee. Even in your next attempt also, they can screw your happiness like this. Clear? See, GST introduction, Make in India concepts, all this ease of, this is important, ease of doing business. Ranking, India's ranking is 63. Earlier it was. We have improved by how many run? Andre, Namginna Munde, 62 nations are there. You are doing better in business. 62 countries. Next, Gati program, all these abbreviations are important. Atmanirbhar Bharat and all. Fame India, Udyami Bharat. Now, this time the question has come from this Udyami Bharat. Especially registration for MSME. Udyami Bharat, small and medium enterprises. MSME, small, medium and enterprises. All this. 100% FDI, blah, 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 blah. And now Industrial Resolution 4.0. When are we starting? 2025. We are planning to contribute 25% to GDP just from manufacturing sector. Which sector? And foreign direct investment is promoted. Challenges, no proper credit is provided. Next, service sector. Which sector? See, in every country now, there is a tendency from agriculture, they will go to industry. But India has bypassed it. India has a unique experience bypassing the secondary from agriculture. Straight away, people are growing towards which sector? Service sector, and contribution of service sector to GDP 53.89, especially IT services. Which services? India is one among the top 10 World Trade Organization in the global exporting of services. Clear? And we are attracting huge amount of FDI year by year. Even though in spite of COVID-19, India has seen a tremendous growth rate in the service sector. Entire world is getting devastated, but Indian service sector is booming. Even they learned work from home. Now see, most of the companies are permanently work from home. They don't want to come for office and all. We know how to exploit you people from home only. See, earlier if at all you come to company, 1.5 hour traveling from home to company, going back from company to home 1 hour, 2.5 to 3 hours traveling, 8 hours of work. 8 plus 3, 11. Now you are at home only, na? Sit and work 11 hours. Exploitation. We know how to do all this. Clear? So this was your entire economics marathon. Finally completed. ದಯವಿಟ್ಟು ಹೋಗಿ ಸರ್ ಆಚೆ So, see, only one thing I can say at a climax. Hello, auntie. Bakery auntie. Listen. See, most important is revision. That too, not just single subject. In a day, at least you should hold multiple subjects. So that is a common mistake the students will do is, sir, 1 week full accounts, 1 week full law, next 1 week full maths. By the time you go back to accounts after doing maths, this happens. So minimum, at least you should hold how many subjects? In a day, at least 2 subjects you need to revise and constantly be in touch. See, solve as much as MCQs as possible. As much as? That is most important. See, that is the reason why I made you to solve exam paper itself in the class. Even in the marathon, we tried doing exam paper. So you will get a grip on exam paper, how questions will come, how it will be framed, how to analyze it. Do as much as MCQs. That is the most important thing. Clear? So, when is your exams? Already date announced. We know it. All the best. Last exam is Economics. After that, 1 month free. Full jolly. After that, welcome to hell. CA Inter. Is it welcome to? That is welcome to hell only. Because you will understand what is real CA is in your intermediate. Foundation is nothing. Foundation is not even 1% of your CA. It is only just a updated version of your 11th and 12th. You are just learning the basics. That is how it is. Concepts are simple. You are learning the same 11th and 12th topic in advanced manner. The real CA starts when you come to CA. Inter. Clear? Enjoy your life until come to Inter. Once you enter Inter, neither you can go back, neither you can go forward. You have to finish there. You have to learn things properly. So kindly inculcate that habit. Like how classes went today, 9 hours, 10 hours, 11 hours continuous stretch. Sometimes it happens in Inter. 7 hours class will be there. Effectively 6 hours after the break. And you will be sitting back in the classroom and you will be solving for another 2-3 hours in the classroom itself. 6 plus 3? Sometimes whole day, because children will understand. After going back home, sir, I can't do it. Distraction is there. Disturbance is there. My mom will be telling me to become Blinkit and Zepto. And my cousins are there, stupid fellows and all. You will not get that vibe. So you will sit in the class, you will study in the class itself before going to home. It will happen. So get used to it. So all the best for your examinations. Meet you guys in CA. Even there, I will come at last. We say now, best comes always at that. Why to completely devastate you. Finally, Band Baja Bharat. SM. Strategic? Actually, strategic management is easy. In foundation, economics is little tricky, not difficult. What is it little? Tricky. If you know the concept, you will crack it off. That is how economics is. So, in foundation also I come at last. Even in inter also I come at last paper, 6B, strategic management. Clear? All the best. Close your books. Get lost. Online students, bye. Could you please share the PDF? Vaishali, please contact the ArivuPro team. They can share it with you. It's in the mail.
600 I guess.
Hey, what is this? What happened?
Or we can see on the phone, so don't-